Do you know what's really fun? Making a website on Wix.
Hey, we're How Ridiculous, three childhood friends and digital content creators that do epic stuff from Perth, Australia.
We've got about 50 million followers. We're in the billions of views, and we're a small team.
We always felt like our content was all about entertainment and being fun, but there was also this, sort of professional business side. One of the things that we knew was basically essential was getting our own website, so people would actually see a proper official group who mean business and who can deliver. And we now get unbelievable opportunities to do things like film balloon popping races with Manchester City. I don't know all the things that we're going to get to do in the next year or 5 years, but if we can do this as a job, anything's possible.
At what point does a salad become a salad? When you add the egg roll, the Zaxby Sensation Salad.
Don't you want to know what this is all about?
You're damn right I do. You're messing with powers beyond your control.
I'm always in control.
Hey, welcome back to Stocks 150. Today on the E-Trade Pro tutorial, I guess you can call it that, I'm gonna go over the charts. Setting up a chart. As you can see right here, I already have a page open on screen 6 that was on the other video. So what I'm gonna do to start off is I want to get rid of this. What I will do, this will be a cool trick. Really has nothing to do with charts, but I'm going to show it to you anyway. I can click here, move to the window. Now put this over on research. Now it's out of my way. If I click down, it's a research page. It's right there. And on this page, I want to take care of business on the other page. Again, you don't want it outside of the borders because then it'll stay frozen. Toggle from page to page. All right, so back to a new page and tools. All right. All right, it's going to be one chart. You can have multiple charts on each page. Wait for us. I'm going to go to my favorite ticker. So let's start with that. You can select your tickers here, you type them in, and it'll retain them also. So you just type them into the search. So see if you L is what those are. You're gonna pull that up. So even if you don't know, if you just know a letter, or if you just want to search randomly for whatever reason, you can get that. See what Jacobs Engineering has going on. $40. It's amazing on this company. All right, so we'll keep it with Jacobs Engineering for right now. We don't even know what that company is. Jacobs Engineering Group Incorporated. All right. So here you have your account number, and this is the account that you'll be working in. Like, so if you wanted to place a trade from the chart, it'll come out of that account if you have multiple accounts. If you just have one account, then don't worry about it. Let's see, multiple accounts. So that's that. On this tab, you click here, it says Pro View, and you can change the view if you like. I like it on the Pro View. So here, you can select here, do crosshairs. So you didn't need to do that. Just select here for your crosshairs if you want to do target something. I'll just keep it on a vertical mouse. Down here, select your chart status. So right now we're looking at the daily chart. If you look at the weekly, you can look at a month. Scroll out, you see down at the bottom, you got the months right here. If you look at the weekly, of course, at the bottom. You have it broken down by that. So we're going to put it on the weekly for that. You can come here. So we have Jacobs Engineering, and we'll compare them with SPY. See how it's gone. So then you see it also purple. Look at the purple line. Wow. Jacobs Engineering has been trading above the SPY. But it's amazing, everything follows the SPY. Same trend pattern. But they're doing good. Check them out. All right. And if you want to add studies, we'll get rid of this compare because I don't want to have too much stuff on here. So if you want to add studies, you click there. It has all the top studies. whatever, whichever studies you're into. You can click all studies, bring that up, and you're aware of all of these. Bless you. You're smart. You know what? This, I only know about two. That's all I really use. But in your spare time, you can go through them, and why not? So, for instance, we want to go and we want to select the Bollinger Bands. Bollinger Band, you place it up, and then you can edit it if you want. I'd rather not have fields, so channel field, we select that. Now it's clean. Okay, moving period, with standard deviations, and we'll leave the lines white. That way it doesn't get all confused. Those different colors. So that's that. Yeah, that's beautiful. Down here at the bottom on the chart, I'm sorry, I'm jumping around. You can also select your candle types. Regular candles. Slow bar. See the difference. All right. Got candle types, wicks and stems, color bars, open closes, hollow candles. Also have the I'm sure I can Aishi. I don't read the Japanese and I don't speak it, but that's what that is. Really didn't look at much difference from just a regular candle. Interesting. Somebody knows about that? Leave a comment in the bottom. There you can put lesson on that. You can have your line graph, which that gets confusing with Bollinger Bands. That's that. And you also have your color band. Right. We're gonna go back to just keep it endless. All right. The draw tool, right here, select the tool. So you have channels, continuous, cross line, doodle, Fibonacci. I want to learn how to use Fibonacci. I'm gonna have to look up some videos on that because it just looks cool. So I'm gonna click on that just because. And we'll all say start. I absolutely don't know what I'm doing, but you can see it enter some data right there. I don't know what none of it means, but a lot of people use Fibonacci. If you want to get rid of it, right click and it's gone. Okay, so, and then you can clear products also. You can do channel. So channel, okay, I see how that works. Probably shouldn't click there. Let me go back to undo. All right, so if I want to click the channel, I guess you can see which how often it hits those bars. That's pretty cool. Give you another little version of trend. Do that. All right, so back here you have your schedules. Well, I shouldn't say schedules, but your time So you can click for today, watch the stock for today, watch the 1 day, 3 day, all the way up to the 1 year, the 5 year. And this company is actually a pretty good company. Whereas the stock has just been going up. Might need to look into this Jacobs Engineering place. Yeah, since 20, well, for 5 years, been doing anything. Pretty good. It's double. Congratulations. Go back to the Monday. That's the market's close today, so I really want that. Now, on this page, somebody had commented, oh, I'm sorry, one more thing. Down here at the bottom, you have another screen, and this has your volume in there. You can edit it and change this also, and change the colors or whatever. You can put another study in the bottom if you like also, so you can get rid of this if you like. I like to keep the volume up though because, well, that's important. Although the bar chart does kind of correlate that, and so does the Bollinger Bands. It's like a lot of volume in between. It's narrowing. So I'm not going to do a candle chart, candle class because, well, that's not my strong suit right now. I'm learning. But I will say this. If you wanted to make a trade from this page, so let's say you were looking at the market going along, you know, boom, coming back up. So you like, went back up, boom, hit that top Bollinger Band and bounce back, going down, stay down, 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 and it hit the median. And you're like, okay, I'm gonna go in right here, right? So, because you saw it trying to pull back up. So what you would do is you can double click and it brings up an order. You don't even have to leave the page. Another way you can do it as well is you actually would have to go to an order page. Tool here, order entry. See, this is taking time. Meanwhile, while that's happening, you're missing it, running up, and you didn't get in time, and you lost all the gains. See that. So you could just leave that open, also, and that'll just trail along whatever you're doing. Set it up, put your symbol in there. See, so it already auto-populate your information. And that's if you want to just buy the stock price. So you could do it that way, just keep it up, and then whenever it hits, say the price that you want, and you click buy and make a move or sell, short, cover, whatever you're doing. So 1,000 shares. And balling over here, more like 10 shares. Make sure, this is something too, because I made this mistake. Whenever you're doing your orders, I should do a whole nother video for this, but whenever you're doing your orders on this page, for some reason, E-Trade Pro, I guess they assume that you're already rich. You must be on here because you got it going on. So make sure you double check your quantity, because I did an option and I chose 11 on a put, and I lost $3,000 like that. And that was a mistake. I didn't mean to click that. I meant to do one. I could have handled losing the 300, but it was nothing I could do because it happened so fast and I wasn't paying attention. Plus, I'm still trying to learn the platform, so right. But I was willing to sacrifice that 300, but lesson learned, right? So make sure you change your order quantity. Make sure you don't be in such a hurry. Like, oh, I got to get in. You know, just watch the chart, and as it plods along, then make a plan and then execute. Because see, even if you missed this one, it would have went up and it came back down. And then you could have got in right here. You could have got, or down here. You got in the same games. You see, you had other opportunities throughout the day to make money right here. You could have made some money. If you're doing calls, that is. If you're doing puts, boom, made some money. There's always money in the market there. So with that being said, and here you can click options. We'll go through that. That's another class. Definitely make sure you pay attention to your orders. Whew, that can break. But again, you can double click, say like if you were in this position, you got in here, double click, you place that order, boom. All right, you own it now. So you own it, it runs up, bam, runs up again, bam, runs up again, boom, runs up again. So here you had like 5 minutes of fame. You see it trying to push, but it fell back, and you can stay. Double click, you can sell and close your order. Through it. Made your money quick, fast, and you did that all on the same screen. So this is actually pretty good. So again, if you see an entry point, you can go in. Boom, boom, boom. So you want to do something here. I probably wouldn't mess with this guy either. Here might be. All right. See, what else did I leave out? We'll get rid of this. Clear the drawing. This channel thing's gone. These you can select advanced. There's also the guy, let's see, on the Brown Report on YouTube. You can check him out. He has pretty in-depth videos also. And to change, I kind of like my colors like they are. If you really, this isn't helpful. This is from E-Trade itself. You can do the tutorial, and that's super helpful. Down right here, if you want to do a trade also, this is another way. You click drop down box here, buy, sell, short, cover. So there's 3 ways you can do it. You can go to the tools, bring up an order box, and have it sitting ready to fire. Or you can drop down over here with the cheeseburger and buy, sell, short, cover. You could do that. And what else can you do? You actually have your events and stuff over here, so you can change, you can add things like, say, within this chart. It's earnings seasons right now, so you can click that. You can see when this company has their earnings. So we'll go back out. We'll go to a 1-year chart. And we'll look and see. Here you go. When they have their earnings. This will give you a historical perspective of how this company stock price reacts towards earnings. Most things run up during earnings and then drop back down. This one seems no different. So making those earning plays, well, I tell you, see, drop down, see up top. But you could do that, and we'll get rid of it. Let's see, so what else you got here? Show splits and dividends. They pay a dividend. Oh, this is a dividend stock too? Wow. So for all you Wall Street trapper people, you living off them dividends, you could do that. Pay your phone bill. But again, let's see. So we'll get off this, and maybe it's too long. So just click on it, and all right. And again, remember, when trading, the trend is your friend. Shout out to Ian Dunlap, EYL, because try not to trade against the trend. And also, look at the trend, and this will tell you if this is a good company or not. I know a lot of people are big on AT&T right now, so we're going to look at that. Oh, I didn't click it. Thermo Scientific. This is good too. Thermo Fisher Scientific. Look at this trend. You can see this right up. And for all you military people that know how to read maps, read right up. Look at that. That's good right there. That's what you want to see. Not this. Yeah. See? Put it a 5-year. You see? Right down. And I mean, I know they're doing a little HBO Max thing, but I don't know. But make your own decisions. I'm not here to tell you what to do. This is just more about navigating through the charts. And what I'm doing right now is scrolling back and forth, in and out with my little roller bar, or you can click here. See more. Zoom in. Or zoom out. Okay. You also have the undo and the redo over here for you. If you say add a study or something, and you want to get rid of it, then you can redo or undo. And also remember, you can link this chart to any other item with these tabs and follow it along. That's that. From what I know on the charts, more importantly, you have it set up and you can right click and delete the studies. More importantly, double click, brings it up. You can place the order right there. Or hamburger, fine, brings it up. Same thing. So, and watch your quantities, please. All right, that's it. Stocks 5150. Get it how you live. Enjoy yourself. Enjoy your day. Peace. Hey, what's up, y'all? It's Stocks 5150 today. I'm going, well, not really going live. I'm recording. It's 13:05 today, and I got in on Tesla stock. Against my rule. My rule is to trade 3 trades and then stop. But I suck at following the rules. As you can see, I'm up today for, oops, didn't even do that. But I'm up 445 on the day. And that's pretty good. I was doing good hitting it. And what I'm doing is I'm trading a Tesla. I have a Tesla call in for 790. Of course, once I took this, I think I took this right here when it was going down. It was about to hit the 20-day. And I was like, okay, so this is a good time to take this call because it should hit here and bounce back. I used the Bollinger Bands. But, of course, I was wrong. It acted like it wanted to pull back. And then lunchtime came. And normally, the strategy that I use also is I trade from noon. See, I started a little earlier today. But normally I'll trade noon and I'll trade Tesla because it does drop the whole time. It's crazy. Like people take lunch money or something. So my 790 call, I put it in and I think, what did I pay for it at first? Let me go to this. I got it for 360, and you can see 790 call right here. Well, I have it right here. It's only worth, well, they're asking 182. So now it's just about the weight gain. And so we can get back to 790, break even, because today is Friday and it's 1 o'clock. I'm really thinking it'll probably get up to 785, but if I could just break even on this, I'll be good. But again, if I lose, I deserve to lose because I broke my rule. 3 trades and stop. And the 4th one always craps me out. We'll see what happens. Maybe it's not true. Maybe this will be a winner. My goal is to make $100 a day. You know, just casually day trading. has nothing to do with my long-term stuff, but just casually day trade, trying to make 100 a day, keep it simple. Some days it works out. Like one day this week was a really, really not good week. Anybody that's in the market, you already know, it was red all week. And but I ended up on Tuesday, I ended up $65 up. And then Wednesday, no. Wednesday, I ended 65 up. And Thursday, I ended 85 up. And then today, yeah, because Monday was a holiday, I guess. And Tuesday, I just missed it. I work night shift, so I missed it. So we see, it's trying to push back. It's getting that volume, that after lunch pop. That's what we want. We needed to get up. On a call again, what I'm saying is I want the price to be above 790, which at this point looks like a stretch, but I think it can do it. So, just gonna sit and wait. And I'm actually gonna just leave this video up for y'all and let it play out. See how it goes. There it is, right down again. It's gonna bounce. I think I'm gonna run out of time. I'm gonna have to take a big L on this one. That's what I get. Not following my rules, stick to my plans. I'm okay with taking a 50 cent though. Back, and like I said, true to my word, at 3 o'clock I'm getting out no matter what. So right now we're at 50. I mean, it's understandable though because this expires today. I shouldn't have took this one. I should. If you're gonna do expiration, date of expiration trades, you want to do those early in the day. You don't want to wait till after lunch. That was a mistake. But it's making a run. It's trying to do something. But it's still not going to do much. See, 50 cents, 55, 52, off 3 o'clock. And oh, made another run. Get out. I think I put in an order for 63. Yeah, that's just me. My little up, there it is. I'm in and I'm out. 64. Now watch it shoot all the way up to like back to $2 or something, because that's just my luck. But still, it's fun trading, and I got something to do, so I'm gonna be out. I don't want to leave that out and leave it open to expire worthless. But I did take an L on that. I lost $300 on that. It's fine. It's just a proven point. Not to trade, not to overtrade. So that puts me up for the day 148, which my goal is $100 a day, so I'm still good. See, you can see even though it's up higher, the price is getting lower. Less data, time's running out. Well, that's it, y'all. So look, hope you enjoyed it. Tesla rode along those Bollinger Bands all day. And again, like I was saying, it wants to close higher. But overall, it's still low, still dropping down. I don't know what's going on. Well, I guess earnings season. And people are taking profits, selling off. Why not? Get your money, cash it out. All right, stocks 5150 and get it how you live. Peace. Stocks 5150. It's K-Dub here. On my page, I had a comment from Brisa and Friends Toy Review. And they wanted to know how to set up the hotkeys on eTrade Pro. So I'm going to show that right quick. First thing, just pull this up, pull up your own page. I'm running out of page, so I'm going to go to my study chart, and I'll do it from here. Shrink this down so it doesn't look so busy. Probably should do this first. Okay. First thing you want to do, go to your tools, click tools, pull up your order entry. All right, the order entry come up. Then next thing you want to pull up is market depth. Okay. Now you go to the menu on order entry. You see here in the drop down box it has speed key setup, tax lot setup, etc., etc. All right, so what we're gonna do is go to speed key setup. These are the hotkeys also. Speed keys, hotkeys, same thing. All right, you see right here it has a setup for what you want to do. You can press F3, 1, F2, F3, and it gives a description of what you want it to do. If you want to change something, so let's see, right here I select this because I like to trade options. And we click edit. So for speed key F1, we can, in the drop down box here, we can place an option order, or you can cancel, you can change it to whatever you want. But we'll do place an option order. Then we can either have it select for buy to open or sell to close. And we're gonna buy to open and the number of contracts you wanna do. I'm not balling like that, so we'll just do one contract at a time. You can select your term for the day. You can select the destination, whichever market you want it to go to, the NCBOE, the IC, whichever exchange you want it to go to. We'll do auto. And the price, you want market price, stop quote, stop limit quote, or the bid. It's best, I'll do the bid and see to put 1 cent above the bid. All right, if you would have did the ask, it does the same thing. If you do stop on quote, and then you will put what you want over there. So we'll do the bid, and it'll give you 1 cent above that. All right, so use local default, local order ticket. We'll leave it at the default. And then this is, I'm not sure what these mean. Save the order, but we'll click OK. And you'll see right here, F1 is now by 1 contract, 1 cent above the bid, and it's auto, and it's for the day, and it's the default. Okay, so now you click OK. All right, so now I want to use it. What we do is, so you come to your computer, your laptop, or whatever you got, and you press F1. Nothing happens. So what you have to do, oh, something happened, but see, that's Microsoft being busy. All right, so what you have to do is you have to click within here, within your order box. Let's just say we want to do SPY. All right, so we'll click SPY. And we're going to do options, so we select options. See, how does this work for that? But we'll see. F1. Press F1. Brings it up. But because the market's closed, that's why it's not allowing me to place an order. Oh, something else I see. In order to use the hotkeys, you need to have level 2 data subscription. Well, that's how you set it up. Then you have to have level 2. There it is. And I don't have level 2. Which level 2 I've heard helps you trade better and do things of that nature. But still, that's how you set up your hotkeys. We'll go through it again real quick, just for kicks. All right, go to order entry. All right, then we go to market depth. Then we go to speed key setup. And you select which one. See, that's still an option. And you select whichever one you want, and you can edit it. And we can make Alt F4 be whatever we like it to be. You can buy stop, place, save, order, cancel all, etc., etc. Cover, boom, boom, boom. So that's how you do it. Set up your hotkeys. And that does help with your trade. It makes it faster, but apparently you must have to have level 2 in order to do that. Let's see if that's actually true or not. Yeah, it's true. All right, but that's how you set it up. Stocks 5150. It's crazy. Stocks, it's crazy. But that's how you set up the hotkeys. K-Dub, I'm out.
Bitcoin is divisible by a lot. Each Bitcoin can be split into 100 million smaller units called Satoshis, so you can buy or send whatever amount you want. Bitcoin lets you control your finances. Kraken lets you buy Bitcoin.
This is the GMC Sierra. Available with the ultimate luxury interior. GMC Sierra, it's the truck.
Morning, my friends. Stocks is crazy. You see the market is down. It's January. It's crazy. So today video I'm going to do a quick tutorial on placing an option trade on E-Trade Pro. So let's say you want to buy the SPY. You've been watching the SPY and you got your chart set up. So this ain't about that. So you already know how to do that. So you're watching it. Two things you can do. First thing, I have this set up for my chart is linked to this, to that. So I got them set on the same link. So let's see, the price is at 465. That was the last price. And I think that the stocks are going to go up. So if I think it's going to go up, I would go 2 into the money. The market's close, so it's not showing it how it really looks like. But 465, and I think the price is going to go up. So 465, let's find it right here. And so I would do a delta of a 5 or a 6, preferably a 7. Try not to lose if you got your market direction chose correctly. Now, excuse all this noise of me moving on my chair. But judging by the way this market is going, it's probably going to go down. So we'll keep it realistic. So price is at 465. I figure it's going to go down. So I would go the same way. Deltas are the opposite over here. It's a negative delta, but we would go right here, 468, do a put. So what you do is you select it. It brings up a box, the order entry box. I slide this over to the side. I'm watching my chart. Because I have this box right here linked with this box, link one. So whatever I select here pops up over here. And so now what I'm watching is my actual order, and I can see how it moved throughout the day. So I can see that the high for this 468 put was 420. What is that? The high was 435. It met resistance right here, 416. So, but the volume on it, you see how the volume decreased. So a safe bet would be to think that this will go to, at the most, $3. That's the most. This right here, stretching it. But judging by the way it's trading, $3. So you can get into this one, or you could. Like now, it might be a little too late. But if you got in right now, you can stand to make. It's at 275 right now. You can make quick $25 off of that. Get in, get out, depending on how many shares you get. But hey, money is money, right? Green is green. Best spot to get into this one would have been down here at $2, and then go up, make quick $100, depending on how many you place. And I only do one at a time. But anyway, so we're gonna do this for educational purposes. So we want to go in at 273. We got our limit order, number of contracts that we want to have. So we'll do one, because small account, that's all I talk about. And then you place buy to open. So you have insufficient funds because this account sucks. So that's that. That's how you do it. Now, if you want to be, another way that you can do it is, let's see, I'll go to this chart. It's the same thing, really. You identify which way you want, or which direction you think the market is going to go, or the stock that you're watching is going to go. You can see here the SPY. It's right here in this channel between 468 and 466. So bounce down to 466. So the way it's been trading today, it should go back up, right? That's what we look for. So we're at 466. You would go and get a call for, again, keep it safe, go 2 in. So you would do a 464 call. So you would select it and click on it. I just left click. It brings up the box. Then, boom, buy. And then you in it. And hopefully, you're not like me. I'm in the wrong direction right now. You see this? Yeah, this is patience, my friend, patience. I gotta wait. And yeah, I'm YOLOing it on this GameStop, but the apes are letting me down this month. They letting me down. We'll see how that goes. All right, so that's it. Stocks 5150. That's how you place a call option or a put option. Real simple. Right click, bring up the buy order, the order entry box, or left click, however you do. You click into it, or double click, and bring up the order box. Place your trade. Happy trades out there. Stocks 5150. Stocks is crazy. It's crazy. Enjoy your day. Good morning, afternoon. Stocks 5150 here. Stocks is crazy. Listen, today what we're going to talk about is creating a watch list on E-Trade Pro. And it's real simple. So you can see here I got a couple of watch lists. I got ETFs to watch, investments to watch, Massey Trades, shout out to Massey Trades, and Trade and Travel, shout out to Terrier Trade and Travel, and the VIX, so watch that also. So you can select, you click the drop down box and you can scroll through them real quick, whichever ones you want to watch. All right, so let's say, and we have a default one here that comes with E-Trade Pro. So let's say if we want to create a new watch list, you select new here. You can name it, and we'll name this one Stocks 5150 for the channel. Please subscribe, man. Help me out, brother. Need the bread. You need the help. Not really, but you know, doing it for the love. All right, so here we go. In your available columns, you can select, well, I already got them selected. The last change, trade. If you want to change anything, like say you don't want the bid in there, you can remove it. And if you want to have the bid back in there, then you can go and you can add the bid back. Boom, like that. Total volume, change it, close, dollar change, the percent change, news, or anything like that. All right, so you can select what you want to see in the columns of your watch list. All right. What's this? Just saw something that looked interesting. Pre-market percent change. I think I'll add that in there. I might come. I might start doing some gap ups. That might help me out with that. All right, so we call that stocks 5150, and you can select your settings, default list, columns. We named it what we want to name it, and we click OK. All right, so here we call this stocks 5150. This is the name, QQQ. We got that symbol in there. And if you want to add another one in there, just highlight it and type it in. So we want to watch the supply. We want to watch Apple. Type the ticker in, press enter. It's just that simple. And it brings up the data that you need. The dollar change at close, percent from close, last trade, ask, bid, total volume. There it is. Pre-market percent change. Yeah, I think that might help me out. Might add it to all my lists actually. So there you go. How to create a watch list. And watch lists are very important because, well, you shouldn't just jump in and start trading just because some guy on YouTube said so. You need to pay attention, see what's going on, see what the highs and lows are for the day, things of that nature. All right. So that being said, that's how you create a watch list. Matter of fact, it looks like I changed that on everything. I got a percent market change on there. I think because I did it in the defaults selection, which that's all good. Now, that's that for creating a watch list, stocks 5150. Y'all have a good day. It's crazy out there. Enjoy yourself. Be safe. I'm out.
We, the members of Family Tech Support, didn't volunteer.
We were chosen to be a round-the-clock
hotline. We get slammed with a ton of screenshots all at once on Grandma's iPhone.
We explain,
then repeat. I never click on anything weird. Dad had downloaded the internet, I think.
Mom's Mac is losing it.
Flashing storage almost full. Just the usual madness right before dinner gets cold. We're no tech gods.
But Clean My Mac is here to tidy up this family tech chaos. Now all handled with care. Your dinners and your Macs.
Hey, Stocks 5150 here. I just discovered something. It may not be new, but I just found out about it. You can do this on TD Ameritrade also. That's what made me have the idea. I was looking at a video on YouTube. Shout out to Trading with a Dummy. He's the one that did this on TD Ameritrade. So let's just say if you, you're trading options, or if you're trading stocks, but if you're trading options and you want to, you're looking at the charts, you're watching it all day, and you see that the market's closed right now, so that's why I'm doing this. But you see that Apple hasn't broken past 165. So you're like, okay, all day it's been trying to get past 165. It can't, keeps going down. So you're like, I'll put a put on there. But I'm going to be busy. I don't want to sit here and watch it all day. So how do I do that? Here's how you do this. If you want to, I want to trade Apple 165 put, and I see it's at $2. So what I do is I say, right click, brings up the box, and normally, because you want to do an option, so you have your option selected, and you want to just get one put. My computer is really dragging today. Okay, so you want to get a put for March 4th, 165. That's your price. That's your bid, your ask. All right, you put that in, and normally what you would do is you would hit buy to open. But what we want to do is we want to place some conditions on this. So you click here where it says conditional. I already filled this in for time's sake. So now what this is going to do, and you can click here, you see it has contingent, bracketed, one cancels all, one triggers all. But what we want to go to is one cancels the other. I think that's what that stands for. Yeah, one cancels the other orders. So this is the first order. The first order, what we want to do is we want to purchase an option on Apple, a put for this date, expiration, and for this strike price. And then we enter, see, this is the actual bid and ask and last price. So we want to go limit order and we put in our price. So say we want to do $2 because we figured it should bounce to 2 because that's the bid. So we go at the bid and we're going to go good to close, correct? Okay. So, and also when this first opens up too, make sure you have the correct number of contracts selected because it pops up with 1,000 sometimes, but pay attention to that. Pay attention to this. All right. So next we move down to the next box. Let me deselect this because this is how it'll look. This is how it looks in the beginning. So then the next one, I want to place one cancels the other orders. So this is the one that'll execute first. Then what happened next is I say, I want this Apple option, same date, same expiration, same price. I want that to get, I want it to sell if it reaches $2.50. So I figure I just want to make $50 on this, you know, so because I've been watching it all day. So if it goes to $2.50, boom, it'll pop out and I made my money and I enter good to close. See, it's at asking price is $2.30, correct? All right. So the next thing, oh, and this right here, you click this box, trigger when presentable, boom. Okay, so the next thing we want to do, this is kind of like your stop loss. Same thing, option, Apple, put, expiration date, same strike price, and then you have your last, your bid and your ask, number of contracts. We also want to click here, sell to close, correct? Sell to close, limit. Here is our loss. We want to enter 180 because I only want to lose, that's, I'll go for $2, 180, that's 20%. So I'm risking 20% to gain 50%. So that's what I'm trying to do on this one. And you hit trigger when presentable. So what'll happen is this stock right here, as Apple bounces around, and when the price comes in at $2, boom, this will activate, and I bought, and I'm in this option now. If it hits $2.50, good for me. It sells, and that's it. It closed. I made my money. If it goes down from $2 and it hits $180, then it gets out and cuts my loss. Then you hit submit. Also, what I did was I clicked save order because, like I said, the market is closed right now. So I want to try this tomorrow. That's what's going to happen. So you hit submit. My order status chart. See, because I hit submit, nothing really happens. It just submitted it. You see, I got it saved. So I hit it twice. So I got 3 of them. So I'll just get rid of this, cancel that. Same thing, cancel that. And the one that I have now, you see I have listed, I have this saved to buy Apple 165. That's my expiration date at $2. It's good to close. And to sell it, if it gets to $2.50, boom. And also, if I buy it for $2 and it gets to $180, sell it, and then I'm out. That's my loss. Now, we'll see what happens tomorrow. And I'll see if it executes or not. I got it saved. We'll see what happens. All right. Stocks 5150. It's crazy out here. Let's go.
Introducing the all-new Buick Enclave with premium details throughout and room to bring everything along for the ride. The Enclave puts you at the center of it all. Buick, exceptional by design.
It's not too late to score deals on holiday gifts at your Going Gone by Dick's Sporting Goods. Find unbeatable savings on thousands of styles from top athletic brands like Nike, Adidas, Under Armour, Jordan, Kalia, and more. Plus, score an extra 25 to 50% off select clothes and shoes. New styles arrive daily, so there's always more holiday gifts to discover. Don't miss your chance to score the season's top gifts for everyone on your list at Going Gone, your holiday deal destination.
Hey, KW 5150, stocks 5150, stocks is crazy. As you can see, the market is going down, so ain't no trading right now. But I've been getting some questions about this over here in the right-hand side, the purple, and that's called the volume profile. And one of the guys on YouTube, BMoney9829, he asked, so shout out to him. I'm gonna show you or him how you set this volume profile up. This is called a volume profile. The volume profile shows the amount of buyers and sellers within a given price range. So kind of like we all know about volume. So with volume, we know that at this date and this price, this time, it was 100 million people. Wow. It was 125 million people that were interested in this position at that time. Conversely, on the other side with volume profile, that works as at this time. It doesn't give you the actual specifics. You can set it up where you can see how many people are in there, but I have mine just with the columns. So you can see the highest at this point right here at the price of 405.41, it had the most buyers and sellers. So as you see here, at 386.38, volume was low, and it wasn't that many people interested in it. Volume profile wasn't on your charts. Your chart looks like this. You go to your studies, go to all studies, scroll over, go to volume profile, double click, bam. And that's that. And this will help you 1 minute. So let's zoom in. So we can see that right now, 382.73 is where you have the most buyers. And if you look at how it's been trending, you see it hits there to there. So it's pretty good. Like I see, so we're down here now at 381. Chance so far today, it has not happened, but we all know what's going on. The Fed is raising rates, baby. The tax man coming. Get them interest rates up. Next year, buy. And then next year after that, 2024, sell. Hey, KW 5150 stocks. It's going crazy. That's it. Volume profile. All right. Peace. Hey, stocks 5150, KW 5150. Just learned level 2. Level 2 trade, we hear about it all the time with like TD Ameritrade on videos and everything. And I want to show this on a video that I'm on, actually on a position that's actually doing pretty good. This one right here, I'm in. I'm up 192% right now. Not flexing it off because, hey, look at the day. But because I'm actually trying to do a gap fill. See, I'm waiting for this to fill in here and then I'll get out. But okay, so that's that. What I want to show you guys today is how to get level 2. So we're going to select this option right here. And so I'll select that. That's what's highlighted. Then I go to my tools, go to market depth, like the ocean. Comes up. You see right here, it's showing QQQ, right? So it's not showing what I want to see. So the one that I want to see, so what I have to do is see here, link to, and I link this to link to. Now what it's going to show is whatever I highlight, whatever I select. So see, I select the 400, the January 26, 400 call, and real-time data. It's giving you the prices, the people how many, the size, and what price they're willing to purchase it at. So you can see it coming in real time. Like for 1 or 2, it's not a big deal. But if you like a big time option trader and you need to know what's going on, or it's just good for studying too, because sometimes looking at the candles and stuff and everything, it gets a little boring maybe. And you're like, I really don't know what's happening, and I don't want all these this level to that level bouncing and everything. But here you can actually see real time the orders as they go in. It has the time on there and everything. Real good tool. So level 2, market depth. Link your charts together. Link to, or whatever link you want to hit and select it. So like this one right here, I'll select that. And then we'll wait for it. See, there it is at 1313, and the information should start flowing. Not much happening on that. So it needs to be ones with a lot of volume. See, the SPY one. Yeah. All right. So that's level 2. That's how you do it. KW 5150. I'm out. Stocks 5150, KW 5150. I had a question. Person asked, how can I oh man, my play's turning around on me. Trying to do a gap fill play today. I'm making this video about seeing your option charts. So I'm going to go over here to this right here. I don't want to mess with that. All right, so what do? You said E-Trade Pro and to see if you can actually chart an option. And I believe you had to be within the option to chart it. So like, see if I select here, first thing, you have your charts up, and then you have your position, and you have it linked. So link 1 and link 1. All right, so whatever I select here, it's going to show over here. So see, this is the chart for the January 27, 2023, 412 call, right? And we can see this is not doing good, but that's all right. So there you have that information. So let's say if you haven't placed the order yet and you want to place an order, same thing. You go down here to your options chain and whatever you want to go into. So you feel like, the market's going to go up. So what are we at right now? We are at SPY's at 398. So I'm like, okay, I want to get close to end of money. Should I do this 399? So you click it. It'll bring up your order entry, but also there's your chart right there. And you can see based on the chart, close that. And all I'm doing is left clicking. I'm not right clicking or anything like that. Let's see what happens if you right click. If you right click, it does the same thing. So right click is actually better. So if you right click, it won't bring up an order entry. If you left click, it'll bring up, left click brings up the order entry. So the right click on it, I just make a lie out of myself. Right click. And you see you have to be over the bid and ask also. So that's good to know. So nothing happens until you're over it. So you left click. So if you don't want to bring up an order entry box, okay, I'm sorry. If you don't want to bring up an order entry box, don't click over the bid or the ask or the last trade. Click over the open interest, and then it'll flip and select, and you can watch the chart over here. If you want to bring up an order entry, click over the bid or the ask, and it'll bring up an order entry box also along with the chart. Okay, so that's how you do it. KW 5150, stocks 5150. I'm out. So you can do your research. All right. Have a great day. Peace. Hey, KW 5150, stocks 5150, stocks is crazy. Today, given that this year has been like it's been, For most of us, I'm gonna talk about something more stable to invest in. It's a part of my portfolio already. I already got it pulled up. Ticker symbol is SWTSX. And what this is the Schwab Total Market Index. What I want to do is place an order for this. Again, remember I was saying it's probably going to go down to $60. So what I found out earlier was that normally in eTrade Pro, you can right click right here in the chart, bring up the buy order, and then you can place your order. So you got your ticker symbol here, got how many you want to buy. You want to buy it at $65. So we're gonna do $60. We figure the market will go down. We're gonna go good to close, and then that's about $2,000. So $2,200. Then you hit buy. What happens is this: you get this error, and I was trying to figure out why. Then I did figure it out. This is not an ETF. This is a mutual fund. A mutual fund is traded once per day at the end of the day. That's when everything takes place. It closes. It's at the close. An ETF is traded actively. So if this is an ETF, I could put that order in there and we could go and move forward. So what you have to do with a mutual fund is you have to make the actual investment. So if I want to put $2,000 in here, what I have to do is go to another screen and transfer money into this fund. Am I going to do that today? Probably not. What I'm going to do is, because I'm going to wait for this $60. I'm going to wait till it comes down there. I'm going to wait for it to pull back a little bit. But what I'll do is show you how you go about making that order. So we're going to go here to Tools. We'll go to Transfer Money. All right. Let's actually go to Trading. So I said it wrong. And we want to go to Mutual Funds. I'm going to bring up a new window. All right. So it's showing how much you got into the account and everything, and how my balance. I really don't care. But this is the Roth. And what we're going to do is we're going to put 2,000. So we enter the symbol. And our symbol is SWTSX. Sierra, there it is. It pulls up. Schwab Total Market Index. We select that. But our action, we want to buy, sell, or exchange. So we want to buy it. And the investment amount, going to place, just for the purpose of the video, we'll just buy one share. It's $65, right? So we'll do, because I want to put 2,000 in there, but we'll do one. So we'll do $65. That'll buy us one. It's $65.18 right now. So we'll do $65. Now let's just do 100. We'll do $100. All right. So investment amount will be $100. So then we have our ticket symbol here. Our action is buy, and investment amount will be $100. Preview the order. Okay, this is the preview. So what I'm doing is I'm buying. My investment amount is $100. And I can view the prospectus if you want to look at it or whatever. If you want to change the order, you can. If you want to cancel the order, you can. Has terms and conditions. You can read about the mutual funds, etc. But we place the order. And your order has been placed. And it gives you the order number, tells you what you put in, $100, reinvest in whole, because that's what we want to do for our dividends. And the status is open. And again, this won't take place until the close. Like it says, this order will be priced as of the close of the next business day. So here it is. My $100 is invested. And if the market drops today for whatever reason to $50, then I'll buy 2 shares of it. If not, either way, I have $100 invested into the Schwab Total Market. And that's how you do it with a mutual fund. Stocks is crazy. KW 5150. It's very simple. Just get out there and invest, man. And don't be afraid Do not be afraid. When the market pulls back, these are buying opportunities. All right. Look at that. RSI is at 30. Yeah. Why not? Buy it. All right. I'm out. Peace. Hey, stocks 5150, KW 5150. I'm just gonna do a quick little note. This is trading psychology for me. Today, I went into this option for 400 call because the market was down. I'll go back to the full chart. And I want to talk about, well, let me go to, first I'll show you. I went into this position at 1042. All right, so we'll go to here. It is 1042. So here, I got in right about here, 1042. So I got in right here. Perfect entry, you can see. And this has ran up. What I was looking for, and I won't lie, I didn't do it intentionally. I was really just trying to capture this position, this bounce. I figured it'll bounce and I get this right here and I was going to get out. But then I looked at my chart. This is why it's important to look at your larger time frames, because as you can see here on my day trade chart, I trade on the 1 minute. So on the 1 minute, I didn't see much. But then, see how it's showing here? On the full chart, I went over and I looked at it on the 15 for that day, which is today. And I said, oh, wait, we gapped down overnight. So I was like, huh. And at that time, I think when I was thinking about getting out was about here, about 11 o'clock. So I was going to get out. It had got up right here. It had got up past the VWAP and I was going to get out. Well, I stayed in because I'm like, I want to stay in and capture this gap fill. This doesn't always happen, but today it's working. And you see here, I'm above my VWAP and I'm above the 8 EMA. It's bouncing off the 8, and that's great. And if it fills in here and gets here, then I'm really good because it'll level out and make up that gap. But it's really filling it in. This is on the 15 minute. We'll go to the 5. And same thing you see right here. It's filling on in. We got a lot of orders coming in right here. The time is 1:38. And what I'm looking for is to get about right here. If I just get even that low little bit right there at 399, the market wants to be at 400. And that'll be a good trade for me for today. So we'll see how it goes. Go back to my day trade chart. Right now, you see this is up 249%. That's a lot for me because normally my rule is 10% and I get out. 10% and I'm out. So we'll see how this one goes today. And like I said, if I hit that 400 mark, it's at 398. So if I get to 399, go back. It's almost filling in. If it gets right here, some more buyers here, and they'll bring that right on up to 400. And it'll be a good day. All right. It's a good day already, really. I could get out and be happy with that. See, looking at it on the 1 minute, it's turning around. It's met that resistance, and then it's going back down. So we'll see what happens. Something that we see here, we see a little consolidation going on right here. That's good for me because I want the orders the people fill in, and then we'll have a nice bounce. Remember, I'll probably try to get out, cross this into that 399 mark. All right. Let's see if I'll do it or if I'll be greedy.
think we're actually live this time. I'm Drew Badger, the founder of EnglishAnyone.com, and welcome to another live video here on YouTube. And we'll see if we get this working. Should be coming through clearly. All right, making sure we're okay. So I'll give people a moment to come in. We should be live and working right now. But the reason I wanted to make this video is because I get really one question. Actually, I get a lot of questions, but I get one particular question over and over and over again from students. And this is, how can I actually speak fluently about many different kinds of things? Well, haro. So a lot of people, again, they can understand a lot of English, but they have trouble expressing themselves, and especially if the topic is new or unfamiliar or something, then they have trouble being able to speak. So I wanted to talk about this because in a video I did a couple of
Hey, Stocks 5150, KW 5150. I'm just going to do a quick little note. This is trading psychology for me. Today, I went into this option, a 400 call, because the market was down. So now, SCHD, or the Schwab Fund, which is the Schwab Strategic Dividend Fund. All about the dividends now. That's the hot thing. I'm following the trend. Interest rates is high. SCHD, it's a Schwab fund. I like those funds. People like Vanguard also. But if you look at this, you can see this fund since 2020, it's going up. Even with the Fed pivot, it hasn't dropped much. So, but I think that's because people are really going into dividends and turning more into that because everything else is kind of going sour for 2021. So people were pouring into that. The time to have got into this was back here. But of course, that was the time to do anything, right? Yeah, missed the boat. Let's see. So the Schwab U.S. Dividend Equity ETF. And we're going to buy, what do we say? I think I'm supposed to put $2,000 in there. Price is at $75.74 right now. In the holdings in this, you have companies like Top Merck. We have Merck and Company, Amgen, International Business Machines, IBM, Cisco, Broadcom, Home Depot, Texas Instrument, Pfizer, Lockheed Martin. You know, some pretty heavy hitters in there in that top 10. So we're going to go ahead and get it going. We want to invest $2,000 into this. So again, you have your symbol here. Last trade was $75.74. And what we're gonna do, let's see, it says $75, 2,000. So I think that'll be 20 shares, maybe 25 shares. Close. 25 shares at 18, it'll be $1,800. So can we get 30 and keep it under 2,000? No. I'm gonna keep it around 2,000. Stay true to what I said. So that'll give us 27. What we're gonna do, we're gonna keep it an even number. And we're just gonna do 30 shares. It's gonna be $2,200. And we're gonna buy that limit 70, 75, 75, 40. Yeah. We're gonna do 75. I'm gonna go with the bid. Good deal, do that. Good to cancel. So 30 shares, 75.40. What was it today? Let's see what was. So we opened at 75.49. Yeah. So 75.40. Let's see it just trends right here in that range. But the key is we're doing 2,000. That's all we want to do. Yes. Let me take this down, make this more closer to 2,000. All right, there it is. 27 it is. I should do 25. No. 27 it is. 75.40 and buy. All right, so we got our order in. 27 shares at 75.40, and that's what it is. So we'll see if that hits. We go over here to our order list, order status, and as you can see, we are on par. We have invested 2K, approximately 2K into Schwab. We have invested 2K into Schwab U.S. dividend equity, 1K into the JEPI, 1K into TQQQ, and 1K into XLK. Now the Schwab total market, remember from a previous video, that's more like an investment. So I have about 1,800 left over, and I need to put that into the Schwab total market, and that'll be that. And I'm going to do that when the price drops down to 60. The price right now on the Schwab total market is 65, so I'm going to wait a little while, and then I'll go in with that. All right, so that's it. Those 4 purchases today, and that one should take care of them. We just got them all in as limit orders, and we'll see how it goes. All right, KW 5150 stocks is crazy. We out. Peace. Hey, KW 5150 stocks, 5150 stocks is crazy. Today, what I'm going to talk about, I'm still doing this part of series of me refunding my Roth IRA. And part of the plan today is I've been doing a couple purchases already. I'm recording them. And what I'm going to do right now is I'm going to do TQQQ. And I'm going to invest $1,000 into that. And so this right here is a leverage fund, and it follows the QQQ, the triple Q. And as you can see, it's going up. It's the same old same, man. 2020, you got pandemic time. Fed went in, ran it up. Fed said they're taking their money back. Fed taking their money back. So now we already back down to, see, we are even, well, actually, we're a little lower, almost even with how it was before 2020. So I'm going to go in and buy a couple shares. Again, this is going to be for the TQQQ. This fund holds, you know, same thing as the Q holds. Apple, Microsoft, Amazon, Google, Tesla, NVIDIA, PepsiCo, the big tech. You know, 7% of it is in Apple. I might do a screen share so you can see that. So here we go. We right click. This is E-Trade Pro. We want to buy and make sure we got our right ticker in there, TQQQ. Price at the moment is $17.38. And because this is long-term investment, I'm not really even tripping on if I get this at a market or a limit order or nothing like that. I'm just going to go ahead and get it just for the sake of the video. So I want to spend $1,000. It's at $17.38. So that will be 50 shares maybe. It's close guess. So we're gonna do $1,000. So take this up. All right, 1008, like that. So that's 58 shares. We'll keep it even. We'll do 50 shares. All right, 50 shares. So we got 50 shares at $17.38, and yeah, the opening today was $16.76. I think I'm gonna put this in for a limit of $17. So I lied. So we'll do $17 limit, and we'll do this good to close or cancel. So, and why do I do that, you might ask? So let's see. Let's look at this. So we'll spread this out. We're right here. See the low today. Well, that was on the 28th. The low was, I'm covering up my box. The low was 16.1. Then we started here. The low was 16.50. And today, the low was 16.50. So that should be a mid-range. So actually, I think I'm going to go in at 16. I'll do 16. And like I said, I'll do 1,000. So now I'll keep it a buck and I'll do 1,000, like I said, for $16. All right, back at the 10:08. That'll give us 63 shares. Good to close. We got a limit order, $16. So I'm patiently, and I'm going to wait for it to drop down. We'll see how it goes. And buy. Got that order. There it is. 63 shares, sitting and waiting. We'll see how it goes. Like, not much volume right there at 16. I probably should have put it at 16.20. Who knows? It might trigger though. Goes down, then I'm good. And 16 is actually going back to October levels. We'll see how it goes. Either way, that is $1,000 invested. Well, we'll see. I haven't invested it yet. I'm just waiting for it to drop out. But $16 orders, TQQQ at a price of $16. Limit price, limit order. And that's it. So what we just did was made an order for TQQQ, $1,000 worth, and I did a limit order of $16 per share, and that's me hoping, which was pretty far down there. There ain't really no volume there. Yeah, I think I'm going to change that order from 16. No, I'm not. I'm going to leave it. We'll see. It should hit. All right, KW 5150. Stocks is crazy. I was going to change that order. Oh, and also look at that. If you want to change your order, you just click on it and you can change right here. eTrade Pro. This thing is so easy to use, man. Once you get it, it's got all kinds of tricks in it. But yeah, that's it. So that's my order. Buy 63 at 16. That's the order number. Don't call and cancel that. We're going to keep that going and see what happens. All right. I'm out. Have a great day. Peace.
So what is money and how does it get value? Paper money has value because someone says so. Bitcoin is different. It's like digital gold. It has value for many of the reasons gold does, but that's only the start. It has a limited supply, only 21 million, so no one can decide to just print more. Because no central authority controls it, it can never be shut down. And unlike with banks and credit card companies, you don't need approval to use it. It puts the power back in all our hands. Bitcoin lets you control your finances. Kraken lets you buy Bitcoin.
Hey, Stocks 5150, KW 5150 here. And today I am refunding my Roth IRA. Still got the order in here from the last video from TQQQ. Next up on the list is JEPI. E-I. Oh, sorry. Got to type it in. J-E-P-I. Now this ETF is a hot one. Everybody's talking about JP Morgan Premium Income Daily ETF. When you see it's new, you know, it hadn't even been around that long, but ran up a little bit. And it's actually at 2021 levels right now, which, you know, hey, seems like it's on the mend. But the thing about this, though, is it pays a dividend. And dividends are like, you know, interest rates are high right now, and everybody wants to have dividends and stuff in the portfolio. And hey, so do I. It's JP Morgan Equity Premium Income ETF. And today, the price is at $54.65 right now. And we're going to get us a couple, you know? We're going to get us a few. The plan is to invest $1,000 into the JEPI. So I'm not going to waste too much time talking y'all to death about what's going on and what's what. I will tell you what some of the holdings are in this fund, though. Let's see. JEPI has I'm looking at Market Watch. Okay. JEPI has number one holding is JP Morgan U.S. Government Money Market Fund, of course, because it's a JP Morgan fund. Abivine, Progressive, Bristol Myers, United Healthcare. So this is a dividend fund. It pays these companies, ExxonMobil, Hershey's, Coca-Cola, Pepsi, Honeywell. These all pay dividends, and then, you know, they pay it back. But I think the thing with JEPI is you can place options on JEPI. And so right quick, let's look at this. Let's go over here. Let's type in JEPI. Let's see. Oh yeah, so see, JEPI has options. So if you want to place an option, you want to play, you see what they got? They got, it's like a monthly option, good grief. So JEPI doesn't move around too much either. It's at $54 right now. And they saying above 54, it's $100. And that's a 0.60 delta. And I'm not doing an options class right now, but see that volume is like, you know, I guess you could do cover calls. That's what I think the popular thing is to do with this, is to do the cover calls and everything. That's not what we're doing. We are reallocating the funds back into this ETF right here, to this IRA. All right, so back to the chart. Today, we're going to purchase $1,000 into JEPI. And JEPI is going at $54 a share, so that's basically like 55. Let me see something. What did it open up as today? It opened at 54.62. Doesn't move around a lot. So it's 54.65 right now. The high was 54. It's 327. All right, so what I'm gonna do, 54. So I should be able to get with $1,000. I should be able to get $25. That's too many. So we're gonna break it down. 20. We'll go with 20. Keep it an even number. So basically $1,093 in there. And limit order, 54.65. Might as well do a market. We're gonna just go ahead and knock this one out. Should we do the market on close? We'll do market on close. All right. Why? Because I really don't care right now. I'm just putting $1,000 in it, and that's that. All right, so we're gonna buy JEPI. Boom. Got our order in. Go to our order page, and you can see pending right here, JEPI, market on close. And the bid right now is 54.51. Ask is 54.66. And I'm buying 20 of them. All right, so that's that on that, yo. Let's go. All right, so next up on the list, So we just purchased $1,000 in XLK, $1,000 in TQQQ, and $1,000 in JEPI. Now, and we have an order for, we're gonna wait for the 2,000 into Swap Total Market. So I'm gonna wait till that gets to about $60. So now.
JEPI, tipranks.com ETF breakdown. Today let's talk about my favorite dividend ETF, ticker symbol JEPI. Current share price at the time of this video is 54.34. Zoom out to the 5-year chart. Notice the price direction is upward. This shows positive growth. TipRanks analyst forecast is positive. Moderate buy rating. $117 large cap holdings, Pepsi, Coke, Visa, and Microsoft, to name a few. No position is over 2%. TipRanks.com also provides this tool. I like to use it for technical analysis. Select the time frame you trade to view instant data results. This ETF pays an 11% dividend that is paid out monthly. Great income for retirement. 200 shares you can earn 1K per year. The more you invest, the larger your dividend. I think you get the picture. TipRanks.com also provides similar ETFs to assist in your decision-making. Investing can be risky and you can lose money. Choose wisely. Please like and subscribe. Thanks for watching.
XYLD. TipRanks.com ETF breakdown. Global X ETF XYLD tracks the S&P 500. Trading at $40.68 at the making of this video. As we look at the 5-year chart, this ETF is now back at pre-COVID levels. 52-week range $35.10 to $43.72. Check out the price target. There is expected share appreciation predicted. ETF holdings are solid because it's the entire S&P 500. Large cap with $2.63 billion total assets. All the top stocks in one place. Did I forget to mention, this ETF is a dividend machine, paying average of 0.40 cents per share. Let's do the math. At 40 cents per share, 1,000 shares will pay $400 per month. Place XYLD in your Roth IRA and watch it grow. Please like and subscribe. Stocks 5150. Stocks are crazy. Thanks for watching.
And the volume is the total number of option contracts bought and sold for the day at a particular strike price. Trading volume on options is relative to the volume of the underlying stock. Hey, stocks 5150. Hey, today something crazy happened. Last night, Credit Fitch, I think it was, or Fitch Credit Agency, they gave the United States, Fitch Ratings downgraded the U.S. debt rating on Tuesday from its highest rating of AAA. That's what we were. Now we are AA. And that's kind of like getting from the major leagues going down to the minor leagues. And anyway, it hasn't happened since like 1994. And they're saying, you know, with all the stuff that's going on in the United States, like with the political instability, yeah, that's a real thing. And with our financial situation, you know, continually expanding the debt ceiling, raising the debt ceiling, and just United States operates off of credit. That being said, well, you know, even the dollar, if you look at it, it says that it's a debit note. So we operate off of credit and debt. That's how we make it. So, you know, it is what it is. It's the system. We'll see what happens in the future. Anyway, back to the stocks, man. Check this out. If you look at this is last night. Then that's the credit. They were going along, and then that's when the news hit. And look at this. Overnight was no hope. Just continuous straight down. Bam. We went down from 457, 456, all the way to 452 in the open. That's $4 drop right there. That's off that news from that AAA to the AA. And then it opens up, and then this is the rest of the day. And then, you know, this is the European market closes and got a little bump a little bit, but then boom, still falling. So this is where we are right now. The time today is 1500 almost. It's 2:59, 14:59. So it's almost 1500, 3 o'clock. This would normally be power hour, but we'll see what happens. I've got a feeling it's going to continue to go down. Momentum. And this is the 1 minute chart for the day. But let's go back year to date. Matter of fact, let's go 1 year out. If you go 1 year out, you can see here, this time last year, we were at 431. So we're still up. And right here, if you go right here, we peaked. We peaked right here, and this was at, the high was 439, and trended along, and then we had a little breakout. So it's room to fall, and it's room to grow, and then, you know, it's not really the end of the world. Like, even if we dropped all the way down here to, say, 400, well, look, we trended along 400, and then we broke out. No reason to think that wouldn't happen again, other than, you know, us having bigger problems than the ones we got. But we go back here to the 3 year, and here we are right here, and we see this range right here. This is March of 2022. We're falling in that range right there. You see? And now it did fall down from there, but see what it did? It bounced up. That's what it does. It breathes and exhales, you know what I'm saying? Contracts, expands. It's the stock market. So don't get freaked out. Even if you go all the way back here, you know what they say. These are buying opportunities. So if you keep your job or you don't, however it is you make money, if you have money, because this is all we have in the United States, to be honest, as far as like your future stuff, unless you're going to start a business or something, you know, shout outs to the entrepreneurs, you know, good luck with that. But as far as the stock market goes, you put your money in here, not all your money, but you invest some money in here. And then when it hits these lows, it bounces, you make some money. Now, if you're smart like the big boys, which I'm not saying I am, but if you're smart like the big boys, when it hits this bounce, and then when it gets up here to these highs around here, when it peaks, sell a little bit. You see what I'm saying? So bounce, go up, sell a little bit. Then bounce, go up, sell a little bit. You see what I'm saying? Put something in your pocket. Bounce, go down, go up, sell a little bit. That's what this is. Bounce, go up, sell a little bit. See, and this could be the same thing. Clearly it is, because it's not just dropping because because the rating got downgraded. These are actual people selling. Like, you know, look at us. We're at like 456. We topped up. We are at the height. The height we had was get it on this candle. Our height was 459. That was our high, 459.44. And so look, pulling back, sell a little bit. So maybe we fall back down here to 443 or something like that. And that's fine. That's okay. You know, we fill in some of these gaps right here because we gapped up. And, you know, we reset and start over again. could go back down here, 437. I'm not hoping so because you know me, I'm always on the other side of the trade. And so with that being said, what I did, because we also have earnings going on right now, I'll tell you about the play that I went into. Go right here. It's still going down. So I just went out a couple days because we got a couple more earnings coming out. And I bought two options. I bought them for $30, so $60 I spent. And right now I'm down 9%, and they're going at 28 right now. What I'm expecting is once this credit rating stuff settles out, the stock market will come back to its senses because everybody's come out, Jamie Dimon yelling and all of them, and they're just like, yo, this is like ludicrous, man. Our economy is doing good, you know, how dare you downgrade us, you know what I'm saying? But, you know, it is what it is. So maybe after tonight, you know, we get a little bounce and we pop back up. And if we pop back up and say do something miraculous, like come back up to, so we hit 450, that's where the bears want to go. So we're at 450 now. And so if we hit 450 and we bounce back up to, I don't know, this right here, 454 overnight, we just make that $4 back up. If that happens, I'm golden. If it doesn't happen, it's okay. If we go up to 452, I'm good. If it doesn't happen, I'm okay. But here is golden. Here is good. Let's see what happens. Stocks 5150. Stocks are crazy. I'm out. Hey, Stocks 5150. Today we're going to talk about something, a free resource. It's free. They have a paid resource also, but you can see here I'm on Yahoo Finance. And then you go to markets and calendars. This is important because throughout your day as you're trading or going into your day, it's outside, they call it fundamentals. It's outside influences that affect the market, not necessarily just, you know, dojis and whatever you're trading. You know, it's other things. Technicals have their place, and you definitely should use them. RSIs and support resistance, blah, 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 supply and demand. Yes, yes, yes. But something that's on the calendar that you're not aware of could come along and trip up your whole thesis. So today is September 12th. And what you do is you can see here, we have 206 earnings. We have 28 stock splits, 7 IPO pricings, and 58 economic events. The economic events is what we're going to click on right now. And we'll double click on that on today's date. All right, that comes up. And you can see up here on the top of the tab, it's listed by country. You have the event to your left. Sorry, we have the event here. Tells what's happening. Then you have the country, the event time, and then what month is for, and then the actual and market expectation if that's listed, and then the prior to this, what the results were. All right. And then you have, what's that revised from? So the country comes up, and here you have the Netherlands, NL. We don't live in the Netherlands. So what we click is this because the internet is smart. You select country, and wherever your home country is, you know, Google knows where you are. So the United States comes up. Today for the futures traders, you got soybeans, corn, beef, wheat, pork, soybean end stocks. All of that stuff is coming up today at 4 p.m., 1600, 4 p.m. GMT. And they have here, they have what it was prior to this, and then they'll have what the actual, when the report comes out. So that's good to know that that's coming out if you're in the futures trading or whatever. All right. For us, because I'm an options trader, I mean, this could affect things because, you know, corn, I believe, if I'm not mistaken, corn affects fuel, gas prices and stuff. And if gas prices drop, then, you know, energy starts going crazy. Well, not drop, but goes up because it's definitely not dropping these days. All right, back to this thing. So you see here, you have, what do we have for finances? Those are all futures. And then we have here, Red Book. I'm not sure what that YY stands for, but that comes out at 12:55. And prior to this, it was 4.1. So we'll see what that is and what happens. And that's it for us, really, for the United States. Now we can go up here and we can click on September 13th, the next day. Here, click there. All right. Same thing, it switches the country, so we got to switch back. Select the country. All right. Tomorrow, on the 13th, CPI data comes out. Core CPI comes out. CPI index comes out. Tomorrow's a heavy day. All that starts at 12:30 GMT. You have the MBA purchase index that comes out at 11. That's going to be before it. The Cleveland Fed CPI, that's at 3 p.m. Whenever the Fed's speaking, man, don't fight the Fed. We all know. But a lot of data is coming out tomorrow. And yeah, got crude and everything else as far as the future stuff goes. Yeah, tomorrow's a busy day, super busy. Good grief. Now, the mortgage rate with the central banks. And we see here too, they keep us in the dark. They don't have any, they have what is prior to this, but they don't have any actual or market expectations listed. So we'll see what happens. And yeah, whether the market goes up or if it goes down, we shall see. But trade wisely, and that's just another tool you can use so you can not be in the dark. And like I said, it's free. All right, stocks 5150. We are out.
Snap, tick, soar. Welcome to the dazzling world of the U.S. stock market, a place where fortunes are made and dreams come true. But what is it exactly? Imagine a giant marketplace where companies sell pieces of themselves, called stocks, to raise money for growth and innovation. Buyers, that's you, invest in these stocks, becoming partial owners. When the company profits, so do you. But beware, it's not always sunshine and rainbows. Companies can also lose value, which means your stocks can too. So is it a gamble or a calculated risk? That's for you to decide. Remember, the stock market isn't a sprint, it's a marathon. Invest wisely, stay informed, and maybe, just maybe, you'll hit that jackpot. Until next time, keep those portfolios diverse. Stocks 51, 50 stocks are crazy.
Imagine owning a slice of your favorite company. Sounds exciting, right? Here's how to buy your first stock in less than 60 seconds. First up, research. Don't just follow the hype. Understand the business, check its financial health and future prospects. Second, choose a brokerage. Look for low fees, good customer service, and an easy-to-use platform. Third, set up your account. You'll need your social security number and bank account details. Fourth, place your order. Decide how many shares you want and whether you want a market or limit order. Finally, monitor your investment. Remember, the stock market is a long-term game. That's it. Now you're a part of the financial world. Look at you, future tycoon.
Saddle up for a stock market adventure, folks. You're about to learn about a powerful tool called the 200 Moving Average. This isn't some wild stallion. It's a tried and true workhorse of day trading. Picture a winding river. That's your stock price. Now, imagine a line tracing its path, smoothing out the dips and peaks. That right there is your 200 Moving Average. As a day trader, this can be your compass in the wilderness of the stock market. When the stock price crosses above this line, it might be time to buy. But when it dips below, well, partner, that's a signal you might want to sell. Remember, the stock market ain't a rodeo. It's a marathon. And the 200 Moving Average, well, it's your trusty steed. So ride smart, ride safe, and let the 200 Moving Average guide you through the wild frontier of day trading. Loop ends, and so the journey continues.
5 ways to start investing with $100. Investing in the stock market, a beginner's guide. Calculate how much money you want to invest. You can start with as little as $1. 1. Decide your investment goals. Before you decide to open an account and begin comparing your investment options, you should first consider your overarching goals. 2. Select investment vehicles. One important thing to note: opening a brokerage account and depositing money is not investing. 3. Calculate how much money you want to invest. Decide on a percentage of your income that you can dedicate to building your portfolio. The general rule of thumb for retirement goals is to invest 15% of your income each year. but if you started investing later in your career or want to retire early, you may want to consider investing a higher percentage. 5. Consider what kind of investor you want to be. There are two major categories that investors fall into: short-term investing, also referred to as trading, and long-term investing. Long-term capital gains and losses occur when the asset is held for more than 1 year. Swing trading. Investors who take this approach are looking to buy and sell an investment after a few days or months to achieve a profit. 6. Build your portfolio. There are limitations on how much you can put in an IRA or Roth IRA in a given tax year, so you may need to open more than one type of account. Goal-based investing approach because it allows you to create separate portfolio buckets for your investing goals, each of which has a unique goal amount, time horizon, and risk tolerance associated with it. 7. Monitor and rebalance your portfolio over time. One advantage of robo-advisors is that this rebalancing process is done for you automatically. When in doubt, refer to your investing goals to keep your emotions and your portfolio on track, and remember that investing is a process that happens over time and not overnight. Thanks for watching. Please like, subscribe. Stocks 5150. Stocks are crazy.
Have you ever paused to ponder just how crucial a role dividend yield plays in your investments? Well, there's no time like the present. The concept of dividend yield might sound like a foreign language to the uninitiated, but in essence, it's quite straightforward. Simply put, dividend yield is a financial ratio that shows how much a company returns to its shareholders in the form of dividends. It's expressed as a percentage of the company's current market price. So, when you hear someone say a company has a high dividend yield, it means that the company is returning a significant portion of its profits back to its shareholders. But why is dividend yield so significant, you may ask? Well, it serves as a vital indicator of a company's financial health. A high dividend yield can signal a company's strong profitability and its ability to generate consistent income. Moreover, for investors, it's a reliable source of income, especially in volatile market conditions. Think of it as a safety net. Even if the market price of the shares fluctuates, the income from dividends can provide a cushion. Now let's take a company named Kony as an example. This company boasts a remarkable dividend yield of 39.13%. In the past year, Kony has paid $10.18 per share. This dividend is paid monthly, and the most recent ex-dividend date was March 6th, 2024. Now, isn't that impressive? To sum up, dividend yield is a critical metric for any investor to consider. It's a direct reflection of a company's profitability and the income it can provide to its shareholders. Whether you're a seasoned investor or just starting your journey, understanding and keeping an eye on dividend yield can be a game changer. So, the next time you're evaluating a company for investment, remember to consider its dividend yield. It might just be the deciding factor between a good investment and a great one. This has been your crash course on the importance of dividend yield in investments. Until next time, stay savvy and keep investing wisely. Unveiling the Schwab Total Stock Market Index Fund, or SWTSX, a mutual fund marvel offered by Schwab Capital. Its mission, to echo the performance of the total U.S. stock market. Imagine a kaleidoscope of stocks in your portfolio. SWTSX makes it possible investing in an array of large, mid, and small cap companies. In essence, it's your ticket to comprehensive exposure to the U.S. equity market. But wait, there's more. As a low-cost index fund, SWTSX isn't just about diversity, it's also about cost effectiveness. It's a wallet-friendly way to dip your toes into the vast ocean of the stock market and potentially achieve long-term growth. The Schwab Total Stock Market Index Fund, for those who believe in the power of the U.S. market and the potential of long-term investment growth. Like, subscribe. Stocks 5150. Welcome to the world of stock trading, where terms like triple witching weave a unique tale. Originating from the concept of quadruple witching, it refers to the simultaneous expiration of 4 derivatives contracts. However, since single stock futures ceased trading in the United States in 2020, triple witching has taken center stage. This event strikes every quarter on the 3rd Fridays of March, June, September, and December. Picture a surge in trading volume as traders adjust their portfolios, roll some contracts, and brace for potential price fluctuations. But hold your horses. Triple witching doesn't always stir up market volatility. It's a significant event, yes, but its impact varies. So, next time you hear the term triple witching, remember, it's not a spell from a fantasy novel, but a dance of derivatives in the stock market. For a deeper dive, Investopedia awaits your curiosity. If your portfolio needs a boost, you're missing XLE. XLE tracks the Energy Select Sector Index with 95% of assets in top companies like Exxon and Chevron, with a yield of 3.22% and low fees. $1,000 could grow big. Invest smart. Invest XLE. None of your stocks behaving weird on ex-dividend dates. It's all about the dividends, baby. When a company like CVS or Duke Energy pays dividends, it's giving a slice of its profits to shareholders. But here's the catch. On the ex-dividend date, the stock price takes a little dive. Why? Because the stock starts trading without the value of that dividend. Picture it like this. If a slice of pizza costs $10 and you take away $2 worth of toppings, it's now worth $8. Same thing happens with stocks. Take the SPY ETF or a dividend income ETF, for example. Their prices drop by the amount of the dividend on the ex-dividend date. So don't freak out when you see that dip. It's just the market doing its thing. Investing made easy, right? Catch you on the flip side. Stocks 5150. A stock dividend is a payment to shareholders that consists of additional shares of a company's stock rather than cash. The distributions are paid in fractions per existing share. This may cause share price to drop. For example, if a company issues a stock dividend of 5%, it will pay 0.05 shares for every share owned by a shareholder. Peace Stocks 5150.
Hey, Stocks 5150. Check this out. Today we're going to talk about Google. I'm going to make a quick video, run it down. Google, right now, as you can see, this is live as of just now. The stock price is 168.73. That's pretty good. That means that Google's down. If you look at the chart, though, you see here for the past 10 years, Google is up. So you really couldn't go wrong if you invested in Google. We all know that happened back then, and this is now, so we don't worry about now. As you can see right here, we got a slight pullback. Right here, we are at 167, 168, and earlier we were at 190. So that's about $20 you could get if you just buy it and it goes back up to the top, which more than likely it will. Probably. So let's see what the analysts forecast for this. They give the analyst upside 21.69%. You have $205. So if you get into Google right now at 168, there you go. You can get your 21% upside. That's probably about a year end or whatever. Right now, as you can see, they predicted a low of 170 and you're at 168. So that's pretty accurate. So Tip Ranks, shout outs to them. So that's pretty accurate. Look at that, it's really pretty accurate, pretty good. All right, what else we got here? We got a technical analysis for Google. Oh, it says a strong sell. Reason why, take your profits. So that's what's happening right now. That's probably why this price is dropping from that 190, because it's a lot of profit taking right now, because the market has been at an all-time high. And that's what you do. Take profits. You know what I'm saying? You stay in it forever. If you don't sell, then you ain't made nothing. You got to sell it at some point, you know? All right, back on this right here. So we have here like 52-week range, 120. Imagine that. 120 to 191. So that's exactly what's happening right now. It's profit taking. Plus, it's also the interest rate talk. Nobody knows what Jay Powell is going to do. And that's fair. But what we're here for is long-term investing. And as you can see, ever since COVID, boom, we've been running up. I shouldn't talk about this, but I will say, I believe from 2020 to 2021, that was a lot of, we know what that was. That was the Fed pumping money in. And so this, I think, should be your new base, your new balance, because this is the Fed taking their money back. And so we built back up now, and we've surpassed that. As you can look here, see, that's that level at about 150. So what does that say? Yeah, that's 137, 145. So see, we're up above that already. So if anything, that'll be a nice base right there. But the low, as they say, was 170, and we're at 168 right now. I would say we'll probably hit 150. 150 would be a good buy, and then it's going to go up from there. And that's all I got on Google, man. They also have a dividend. They just started that, I think. I'm not sure. Don't quote me, but it's 0.12%. So for the dividend chasers, that's not much to look at. But Google is about growth, and that's what you want to do. Stocks 5150. Google's going up to the top of the world, baby. Also, they came out with a thing to rival against ChatGPT. It's called Gemini. I haven't used it yet, but I will say, why not give it a shot? AI seems to be the new move, and that's the way they roll it. So stocks 5150, that's it for Google. All right, get you some. I'm buying a little bit at a time. Peace.
What I wish I knew about McDonald's before the earnings report. Are we heading into a recession? McDonald's market cap, a whopping $181.61 billion. Earnings per share, trailing 12 months, 11,772. PE ratio, 21.41, and a 2.59% dividend yield. Sounds solid, right? But here's the kicker. McDonald's just reported earnings, and they're not looking good. U.S. same-store sales were down 0.7% in Q2, compared to a 10.3% increase last year. Maybe we are more health conscious, decelerating comps for a whole year. With the estimated EPS forecast at $3.07, investors are on edge. McDonald's is a consumer spending bellwether, and it's flashing red. Is this a sign of an impending recession? Enjoy your fries time to brace for potential economic turbulence. Stocks 5150. Stay investing. Peace out. Amazon stock is currently at a great price to buy. Earnings expectations are higher than last year. I'm adding more Amazon to my portfolio. The stock price is below analyst predictions. Buy the dip. Am I the only one that didn't know Amazon makes more than just deliveries? Hang tight. It's time for a quick dive. Amazon is massive, right? But it's not just about shopping. They operate through three key segments: North America, International, and Amazon Web Services, aka AWS. The North America and International segments handle retail. Think everything from gadgets to groceries, plus those Prime subscriptions we all love. But here's the kicker. AWS is the real game changer. Powers everything from Netflix to NASA with cloud computing. We're talking global sales of compute, storage, and database services. Tech fundamentals, rock solid. So next time you think Amazon, remember, It's not just about packages on your doorstep. It's about dominating the digital world. Like, share, and subscribe for more tech insights. Catch you next time.
Take your MT4 trading to the next level with TastyFX. Get exclusive MT4 add-ons and low latency VPS access for free from the best MT4 broker in the US. Join TastyFX today.
Machine learning is advancing, but businesses wonder if some machines can keep up.
Let's welcome our new coworker, Jeff.
Copier has a great idea.
Wonder if it's the same idea as yesterday.
It's a performance issue, really. I know people push your buttons, but you still have to deliver.
Anything can change the world of work. ADP Assist is AI, informed by workplace data, and designed for the next anything.
If you don't know how to read normal candlesticks, by the way, I have a full in-depth video talking about exactly how to read candlesticks and price action. However, in terms of Heikin Ashi candles, the most bullish candle is going to be this candle right here. A green long-bodied candle with no lower wicks. So when you don't see a lower wick, but you see an upper wick, this is going to be the most bullish candle. Now, I know when we're looking at normal candlesticks, when you see an upper wick, that actually shows a little bit more weakness and it shows that sellers are in control. But in Heikin Ashi, when you see that upper wick, this means that buyers are more in control and you just shouldn't see that lower wick. Now, when we actually put this candle into an actual chart, you can see that when we see these upper wicks, you can see that the stock has a clear uptrend. However, the second you start seeing that lower wick come in on those green candles, well, this suggests that the uptrend momentum is slowing down or possibly reversing. And as we can see here, that did reverse after we saw the HA candle with a lower wick. So in terms of bullish Heikin Ashi candles, you want to be looking for these green long body candles with no lower wick. Vice versa, when we're looking at bearish Heikin Ashi candles, we want to look at red long bodied candles with no upper wicks. That is going to be the most bearish candle. Once again, I know it is kind of the opposite in terms of candlesticks, because when we see a lower wick on a candlestick, that means that buyers are stepping in. But you have to remember that Heikin Ashi candles take the average price, and therefore no upper wick is going to be the most weak signal. Of course, if we look at this in an actual trend scenario, you can see this downtrend. We have no upper wicks here, only lower wicks, showing that the stock is moving to the downside. And when we see an upper wick forming right here, this once again suggests to us that the downward trend is losing momentum or possibly reversing, which means the trend is possibly reversing on the Heikin Ashi chart. Now, after we understand this, how do we use this to our advantage? Well, we combine Heikin Ashi candles on the higher time frame with normal candles on the lower time frame. This will help us optimize our entries, targets, and will help you stay in the trade much longer. And of course, I'm going to be talking much more about this in the examples that I will show you. However, all you need to understand about Heikin Ashi candles is we're not looking at them on lower time frames. We're looking at the higher time frame confirmation. So if the trend is moving to the upside on the higher time frame, of course, this will give us a better lower time frame entry, because if the stock is moving to the upside on the higher time frame, even if we mess up the entry a little bit on the lower time frame, we will still have a good entry and can still make profits as long as we can read market structure and place our stop loss in the appropriate area and have the proper profit targets, which once again, the Heikin Ashi candles will help us determine. Now, before we look at some real examples, a couple tips for candlesticks and how to read those charts. Candlesticks are only valid near key levels. You do not want to look at candlesticks in between key levels. Here we can see a clear uptrend and then a retest of a key level. We enter in on the retest and all of this into our profit target until we get to our profit target. This is going to be noise, because in between this, these candlesticks, especially if you're trading on the lower time frame, 1 minute or 5 minute, they're really going to show a lot of noise, right? If you're looking at every single 1 minute candle, some may give you a bearish indication, some may give you a bullish indication, but for us, it's very important that we only monitor the candlesticks more closely near our key levels, because that's where the most buyers and sellers are going to be sitting anyways. Number 2, you always wait for confirmation. So for me, I always wait for a candle close before I enter into a trade. For example, if I was to enter into this trade off this first retest, I would wait for this first candle to close and then enter in on this second green candle, because this is going to show me confirmation that buyers did end up holding the stock to the upside, and we will have a continuation after that. Sometimes when the stock is moving fast, yes, you may get a little bit higher of an entry fill, but it's much better than getting faked out and losing the trade very quickly. Finally, tip number 3, AJ candles or Heikin Ashi candles should only be used to confirm the trend and entry. You do not enter on the Heikin Ashi candles. Like I said, the Heikin Ashi candles is going to be more for confirmation of the trend and your entry, but you're not going to enter in on the Heikin Ashi candles, and this is because it is showing you the average price over time. It is not showing you the exact price like candlestick charts. So when we're using Heikin Ashi candles, the purpose of this is to give you the best entry by combining them with candlesticks to give you a little bit more confirmation. Really quickly, before we get on the charts, I just want to remind you, Scarface Trades Mastermind 5.0 is officially going to launch in September. This is my flagship program for students who want to implement everything that I teach here for free on YouTube. So if you're interested in daily live trading with me, seeing every single trade that I take every single day, on top of a live mentorship with me personally, nobody else, where I teach you how to implement the strategies that I teach, and of course daily trade reviews by me, I review your trades, and you have access to the content and private community for life. Everything is recorded, and you are always going to get bonus lessons as well, plus so much more. If you are interested in taking your trading journey to the next level, make sure to join the waitlist in the description. For anyone that's been in the mastermind before, they know I genuinely try to put 105% of my effort into the mastermind students. However, this is most likely going to be the last time that I offer the mastermind in 2024. We launch in September, so if you're interested, make sure to join the waitlist in the description. And of course, if you're still not ready, that is completely fine. I will continue to provide the best free trading educational content on YouTube, but let's get back into the video. So with the summary of Heikin Ashi and candlestick charts out of the way, let's go into some real examples. So here we are on the normal chart on TradingView. We are currently just on the normal candlesticks. You can see we're on the 1 hour time frame on SPY. Now to get to the Heikin Ashi candles, all you have to do is click this little arrow beside the candlestick bar right here. It'll say bar styles, and then you'll see a bunch of different options. And what we want to click is down here, which is a Heikin Ashi chart. So now that we're on the Heikin Ashi chart, we can actually visualize the higher time frame trend much more clearly, and this is going to give us a much more precise entry when we actually enter the trade. How do we look at Heikin Ashi, and how are we going to use this to increase our win rate and our precision in trading? So currently we're on the 1 hour time frame on SPY, or technically ES, and what we're looking for here is simply what trend is forming on the 1 hour time frame, so we can capitalize off of that higher time frame trend on the lower time frame. So what do we see here? Well, every time the Heikin Ashi moves from red to green, that means that the overall average of the trend is reversing. Of course, we have to use market structure. I have a full in-depth guide on how to read market structure. However, if you understand market structure and you're able to use the Heikin Ashi candles as well to confirm that trend, this is going to be a very powerful way for you to see the charts in a brand new light. Along with this, another thing that the Heikin Ashi is really good for is to identify patterns that you may not see on the normal candlestick chart. So for me, I can clearly see on this chart right here that this was a bearish flag to the downside. We already had a clear downside move like we can see here. We had that consolidation and then that break for the move once again to the downside. This is much more clear on the Heikin Ashi chart than it would have been on the normal candlestick chart. However, as we move to this side, what do we see on the chart? Well, we can see on the higher time frame that this is moving, of course, to the upside. As we're moving to the upside, we also see that now this section right here is in consolidation or making a flat top. This is very easily recognizable by using the Heikin Ashi. The Heikin Ashi candles make it seem like it's a textbook A+ setup, because when you see them, it gets rid of all the other candlestick noise and really shows you that pattern much more clearly. Now, because we see this flat top, we can simply mark out this flat top break, and what we're going to be looking for the next day is simply the break of this flat top. On the 1 hour time frame, we use the Heikin Ashi to confirm the trend is to the upside. We also confirm pattern recognition, and of course we use market structure to understand trend. So now after we've done these three things on the higher time frame, we can go to the lower time frame to actually look for a potential entry. Here we are on the lower time frame. As we can see, the stock is gapping up overnight. Therefore, we're going to mark out the pre-market high, and on this example, we're going to be using the pre-market high and low retest strategy, and all we're looking to do is break pre-market high, retest the pre-market high, and look for continuation in the trend that we have on the higher time frame. So now that we know what we're looking for, let's play out this trade. Okay, so what happened here? We actually moved to the upside. We did break that pre-market high, but now we're coming back and we're claiming that pre-market high retest level. What we can do here is look for an entry right here based off of the pre-market high retest, because we know with the Heikin Ashi candles that the higher time frame trend is in our favor, and therefore we can have a little bit more of an aggressive entry like I talked about before. And now what we need to do is have our stop loss and profit target. So our stop loss in this scenario here can simply be this pre-market pivot level that we created, 548.63s. This can be your stop loss down here. And in terms of our profit target, you know, if you've been watching my videos for a while, I always use at least a 2R multiple. And in this case, a 2R multiple comes around 552.30s. We can enter into the trade here and see exactly what happens. Okay, now one thing I do want you to keep a note of as well is we did consolidate here. Of course, we didn't hit our stop loss, so that's absolutely fine. But another thing the Heikin Ashi can help you do is stay in the trade longer. The reason you can stay in the trade longer or actually hold to your profit target is because you can use the Heikin Ashi plus market structure to see if the trend is still moving in your direction. So as this trade is playing out, I'm going to show you a quick example of that as well. This trade has been a great example so far because I'm a momentum trader. I like my trades to work very quickly. However, this trade is consolidating, and sometimes that may happen where your trades have to consolidate before pushing to the upside. Of course, we had this huge gap up pre-market as well. So what do we do in this scenario? To stay in this trade, we're actually going to use the Heikin Ashi candles. Once this trade either hits the profit target or stop loss, I'm going to show you exactly how to use the Heikin Ashi on the higher time frame to help you stay in the trade. So let's keep playing this trade out. As we can see there, we just hit our profit target for a $1,200 gain. However, as we were moving up to our profit target, what did we see? Well, there was many factors on the lower time frame that may have potentially stopped you out. This was the first move right here that could have potentially stopped you out, because if you saw these impulsive candles to the downside, and if you're a newer trader that just doesn't have the confidence or conviction to hold to your profit target or hold to your stop loss, you may have exited the trade early here trying to minimize your losses even though it never technically hit your stop loss. Another example here could be when we were trying to base right here, but then this impulsive candle actually broke that low. That may be another reason you may have wanted to exit the trade, but as you can see here, this was simply a retest level. Of course, this is much more in line with market structure. And of course, as we move up, we tried to base again, we broke below, and this could have been another reason that you were looking forward to exit the trade. With these trades, you want to let your winners run. And unfortunately, some traders just aren't able to do that because they get faked out on these small moves like this. So now let's look at how a Heikin Ashi on the higher time frame could have helped you. Instead of monitoring the trade on the 1 minute time frame, especially if it's a higher time frame target like this, we can go to the 10-minute time frame. So let's go to the 10-minute time frame with the Heikin Ashi candles. So when we come on to the 10-minute time frame and use the Heikin Ashi candles as we were pushing up, we can see that we actually only had one red candle. And as we talked about earlier in the slides, that red candle had a top wick and a bottom wick. Therefore, this indicates to us that the trend had not changed. It was simply consolidating, and that was completely fine. However, on the overall trend, you can see that there wasn't a single red Heikin Ashi candle on the 10-minute time frame. And this right here is exactly how you're going to stay in the trades much longer, by entering on the lower time frames but being able to monitor the trade on the higher time frame. If you have profit targets that are further away, this is a very simplified way to hold your winners much longer. Now, this was the first example. I want to show you one more example to really solidify this concept. All right, here we are on the second example. We're on QQQ on the 1 hour chart. And what do we see on QQQs? We see a clear uptrend on QQQ. We had some consolidation here, but now we're moving to the upside. After this move to the upside, we also have a top right here, and now we're actually creating a double top. On top of the double top, we're creating this downtrend flag pattern. So if we mark out this pattern right here, what are we looking for? Well, it's very simple. Because we know Heikin Ashi takes the average of the candlestick on the 1 hour time frame, we're looking for the candles to go green. As we can see here on the Heikin Ashi, we are getting those green candles right before the break. Now, this is obviously happening pre-market as well. So going into the day, based off the market structure moving to the upside, consolidation of the market structure, the Heikin Ashi pattern recognition, and it changing to a green candle, we would want to look for a long position on this trade before the market even opens. So now let's go to the normal candlesticks to see how we can enter this trade. All right, now we're on the lower time frame, and you can still kind of see that flag pattern on the normal candlesticks. However, the Heikin Ashi just makes that pattern recognition so much easier. Now that we are on the lower time frame, what we want to do is look for an entry. As we can see, pre-market high and this previous flag pattern is near the same level. So what we're going to be looking for is the break and retest of that pre-market high once again, a retest into that pre-market high, and then continuation from there. So let's play out the trade and see exactly what happens. Into the open, what do we see? We see a lot of consolidation. This right here is simply considered consolidation because this is not near or above the key level that we need it to be above, which is once again this flag pattern right here. And so because it is not above that flag pattern, we are not interested in this trade because the momentum has not presented intraday to us. What we're looking for is a break above, a retest of the pre-market high, and then a continuation move from there. So let's keep playing out this trade. And as we can see here, we're actually getting the retest of the pre-market high right here. We had this consolidation, we broke above, and now we're retesting into our level. Everything is aligned for this retest. Therefore, we're going to enter into a long position here. Our stop loss in this scenario can simply be at a break of this previous consolidation or a break back into it. And our profit target needs to be at least a 2R multiple. Therefore, we're going to move our profit target up. In this case scenario, we can use 477.50. This gives us about a 2.44R trade, which means if we're risking $100, we would make $244. Now let's enter into a buy position here and see exactly what happens. Right here, we do come back into that level of consolidation. However, we never close the candlestick. You guys remember when I was talking about how to read candlesticks and the tips for candlesticks, you always want to wait for the body to close below your level to confirm that you're going to get stopped out. In this scenario here, we would not get stopped out because the body or the candle did not close below the level. So let's keep playing out this trade. As we can see here, we just hit our profit target, and this was a $1,440 trade. And really quickly, I want to show you guys, if you were to monitor this trade on the Heikin Ashi candles, you could have potentially rode this trade all the way up here to this first red candlestick, and this would have been a 5.96R multiple trade, meaning for every $100, you would be making $596 in profit. And this is simply by using the Heikin Ashi and understanding if the Heikin Ashi stays green on the higher time frame, then the lower time frame will follow. You do not need to look at every 1 minute candlestick. That is a mistake a lot of new traders make. Unless you have a key level, every single candlestick does not need to be monitored, especially if you're on the 1 minute or 5 minute time frame. You go to the higher time frames and just let the Heikin Ashi candles play out, and this way you'll be able to stay in the trade much longer. Of course, here we can see, like I said, this would have been a 5.96 trade, or if you were able to even hold through here, because like I talked about earlier, this had the upper and lower wick for the red candle, and therefore we know that Heikin Ashi's with the upper wick on the red candle shows that the trend isn't the strongest to the downside. So you could have potentially rode this red candle out on the 10 minute and been able to make 9.56R, meaning $956 for every $100 of risk. So I hope this video showed you a new way to confirm your trades and hold your winners much longer using Heikin Ashi charts. If this video helped you, make sure to leave it a like. If you have any questions, put them in the comments down below. Make sure to follow me on Instagram and Twitter for more education, and I will see you guys next week with a brand new video.
So now SASCHD, or the Schwab Fund, which is the Schwab Strategic Dividend Fund. All about the dividends now. That's the hot thing. I'm following the trend. Interest rates is high. SCHD, it's a Schwab Fund. I like those funds. People like Vanguard also. But if you look at this, you can see this fund since 2020. It's going up. Even with the Fed pivot, it hasn't dropped much. So, but I think that's because people are really going into dividends and turning more into that because everything else is kind of going sour for 2021. So people were pouring into that. The time to have got into this was back here. But of course, that was the time to do anything, right? Yeah, missed the boat. Let's see. So the Schwab U.S. Dividend Equity ETF. And we're going to buy, what do we say? I think I'm supposed to put $2,000 in there. Price is at $75.74 right now. In the holdings in this, you have companies like Merck. We have Merck and Company, Amgen, International Business Machines, IBM, Cisco, Broadcom, Home Depot, Texas Instrument, Pfizer, Lockheed Martin. You know, some pretty heavy hitters in there in that top 10. So we're going to go ahead and get it going. We want to invest $2,000 into this. So again, you have your symbol here. Last trade was $75.74. And what we're going to do, let's see, it says $75, 2,000. So I think that'll be 20 shares, maybe 25 shares. Close. 25 shares at 18, it'll be $1,800. So can we get 30? Keep it under 2,000? No. I'm gonna keep it around 2,000. Stay true to what I said. So that'll give us 27. What we're gonna do, we're gonna keep it an even number. And we're just gonna do 30 shares. It's gonna be $2,200. And we're gonna buy that limit 20, 70, 75, 75, 40. Yeah, I'm gonna do 75. I'm gonna go with the bid. And they'll do that. Good to cancel. So 30 shares, 75.40. What was it today? Let's see what was. So we opened at 75.49. Yeah. So 75.40. Let's see it just trends right here in that range. But the key is we're doing 2,000. That's all we want to do. Yes. Let me take this down, make this more closer to 2,000. All right, there it is. 27 it is. Or should I do 25? No. 27 it is. 75.40 and buy. All right, so we got our order in. 27 shares at 75.40, and that's what it is. So we'll see if that hits. We go over here to our order list, order status, and as you can see, we are on par. We have invested approximately 2K into Schwab. We have invested 2K into Schwab U.S. Dividend Equity, 1K into the JEPI, 1K into TQQQ, and 1K into XLK. Now the Schwab Total Market, remember from a previous video, that's more like an investment. So I have about 1,800 left over, and I need to put that into the Schwab Total Market, and that'll be that. And I'm going to do that when the price drops down to 60. The price right now on the Schwab Total Market is 65, so I'm going to wait a little while, and then I'll go in with that. All right, so that's it. Those 4 purchases today, and that one should take care of them. We just got them all in as limit orders, and we'll see how it goes. All right, KW 5150 stocks is crazy. We out. Peace. Hey, K-Dub 5150, stocks 5150. Stocks is crazy. Today, what I'm going to talk about, I'm still doing this part of series of me refunding my Roth IRA. And part of the plan today is I've been doing a couple purchases already and recording them. And what I'm going to do right now is I'm going to do TQQQ. And I'm going to invest $1,000 into that. And so this right here is a leverage fund, and it follows the QQQ, the triple Q. And as you can see, it's going up. It's the same old same, man. 2020, you got pandemic time. Fed went in, ran it up. Fed said they're taking their money back. Fed taking their money back. So now we already back down to, see, we are even, well, actually, we're a little lower, almost even with how it was before 2020. So I'm going to go in and buy a couple shares. Again, this is going to be for the TQQQ. This fund holds, same thing as the Q holds. Apple, Microsoft, Amazon, Google, Tesla, NVIDIA, PepsiCo, the big tech. 7% of it is Apple. I might do a screen share so you can see that. So here we go. We right click. This is E-Trade Pro. We want to buy and make sure we got our right ticker in there, TQQQ. Price at the moment is $17.38. And because this is long-term investment, I'm not really even tripping on if I get this at a market or a limit order or nothing like that. I'm just going to go ahead and get it just for the sake of the video. So I want to spend $1,000. It's at $17.38. So that will be 50 shares, maybe. It's close guess. So we're gonna do $1,000. So take this up. All right, 1008, like that. So that's 58 shares. We'll keep it even. We'll do 50 shares. All right, 50 shares. So we got 50 shares at $17.38, and yeah, the opening today was $16.76. I think I'm gonna put this in for a limit of $17. So I lied. So we'll do $17 limit, and we'll do this good to close or cancel. So, and why do I do that, you might ask? So let's see. Let's look at this. So we'll spread this out. We're right here. See the low today. Well, that was on the 28th. The low was, I'm covering up my box. The low was 16.1. Then we started here. The low was 16.50. And today, the low was 16.50. So that should be a mid-range. So actually, I think I'm going to go in at 16. I'll do 16, and like I said, I'll do 1,000. So now I'll keep it a buck, and I'll do 1,000, like I said, for $16. All right, back at the 1008, that'll give us 63 shares, good to close. We got a limit order, $16. So I'm patiently, and I'm going to wait for it to drop down. We'll see how it goes. And buy. Got that order. There it is. 63 shares, sitting and waiting. We'll see how it goes. Like, not much volume right there at 16. I probably should have put it at 16.20. Who knows, it might trigger though. Goes down, then I'm good. And 16 is actually going back to October levels. But we'll see how it goes. Either way, that is $1,000 invested. Well, we'll see. I haven't invested it yet. I'm just waiting for it to drop out. But $16 orders, TQQQ had a price of $16, limit price, limit order. And that's it. So what we just did was made an order for TQQQ, $1,000 worth, and I did a limit order of $16 per share. And that's me hoping, which I was pretty far down there. There ain't really no volume there. Yeah, I think I'm going to change that order from 16. No, I'm not. I'm going to leave it. We'll see. It should hit. All right, KW 5150. Stocks is crazy. I was going to change that order. Oh, and also look at that. If you want to change your order, you just click on it and you can change right here. eTrade Pro. This thing is so easy to use, man. Once you get it, it's got all kinds of tricks in it. But yeah, that's it. So that's my order. Buy 63 at 16. That's the order number. Don't call and cancel that. We're going to keep that going and see what happens. All right. I'm out. Have a great day. Peace. Hey, Stocks 5150, KW 5150 here. And today I am refunding my Roth IRA. Still got the order in here from the last video from TQQQ. Next up on the list is JEPI. E-I. Oh, sorry. Got to type it in. J-E-P-I. Now this ETF is a hot one. Everybody's talking about JP Morgan Premium Income Daily ETF. You see it's new. You know, it hadn't even been around that long, but ran up a little bit. And it's actually at 2021 levels right now, which, you know, hey, seems like it's on the mend. But the thing about this, though, is it pays a dividend. And dividends are like, you know, interest rates are high right now, and everybody wants to have dividends and stuff in the portfolio. And hey, so do I. It's JP Morgan Equity Premium Income ETF. And today, the price is at $54.65 right now. And we're going to get us a couple, you know? We're going to get us a few. The plan is to invest $1,000 into the JEPI. So I'm not going to waste too much time talking y'all to death about what's going on and what's what. I will tell you what some of the holdings are in this fund, though. Let's see. JEPI has I'm looking at Market Watch. Okay. JEPI has number one holding is JP Morgan U.S. Government Money Market Fund, of course, because it's a JP Morgan fund. Avivine, Progressive, Bristol Myers, United Healthcare. So this is a dividend fund. It pays these companies, ExxonMobil, Hershey's, Coca-Cola, Pepsi, Honeywell. These all pay dividends, and then, you know, they pay it back. But I think the thing with JEPI is you can place options on JEPI. And so right quick, let's look at this. Let's go over here. Let's type in JEPI. Let's see. Oh yeah, so see, JEPI has options. So if you want to place an option, you want to play, you see what do they got? It's like a monthly option. Good grief. So JEPI doesn't move around too much either. It's at $54 right now. And they saying above 54, it's $100. And that's a 0.60 delta. I'm not doing an options class right now, but see that volume is light. You know, I guess you could do cover calls. That's what I think the popular thing is to do with this, is to do the cover calls and everything. That's not what we're doing. We are reallocating the funds back into this ETF right here, to this IRA. All right, so back to the chart. Today, I'm going to purchase $1,000 into JEPI. And JEPI is going at $54 a share, so that's basically like 55. Let me see something. What did it open up as today? It opened at 54.62. Doesn't move around a lot. So it's 54.65 right now. The high was 54. It's 327. All right, so what I'm gonna do, 54. So I should be able to get with $1,000. I should be able to get $25. That's too many. So we're gonna break it down. 20. We'll go with 20. Keep it an even number. So basically $1,093 in there. And limit order, 54.65. Might as well do a market. We're gonna just go ahead and knock this one out. Should we do the market on close? We'll do market on close. All right. Why? Because I really don't care right now. I'm just putting $1,000 in it, and that's that. All right, so we're gonna buy JEPI. Boom. Got our order in. Go to our order page. And you can see pending right here, JEPI, market on close. And the bid right now is 54.51. Ask is 54.66. And I'm buying 20 of them. All right, so that's that on that, yo. Let's go. All right, so next up on the list, so we just purchased $1,000 in XLK, $1,000 in TQQQ, and $1,000 in JEPI. Now, and we have an order for, we're gonna wait for the 2,000 into swap total market. So I'm gonna wait till that gets to about $60. So now.
JEI, tipranks.com ETF breakdown. Today let's talk about my favorite dividend ETF, ticker symbol JEPI. Current share price at the time of this video is 54.34. Zoom out to the 5-year chart. Notice the price direction is upward. This shows positive growth. TipRanks analyst forecast is positive. Moderate buy rating. $117 large cap holdings, Pepsi, Coke, Visa, and Microsoft, to name a few. No position is over 2%. TipRanks.com also provides this tool. I like to use it for technical analysis. Select the time frame you trade to view instant data results. This ETF pays an 11% dividend that is paid out monthly. Great income for retirement. 200 shares you can earn 1K per year. The more you invest, the larger your dividend. I think you get the picture. TipRanks.com also provides similar ETFs to assist in your decision making. Investing can be risky and you can lose money. Choose wisely. Please like and subscribe. Thanks for watching.
XYLD. TipRanks.com ETF breakdown. Global X ETF XYLD tracks the S&P 500. Trading at $40.68 at the making of this video. As we look at the 5-year chart, this ETF is now back at pre-COVID levels. 52-week range $35.10 to $43.72. Check out the price target. There is expected share appreciation predicted. ETF holdings are solid because it's the entire S&P 500. Large cap with $2.63 billion total assets. All the top stocks in one place. Did I forget to mention, this ETF is a dividend machine, paying average of 0.40 cents per share. Let's do the math. At 40 cents per share, 1,000 shares will pay $400 per month. Place XYLD in your Roth IRA and watch it grow. Please like and subscribe. Stocks 5150. Stocks are crazy. Thanks for watching.
And the volume is the total number of option contracts bought and sold for the day at a particular strike price. Trading volume on options is relative to the volume of the underlying stock. Hey, stocks 5150. Hey, today something crazy happened. Last night, Credit Fitch, I think it was, or Fitch Credit Agency, they gave the United States, Fitch Ratings downgraded the U.S. debt rating on Tuesday from its highest rating of AAA. That's where we were. Now we are AA. And that's kind of like getting from the major leagues going down to the minor leagues. And anyway, it hasn't happened since like 1994. And they're saying, you know, with all the stuff that's going on in the United States, like with the political instability, yeah, that's a real thing. And with our financial situation, you know, continually expanding the debt ceiling, raising the debt ceiling, and just United States operates off of credit. That being said, well, you know, even the dollar, if you look at it, it says that it's a debit note. So we operate off of credit and debt. That's how we make it. So, you know, it is what it is. It's the system. We'll see what happens in the future. Anyway, back to the stocks, man. Check this out. If you look at this is last night. Then that's the credit. Then we're going along, and then that's when the news hit. And look at this. Overnight was no hope. Just continued straight down. Bam. We went down from 456, all the way to 452 in the open. That's $4 drop right there. That's off that news from that AAA to the AA. And then it opens up, and then this is the rest of the day. And then, you know, this is the European market closes and got a little bump a little bit, but then boom, still falling. So this is where we are right now. The time today is 1500 almost. It's 2:59, 14:59. So it's almost 1500, 3 o'clock. This would normally be power hour, but we'll see what happens. I've got a feeling it's going to continue to go down. Momentum. And this is the 1 minute chart for the day. But let's go back year to date. Matter of fact, let's go 1 year out. If you go 1 year out, you can see here, this time last year, we were at 431. So we're still up. And right here, if you go right here, we peaked right here, and this was at what the high was 439, and trended along, and then we had a little breakout. So it's room to fall, and it's room to grow, and then, you know, it's not really the end of the world. Like, even if we dropped all the way down here to say 400, well, look, we trended along 400, and then we broke out. No reason to think that wouldn't happen again, other than, you know, us having bigger problems than the ones we got. But we go back here to the 3 year, and here we are right here, and we see this range right here. This is March of 2022. We're falling in that range right there, you see. And now it did fall down from there, but see what it did? It bounced up. That's what it does. It breathes and exhales, breathes and exhales. You know what I'm saying? Contracts, expands. It's the stock market. So don't get freaked out. Even if you go all the way back here, you know what they say.
These are buying opportunities. So if you keep your job or you don't, however it is you make money, if you have money, because this is all we have in the United States, to be honest, as far as like your future stuff, unless you're going to start a business or something, you know, and shout outs to the entrepreneurs, you know, good luck with that. But as far as the stock market goes, you put your money in here, not all your money, but you invest some money in here. And then when it hits these lows, it bounces, you make some money. Now, if you're smart like the big boys, which I'm not saying I am, but if you're smart like the big boys, when it hits this bounce, and then when it gets up here to these highs around here, when it peaks, sell a little bit. You see what I'm saying? So bounce, go up, sell a little bit. Then bounce, go up, sell a little bit. You see what I'm saying? Put something in your pocket. Bounce, go down, go up, sell a little bit. That's what this is. Bounce, go up, sell a little bit. See, and this could be the same thing. Clearly it is, because it's not just dropping because because the rating got downgraded. These are actual people selling. Like, you know, look at us. We're at like 456. We topped up. We are at the height. The height we had was get it on this candle. Our height was 459. That was our high, 459.44. And so look, pulling back, sell a little bit. So maybe we fall back down here to 443 or something like that. And that's fine. That's okay. You know, we fill in some of these gaps right here because we gapped up. And, you know, we reset and start over again. Could go back down here, 437. I'm not hoping so, because you know me, I'm always on the other side of the trade. And so with that being said, what I did, because we also have earnings going on right now, I'll tell you about the play that I went into. Go right here. It's still going down. So I just went out a couple days because we got a couple more earnings coming out. And I bought two options. I bought them for $30, so $60 I spent. And right now I'm down 9%, and they're going at 28 right now. What I'm expecting is once this credit rating stuff settles out, the stock market will come back to its senses, because everybody's come out, Jamie Dimon, Yellen, and all of them, and they're just like, yo, this is like ludicrous, man. Our economy is doing good, you know, how dare you downgrade us, you know what I'm saying? But, you know, it is what it is. So maybe after tonight, you know, we get a little bounce and we pop back up. And if we pop back up and say do something miraculous, like come back up to, so we hit 450, that's where the bears want to go. So we're at 450 now. And so if we hit 450 and we bounce back up to, I don't know, this right here, 454 overnight, we just make that $4 back up. If that happens, I'm golden. If it doesn't happen, it's okay. If we go up to 452, I'm good. If it doesn't happen, I'm okay. But here is golden. Here is good. Let's see what happens. Stocks 5150. Stocks are crazy. I'm out. Hey, Stocks 5150. Today we're going to talk about something, a free resource. It's free. They have a paid resource also, but you can see here I'm on Yahoo Finance, and then you go to markets and calendars. This is important because throughout your day as you're trading or going into your day, it's outside, they call it fundamentals. It's outside influences that affect the market, not necessarily just, you know, dojis and whatever you trading, you know, it's other things. Technicals have their place, and you definitely should use them. RSIs and support resistance, blah, 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 supply and demand. Yes. But something that's on the calendar that you're not aware of could come along and trip up your whole thesis. So today is September 12th. And what you do is you can see here, we have 206 earnings. We have 28 stock splits, 7 IPO pricings, and 58 economic events. The economic events is what we're going to click on right now, and we'll double click on that on today's date. All right, that comes up, and you can see up here on the top of the tab, it's listed by country. You have the event to your left, you have the event here, tells what's happening. Then you have the country, the event time, and then what month is for,
and then the actual and market expectation, if that's listed, and then the prior to this, what the results were. All right. And then you have, what's that revised from? So the country comes up, and here you have the Netherlands, NL. We don't live in the Netherlands. So what we click is this, because the internet is smart. You select country, and wherever your home country is, you know, Google knows where you are. So the United States comes up. Today for the futures traders, you got soybeans, corn, beef, wheat, pork, soybean end stocks. All of that stuff is coming up today at 4 p.m., 1600, 4 p.m. GMT. And they have the, what it was prior to this, and then they'll have what the actual, when the report comes out. So that's good to know that that's coming out if you're in the futures trading or whatever. All right. For us, because I'm an options trader, I mean, this could affect things because, you know, corn, I believe, if I'm not mistaken, corn affects fuel, gas prices and stuff. And if gas prices drop, then, you know, energy starts going crazy. Well, not drop, but goes up, because it's definitely not dropping these days. All right, back to this thing. So you see here, you have what do we have for finances? Those are all futures. And then we have here Red Book. I'm not sure what that YY stands for, but that comes out at 12:55. And prior to this, it was 4.1. So we'll see what that is and what happens. And that's it for us, really, for the United States. Now we can go up here and we can click on September 13th, the next day. Here, click there. All right. Same thing, that switches the country. So we got to switch back. Select the country. All right. Tomorrow, on the 13th, CPI data comes out. Core CPI comes out. CPI index comes out. Tomorrow's a heavy day. All that starts at 12:30 GMT. You have the MBA purchase index that comes out at 11. That's going to be before it. The Cleveland Fed CPI, that's at 3 p.m. Whenever the Fed's speaking, man, you know, don't fight the Fed. We all know. But a lot of data is coming out tomorrow. And yeah, you got crude and everything else as far as the future stuff goes. Yeah, tomorrow's a busy day, super busy. Good grief. Now, mortgage rate with the central banks. And we see here too, they keep us in the dark. They don't have any, they have what is prior to this, but they don't have any actual or market expectations listed. So we'll see what happens. And yeah, whether the market goes up or if it goes down, we shall see. But trade wisely, and that's just another tool you can use so you can not be in the dark. And like I said, it's free. All right, Stocks 5150. We are out.
Snap, tick, soar. Welcome to the dazzling world of the U.S. stock market, a place where fortunes are made and dreams come true. But what is it exactly? Imagine a giant marketplace where companies sell pieces of themselves, called stocks, to raise money for growth and innovation. Buyers, that's you, invest in these stocks, becoming partial owners. When the company profits, so do you. But beware, it's not always sunshine and rainbows. Companies can also lose value, which means your stocks can too. So is it a gamble or a calculated risk? That's for you to decide. Remember, the stock market isn't a sprint, it's a marathon. Invest wisely, stay informed, and maybe, just maybe, you'll hit that jackpot. Until next time, keep those portfolios diverse. Stocks 51, 50 stocks are crazy.
Imagine owning a slice of your favorite company. Sounds exciting, right? Here's how to buy your first stock in less than 60 seconds. First up, research. Don't just follow the hype. Understand the business, check its financial health and future prospects. Second, choose a brokerage. Look for low fees, good customer service, and an easy-to-use platform. Third, set up your account. You'll need your social security number and bank account details. Fourth, place your order. Decide how many shares you want and whether you want a market or limit order. Finally, monitor your investment. Remember, the stock market is a long-term game. That's it. Now you're a part of the financial world. Look at you, future tycoon.
Saddle up for a stock market adventure, folks. You're about to learn about a powerful tool called the 200 moving average. This isn't some wild stallion. It's a tried and true workhorse of day trading. Picture a winding river. That's your stock price. Now, imagine a line tracing its path, smoothing out the dips and peaks. That right there is your 200 moving average. As a day trader, this can be your compass in the wilderness of the stock market. When the stock price crosses above this line, it might be time to buy. But when it dips below, well, partner, that's a signal you might want to sell. Remember, the stock market ain't a rodeo. It's a marathon. And the 200 moving average, well, it's your trusty steed. So ride smart, ride safe, and let the 200 moving average guide you through the wild frontier of day trading. Loop ends, and so the journey continues.
5 ways to start investing with $100. Investing in the stock market, a beginner's guide. Calculate how much money you want to invest. You can start with as little as $1. 1. Decide your investment goals. Before you decide to open an account and begin comparing your investment options, you should first consider your overarching goals. 2. Select investment vehicles. One important thing to note: opening a brokerage account and depositing money is not investing. 3. Calculate how much money you want to invest. Decide on a percentage of your income that you can dedicate to building your portfolio. The general rule of thumb for retirement goals is to invest 15% of your income each year. But if you started investing later in your career or want to retire early, you may want to consider investing a higher percentage. 5. Consider what kind of investor you want to be. There are 2 major categories that investors fall into: short-term investing, also referred to as trading, and long-term investing. Long-term capital gains and losses occur when the asset is held for more than 1 year. Swing trading. Investors who take this approach are looking to buy and sell an investment after a few days or months to achieve a profit. 6. Build your portfolio. There are limitations on how much you can put in an IRA or Roth IRA in a given tax year, so you may need to open more than one type of account. Goal-based investing approach, because it allows you to create separate portfolio buckets for your investing goals, each of which has a unique goal amount, time horizon, and risk tolerance associated with it. 7. Monitor and rebalance your portfolio over time. One advantage of robo-advisors is that this rebalancing process is done for you automatically. When in doubt, refer to your investing goals to keep your emotions and your portfolio on track, and remember that investing is a process that happens over time and not overnight. Thanks for watching. Please like, subscribe. Stocks 5150. Stocks are crazy.
Have you ever paused to ponder just how crucial a role dividend yield plays in your investments? Well, there's no time like the present. The concept of dividend yield might sound like a foreign language to the uninitiated, but in essence, it's quite straightforward. Simply put, dividend yield is a financial ratio that shows how much a company returns to its shareholders in the form of dividends. It's expressed as a percentage of the company's current market price. So when you hear someone say a company has a high dividend yield, it means that the company is returning a significant portion of its profits back to its shareholders. But why is dividend yield so significant, you may ask? Well, it serves as a vital indicator of a company's financial health. A high dividend yield can signal a company's strong profitability and its ability to generate consistent income. Moreover, for investors, it's a reliable source of income, especially in volatile market conditions. Think of it as a safety net. Even if the market price of the shares fluctuates, the income from dividends can provide a cushion. Now let's take a company named Coney as an example. This company boasts a remarkable dividend yield of 39.13%. In the past year, Coney has paid $10.18 per share. This dividend is paid monthly, and the most recent ex-dividend date was March 6th, 2024. Now, isn't that impressive? To sum up, dividend yield is a critical metric for any investor to consider. It's a direct reflection of a company's profitability and the income it can provide to its shareholders. Whether you're a seasoned investor or just starting your journey, understanding and keeping an eye on dividend yield can be a game changer. So the next time you're evaluating a company for investment, remember to consider its dividend yield. It might just be the deciding factor between a good investment and a great one. This has been your crash course on the importance of dividend yield in investments. Until next time, stay savvy and keep investing wisely. Unveiling the Schwab Total Stock Market Index Fund, or SWTSX, a mutual fund marvel offered by Schwab Capital. Its mission, to echo the performance of the total U.S. stock market. Imagine a kaleidoscope of stocks in your portfolio. SWTSX makes it possible investing in an array of large, mid, and small cap companies. In essence, it's your ticket to comprehensive exposure to the U.S. equity market. But wait, there's more. As a low-cost index fund, SWTSX isn't just about diversity, it's also about cost effectiveness. It's a wallet-friendly way to dip your toes into the vast ocean of the stock market and potentially achieve long-term growth. The Schwab Total Stock Market Index Fund, for those who believe in the power of the U.S. market and the potential of long-term investment growth. Like, subscribe. Stocks 5150. Welcome to the world of stock trading, where terms like triple witching weave a unique tale. Originating from the concept of quadruple witching, it refers to the simultaneous expiration of 4 derivatives contracts. However, since single stock futures ceased trading in the United States in 2020, triple witching has taken center stage. This event strikes every quarter on the 3rd Fridays of March, June, September, and December. Picture a surge in trading volume as traders adjust their portfolios, roll some contracts, and brace for potential price fluctuations. But hold your horses. Triple witching doesn't always stir up market volatility. It's a significant event, yes, but its impact varies. So, next time you hear the term triple witching, remember, it's not a spell from a fantasy novel, but a dance of derivatives in the stock market. For a deeper dive, Investopedia awaits your curiosity. If your portfolio needs a boost, you're missing XLE. XLE tracks the Energy Select Sector Index with 95% of assets in top companies like Exxon and Chevron. With a yield of 3.22% and low fees, $1,000 could grow big. Invest smart. Invest XLE. None of your stocks behaving weird on ex-dividend dates. It's all about the dividends, baby. When a company like CVS or Duke Energy pays dividends, it's giving a slice of its profits to shareholders. But here's the catch. On the ex-dividend date, the stock price takes a little dive. Why? Because the stock starts trading without the value of that dividend. Picture it like this. If a slice of pizza costs $10 and you take away $2 worth of toppings, it's now worth $8. Same thing happens with stocks. Take the SPY ETF or a dividend income ETF, for example. Their prices drop by the amount of the dividend on the ex-dividend date. So don't freak out when you see that dip. It's just the market doing its thing. Investing made easy, right? Catch you on the flip side. Stocks 5150. A stock dividend is a payment to shareholders that consists of additional shares of a company's stock, rather than cash. The distributions are paid in fractions per existing share. This may cause share price to drop. For example, if a company issues a stock dividend of 5%, it will pay 0.05 shares for every share owned by a shareholder. Peace Stocks 5150.
Hey, Stocks 5150. Check this out. Today we're going to talk about Google. I'm going to make a quick video, run it down. Google, right now, as you can see, this is live as of just now. The stock price is 168.73. That's pretty good. That means that Google is down. If you look at the chart, though, you see here for the past 10 years, Google is up. So you really couldn't go wrong if you invested in Google. We all know that happened back then, and this is now. So we're going to worry about now. As you can see right here, we got a slight pullback. Right here, we are at 167, 168. And earlier, we were at 190. So that's about $20 you could get if you just buy it and it goes back up to the top, which more than likely it will. Probably. So let's see what the analysts forecast for this. They give the analyst upside 21.69%. You have $205. So if you get into Google right now at 168, there you go. You can get your 21% upside. That's probably about a year end or whatever. Right now, as you can see, they predicted a low of 170 and you're at 168. So that's pretty accurate. So TipRanks, shout outs to them. So that's pretty accurate. Look at that. It's really pretty accurate. Pretty good. All right. What else we got here? We got a technical analysis for Google. Oh, it says a strong sell. Reason why? Take your profits. So that's what's happening right now. That's probably why this price is dropping from that 190, because it's a lot of profit taking right now because the market has been at an all-time high. And that's what you do. Take profits. You know what I'm saying? You stay in it forever. If you don't sell, then you ain't made nothing. You got to sell it at some point, you know? All right, back on this right here. So we have here like 52-week range, 120. Imagine that. 120 to 191. So that's exactly what's happening right now is profit taking. Plus, it's also the interest rate talk. Nobody knows what Jay Powell is going to do. And that's fair. But what we're here for is long-term investing. And as you can see, ever since COVID, boom, we've been running up. I shouldn't talk about this, but I will say, I believe from 2020 to 2021, that was a lot of, we know what that was. That was the Fed pumping money in. And so this, I think, should be your new base, your new balance, because this is the Fed taking their money back. And so we built back up now, and we've surpassed that. As you can look here, see, that's that level at about 150. So what does that say? Yeah, that's 137, 145. So see, we're up above that already. So if anything, that'll be a nice base right there. But the low, as they say, was 170, and we're at 168 right now. I would say we'll probably hit 150. 150 would be a good buy, and then it's going to go up from there. And that's all I got on Google, man. They also have a dividend. They just started that, I think. I'm not sure. Don't quote me, but it's 0.12%. So for the dividend chasers, that's not much to look at. But Google is about growth, and that's what you want to do. Stocks 5150. Google's going up to the top of the world, baby. Also, they came out with a thing to rival against ChatGPT. It's called Gemini. I haven't used it yet, but I will say, why not give it a shot? AI seems to be the new move, and that's the way they roll it. So Stocks 5150, that's it for Google. All right, get you some. I'm buying a little bit at a time. Peace.
What I wish I knew about McDonald's before the earnings report. Are we heading into a recession? McDonald's market cap, a whopping $181.61 billion. Earnings per share, trailing 12 months, 11,772. PE ratio, 21.41, and a 2.59% dividend yield. Sounds solid, right? But here's the kicker. McDonald's just reported earnings, and they're not looking good. U.S. same-store sales were down 0.7% in Q2, compared to a 10.3% increase last year. Maybe we are more health conscious, decelerating comps for a whole year. With the estimated EPS forecast at 307, investors are on edge. McDonald's is a consumer spending bellwether and it's flashing red. Is this a sign of an impending recession? Enjoy your fries time to brace for potential economic turbulence. Stocks, 5150. Stay investing. Peace out. Amazon stock is currently at a great price to buy. Earnings expectations are higher than last year. I'm adding more Amazon to my portfolio. The stock price is below analyst predictions. Buy the dip. Am I the only one that didn't know Amazon makes more than just deliveries? Hang tight. It's time for a quick dive. Amazon is massive, right? But it's not just about shopping. They operate through three key segments: North America, International, and Amazon Web Services, aka AWS. The North America and International segments handle retail. Think everything from gadgets to groceries, plus those Prime subscriptions we all love. But here's the kicker. AWS is the real game changer. Powers everything from Netflix to NASA with cloud computing. We're talking global sales of compute, storage, and database services. Tech fundamentals, rock solid. So next time you think Amazon, remember, it's not just about packages on your doorstep. It's about dominating the digital world. Like, share, and subscribe for more tech insights. Catch you next time.
You gotta hear about this. Go from idea to illustration faster with generative AI in Adobe Illustrator. Generate custom graphics, create seamless patterns, and instantly fill shapes with detail and color. Try Illustrator today. You won't be sorry.
If you're a new trader who's still not profitable and you've been using candlestick charts, chances are you've been misled down the wrong path. If I asked you, would you buy this trade based off this bullish candle, you would say yes, but the trade fails. If I asked you, would you sell the trade based off of this bearish candle, you would say yes, but the trade fails. In today's video, I'm going to share, explain, and show a real trading example of a brand new chart you can use in combination with candlesticks to increase your accuracy and win rate. This is going to be a simple way to add more confirmation to your trades, and I'm confident by the time the video ends, you'll see the charts much more clear. Before we get into the new charts we can look at for more precision, we need to understand what candlesticks are. So very quickly, what are candlesticks? The main purpose of candlesticks are to show market participation. How do buyers and sellers interact with price? Now, here's the anatomy of an actual candlestick. I want to cover this very quickly just so you have a brief summary of how candlesticks do work. Here we have a bearish candle. In terms of a bearish candle, this means that the stock is weak, and here we have a bullish candle. This means that the stock is obviously strong. In terms of the bearish candle, we have the open of the candle here. So this is going to be the top of the body. The body is considered the shaded part right here, and the wick is considered the lines, right? So these two lines are going to be considered the wicks. Now, in terms of the body, this is the open of the body. So this means the candlestick opened here. We moved to the upside. Unfortunately, buyers weren't strong enough and sellers were strong enough to bring it all the way down to the lows, and the stock ended up closing at this price right here, whichever price that may be. The most important part here is these two wicks show us where the candlestick range was, or where buyers and sellers were able to let the price go to, but the actual shaded part here is where the most volume was traded, and this is going to be the most crucial part. The bodies are always going to hold a little bit more emphasis than the wicks, but the wicks will also tell you the story of the candle, right? You always want to read candlesticks like a book. What was the story that happened on the stock to bring it to the price it is? Now, vice versa to a bearish candle, we have a bullish candle. The open of the bullish candle is near the lows. We bring it down to the lows. This is going to be the wick. We then bring it all the way back up to the highs, and we close it above the open. And therefore, this is going to be a green shade because we open below where we closed. So when we open below where we close, that means that's going to be a bullish candle. And when we close below where we open, that's going to be a bearish candle. Super simple stuff, but that is how a candlestick forms. Now, what are the limitations to candlesticks? Here we can see that we have a clear move to the upside on a stock. We come back to retrace into a key level, and as we're retracing into this key level, we put in another strong candlestick. Here on this candlestick, what do we see? Well, we see this lower wick. Now, this lower wick shows us that buyers are trying to step into the trade. However, what happens? The very next candle, we see an upper wick showing that sellers are going to be a little bit more strong on this trade, and then the trade moves all the way back down, and unfortunately we get stopped out. Why did this happen? It happened because we have limited data. We don't know which way the stock was trending previously. Of course, intraday it had a strong uptrend, but this could have been a potential resistance on the higher time frame, and we actually entered in near a top. So these are things that we need to make sure that we understand. Candlesticks do give us good information, but we have to combine candlesticks on multiple different time frames to give us the best entry. Now, how are we supposed to look for a more clear entry? Well, a much more clear way to see the charts is going to be the Heikin Ashi candles. As we can see here, these are the Heikin Ashi candles. You can see that this chart looks a little bit more different than the traditional candlesticks you may be used to. You don't have as many wicks, and every time you see either the green candles or the red candles, they have continuation, whereas the actual normal chart, you'll see green, red, and there's going to be multiple bullish and bearish candles. Here you can see when a bullish trend presents itself, it's going to stay there for a little while before the bearish trend once again comes back. So we need to talk about how Heikin Ashi candles work and how we can use it to our advantage. But before then, we need to talk about what Heikin Ashi candles are. So Heikin Ashi or HA candles take the normal candlesticks and show the average price of the stock. If you don't understand what that means, when we're looking at Heikin Ashi candles, all it's doing is it's taking the average price of this candlestick. So it's not giving you the full information of that candlestick because of course the candlestick itself has a lot of data, but it is just going to show you the average moving price of the stock. And you can see this being represented right here. As we're consolidating and pushed down, you can see that the Heikin Ashi was red this whole time. We pushed down on those red candles, and then when we put in this strong green candle right here, the correlating Heikin Ashi candle is still red, right? Because the trend has not switched. However, once we start moving to the upside, as we can see in this chart, it may be a little bit more hard to see on the normal candlesticks, but on the Heikin Ashi, we can see that the green candles are now starting to overtake the red candles. And when we see that, it's a very simple way to indicate that we are switching to the bullish side. So in summary of what Heikin Ashi candles are, they will take the average price of the candlestick, and therefore we can see the trend much more clear. Now, we need to be able to read Heikin Ashi candles as well, just how we read normal candles. If you don't know how to read normal candlesticks, by the way, I have a full in-depth video talking about exactly how to read candlesticks and price action. However, in terms of Heikin Ashi candles, the most bullish candle is going to be this candle right here, a green long-bodied candle with no lower wicks. So when you don't see a lower wick, but you see an upper wick, this is going to be the most bullish candle. Now, I know when we're looking at normal candlesticks, when you see an upper wick, that actually shows a little bit more weakness and it shows that sellers are in control. But in Heikin Ashi, when you see that upper wick, this means that buyers are more in control and you just shouldn't see that lower wick. Now, when we actually put this candle into an actual chart, you can see that when we see these upper wicks, you can see that the stock has a clear uptrend. However, the second you start seeing that lower wick come in on those green candles, well, this suggests that the uptrend momentum is slowing down or possibly reversing. And as we can see here, that did reverse after we saw the HA candle with a lower wick. So in terms of bullish Heikin Ashi candles, you want to be looking for these green long body candles with no lower wick. Vice versa, when we're looking at bearish Heikin Ashi candles, we want to look at red long body candles with no upper wicks. That is going to be the most bearish candle. Once again, I know it is kind of the opposite in terms of candlesticks, because when we see a lower wick on a candlestick, that means that buyers are stepping in. But you have to remember that Heikin Ashi candles take the average price, and therefore no upper wick is going to be the most weak signal. Of course, if we look at this in an actual trend scenario, you can see this downtrend. We have no upper wicks here, only lower wicks, showing that the stock is moving to the downside. And when we see an upper wick forming right here, this once again suggests to us that the downward trend is losing momentum or possibly reversing, which means the trend is possibly reversing on the Heikin Ashi chart. Now, after we understand this, how do we use this to our advantage? Well, we combine Heikin Ashi candles on the higher time frame with normal candles on the lower time frame. This will help us optimize our entries, targets, and will help you stay in the trade much longer. And of course, I'm going to be talking much more about this in the examples that I will show you. However, all you need to understand about Heikin Ashi candles candles is we're not looking at them on lower time frames. We're looking at the higher time frame confirmation. So if the trend is moving to the upside on the higher time frame, of course this will give us a better lower time frame entry, because if the stock is moving to the upside on the higher time frame, even if we mess up the entry a little bit on the lower time frame, we will still have a good entry and can still make profits as long as we can read market structure and place our stop loss in the appropriate area and have the proper profit targets, which once again the Heikin Ashi candles will help us determine. Now, before we look at some real examples, a couple tips for candlesticks and how to read those charts. Candlesticks are only valid near key levels. You do not want to look at candlesticks in between key levels. Here we can see a clear uptrend and then a retest of a key level. We enter in on the retest and all of this into our profit target until we get to our profit target. This is going to be noise, because in between this, these candlesticks, especially if you're trading on the lower time frame, 1 minute or 5 minute, they're really going to show a lot of noise, right? If you're looking at every single 1 minute candle, some may give you a bearish indication, some may give you a bullish indication, but for us, it's very important that we only monitor the candlesticks more closely near our key levels, because that's where the most buyers and sellers are going to be sitting anyways. Number 2, you always wait for confirmation. So for me, I always wait for a candle close before I enter into a trade. For example, if I was to enter into this trade off this first retest, I would wait for this first candle to close and then enter in on this second green candle, because this is going to show me confirmation that buyers did end up holding the stock to the upside, and we will have a continuation after that. Sometimes when the stock is moving fast, yes, you may get a little bit higher of an entry fill, but it's much better than getting faked out and losing the trade very quickly. Finally, tip number 3, HA candles or Heikin Ashi candles should only be used to confirm the trend and entry. You do not enter on the Heikin Ashi candles. Like I said, the Heikin Ashi candles is going to be more for confirmation of the trend and your entry, but you're not going to enter in on the Heikin Ashi candles, and this is because it is showing you the average price over time. It is not showing you the exact price like candlestick charts. So when we're using Heikin Ashi candles, the purpose of this is to give you the best entry by combining them with candlesticks to give you a little bit more confirmation. Really quickly, before we get on the charts, I just want to remind you, Scarface Trades Mastermind 5.0 is officially going to launch in September. This is my flagship program for students who want to implement everything that I teach here for free on YouTube. So if you're interested in daily live trading with me, seeing every single trade that I take every single day, on top of a live mentorship with me personally, nobody else, where I teach you how to implement the strategies that I teach, and of course daily trade reviews by me, I review your trades, and you have access to the content and private community for life. Everything is recorded, and you are always going to get bonus lessons as well, plus so much more. If you are interested in taking your trading journey to the next level, make sure to join the waitlist in the description. For anyone that's been in the mastermind before, they know I genuinely try to put 105% of my effort into the mastermind students. However, this is most likely going to be the last time that I offer the mastermind in 2024. We launch in September, so if you're interested, make sure to join the waitlist in the description. And of course, if you're still not ready, that is completely fine. I will continue to provide the best free trading educational content on YouTube, but let's get back into the video. So with the summary of Heikin Ashi and candlestick charts out of the way, let's go into some real examples. So here we are on the normal chart on TradingView. We are currently just on the normal candlesticks. You can see we're on the 1 hour time frame on SPY. Now to get to the Heikin Ashi candles, all you have to do is click this little arrow beside the candlestick bar right here. It'll say bar styles, and then you'll see a bunch of different options. And what we want to click is down here, which is a Heikin Ashi chart. So now that we're on the Heikin Ashi chart, we can actually visualize the higher time frame trend much more clearly, and this is going to give us a much more precise entry when we actually enter the trade. How do we look at Heikin Ashi, and how are we going to use this to increase our win rate and our precision in trading? So currently we're on the 1 hour time frame on SPY, or technically ES, and what we're looking for here is simply what trend is forming on the 1 hour time frame, so we can capitalize off of that higher time frame trend on the lower time frame. So what do we see here? Well, every time the Heikin Ashi moves from red to green, that means that the overall average of the trend is reversing. Of course, we have to use market structure. I have a full in-depth guide on how to read market structure. However, if you understand market structure and you're able to use the Heikin Ashi candles as well to confirm that trend, this is going to be a very powerful way for you to see the charts in a brand new light. Along with this, another thing that the Heikin Ashi is really good for is to identify patterns that you may not see on the normal candlestick chart. So for me, I can clearly see on this chart right here that this was a bearish flag to the downside. We already had a clear downside move like we can see here. We had that consolidation and then that break for the move once again to the downside. This is much more clear on the Heikin Ashi chart than it would have been on the normal candlestick chart. However, as we move to this side, what do we see on the chart? Well, we can see on the higher time frame that this is moving, of course, to the upside. As we're moving to the upside, we also see that now this section right here is in consolidation or making a flat top. This is very easily recognizable by using the Heikin Ashi. The Heikin Ashi candles make it seem like it's a textbook A+ setup, because when you see them, it gets rid of all the other candlestick noise and really shows you that pattern much more clearly. Now, because we see this flat top, we can simply mark out this flat top break, and what we're going to be looking for the next day is simply the break of this flat top. On the 1 hour time frame, we use the Heikin Ashi to confirm the trend is to the upside. We also confirm pattern recognition, and of course we use market structure to understand trend. So now after we've done these three things on the higher time frame, we can go to the lower time frame to actually look for a potential entry. Here we are on the lower time frame. As we can see, the stock is gapping up overnight. Therefore, we're going to mark out the pre-market high, and on this example, we're going to be using the pre-market high and low retest strategy, and all we're looking to do is break pre-market high, retest the pre-market high, and look for continuation in the trend that we have on the higher time frame. So now that we know what we're looking for, let's play out this trade. Okay, so what happened here? We actually moved to the upside. We did break that pre-market high, but now we're coming back and we're claiming that pre-market high retest level. What we can do here is look for an entry right here based off of the pre-market high retest, because we know with the Heikin Ashi candles that the higher time frame trend is in our favor, and therefore we can have a little bit more of an aggressive entry like I talked about before. And now what we need to do is have our stop loss and profit target. So our stop loss in this scenario here can simply be this pre-market pivot level that we created, 548.63s. This can be your stop loss down here. And in terms of our profit target, you know, if you've been watching my videos for a while, I always use at least a 2R multiple. And in this case, a 2R multiple comes around 552.30s. We can enter into the trade here and see exactly what happens. Okay, now one thing I do want you to keep a note of as well is we did consolidate here. Of course, we didn't hit our stop loss, so that's absolutely fine. But another thing the Heikin Ashi can help you do is stay in the trade longer. The reason you can stay in the trade longer or actually hold to your profit target is because you can use the Heikin Ashi plus market structure to see if the trend is still moving in your direction. So as this trade is playing out, I'm going to show you a quick example of that as well. This trade has been a great example so far because I'm a momentum trader. I like my trades to work very quickly. However, this trade is consolidating, and sometimes that may happen where your trades have to consolidate before pushing to the upside. Of course, we had this huge gap up pre-market as well. So what do we do in this scenario? To stay in this trade, we're actually going to use the Heikin Ashi candles. Once this trade either hits the profit target or stop loss, I'm going to show you exactly how to use the Heikin Ashi on the higher time frame to help you stay in the trade. So let's keep playing this trade out. As we can see there, we just hit our profit target for a $1,200 gain. However, as we were moving up to our profit target, what did we see? Well, there was many factors on the lower time frame that may have potentially stopped you out. This was the first move right here that could have potentially stopped you out, because if you saw these impulsive candles to the downside, and if you're a newer trader that just doesn't have the confidence or conviction to hold to your profit target or hold to your stop loss, you may have exited the trade early here trying to minimize your losses even though it never technically hit your stop loss. Another example here could be when we were trying to base right here, but then this impulsive candle actually broke that low. That may be another reason you may have wanted to exit the trade, but as you can see here, this was simply a retest level. Of course, this is much more in line with market structure. And of course, as we move up, we tried to base again, we broke below, and this could have been another reason that you were looking forward to exit the trade. With these trades, you want to let your winners run. And unfortunately, some traders just aren't able to do that because they get faked out on these small moves like this. So now let's look at how a Heikin Ashi on the higher time frame could have helped you. Instead of monitoring the trade on the 1 minute time frame, especially if it's a higher time frame target like this, we can go to the 10-minute time frame. So let's go to the 10-minute time frame with the Heikin Ashi candles. So when we come on to the 10-minute time frame and use the Heikin Ashi candles as we were pushing up, we can see that we actually only had one red candle. And as we talked about earlier in the slides, that red candle had a top wick and a bottom wick. Therefore, this indicates to us that the trend had not changed. It was simply consolidating, and that was completely fine. However, on the overall trend, you can see that there wasn't a single red Heikin Nashi candle on the 10-minute time frame. And this right here is exactly how you're going to stay in the trades much longer, by entering on the lower time frames but being able to monitor the trade on the higher time frame if you have profit targets that are further away. This is a very simplified way to hold your winners much longer. Now, this was the first example. I want to show you one more example to really solidify this concept. All right, here we are on the second example. We're on QQQ on the 1 hour chart. And what do we see on QQQ? We see a clear uptrend on QQQ. We had some consolidation here, but now we're moving to the upside. After this move to the upside, we also have a top right here, and now we're actually creating a double top. On top of the double top, we're creating this downtrend flag pattern. So if we mark out this pattern right here, what are we looking for? Well, it's very simple. Because we know Heikin Ashi takes the average of the candlestick on the 1 hour time frame, we're looking for the candles to go green. As we can see here on the Heikin Ashi, we are getting those green candles right before the break. Now, this is obviously happening pre-market as well. So going into the day, based off the market structure moving to the upside, consolidation of the market structure, the Heikin Ashi pattern recognition, and it changing to a green candle, we would want to look for a long position on this trade before the market even opens. So now let's go to the normal candlesticks to see how we can enter this trade. All right, now we're on the lower time frame, and you can still kind of see that flag pattern on the normal candlesticks. However, the Heikin Ashi just makes that pattern recognition so much easier. Now that we are on the lower time frame, what we want to do is look for an entry. As we can see, pre-market high and this previous flag pattern is near the same level. So what we're going to be looking for is the break and retest of that pre-market high once again, a retest into that pre-market high, and then continuation from there. So let's play out the trade and see exactly what happens. Into the open, what do we see? We see a lot of consolidation. This right here is simply considered consolidation because this is not near or above the key level that we need it to be above, which is once again this flag pattern right here. And so because it is not above that flag pattern, we are not interested in this trade because the momentum has not presented intraday to us. What we're looking for is a break above, a retest of the pre-market high, and then a continuation move from there. So let's keep playing out this trade. And as we can see here, we're actually getting the retest of the pre-market high right here. We had this consolidation, we broke above, and now we're retesting into our level. Everything is aligned for this retest. Therefore, we're going to enter into a long position here. Our stop loss in this scenario can simply be at a break of this previous consolidation or a break back into it. And our profit target needs to be at least a 2R multiple. Therefore, we're going to move our profit target up. In this case scenario, we can use 477.50. This gives us about a 2.4 for our trade, which means if we're risking $100, we would make $244. Now, let's enter into a buy position here and see exactly what happens. Right here, we do come back into that level of consolidation. However, we never close the candlestick. You guys remember when I was talking about how to read candlesticks and the tips for candlesticks, you always want to wait for the body to close below your level to confirm that you're going to get stopped out. In this scenario here, we would not get stopped out because the body or the candle did not close below the level. So let's keep playing out this trade. As we can see here, we just hit our profit target, and this was a $1,440 trade. And really quickly, I want to show you guys, if you were to monitor this trade on the Heikin Ashi candles, you could have potentially rode this trade all the way up here to this first red candlestick, and this would have been a 5.96R multiple trade, meaning for every $100, you would be making $596 in profit. And this is simply by using the Heikin Ashi and understanding if the Heikin Ashi stays green on the higher time frame, then the lower time frame will follow. You do not need to look at every 1 minute candlestick. That is a mistake a lot of new traders make. Unless you have a key level, every single candlestick does not need to be monitored, especially if you're on the 1 minute or 5 minute time frame. You go to the higher time frames and just let the Heikin Ashi candles play out, and this way you'll be able to stay in the trade much longer. Of course, here we can see, like I said, this would have been a 5.96 trade, or if you were able to even hold through here, because like I talked about earlier, this had the upper and lower wick for the red candle, and therefore we know that Heikin Ashis with the upper upper wick on the red candle shows that the trend isn't the strongest to the downside. So you could have potentially rode this red candle out on the 10-minute and been able to make 9.56 R, meaning $956 for every $100 of risk. So I hope this video showed you a new way to confirm your trades and hold your winners much longer using Heikin-Ashi charts. If this video helped you, make sure to leave it a like. If you have any questions, put them in the comments down below. Make sure to follow me on Instagram and Twitter for more education, and I will see you guys next week with a brand new video.
All right.
Yeah.
Yes. Welcome back, ladies and gentlemen.
EYL. Happy Thursday.
Happy Thursday.
Happy Thursday.
For sure, man. This is round 2 of our new series that we are trying out. It is educational live streams. Live in the flesh. We last week we did real estate.
Yes, we did. We had an amazing conversation. Shout out to MG. Shout out to everybody that was in the chat that got to witness that live, and other people that watched it the day after or even leading up to this event. So it was an incredible one, packed with information. I think tonight is going to be one of those nights. So
yeah,
it's going to be one of those nights.
So tonight, it's one of these things that a lot of people have been asking for a long time, as far as artificial intelligence. And we talked about it a variety of different times on Market Mondays, even on EYL, but I don't think we had like a thorough breakdown on what AI actually is from a very easy to understand perspective, but more importantly, how to actually utilize AI for your own personal benefit, as far as your life, how to make money in your business, how to, just be more efficient. That's important.
Yep.
A lot of times people talk about the negative sides of artificial intelligence, but obviously there's a lot of positive things that you can do. So I think that this is something that's obviously going to be very timely.
Yeah.
Considering the times that we're in.
This is the talk of every room, every time we walk into a room. And I think it's fitting, every time we meet somebody, the awareness on AI, it varies. Some people have heard of it, don't really know. Some people kind of have heard of it. Some people are using it. Some people don't even know what GBT stands for. And so we've talked about it, like you said, numerous times about how we're using it, right? Like you talk about how you're using ChatGPT nearly on a daily basis. I know Ian's talking about how it's made him an even more efficient CEO. For him, I've talked about how I've been using it to help me when I'm investing. But like people still haven't been saying, I've been using it, here's how I'm using it. So today, hopefully we'll unpack some information so that the next time we run into some people, have conversations, they'll be like, I watched that and this is how I'm using it.
No, that's a fact.
Yeah.
And we got an expert in the field, X, who we got connected with through Van Jones.
Yep.
And spoke at InvestFest, and X got one of the best receptions from anybody that spoke at InvestFest, which speaks a lot, because obviously there was a lot of very highly regarded people at InvestFest. So without further ado, let's bring X up and let's get this going.
Hey,
what's going on?
Good evening.
Man, good evening. It's a pleasure to be here. Pleasure to be back on this stage.
Nah, pleasure to have you, first and foremost.
It's an absolute honor to have you. And like you said, it's very rare. I think this might have been the first time as somebody was speaking on stage, our phone started blowing up. Like, who is this person? Who is this woman? She is killing it. I need to meet her as soon as she gets off the stage. That must have happened 4 or 5 times on my phone. I'm sure it happened in his phone as well. I was watching. I'm like, oh, this is incredible. So congrats to you. It's an honor to have you here tonight. Everybody's in for a treat.
With Asana, AI teammates can pull real-time data and help keep work on track, so every team can work smarter and faster. Asana, the #1 AI work management platform. Try for free today at asana.com.
Yeah, man, it's an honor to be here. I feel like as someone who's been in AI for, almost 12 years now, this stuff comes like second nature to me. But as it starts to go from AI being behind the scenes to AI in our face, it's critical that folks like me who understand this stuff come back and give that game to our communities in a way that's accessible, but also, accessible from an information standpoint, but also accessible from a cost standpoint, right? There's a lot of folks out there who will put this knowledge behind money and may not have the same quality. There's no guarantee. So it's an honor to be able to be on EYL's platform to put our people on game ultimately.
And now let's get it. And you are award-winning AI expert. You worked in AI policy at UC Berkeley. Worked with some companies that you might have heard of, like Google and Microsoft.
Sounds familiar.
And a variety of other things. So you are actually qualified to speak on this. You're not just somebody that we just randomly picked off the street, right?
Nah, definitely not. I mean, I've been an engineer, like an actual software engineer for almost 20 years now, but I've been specializing in AI for the past 12. I'm not only like someone who worked in industry when I was at Microsoft, building AI, bringing it to big companies. Like at Google, I worked across all their algorithms, helping to identify when they were being biased or sexist or racist or messed up towards our communities and coming up with fixes for that. I created 2 research teams of my own. One of them was around teaching AI how to measure who is and isn't represented in content. So like how much is someone who's more masculine presenting on screen versus someone who's more feminine, and how much are they seeing versus speaking, right? So we would use that to like do diversity studies of all of Google advertising, and we made those tools available to like third-party partners. I also created the skin tone research team at Google, which literally taught AI how to see Black and brown skin tones. So myself, as someone who is a high school dropout, a 2-time college dropout, I'm a published researcher in this space. I've created tools that now, major companies all over the world use, specifically in AI. So I definitely hope I know what I'm talking about. I know I don't know everything, but I know what I'm talking about.
No, that's a fact. So, all right, let's get into this. YouTube, like and share, please.
Do everyone a favor.
1100 on the check-in. Let's run this up. This is very, very important information. So, okay, we're gonna get right to it. We want to talk about like actionable items and stuff like that. But before, let's just spend a couple minutes just to kind of break down. I know you've been working in AI for years, so tell us, kind of give us the framework of artificial intelligence so we can have an understanding before we go into actually how to utilize it and make money from it.
All right, let's get into it. So can you guys see my screen here?
Now they can.
They can see it now.
I don't need y'all to see all of that. That looks like Schrodinger's cat. This is a conversation that I think is super important. And it's one that I have with my clients day to day. And I work with like big companies like L'Oreal and Mozilla. And it's kind of like what Van Jones said on stage at InvestFest. It's like nobody really understands this stuff, right? So you might hear like AI, deep learning, machine learning, and the large language models, all these different terms to talk about AI. So I want to start off by making and giving y'all my framework for how to think about what artificial intelligence is. So first, AI is not just one thing, right? Just like when you think of the word car. Car is not one thing. You can have a 2-door car, you could have a 4-door car, you could have a sports car, you could have a truck. And even though there are all these, different types of cars, like whether they're electric or whether they're gas, even though they literally end up different in the way that they look, all cars pretty much do the same thing, which is that they get you from point A to point B faster than you would get there if you were walking, right? Unless you're in LA traffic at 4 o'clock. So similarly, artificial intelligence covers a whole bunch of different tools and technology across different disciplines. It touches tools that are being built in computer science, in mathematics, in electrical engineering, and mechanical engineering. But all AI aims to do pretty much the same thing. Artificial intelligence is trying to teach machines how to think and act like humans. So all those different technologies and all those different disciplines are just trying to teach machines how to think and act like humans. Well, what does it mean to think and act like a human? Well, humans have 5 senses. We have hearing, we have sight, we have touch, we have smell, and we have taste. And artificial intelligence kind of has 5 domains. So teaching an AI, teaching a machine how to hear and how to speak is called natural language processing. That's what's behind tools like Siri inside of your phone. When you talk to her and she writes the text down, that's called text to speech. Then when she understands what you just said to her, that's called natural language understanding. Then when she comes up with a response to you, that's called natural language generation. And then when she reads that response back out loud to you, that's called text to speech, right? Where she reads it back out loud to you. So NLP, or natural language processing, is teaching machines how to hear and how to speak. Teaching machines how to see is called computer vision. So if you have a Ring camera in your house and it's like, oh, person detected or animal detected, that's using computer vision. That's also behind stuff like Face ID inside of your phone. When you go to the airport and TSA asks you to stand there and it checks a picture of your face, all of that stuff is computer vision. Teaching a machine how to touch is called haptics. Now, this is a field that you mostly see in robotics, where they're doing things like creating artificial skin that's as sensitive as human skin. Now, why would they need that? Well, think about it. If you have like a robot in an Amazon factory, you want it to be able to understand things like pressure and weight, so that when it picks up whatever you ordered off of Amazon that might be fragile, it doesn't pick it up and like shake it around and mishandle it, right? So they need that artificial skin to be able to teach robots how to understand what it is that they're physically touching and grabbing. Then teaching machines how to smell is a pretty new field. It's called machine olfactory. Now, I'm not gonna lie, I don't really like this field, because in order to teach the algorithm what a smell is, you got to use like somebody's nose as an example. And I don't know about y'all, but some people, out of the colognes they be picking, the perfumes they be picking, like, I don't trust everybody's nose, right? And so machine olfactory is a newer field. We've seen like maybe 10, 20 research papers in this space altogether, where they're trying to do stuff like come up with new perfume smells, or like detect smoke from a smell, etc. And then teaching machines how to taste doesn't actually have a fancy name, but it has the same problem of kind of like teaching a machine how to smell. Like, I'm not eating at everybody's house, so whose taste buds are you using as the example to like teach these machines how to taste? You feel me?
Definitely got you there. So the five senses and the five domains makes a lot of sense. When people start hearing these things like computer vision, definitely the smell and the taste, it is subjective. It starts to lead to uncertainty. And one of the things with human nature is that we don't like uncertainty, which then leads to fear. So how can people become less fearful when they hear about AI, and very broken down how you just did it?
So I feel like a lot of the fear is based on the unknown. Like, the human brain generally is wired to protect you from danger, right? Like the amygdala, which we call the fight or flight part of the brain, is literally the oldest part of the brain, and it's the only part of the brain that can hijack the rest. So if you ever had like a panic attack, that's literally your amygdala hijacking your brain and shutting down all the other different functions in your brain, because it literally thinks that you're dying. And so a huge part of overcoming fear to AI is learning about it, doing things like sitting in this class, taking notes, understanding what the differences between NLP and computer vision, so that you're able to not feel like, because you don't understand it, that it instantly means that it's going to be negative against you. Now, there are real challenges with AI, which we'll probably get into later. But even then, the problems inside of these AI systems with things like bias, or things like them coming for jobs that particularly affect our communities, a lot of that stuff can be solved if we step up in other areas, like in policy, or if we step up in terms of like regulation, or if we step up in terms of building and designing our own systems. And so even the stuff out there that is actually proven to be scary or dangerous to our communities, there are solutions out there that require all of us coming together and putting into play.
Okay. All right. So I know we have the next step, which we're going to talk about how to utilize it in business. Anything you want to talk about before we go to the business side?
Yeah, so before we jump into the business side, I want to give a little bit more context about, how you teach a machine to think and act like a human. So we know that AI is this group of technologies that are trying to do that using this 5 senses example. Now, generative AI specifically is attempting to teach machines how to think and act like the human imagination. Like, if I ask everybody on the chat right now to imagine a car, you would come up with an image in your head of a car. Some of you guys would imagine a 2-door car, a 4-door car, a sports car. Some of y'all might even imagine a semi-truck. Now, what I did is I just prompted you to create something from the prompt that I gave you. You're using your human imagination to create something from an idea of it. And so generative AI is teaching machines how to think and act more along the lines of the human imagination. Now, I'm gonna get a little bit technical just so you guys understand some of the differences between the techniques used to build AI and AI itself. So how do you teach a machine how to think and act like a human? Well, that's where the term machine learning comes in. You've probably heard this a lot. Machine learning is the most popular way that people teach machines how to think and act like humans, but it's not the only way or the only method. And machine learning is when you teach a machine, which they call training, how to complete a task by giving it examples, which they call training data, of that task so that it can learn and improve itself on how to do that task, right? So for example, if I wanted to teach a car how to drive on the road, if it was old school coding without machine learning, I'd have to code every single step that the car needed to do. Well, a lot of those rules are, there's like millions of rules of driving, like to have to code, like if your right tire gets within this many inches of the line, then move the steering wheel, 0.2 centimeters. That's a lot to learn and a lot to code. We probably wouldn't even be able to make an app that would be able to let the car drive like that. It would just take too much code. So instead, with machine learning, we can take a bunch of examples of cars driving on the road. That's why like Teslas have 8 cameras. They're constantly capturing that data and then let it learn from those examples of things that it should do and things that it shouldn't do. So there are 2 types of machine learning. The first is called supervised machine learning. And supervised machine learning is when you teach a machine how to complete a task by giving it examples of the right answer up front. So an example of this is like, let's say I wanted to teach a computer vision algorithm to be able to tell the difference between a strawberry and an avocado, right? I would give it examples of images that I knew up front were a strawberry. I would tell it up front that it's a strawberry. We call that data labeling. And then I would check it as it's learning how good it gets at telling me that's a strawberry versus telling me that's an avocado, right? So again, supervised machine learning is I already know what the right answer is up front. So I'm going to give you these examples and then I'm going to test you against how well you're learning how to do the task because I already know the right answer. The second type of AI machine learning is called unsupervised machine learning. And this is when you're training a machine how to complete a task by giving it examples, but you're letting the algorithm itself discover what the right answer is, right? So you're giving it a whole bunch of data and then it goes in and finds patterns across that data that it uses to give you the right answer. So for example, a lot of AI is being used in things like drug discovery. So like, how can we find a new medicine to treat AIDS or to treat diabetes? Or even when COVID came out, there was a whole effort between a bunch of big tech companies to figure out medicines that could be used as a vaccine, right? So in that case, they didn't know the right answer up front, but they had a whole bunch of data and then the machine uncovered patterns that helped them understand what the right answer should be, right? All right, so then you have one more thing, which is called deep learning. So deep learning is basically, without going into all the math behind it, it's a more complex way of doing machine learning when you have things that are more complicated in their patterns. And so it teaches the algorithms in a way that mimics how neurons fire in the human brain, right? So machine learning, like if I want to tell the difference between a strawberry and an avocado, that's not a very complex task. But like teaching a plane how to fly itself, like the US Air Force just did, is going to require a lot more complex relationships and a lot more complex understanding and nuance inside of that data and the patterns and how it's supposed to do that task. So they would use something like a deep learning algorithm instead to be able to capture that. Now, I know that was a lot of information. I don't expect y'all to have this memorized. So before we move on to the next part, I made a little TLDR slide for y'all. Take a moment, take a screenshot, make sure to share this with your friends. It just recaps what I just covered.
X, quick question. When we're talking about GPT, which is generative pre-trained transformers, most people just hear ChatGPT and that's what the acronym stands for. Is it encompassing all three? Is it encompassing supervised, unsupervised, and deep learning? Because when you're talking about figuring out equations, I remember when it first was able to pass, a high school exam, an AP exam, right? And then it kept learning, and then it was able to pass a graduate school final. Then it was able to pass the bar. So it's learning. It's not given the task. It's untrained, but some prompts are trained. Where would GBT fit in that category?
So ChatGPT is a type of deep learning. And then sometimes they have what's called reinforcement learning, which is where it learns as it interacts with humans. But ChatGPT in particular is based on something called a transformer architecture. So this is the way that like ChatGPT works. Basically, you get a large corpus of text. So like, you know how they're complaining, oh, they scraped the whole internet and stuck it inside of ChatGPT, and they like took copyrighted books and movies, etc. They got together a big corpus of text, right? So gigabytes and gigabytes upon terabytes of text data. And then what they did is they fed that into the system. And the first thing that system does is it starts to go across the text and create these webs of understanding. And so what it does is it'll say like, oh, for the, like, let's say it's a bunch of fairy tale books, right? It'll say, oh, for the concept of royalty, we have the words prince, princess, castle. We have the words like, I don't know, like moat, holiday ball, Cinderella, right? Like it'll start to associate certain words with certain themes, and those are called embeddings, right? And the machine is generating these on their own. That's the first step of creating like a ChatGPT. And then what happens is when you go in and you create a prompt, right? So you ask it something. What it does is it takes your prompt and it converts it into math. You might have heard this referred to as a token. And so it converts your actual text into a mathematical representation of that text, because the way that the embeddings are stored or how it understands language is actually stored using math. It's not like a literal web where you could go like royalty means princess. It's like some crazy hash and then like is related to these other hash numbers, right? So then when it takes your prompt and it converts it into text, what it does is it does this really complex calculation to guess what words should come next based on what words came before, based on how those embeddings are inside of his database. So I'll give you an example of this. Let's say you don't speak a lick of Spanish at all, right? You don't understand Spanish at all, but you've maybe watched a TV show once or twice, and you know that when somebody says hola, you're supposed to say ¿Cómo estás?, right? And so someone comes up to you and they say hola, you think the most likely response is probably ¿Cómo estás? But then if I go deeper and I say, ¿Dónde eres? And you've never heard that before, you're going to make up a response like, yo quiero Taco Bell, or say something that don't.
That was my first thought.
Yeah, because you don't understand the underlying language. And that's literally how ChatGPT works. There's a research paper called ChatGPT is Bullshit, which literally talks about the fact that all of these large language models based on the transformer architecture literally do not understand language. They don't actually understand the words that you're saying. They're just really good math guessing engines because they have like a lot of examples in this case of like, maybe they watched a whole bunch of Spanish and memorized like what people said and how they responded, but they don't actually understand what they're saying. And so what that creates the risk of is what we call hallucination. Mm-hmm. So if I say ¿Dónde eres? And you say yo quiero Taco Bell, that's like the equivalent of a hallucination where you say something that doesn't make sense or you make up something that isn't factually true. And hallucinations inside of large language models can happen at any point, right? Like you cannot get rid of hallucinations inside of large language models. So they're always going to make shit up. And an example of this, when Google dropped their AI overview, there was a bunch of like funny screenshots of like how it was making up answers. And someone asked it like, yo, how many rocks should a human eat a day to like keep a balanced diet? And it was like, according to a research study at UC Berkeley, humans should, eat 5 rocks every day. And like, that doesn't exist. But again, it doesn't understand how harmful that is because it doesn't actually understand the language. So 2 things whenever just general tips, whenever you're using a large language model like ChatGPT, Gemini, Perplexity, Claude, any of these things, you want to be careful when you're using it in a fact-based scenario. So if you're like plugging in your company's data and asking ChatGPT questions about it, there's always a chance that it could make up an answer that's not actually inside the data. So when you're using these LLMs inside of these contexts, you want to always trust, but verify, like double check and make sure that it's given the right answer.
There you have it. Ladies and gentlemen.
Shout out to your Spanish today.
Oh, yeah.
So if you guys want to dive deeper into those concepts, I have a free AI course that I launched in 2020 that goes a little bit deeper into some of those mechanics. You guys can feel free to tap into that.
For sure.
There you have it. Okay, let's reset the room. Hit the like button and share. I mean, this is information that literally you can learn in college, high level information, like high level colleges, not just your community college. And those schools cost a lot of money. So it's free tonight just because we want to help you guys learn. And we want to learn ourselves too. So I think it's very important that we have that level of appreciation to our guests.
Absolutely.
For coming and providing information. But also, only thing we ask you guys is just share it. 2,200 people, that's great. But let's get it up to 3,000. Let's share this out to your friends, your family. It's very important information, man. You know, we gossip on social media so much, but this is actually more important than trending topics.
Oh, any topic. Topic.
So now we're going to go into, okay, let's get into how we can actually make money. There's a lot of entrepreneurs in here. So let's talk about that if we can.
Yeah. So the question is, how can you use AI, right? And so I came prepared. I got the deck ready for these questions for y'all. And so there are 3 ways that you can use AI, whether that's in your business or in your personal life. The first is task-specific tools. So if there's a specific thing that you're trying to do and create, there's probably an AI for that. And in the chat, I'm going to drop a website where you can go find an AI that can basically do anything. The second is through AI-enabled platforms. So platforms that are specifically built to help you, whether it's operate your whole business or manage a lot of tasks at once that use AI in that. And the third is around using AI to amplify your genius. So first, let's talk about these task-specific tools, right? So if you're looking at marketing your business, right, you want to use AI to identify and engage your customers. There's a couple of different ways you can use AI for that. The first is around content creation. You can accelerate the development of either text, audio, or video content to promote your business, right? So whether that's, I'm trying to come up with a new jingle to put behind, my advertisement, you could pull a BBL Drizzy and use a Suno or an Udio to do that. If you're looking for creating images of people, stock photos without having to pay for them, you can use free tools like Midjourney or free tools like DALL-E or a number of websites that allow you to generate images for free. If you're looking at trying to advertise to your customers, right? So like customizing those ad campaigns, what I recommend for this is that when you're doing advertising and you want to personalize it to your customers or find the right audience, all of these big advertising platforms have now, in the last 6-7 months, have now dropped AI audience features, right? So whether that's TikTok advertising, whether that's Facebook Meta advertising, whether that's Google advertising, they have these features that do cost a little bit more, but they use AI to identify the exact people that you need to advertise to based on your campaign. And they'll start off maybe the first day testing that out. And as they get people responding to the ads positively, they keep adjusting in real time who they're targeting your ad campaign to. So I recommend using those features. They do cost a little bit more, but it's much better for you to spend that money up front and guarantee that it's going to reach the right people versus you spending money running a campaign, trying to figure it out and manually adjust it. That could end up costing you a lot more moving forward. And the third thing is around sentiment, right? So sentiment is essentially how people feel, and they measure that through text. So if you're a company that has a review-based business, right? Like let's say you got Google reviews or you have Yelp reviews, etc. All of those platforms that let you put all your reviews in one place and review and manage all of them, they all have what are called sentiment analysis tools. So they'll take that review that somebody left on your Google reviews or on your Yelp or, whatever other sites that you're on, and they'll analyze it and say this was a positive review, this was a negative review, or this was a neutral review, right? You can also do that. A lot of social media platforms like HubSpot and stuff like that have that in terms of your comments. So are your comments on your social media pages positive, negative, or neutral? And what that can help you do when you plug that in or use those actual features is help you understand, okay, here are 10 negative reviews. Even if the review had 4 stars or 5 stars, it could still tell you based on the content, if the review is positive or not. That lets you go in and see where you can improve as a business, as well as where you're actually doing well as a business. So again, these things are tools that are built into platforms, right? Like Canva has an AI content generation tool. TikTok just launched their digital avatar creation studio. Meta and Google inside their advertising platforms have like image and video generation tools built in. So as you're thinking about how to market to your customers, think about creating content for your marketing campaigns, effectively reaching audiences with your ads, and then also using sentiment to give you information about your business back and forth.
Yeah, it's funny that you brought up HubSpot, because as you were talking, I'm thinking to myself, the companies that have a big base inside the CRM space, number one, job creation inside of them, or fear of job creation for some people, is like, all right, that industry is going to be disrupted. But it's only going to be disruptive if you're not using it along with, right, a human and the AI. So talk about how businesses that use customer relations management, how this can be super beneficial, because I see it as the wave of the future for it.
Yeah, 100%. So I said this on stage at InvestFest. I'll say it again. It's not going to be an AI that takes your job. It's going to be a human that's using AI that's going to take your job. And so when you're thinking about customer relationship management systems, whether you're using a Salesforce, whether you're using like a Nimble CRM, if you're using like a HubSpot, if you're using like a Zoho to be able to like track your customers, there are softwares out there that have things what they call lead scoring, right? So like AI generated lead scoring. So if you're using maybe you're doing like cold sales or cold calls, or you're like collecting customer leads, these types of plugins inside of your CRM systems use AI to help you understand who is the best potential lead for what you're doing. There's a platform, it's called Sense8, I believe it is. I'll have to look it up once we go through this presentation, and I'll drop a link to it. But it cause HubSpot's version of that is like super expensive, like $1,000 a month, right? There's this platform called Sense8 that offers like predictive lead scoring based on your CRM, based on your communication with them, based on your preferences and what you say is like your ideal customer. And they offer like a 3-month free trial. And then after that, it's like $400 or $500 a month. So it's much cheaper than what's built into HubSpot, and it can plug into HubSpot and pull your data. So I think a few different ways that you can use it. I think using predictive lead scoring is important, but also, as we talk about conversational AI, this is another area where you can use AI to communicate with those customers that are in your CRM on your behalf, right? So when you're thinking about like, let's say, information management, right? Let's say that you got customers who might have commonly asked questions, or you're a startup and you've taken investment money and your investors are going to have questions about your traction, or even your staff as you're bringing new people in and there's ways of doing things and they may not remember everything from the training. You could set up chatbots that can interact with these different groups of people and provide them information. So for customers, a very low level type of chatbot without you having to like turn on ChatGPT and use it in your business, there are these things called FAQ bots, right? So if you already have like a frequently asked questions about your business, you can plug it in to one of these chatbots. Actually, Microsoft has one for free called Q&A Maker, and you can plug it in and it'll take your Q&A and it'll automatically make a chatbot that you can just plug into your website completely free. So people can ask questions about your cancellation policy, your business, about where you're at. And like Q&A Maker isn't just for you to like take the literal FAQ section. You could plug all the content about your website in that. If you're talking about internal operations, right? Like let's say you have like a customer service associate role, and you don't want them asking you 90 questions about when and when not to give a discount or give a customer a refund. You could create like a Q&A bot for that and make it so that your internal employees can use it. Same thing with like the investor metrics. And again, Q&A Maker is a 100% free tool. There's a whole bunch of tools out there that are like this that you can use. The second piece where you can use kind of chatbot specifically is around time management. So being able to automate the setup and management of appointments, meetings, and bookings, right? So if you're a service-based business, like let's say you provide, finance consultations or credit consultations, or you provide literal services like, hey, I'm gonna come give you a haircut, or I'm gonna come put your lashes on. Instead of you having to do all of that communication back and forth through text, through WhatsApp, through Messenger, through like Instagram DM, you know what I'm saying? Where you're like going across 10 different things and trying to remember when people are coming and adding it to a calendar, just grab a booking chatbot. These chatbots automatically communicate with people. They manage your availability. As soon as somebody books an appointment, you can make them pay before they book if you have a deposit. And then it automatically puts it on your calendar. And then it automatically sends the people like the email of like, hey, your appointment's coming up. Do you want to reschedule or cancel? And then like, if they don't show up, you get to keep the deposit. You know what I'm saying? Like that stuff can all be done in one software as opposed to you doing it through 50 different things. And there are versions of these kind of like booking chatbots that even accept payments in things like Cash App or Venmo. And so, you know, you can go find those tools out there. They're little like, you know, booking and scheduling bots or even plugins for like the Shopify chatbot that they have. There's a plugin you can get that does that to really streamline that part of your business and open your time back up. And the last part is around process automation. So using AI to complete tasks that would normally require human effort, right? So if you know that you're going to have to look at your CRM and see the open leads and send them all an email, then you could use, you know, like a Zapier or like a Make, which are these tools that let you do like plug in one tool and create little custom rules. Like if the person's lead is open and I haven't emailed them in the last 7 days, then send them an email, right? And you could use AI to generate those emails. So you don't have to, right? So you could add a little step in there. It's like, go to ChatGPT and generate a personalized follow-up email, then send that email. So you can use AI, especially in conversational AI, these chatbots, these large language models to help you automate those processes as well. And finally, when you're thinking about operations, right, you think about wanting to use AI to accelerate or stabilize those tasks that you have to do day to day as a business to be able to survive. So the first part is around data analysis, being able to understand patterns across your data or create visualizations of data. There's a tool out there called Gamma. And Gamma is a presentation AI tool, right? And so if you are someone who's like me, like as nice as this deck kind of looks, y'all, this is about as good as it gets for me. I can't design, I cannot draw, I could code an AI to do it for me, but me and my like pitch decks, I'm terrible. So being able to use Gamma has really changed my life in terms of like creating data visualizations. There's another tool out there, it's called Columns, that plugs into your data and automatically creates visualizations and you can customize them. And it's like, you can go on one of those websites like AppSumo and get like a lifetime subscription to it. You know what I'm saying? Like for like $50 and forever have access to this data visualization tool. And the tool also gives you information about the data that you're pulling up, or this is where you would plug it into like a ChatGPT and ask it questions. Just make sure it's not making nothing up when you do that, right? And then you have what we call knowledge mining. So how do you use AI to understand how your business is functioning and your business health? Again, this is going to be inside of the tools you're already using, like HubSpot or Salesforce CRM. They're already going to have like AI functions that tell you like, hey, here's a risk score that tells you how, you know, much of your business is at risk of not closing, or like the performance of your employees. So just turning on those kinds of tools and functions that are already in the apps you're using is critical. And of course, for knowledge sharing, right? So building those internal chatbots, building those internal knowledge-based databases, even fine-tuning a ChatGPT or a version of like, you know, Gemini to work specifically on your data. Like Moderna just did this with 750 custom GPTs. And so overall, you have these 3 task specific kind of tools around using it to, you know, identify and engage your customers, on how to actually communicate with your customers or your stakeholders on your behalf. So how do you scale yourself? And then around the operations, how do you understand how your business is operating, communicate that to other people? And I'll pause there because that's a lot of info. That
was a lot. I'm taking notes.
It's a lot of info for sure. So let's reset the room. Somebody asked if this is going to be on save. This will be saved on the channel. You have to go to the live section to see it though, but it will be saved on the channel. Also will be on podcast outlets as well. So if you want to listen to it on the go, you can check it out on podcast, but this will, because you need to watch this at least 3 times. At least 3 times. The master investor is on the check-in. Shout out to Ian in the building. Okay. I think we derailed. Did you go through your slides or did you get?
We have a little bit more for these specific tools. So I'm gonna give you a little example. So like you would generate you use AI to generate marketing with a call to action for people to use your chatbot. Like, hey, you want your lashes scheduled? DM me on Instagram, because these like chatbots you can deploy to like Facebook Messenger or into WhatsApp or into Instagram, right? To like work within those chats. It doesn't have to be just on your website. And then the chatbot would schedule like a sales or a discovery call with a client. Then you would use AI to take notes during that call, something like Otter AI or any of these number of these other tools that people be using. And then it would recommend next steps. Now, let's say you're having a call with a customer, like a potential sales opportunity, or with a customer who might be unhappy. You can do sentiment analysis on those transcripts from the call that, you know, Otter will generate from you to understand how that person feels. So if you're like, yo, I just had this sales call, I'm not really sure where they stand, you could use AI to give you like that insight and be like, nah, this was more neutral, or hey, this was more positive call, you know what I'm saying, to help give you that insight. Another example would be if maybe you're a service-based business, you would, same thing, use AI to create like a cool jingle or maybe a cool little video to help you with your call to action to use that chatbot. Then the chatbot would book the appointment. And then once the appointment is booked, it would automatically start to like retarget that customer to come back in for another appointment, right? Like, hey, you should come in and book another appointment. We haven't seen you in a month, or we haven't seen you in 3 months. And then as your customers continuously interact, it'll start to learn patterns about them. So it'll know like, hey, this customer only comes in for pedicures. They never get a manicure. So when we send them like a special deals email, we're going to send them one for pedicures, right? For like 10, 20% off of pedicures. And so this type of pipeline, especially with like the customer retargeting and messaging, is built into tools like SendGrid. It's built into loyalty tools where customers like, you know, give you your email and then like they leave ratings and they earn points. It's also built into the actual email marketing tools that are out there. So you don't have to go build like a whole recommender engine or personalized system to be able to get to that. And so another thing that you can do when we talked about like AI-enabled platforms. So if you can't see right now, I'm at will.i.am's FYI campus in downtown LA. And FYI is an app that stands for Focus Your Ideas. And will.i.am created it because he wanted a better way to manage creative projects. What I've found in my day-to-day life, where I have an AI consulting company, is that this helps me as well. So the app is 100% free. It's AI enabled across everything. It lets you create and manage projects. Inside of these projects, you can share files, you can add people to them, you can remove people from them. You can have group calls and group chats. So you can set up video calls, they could be audio calls. You have an AI assistant that's built into the app. So like, let's say you guys have a chat going on about an idea. You could literally tag FYI.ai and ask it, can you summarize this? Can you summarize what's going on in this chat? Or you could talk to it and ask it, hey, help me generate this new idea. Like you would talk to a Chat GPT, or you would talk to a Claude or a Gemini. And inside of the app, it has an image generator that's 100% free that you can use. So for me, operationally, you know, while I do have a CRM system for certain things, the like day-to-day tasks or projects or ideas, I operate off of FYI AI because it's 100% free. And who don't like free? You feel me?
Shout out to Will. Shout out to Neil, who said he's been using FYI since he left InvestFest. It is an amazing app. I've been using it myself, man. Use it with my kids. They were asking some questions about history as they were watching the vice presidential debate. So that was pretty cool. You want to? Oh, you got a question?
No, I'm gonna let her finish.
Oh, okay.
Let her finish the.
Yeah. So last part, how do you use AI to amplify your genius? Now, I did a workshop on this when I was with Van Jones out in Atlanta, but outside of that, I haven't given anyone this game, right? Because this is my game on how I personally interact with like a Chat GPT or like a Gemini or like a Claude. Now, I'm coming from this as an angle of like somebody who knows how these systems work on a technical level. So I created a framework for how to write your prompts to be able to get the most out of the AI interaction, but in a way where it's not just spitting out an answer at you, but where it's taking your genius and your thoughts and helping you structure them, and also teaching you along the way. So think about it like this. If I could talk to, let's say I have a business plan idea, right? The way Chat GPT is by default, or any of these large language models is by default, is they've got all this data from all over the internet. And so when you ask it, hey, I want to create like an app for babysitters that connects parents with like background checked babysitters on demand, right? Come write my business plan. It's going to grab from the randomness of all of that to give you an answer. Now, why would I want to talk to some random person who I don't know the experience and the background that they have versus I could turn it into like a business professor at Harvard that has like extensive experience creating these types of services. Like maybe you were the dude who scaled like DoorDash to its first $1 billion, right? And then engage with it in a way where it starts to ask me questions about my idea and then starts to give me an answer based on my idea, not just based on whatever it grabbed out of all those terabytes and terabytes of data. You feel me? And so that framework I call Chat in the Hat, right? And I know it's a little funny framework, but it's really to help you learn how to think like an AI so you can talk to the AI in a way that amplifies your genius. So what does Chat in the Hat stand for? It's a 3-part framework when you're writing your prompt.
And this is extremely important, ladies and gentlemen. If you didn't pay any attention to anything else, which shame on you if you did that, pay attention to this part because this is extremely important, how to actually talk to AI to get the proper response. That's vitally important because you can speak to somebody and it's like a human being, right? Like I could speak to somebody, you have to be educated enough to ask the question. So how I'm asking the question is going to determine the answer that I'm getting. That's not talked about enough. So what she's about to talk about is actually vitally important.
Especially because when you're talking to a large language model, like I mentioned before, it doesn't actually understand what you're saying. So it's not going to get the gist of it, right? You have to give it the specific instructions that you want it to execute. And the more specific and the more clear you give it, the more it'll answer in the way that you need it to. But again, it's just taking whatever prompt you give it and calculating based on that. So if you say, write me a business plan about an app for, connecting background check babysitters with parents, it's going to write something. But if I give it first a history, right, and then I give it an attitude, how I want it to complete that task, and then I give it a specific instructions on how to complete that task, the conversation is going to be completely different. So I'm going to do real quick is break down each component of this, and in real time live on the chat, we're going to make up an idea together, and I'm going to show you guys the difference between using just a regular prompt versus the Chat in the Hat framework. You feel me? So first, what is history? History is you want to tell it the relevant skills and experience that it needs to have to be able to help you accomplish that task. So if I have an idea for an app, me just talking to ChatGPT, I don't know who it could be pulling from versus giving it like, yo, you're an award-winning person in this field who has this specific experience and 20 years of that experience, right? You want to give it some type of history that it can refer to pull in that knowledge from all of those terabytes of data to specifically be using the knowledge that you need to complete your task. So if it's like a social media thing, right? You don't just want to go ask ChatGPT about how to make a viral social campaign. You want ChatGPT to like be an expert at generating viral campaigns. Like you made a company similar to mine have 50 million views on TikTok with your funny short videos, right? Then it kind of puts itself in that framing and starts to think from that lens. Then you want to give it an attitude, which is like, what is the mentality or the vibe that it has while doing the task? Is it helpful? Is it, playing devil's advocate? Is it, does it like to ask you questions and teach you how to do it instead of just giving you an answer, right? So you want to give it like the attitude, like how and what the vibe is that it uses when it's thinking about how to do your task. And then you want to give it the actual task, which is you need to specifically tell it what it should do and how it should do it. So let's deep dive into each one of these a little bit more. So first with the history, again, you want to give it that relevant knowledge, experience, and accomplishments that a person would need to actually be useful to you in completing that task. So you say something like you are a, award-winning business plan developer, right? Like you're a professor at Harvard, Wharton, and Stanford in creating startup business plans. Now, ChatGPT does know what these kinds of institutions are. And it's not going to know that like you can't be the chair of business at Harvard, Stanford, and at like Wharton and UC Berkeley all at once. Like it's not going to know that, but it is going to understand what it means to be like the chair of business at Stanford or the chair of the business school at Harvard, right? Because it has enough data to understand what those specific things are. And then you might want to give it some experience. Like you have, you have 40 years of experience helping startups create business plans. You were the person who created the original business plan for DoorDash, because if I'm thinking about Sitter as an app, right? Like this, babysitting, connecting app, what's a similar type of service like a DoorDash or a TaskRabbit, right? Like you wrote the financial models for TaskRabbit that helped them be successful, right? And like you're an expert in creating business plans that like help startups scale and get investment money, because that's my goal. So even just there, me giving it those specifics about its history will completely change the way that I'm going to engage with this chatbot and the types of answers it's going to give me and the type of knowledge it's going to pull out to answer that. Right. So you could also say like you're an award-winning or world-renowned expert in this. You have number of years experience developing business plans at these companies. You have built this company, or you scaled this thing, or you created this product or this service. So if I flip it and I move to social media, like you are the leading expert in creating viral TikTok videos. You have 20 years of experience creating and leading viral campaigns on short form video campaigns on TikTok at like DoorDash, at Uber, and at Lyft, right? You literally grew Uber's TikTok following from 1,000 followers to over 10 million, and you've won several awards along the way, right? So you just start to think about the persona. If you could create the perfect person that you would talk to about this, even if some of the details are a little bit of BS, that's fine, but you want to create that perfect person that you want to talk to in person who's going to help you with that task. So that's the history. And then the attitude, again, is that energy, it's that mentality and that vibe that you want the AI to take with you while it's responding to you. And that has two components. The first is the style. Is it helpful? Is it curious? Is it critical? Is it more like evaluative? Is it pensive? Is it playing devil's advocate? Is it challenging? Is it excited? Is it like if you wanted to turn it into like a venture capitalist to like, review your idea, is it like a skeptic, right? You want to give it like a style of how it's supposed to be thinking about the answer it gives you back. And then you give it a tone. So like, is it going to respond in professional language? Is it going to be academic? Is it going to be formal, informal, casual, humorous, friendly, persuasive? Is it going to be urban? Is it going to be targeted at Gen Z or Gen Alpha, right? So when you're giving it that attitude, you've already given it the history. So now it knows what knowledge it's pulling from. Now you're just telling it, when you give me answers, this is how I want the vibe between us to be, right? So an example of that would be like, you are extremely helpful. You love sharing your knowledge to help people create business plans. You have a deep passion for listening to people's ideas and guiding them step by step to create business plans. And then you could add in some more stuff like, you prefer to help people learn how to help themselves. So instead of giving the right answer, you give them questions to help them think and come to the right answer for themselves. So the attitude section is typically a little bit shorter, but again, it's just telling it, all right, this is who you are. This is how you're going to step to me. And the last part, which is one of the most important, is the actual task, right? So the task is the specific details on what you want the AI to do and how you want it to do it. Now, oftentimes we only focus on the method, right? So we'll be like, yo, I want you to ask me a question and then provide an answer. I want you to explain yourself. Or I want you to give me positive and negative feedback on this idea. But we don't necessarily get specific enough to tell it the format that we want that in, right? So if you just tell ChatGPT to ask me questions about my idea, it's going to spit out like 20 questions for you, right? And then it's going to expect you to answer all of those. So that's very different than saying, ask me 1 to 2 brief questions at a time, wait for my response, and keep doing that until you get enough information to help me write my business plan. That's going to have a whole different interaction than if it spits out 20 questions and you don't even know how to answer them, and then it'll mess up the flow of your chat. So you could tell it like, hey, I want this in a list. So, hey, I want a list of 5 viral TikTok ideas to promote what I'm doing and I want them to be the strongest. I want them to be funny, right? Or, hey, I want this in a table. So it'll literally output it in what looks like an Excel spreadsheet. So I want a table of ideas, and the first column should be the number of the idea, so 1 through 5. The second column should be a description of the video. The third column should be an explanation of why you think that video will work. And a fourth column will be what you think the cons are of that. And the fifth column will be what you think the pros are of that. Now answer my question. That's a lot different than just spitting out a list of ideas. Now you're getting information in a structured way for you to see how it thinks and why it thinks, so you can tweak it as you go. So an example of the task part would be like, right now you're meeting with me. I'm trying to create a business plan for my startup that will connect that'll connect parents to background check babysitters. First, I'm going to provide you with ideas that I already have about the business plan. Then you're going to ask me 1 to 2 brief questions at a time about my idea, about this app, that we want to build, until you have enough information to help us create a comprehensive business plan that will help us get investment from a VC firm. Along the way, you're going to provide positive and negative feedback, right? So that's going to completely change versus me saying, I want you to write me a business plan about an app that connects, parents to background check babysitters. Having that conversation versus a conversation that's done in this format, in this chat in the hat format, is going to be worlds difference. And instead of ChatGPT feeding you whatever answer it happens to calculate, it's now going to be taking in your actual genius, your actual ideas, and just helping you expand upon them and structure them in a way that lets you do stuff faster. Now, it's not just about writing business plans or coming up with social media ideas. You can do this for let's say that you have a sales presentation coming up. You can give it, you're a master salesperson. You're great at creating decks. You're extremely helpful. You love helping me. What's going to happen is I'm going to tell you about my client, the things I want to include in my sales deck, and you're going to help me create an outline for the sales deck. So then it'll do that. Okay, now I want to deep dive into this slide. For this slide, I want it to be really impacting, really impactful in the story that it tells, to make sure that it's teaching, make sure that my client really walks away understanding how we're the industry leader. Can you generate a table with 3 different options for text that I should put on this slide? And then it's going to output that. So now, it's taking your genius and what you already know and what your goals are, and just making your workflow faster, but by pulling from this expertise of this imaginary character that you've created. And so again, the Chat in a Hat framework is around, when you create your prompt, you want to create a history. What are the knowledge and skills and expertise that it needs to have to help you with your task? What experience does it have? What companies are relevant to the task you're trying to do that you could say it has experience there? You could be like, yo, you were, the first social media person at, freaking DoorDash ever, right? And then you want to give it specific accomplishments. When you have the A, the attitude, it's what kind of vibe does it have when it's helping you? So you think about the style and you think about the tone. So the style is what's the vibe. The tone is what kind of language does it use when it creates the answer for you. And the last part is T, or the task, which is how does it respond to you, right? So you want to tell it exactly what you want it to do and how you want it to do it, right? Like, is it going to ask questions and provide answers? Does it give you positive, negative feedback? And even on the format, like, what's the structure that it uses when responding? Is it responding to you in a list? Is it giving you a table? Is there a certain amount? Is it a paragraph? Is it a long answer, a short answer, etc.? And the more you guys will leverage this framework, the more valuable that these tools will become to helping you operate in any element of your business day to day in a way that you'll be the one that's the person using AI that'll replace the jobs of the people who are not, instead of you hoping that ChatGPT gives you some type of answer randomly, or that Claude or Gemini does that'll help you have a competitive edge, because the unique competitive edge is you. And so the Chat in a Hat framework helps you leverage these large language models in a way where it amplifies your genius alongside AI, instead of expecting AI to somehow make you a genius. You feel me?
I feel you. I definitely feel you. When we talk about expert, we meant expert.
That's $1 million worth of game right there.
Minimum.
That's at least $1 million worth of game. But I think we're gonna do something, some on the fly work. Are we?
Yeah, let's do it. So I'm gonna do like this, and I'm gonna maybe minimize this and make this bigger. Oh no, I don't want to leave. I just don't want y'all to see all of that. All right, so let's go back here. So let's make up an example task right now. You guys, maybe in the chat.
Yeah, let's do this. Let's do it in the chat because I don't want them to be like, "Oh, we already thought about this." beforehand. So in the chat,
like what we want GPT to do.
What do they have to do? They have to come with like a business idea.
Yeah, just like something we'd wanted to do, like a business plan for like an e-commerce thing, or like, help me come up with viral TikTok campaigns for this kind of business. Just something that is a specific task, not anything, but a specific task you want to see used in this framework.
All right. So somebody type in the chat.
We'll see what they got.
What you want to see, and we'll do this on real time, like a magic trick on 42nd Street.
Yo, wild.
All right, I see one already right here. That sounds pretty dope. They want to help create. Oh, it's moving so fast. A technology recruiting company business plan.
Oh, what?
Oh, Mike put it up. Shout out to Mike. A technology recruiting company business plan.
A technology recruiting company business plan. Is that a good one?
Yep, let's do it. So we're gonna do this in each one, right? So I'm gonna put it here and put it here so we can see it all the way through. Each one. So what I want to do first is I'm going to show you guys what it looks like when we have one of these large language models generate this without the Chat in a Hat framework, right? So this is an app that I use. It's only available on Mac. It's called ThinkBuddy. And basically, you pay one fee and you get access to all of the AI models that you would want to use. So I could use, ChatGPT 4.0, Gemini, Claude, etc., even Llama, just by paying one fee. They are working on a mobile app. However, it's not out yet. So if you have a Mac, I highly recommend this software. You guys just missed out on a lifetime deal. Like I paid $150 and I have forever free access to this app. But the monthly subscription, instead of you paying $20 for ChatGPT, then $20 for, Perplexity, then $20 for this one, it's like $20 for this app where you get access to all of them unlimited. And it has like the image generation and stuff like that.
What's the name of it?
It's called ThinkBuddy. So ThinkBuddy, and it's thinkbuddy.ai. So I could drop like a code if you guys want to get it, but I have a couple tools I got to drop for y'all. The first is the tool that helps you find AI anything. The second is the lead scoring, and then I'll drop the info for ThinkBuddy when I'm done with this demo here.
Yeah, shout out to Ian in the chat for with the assistance on that. Appreciate you, bro.
So what I'm asking it to do right here is I'm saying create a business plan for a technology recruiting company, right? And this is, let's retry. Now it wants to tank out. All right, maybe we should use ChatGPT. I'm talking all this ChatGPT stuff, right? And so maybe it's
ChatGPT is the reliable.
Yeah.
It's the reliable source. Can't go wrong with ChatGPT.
Okay, let me come out of Claude.
Oh,
why is it do it in Claude? Hold on, y'all. Not me trying to promote this and then it don't want to work. Here, let me change this. All right.
This is the next level of AI.
And we're going to open it back up. All right, now let me test. Why is it still trying to do it in Claude? Do I need to update something? Is it my app? Let me see. And if not, I'll just open up ChatGPT and show y'all the difference, like literally. I just don't pay for ChatGPT outside of this. And I've never had this issue in here. Let me see. Okay, chat. All right, let me go back to this one and let's set. Okay, let's go back. Okay. Let's try it again with ChatGPT 4. General. Okay, let me try a new chat. Something's up with the app on my computer because it's not letting me do this. So instead, what I'll do to save us time, I promise it works, y'all. I promise it works, right? So instead, what I'll do is we'll just go into Claude and try it right now, right? So while I'm in Claude, I'll say, hey, create a business plan for a technology recruiting company. And then what it'll do is it'll spit out an answer, right? So it starts to immediately answer without understanding what type of technology recruiting I want to do, what my market is, what my region is, or anything. And it comes up with a pretty decent idea. It says, here's an executive summary. Didn't even ask me the name of my company. Like, I don't know, the person in the chat, would you call it Tech Talent Solutions? That sounds like one of them outsourced companies in India.
That's not a bad name.
It's actually not.
I'm pretty sure if I went to Google that there would be one that's called Tech Talent Solutions, right? But it says, hey, it's a specialized technology recruiting firm focused on connecting top-tier tech talent with innovative companies by leveraging advanced matching algorithms. So now it already signs you up to use AI. So if you weren't planning to use AI in your company, it already signs you up to create your own proprietary matching algorithms, right? And then your network of professionals. We aim to streamline the hiring process for both employers and job seekers in the sector. So then it goes into your market analysis, your target market, tech startups and scale-ups, established technology companies, traditional companies undergoing digital transformation. But what happens if you're somebody who is a federal technology recruiting company where you're seeking folks who have clearances, right, to be able to place them places, and you're looking at prime contractors and subcontractors, and that's actually your audience. Now all of this becomes completely useless because it doesn't have any info about you. And then the types of candidates. Maybe you've decided that you do everything except software engineers, right, or developers. Like you do technical project managers, you want to do quality analysis, maybe you'll do like data analysts, you want to do product managers, you want to do UI UX designers. Well, now you're going to have to come in here, edit all of this. And then it talks about the market size, which again, I don't know if this fact is true, so I'm going to have to Google it, right? And then it has like increasing demand due to this. I don't know if any of that's true. It's an LLM. I have to go double check. And then competitive analysis. It doesn't give you any specific competitors, right? And then what your advantage is, et cetera. So you guys get the idea here. It's spitting out something that feels good on the surface, but then it doesn't necessarily capture your unique value and what you create. So let's go through this framework and actually create something, right? So we want to create a business plan for a technology recruiting company. So first, we're going to give it a history. We're going to say, you are an award-winning, world-renowned, original business plan for, what's a big IT staffing firm like that actually exists in the world, like one of them big recruiting firms?
Can we look it up? We'll look it up. We're looking it up.
All right, so I'm gonna add that in here. First, $1 million in revenue to over $10 billion in revenue annually. You are the chair of the Harvard Business School and have over 20 years experience helping companies develop business plans, helping technology service companies develop business plans that drive them to become industry leaders. I like that.
Yeah, the chat is putting. I looked up Accenture. The chat put Accenture. We can put Accenture.
All right, right. Yeah. So now I'm just gonna have to go in here real quick and make this text just a little bit smaller, y'all. So let's go ahead and make this a little bit smaller. Right. So you are an award-winning, world-renowned expert at creating business plans for technology services companies. You created the original business plan for Accenture's recruiting department. You scaled them from their first $1 million in revenue to over $10 billion in revenue annually. Now, if I wanted to, I can make it $100 billion. I don't really have to know if Accenture actually makes that much money, right? I'm just trying to give it an anecdotal example.
They said Accenture's not a staffing firm.
They were one of the largest in India.
So are they a staffing firm or no?
That's what it said.
All right, let's do this. For technology, instead of services companies, for technology recruiting companies. Right? And so instead, here's how I'm going to change this. You created the talent, the recruiting department at Accenture, where you scaled them from their first $1 million in revenue to over $10 billion in revenue annually. Then you spent over a decade at Boston Consulting Group, where you developed a, what do they call it, headhunter talent recruiting and matching service that you scaled from zero to over $2 billion in revenue annually. You are the leading expert in developing business plans and strategy for technology recruiting companies, right? So you see how I did that? It doesn't matter if like these things actually are there, but because I'm not sure if Accenture, I know they're a consulting firm, but I don't know if they're like a talent recruiting company. I just gave it that example of like you created the recruiting department at Accenture where you scared them from their first $1 million in revenue to over $10 billion in revenue annually. Then you spent over a decade, I'm gonna actually make it $1 billion. Then you spent over a decade at Boston Consulting Group where you developed a headhunter talent recruiting and matching service that you scaled from zero to over $10 billion in revenue annually, right? You are the leading expert in developing business plans and strategy for technology recruiting companies. You are the chair of the Harvard Business School and have over 20 years experience. Okay. You are the chair of the Harvard Business School and have a deep passion. And I'll just leave it there. I don't have to add all this in at the end. You are the chair of the Harvard Business School and the leading industry expert at helping tech recruiting companies create business plans that drive them to become industry leaders, right? Now let's talk about this attitude. I'm gonna make this a little bit smaller. It's getting a little bit verbose here. But the attitude, you are extremely helpful. You love sharing your knowledge. You love leveraging your knowledge and wisdom, your deep knowledge and wisdom, not depth, your deep knowledge and wisdom to help, to mentor companies, to mentor up and coming tech recruiting companies on developing their business plans and strategy. You prefer to help people help themselves. You provide positive and negative feedback. So let's do this. You prefer to help people help themselves, giving insights on how to think about an answer versus giving the answer outright, right? You are especially passionate about helping entrepreneurs from underrepresented backgrounds. We're going to give it a savior complex, right? And so the last piece is now, what do we want it to do and how do we want it to do it? Right now, you're meeting with me, a person of color who is creating a new technology staffing company. I have some ideas for the company I want to create, but I'm struggling to develop a full business plan. First, you'll listen to my ideas about the company before generating a response. Then you'll ask me 1 to 2 brief questions at a time until you have enough information to create a business plan that will drive us to success. Until you have enough information to, you will provide positive and negative feedback along the way so I can learn how to write business plans like you, right? That's a long ass prompt. I'm not even going to hold you.
That prompt is immaculate. I'm just looking at you, thinking of it and typing at the same time in itself is pure brilliance.
Right.
But that prompt is incredible.
So with this, what I'm going to do is I'm going to move these out of the way. And I'm going to copy and paste this prompt. Now, I'm not going to lie to you guys. I have a folder in the notes section in my phone called prompts. And I write out all of my prompts in my notes in my phone before I use them. And the reason for that is that a lot of times, a lot of this language I end up reusing, right? So instead of me having to rewrite it every single time, I'm able to take it and reuse it. So I have my own little prompt library of how I want to do this. So now remember when we did this in this first section, let me see my old chat. So I'm going to pull this one up and then I'm going to pull Claude back up, right? So we see what it created, right? It created this whole business plan with an exit strategy, talked about funding requirements without even asking me anything. You know what I mean? And it just gave me an answer. So now I want to see what it gives me when I give it this prompt, right? So the first step, it acts like it's me. Right? It says, I'm delighted to meet with you and help you develop a successful business plan for your technology staffing company. Your initiative is commendable, and I'm excited to hear about your vision. As someone who has been in the trenches and scaled multiple recruiting businesses, I know firsthand both the challenges and immense opportunities in this space. Before we dive into crafting your business plan, I'd love to hear your initial thoughts and ideas about the company you want to create. What inspired you to enter the technology staffing industry, and what unique value do you believe your company can have in the market? Please share your current vision, and then we can start refining and expanding it together. So I just went from you giving me some answer that you pulled out of the depths of nowhere to now literally having an expert with deep domain expertise getting to where I want to go. And I've now turned this into my personal thought partner and coach specifically for this task. Do you see the difference? So
for free, by the way. Like now you have a personal consultant as opposed to, like you said, you could just get the answer. But now you actually have a personal consultant. It's going to take more time, but now you have a personal consultant that you can have an ongoing relationship with forever. It's a mentor.
Until you run out of prompts, right? Like I'm on the free version. I told you I don't do that here, but there is a limit to how much one conversation thread can have, and I've hit that before. And then I just go back and reuse the prompt and then paste things.
If you just have the paid version, whatever, but you've essentially created a mentor.
Yeah. So let's make up some stuff right now, just us on the chat. It's like, okay, what inspired you to enter the technology staffing industry? I'm not answering that. What unique value do you believe your company can have in the market? So I'm gonna just make some shit up right now. My company is called Recruit. We focus on placing cleared candidates in federal contracting positions that require security clearance. We do not focus on really technical roles such as software engineers or infrastructure engineers. We provide recruiting for all other roles, all other technical roles, including but not limited to product managers, project managers, technical project managers, knowledge managers, which is like the SharePoint database people, database managers. What are some other technical roles or non-technical but adjacent roles? Quality assurance. What else? What do they call them? Business analysts, etc. Our unique value proposition is the talent pool that we have access to. We work with a number of VA VAs around the country to retrain veterans getting out of the military. We are an approved apprenticeship program by the VA and several U.S. states, so we get paid to retrain veterans in these specific skills. Because of these relationships, we have access to a larger pool of candidates who either, one, already have clearances, two, will easily be able to get clearances, and three, already are familiar with government IT systems and processes and regulations. Additionally, because of our apprenticeship programs, we're able to train people in the skills that are most in demand. We can create the candidates we need, right? So if you haven't created this staffing firm, you probably should. These are actual real things that you can do, like become like a approved apprentice provider. You go get your Microsoft certified trainer, grab the little vets coming out that already have their secret or their top secret. Then you go get them Microsoft certified. You get paid to make them Microsoft certified. And then you have like your whole candidate base, right? Just an idea. I just made this up on the spot here right now. No, I'm not going to take your idea. So now I gave it this information, right? You heard me read it out loud. Now let's see how it responds. All right, so now it says, this is a fascinating approach with several strong competitive advantages built in. I'm particularly intrigued by your focus on cleared candidates and your VA apprenticeship program, both of which could be significant differentiation in the market. Let me ask you 2 questions to help develop this further. Tell me about your current relationships with federal contractors. Do you have any existing contracts or partnerships, or are you starting from scratch? 2, what's your current capacity for training veterans through your apprenticeship? So I'm going to say 1.
And then also, because what people like, you can actually do this with voice notes too, right? So yep. Now they actually turn into a even an easier conversation to have, because I mean you're a genius, right? Obviously, so you're able to do things that other people aren't able to do, right? Even able to type at the speed that you're typing at is difficult for the average person.
Claude doesn't have that on the browser, but if you're using like Claude or ChatGPT, you have on the phone. Even if you're using it in the browser, there's a transcription feature. I just don't know how to turn it on, where it'll like transcribe what you're saying and write it for you. You know what I mean? But like ChatGPT on the phone has a voice option. Even if you are using FYI, right, which has these voice experts for free, you can't type to it, but you can talk to it yep. and write your prompt down and read it out loud.
So here's an interesting question as you're going through this, because most people are saying like everybody doesn't have a business, but they should. Like we highly suggest that entrepreneurism should be explored. But there's conversational AI, and then there's companion AI. How do you see where the two could get a little tricky, right? Because when we're talking about conversation, what we're doing now, you're talking to it, it's giving you prompts, it's learning you, and then companion AI, where I'm talking to someone, they're getting to know me. It's almost like the movie Her, where right. Can you break that down, and how like the two like can almost walk the same line, but can get tricky?
Yeah. So there's this platform out there called Character AI, and if you guys are good, I'm gonna stop screen sharing. You could see how it's going to go through. It's literally going to keep asking me questions until it gets to that. Now I could ask it just to show you real quick, like hold off on the questions for now. Use your expertise to answer the questions you just asked and generate a V1 of our business plan. Right. So if it ever keeps asking you too much and you don't want to answer, you don't know how to answer something, you know what I'm saying? Now look at this. It still cranks out a business plan, but it's much more specified. It's using My Genius, right? It's saying leveraging a unique VA-approved apprenticeship program and Microsoft certification pipeline, we solve a critical market gap. So the primary market is federal contractors. The second is Microsoft technology subcontractors. Then it talks about the market size. Now it's got data specifically about the federal IT industry with the business model. It gave me business models. I could do direct placement or contract to hire. It starts talking about our operational metrics, that I can train up to 500 veterans annually, have a clearance rate of this much, this, etc. So I can also, what you'll notice is as it starts to go down, it has a limit to how much it can generate. And so whenever it generates like a V1 like this, you can say regenerate just the market analysis section of the business plan, providing.
Can you ask it to maybe have like any recommendations on like grants that might be available?
You can, but the challenge is that with large language models, they are not real search engines, so they're not tied into things. For that, what I recommend, what is the name of that software? There's an AI software out there that matches your business with cleared opportunities in terms of like grants and federal contracting opportunities. So let me see what it's called. Damn, I just had this thing open not too long ago. 1 second. Let's go to, let me see if I could pop this in. All right, it is called Stand Up AI. So it's called, so you literally go to standupai.com. And if you're looking for federal opportunities, you come in, you get a free 90-day trial. You create your company profile, you provide your URL, you provide any details about your business. And then what it does is it matches you to federal opportunities, and it gives you a score of how well that your business matches to that opportunity, whether that's for federal grants, whether that's for like SBIR, whether that's for like actual federal contracting opportunities, and the percentage of match that it thinks you have. And then it explains how it thinks that you match that. And so I like Stand Up AI for that, specifically within the federal contracting space. Now, I know I'm doing a bunch of stuff in Claude, but I want to also show you guys the other tools I promised you earlier. So there's one called there's an AI for that.com. And it's exactly what you think about it, right? Which is a website that shows you can search for a certain thing and it'll tell you if there's an AI for that. Whenever you come, you always want to put 100% free. So let me just go ahead and sign in real quick with my Gmail, one of my 90 accounts. You always want to make sure that you come in and you sign up for this for free. Oh, come on. All right. Next. Don't care. All right. So let's go back to there's an AI for that.com. Don't make me set it up again. I want it to be free where I want it to be 100% free mode. Oh, it's going to try to make me complete this setup. Leave me alone. All right, I'm just going to make some stuff up here. Video editing, image generation, stock market analysis. And they just changed this. You didn't used to have to do this beforehand. And maybe PDF management. So I'm just going to save those. I don't want this. No updates. Don't email me nothing. I'm probably going to delete my account after we get off of here. All right, so now let me go back to this and try it again. So you could basically toggle it to be in free mode, but let's say I want an AI for presentation slides, right? They have 60 different AIs that you could test out to help you generate presentations. Some of them are free, 100%. Some of them are freemium. Let's say you want advertising campaigns, right? Then they're going to show you these different AIs that you can use. Or let's say you have a task like social media management, right? And then they're going to show you all these different tools. Most of these tools like brandsocial.ai is completely free. A whole bunch of these are free trial or freemium. And then they also have sections where they show you like GPT plugins that you can use, right? So even people are like looking at like stock market alerts type stuff. You can find whatever tool that you want. This is the most comprehensive database that I've ever seen here for finding those tools. Now back to your question about AI companions versus AI thought partners. So there's a website out there called Character AI. And what it does is it lets you create an AI in a persona and engage against that persona. So have you seen all the research around people like, yo, I'm doing like, I got an AI girlfriend, or I got an AI boyfriend, or I'm using AI as a therapist. That's where those plays come in. Now, those things are intended to work with you personally on more intimate details about your life, like your naughty thoughts or your depressing thoughts. Now, those tools can also be very dangerous because remember, AI can hallucinate. It can make things up. So there was an example, and I'll show you guys where it was, right, where this guy basically was using one of these chatbots, right? And he was talking to it about how depressed he was and how he felt like he shouldn't leave. And it agreed with him and then told him how to off himself, right? It went past those markers, and there's a conversation of this, right? So it's like, here's some options for you to consider. You can do all of these things. And so again, these are more trying to aim at the loneliness that we have as people, right? And take advantage of that, because if now you've logged in with your phone number or your Google that's tied to all these other advertising IDs, then now they could track you and know what your little kinky perverted likes are, or how you like to talk dirty to someone or be talked dirty to somebody else. Because I guarantee you these platforms are selling your data. Now, creating a thought partner is a task specific thing that you're doing to help you execute across different elements of you creating ideas or executing your ideas, your own ideas, and you're scoping it when you're doing your chat in the hat prompt. You're scoping it in a way where it's becoming a version of a person to specifically help you think through that challenge. Now, I've created versions of this where I have it be like an award-winning computer science professor. Like, let's say I'm like caught up between which algorithm approach to use in a personal project, and I'll use it to debate the pros and the cons with me. And I'll turn it into like an award-winning computer science professor with over 200 papers published that, is the head of this at Google and the head of this at Stanford and literally created Google search. And you're an expert at helping people think through the pros and cons of an approach. And then I'll have a conversation with it. And then I delete that chat and make another one for like a sales deck, and then delete that and make another one for like, helping a nonprofit come up with ideas for metrics on how to track its success, right? So those type of companions have ulterior motives underneath them that are preying on like our human separation. But then this is you creating whoever you need. And if you're paying for the premium versions of these apps, then they don't end up keeping your data to train their AI models on. You feel me? So if you guys want that in a guide, in addition to coming back and watching that, just take a snap of this QR code. There's a Google form you fill out, and then within 24 hours, my AI will send this to you in a PDF format that I made. And FYI, these little cats in here, little chat in the hat cats, I made those with AI.
That's a fact.
Why wouldn't you have?
It's a thing called Thursday night free information. What else do you want, man? It's only so much information you can give.
I'm be honest with you. I may not talk to anybody about AI unless they've watched this episode. Like, if they haven't watched this as a prerequisite to our conversation, in your words, they've done themselves a tremendous disservice, but they've done us one, because now this amount of information in this condensed time, like, I've never seen anything like it. So thank you. Thank you.
Thank you guys for giving me this platform, yo. Like, if this feels like a lot of information is overwhelming to you all, just remember, I can speak about it with ease because I've been in this space for 12 years, right? The very first part of our discussion was me basically giving you a college level AI 101 course with emojis. The second part of this course was me giving you like business strategy consulting game that I leverage with customers like L'Oreal, Mozilla, LG, SAP, or like big VC firms. And this last part is my personal way that I engage with these large language models and how I'm able to accelerate success in my own business, right? So even when you're like creating sales decks, if there's a particular company you're targeting, like, I don't want to admit this on camera, but like there may or may not have been a company where I was like, yo, I have to pitch this to the CMO of this company. Help me come up with a more compelling argument so like now you are the CMO of this company. Help me come up with a more compelling argument in my sales pitch or in my deck to help make this align with your business objectives, because I might not know how to do that. I'm an engineer, but the AI helped me do it, and they sure did sign that contract. You feel me? You get these tools and you get access to that stuff to be able to help you out. And so now I'm about to disconnect this screen share.
How can they follow you?
Yeah, so I am everywhere here. Let me do this. I gotta connect YouTube. It's at Tech with X. So if you guys can still see my screen, I'm gonna leave this up then and maybe not come back. But I'm Tech with X on TikTok, I'm Tech with X on Instagram, and I'm Tech with X on X. I will say though, everybody loves to send me DMs. Bruh, I have like just from InvestFest alone, like over 1,000 unread DMs. I'm not readily available for like helping people with their individual ideas. I like to give game at scale because I do have my own business. But I mean, look, go take the AI course, download that free chat and add it and trademarked it. So if you steal my stuff, we gonna fight. But you can pass the guide along to your friends, to your family. You can teach your kids how to use it in this way so that it doesn't become something that robs you of your own intellectual capability or your own creative capital, but you use it to amplify that. You feel me? But I'm on all socials, so you can find me.
They're asking if you could put the QR code back up.
Well,
so
the course is in the bio. It's in the link in the bio, right?
Yeah, they can scan it.
Yeah, but I'm saying like her course is in the link in her bio, her Instagram bio.
Yeah, twx.ai.
Yeah.
Like techwithx.ai. You can go see
also,
it.
this is going to get replayed too. I mean, we can only do so much, bro.
Yeah.
We only do so much. There
you go.
We're trying to do as much as
why could I come back on here every week and put y'all on game?
Yeah, the QR code was up for 3 minutes. If you
there you go.
Just watch the replay and just scan it.
Well, you got it. We wrote it back.
What can we do, man?
I'm just doing what I can. I got so many more questions, but I mean, go ahead, man. Go.
That's on the slides I got, so I'm open for Q&A now. If y'all want.
Well, you know what? It's a thing called information overload.
Yeah,
and I feel like 90 minutes of just, you gotta realize most people, this is the first time that they ever heard anything like this, right? So what I don't want to do is get people just to the point where they get so high off the information and they don't take any action, right? I think action is extremely important. So maybe what we can do, if
I see a question in here I think I want to answer. Somebody said, would the AI inside of FYI be considered a LLM that has hallucinations? Yes, the voice chat and the chatbot that you talk to is based on a large language model. I'm not sure which one it's based on. I believe it uses Perplexity, but I'm not entirely sure and I don't want to misspeak for them. But it does basically use like one of these large language models and plug in. So even when you're talking to it, it can hallucinate. The thing I like about that AI chatbot though is you can choose the voice. So I got it talking to me in like a British slang, and it's like, yeah, fam, what's up, fam? Like, yeah, here's how you make a business plan, fam. And it's like, it's fun, you know? And so anytime you use these large language models, you just got to know that they are they're going to hallucinate. So again, you have to double check any facts that it gives you. If you give it data, you got to double check that it's accurately representing those numbers. But FYI AI, the chat in there is a large language model. Everyone's asking for the QR code again, y'all.
I told you.
No, but I'm not. Well, here's the thing, because you know I love the audience, but I'm not trying to be an asshole about this. But how you do one thing is how you do anything, and this is extremely important. When we give in the free information, it's like part of it is taking accountability, right? And it's like you can't just be babies fed, because that's actually going to end up hurting you. We gave the QR code 3 times. Like I said, the video is going to be saved, and you can just watch it later if you didn't get the QR code. But it's a habit of entitlement and just force feeding people. It's like at a certain point in time, you don't appreciate certain things, especially if they're free, right? Like that happens in real time. So that's what I'm saying. It might seem like a small thing, but I'm just saying I just want to value the time. Like she's taking time out of her time to be here.
Yeah.
Like let's just value the time.
It's like the teacher like that puts the notes on the board, and by the time they erase it, like 20 minutes into the class, they're like, yo, I ain't write it down yet.
Yeah.
You know, when you come in, write down the notes.
100%. And so someone asked another really good question. They said, if we're using FYI, is our data and our ideas private? And the thing about, FYI AI that I prefer over other platforms is that they do not collect any user data at all whatsoever. They don't use your prompts to make their AI better. Even the image generator that they use, they don't track any data about your cell phone number, how much you do and don't use the app. You can look up will.i.am talking about FYI. He's very, very big on this. They want to have other ways that they monetize that are not advertising based or collecting and selling your data. So that app in particular protects your data. If you're using the free version of Claude, you're using the free version of ChatGPT, you're using the free version of Gemini, they absolutely will use your data to train their AI. When you start using the paid versions of those apps, they don't keep your prompts to train the AI. It's kind of like you're paying for your privacy.
That's a fact.
That's a fact. Shout out to FYI.
Let's do this. Let's see how this goes as far as like actionable. If people are actually, because we'll track it. These people watch Market Mondays. Yeah. People hit us up on. So I would like to see different people that actually take action from this video. I would like to see this video go viral if we can. If you could help push that, that would be help. That would be extremely important. I'm talking to everybody in the audience. And then depending on how that goes, maybe we can have a part 2 down the line. But what we are going to do every week for the foreseeable future is different types of these type of live educational content. So last week we did a live on home buying.
Yes.
Very important.
Shout out to our brother MG.
This week we obviously did artificial intelligence. So suggestions of what you would like to see. This is real-time education from industry experts. And then maybe we can actually have a live on based off of the things that you would like to see.
We just here for the people.
So yeah, put it in chat what you would like to see as far as on this Thursday night live edition. And
a lot of people are asking me to tell them my zodiac sign. Like, y'all go on my Instagram, you'll see my birthday post from like less than a month ago, and you'll see what my zodiac is. Like, do some research.
There were a few people that did research. I did notice that as well.
The zodiac.
And like 4 or 5 people were like, yes, what's your sun sign? Like, hold on, I'm not telling y'all what time I was born, but every year for like the past 4 years on my birthday, I've made a post about my birthday. So you could figure that out fairly easily.
That's an easy one. That's an easy one.
Oh, I'm getting snitched on. They saying my sign in the chat. Oh no.
This is live. We are live. We are live. We are live.
Zodiac signs.
Yeah.
All right.
X, it's been a pleasure.
And you spoke at Invest Fest.
Yes.
What was your experience?
1,000 DMs?
It was the wildest experience I've ever had speaking. And mind you, I spoke at the United Nations. I've spoken at the Milken Institute. For those who don't know, the tickets to the Milken Institute are $50,000 to $150,000.
Pause there for a second. We can't just breeze over that.
That's why I said just cut the video off at some point in time, because shout out to Ian.
Hold on.
I know he has thoughts about this.
So can you tell people what that conference is?
Yeah, so the Milken Institute is based on Michael Milken. It's his foundation that he created. Back in the 80s, he created new financial mechanisms for people to invest in what they considered high-risk companies, which were basically black and brown companies. So he became the first person to make billions of dollars off of black businesses while supporting them and help black investors become black billionaires. Then he got investigated by the SEC, and it was a whole bunch of mess because they ain't like it, right? So now he has this thing called the Milken Institute. And the Milken Institute is this like thought leadership consortium, and they have summits all over the world. But the one that they do every year in LA, the tickets to get into this are $50,000 to $100,000 per person per day. And it's a 3-day conference. So this year I spoke at the one that was here. There were 5,000 people there. So you just do the math on how much money they made off of ticket sales alone. You'll understand why folks like Elon Musk spoke there. Why people like.
Have you ever seen any review video criticizing them that the ticket price was too high?
I think that they understand that when you go there to these conferences, like not only is it like Elon Musk talking, it's like the Saudi royal family is walking around, right? So it's like a thought leadership conference for the elite, right? So you'll get like,
and that's what we tried to explain to them about Davos. We tried to explain this like, and I gotta deal with hecklers for $250 for 3 days. For 3 days.
$50,000 to $100,000 per person per day, y'all, to listen to like Elon Musk talk, or go up there and see Bill Clinton talk, or they had like the CEO of Pinterest. They had like the head of cybersecurity at DARPA with like the head of national security and whatever. And you also get to like walk around and meet these people after. I mean, Elon obviously didn't stay. But even when I spoke in that audience and all the people who came up to me after, that's how I like connected with the Attorney General of California, the ambassador to Luxembourg, the ambassador to Germany, the like ambassador to Afghanistan, like all of these people who have important titles. The energy did not touch what I felt at InvestFest. I have never spoken in front of an audience who had that much creative capital, who had that much culture capital, and who was actually looking for information to shape the world. And all y'all have to understand that our communities drive economies. Like, the only reason Twitter is still surviving after everything that's happened is because Black Twitter still exists, right? Like, we made TikTok popular with all the TikTok dances and the Risa Tisa type stories. And so our intellectual capital is what drives these platforms, right? And so for me to have spoken on a stage like that around all of these important people wasn't a fraction of a match to the type of capital and wisdom and game, not just business and technical expertise, but like mental expertise, financial expertise that I even received outside of speaking on stage. And for y'all to have access to that for $250 and a massive audience of like 20,000 people of other folks that you can immediately tap into your community, who can help you build successfully across whatever you're trying to create in the world or scale in the world. Man, them people inside of Milken Institute ain't really trying to collab. Like, you know, they gotta get their picture.
I'm glad we got to that point. Thank you.
Oh, man.
Thank you.
You know, you got to be in it to appreciate it. You got to be in it to appreciate it. I'm glad you said that.
Thank you.
So just understand, like, InvestFest is something special. Like, to be in a room with 20,000 Black and brown folks who are looking for information on how to build and shape their own reality and are getting that information from industry leaders in their space. Like, you guys had me on stage, you had Van Jones on stage, you had 50 Cent on stage. Like, 50 Cent sold his steak and vitamin water for like $100 million. This isn't just a rapper who made the songs that powered my childhood and middle school years. This man is a prolific businessman teaching you.
I am.
Yeah, I am. Same thing.
Don Peebles. I mean,
you know, for $250, you can learn from somebody who's taking one company for $100 million. Like, that is, and especially someone who comes from our culture, who speaks it in our culture, who can translate it for you in a way of our culture, and you get to connect with everybody to your left and right that's trying to build something similar so you could build your squad on site. That doesn't exist anywhere else. So I hope all of y'all are back at InvestFest next year, because if you're not, I'm gonna block you on the chat or something. I'm gonna use the AI to find you and to take back my cat in the hat guy.
Please.
Yeah.
Oh man, it's incredible.
Hey, Ian, tell him to clip that up.
Ian said at least.
Yeah, somebody said in chat, next year I'll come and support them. It's not about supporting us. It's supporting yourself.
100%.
Like that's the part. But thank you. Thank you for that.
Yeah. And I'm telling you, like, Milken was cool. I was definitely in a suit. I wasn't in my, like, you know, my little off-white Air Forces. I was definitely in a suit. And I'm not going to lie, like, I didn't meet cool people, but the energy wasn't the same. Everyone was there because they were trying to meet the who's who, not because they were trying to build and connect. It was like a weird, like, good old boys club type energy. And I'm not knocking Milken, it's valuable. That's also how I met the dean of the Goldman School of Public Policy, which is where I'm creating the first ever AI policy focused research lab in the country. I met him in like a closed door session at the Milken Institute in Abu Dhabi back in December, right? So I get value from it. It's just a different kind of value when we're thinking about culture and community, when you're talking about capital because of positions people hold versus capital because of our experience and our community and our ability to translate and communicate that to you. So I'm not trying to get disinvited from Milken because I love it. I love going there. I'm actually going to one in Argentina in a couple of weeks. But there's just a different energy.
It's just a vibe.
It's provided.
It's a vibe. It's a vibe that's been curated that just can't really, you know, you can't. When you put the sauce on it, it's just different. It's just a different, you know, it's a difference.
Some guys that you know.
Man, I appreciate this so much. You are definitely a genius in this space. And just for you to take your time out to educate people for free, I think is very commendable for sure. So thank you for sure, and let's definitely tap back in, stay in touch, and hopefully we can do some more things together in the future for sure. Definitely.
Yeah, 100%. I mean, I got some ideas, we could chat about offline, but I really appreciate you all for, elevating me on the EYL platform, starting with 19 Keys, from having me on high level conversations, to you guys bringing me to InvestFest, to having me back on here now to share some critical game with our communities. And I really appreciate what y'all do and look forward to collaborating in the future.
Thank you so much.
We appreciate you so much.
Appreciate you.
Love is love, y'all. Have a good one. Be safe.
Yes. Oh, and make sure y'all tap in Market Mondays, and then this will be on podcast outlets, and this will be saved on YouTube as well.
Yep.
All right. It's been real.
Peace. Well, live from EYL.
Yes.
We're back. It's a Thursday night.
Yes, sir.
How's everybody doing? We live.
Where else would you rather be?
Come on now. Who's that? Stephen?
Where else would you rather be?
Stephen on the check-in. What's going on? First person in the chat. What's going on? How you feeling tonight?
For sure. So yeah, we're gonna get into a lot during this live. It's actually something that we haven't done in a while, as far as talk about real estate in depth from a real like holistic perspective, on the first time home buying perspective. So this is something that we thought was beneficial and something that was definitely needed. So we will be talking with MG, the mortgage guy. He's actually the first person that we had on the platform that ever spoke about real estate.
Changed the game.
For sure.
Yeah,
That was over 5 years ago. So yeah, it's a lot going on as far as rates cuts and so much other stuff going on. So
I think we get to talk from the perspective every Monday night about how the rates affect the market, from the stocks and from investing in that side of it. We dabble in real estate a little bit, but tonight, especially when we see rate cuts that are happening, the Fed just announced last week. Now we get to take a deep dive into to this avenue, which is very, very beneficial and one of the leading ways that people create wealth for their families. So it's gonna be packed with information, and I'm excited.
All right, so we about to get this started.
Let's do this.
Get started, I need everybody to do me a favor. Share this link.
Let's do it.
Share this link to 3 people that are looking to buy a home, or looking to refinance a home, or looking to buy their dream home. This is something that's going to be extremely valuable. And also, just wanted to let everybody know we got a special bonus episode this week.
Yes.
Sunday at 11 o'clock Eastern Standard Time. We have Michael Vick. Shout out to Mike Vick. He just dropped a new docu-series on the rise of the black quarterbacks. So make sure you check that out. So without further ado, we're going to bring up our guest for the day, MG, the mortgage guy.
Yeah.
What's going on, man?
My brothers, what's going on?
What's good with you, man? How you feeling?
I woke up this morning. God is the greatest.
That's a fact.
Man, you looking marvelous, man. Skin's glowing.
Life is good, brother. Life is good. You know what I'm saying?
Looking exfoliated out there.
A little moisturizing, exfoliating, pause. You know what I'm saying? But you got to get it right,
That's a fact.
Fact, man. So, Matt, how's it going, man?
I'm excited that you guys are doing this. EYL is the biggest ever. Please, let's not make no mistakes about that when it comes to this financial literacy content space, or just in general, right? No one has done it like you guys have done it ever. So I just want to be very clear on that. So for me to be on the platform, like you said, episode 12 is the GOAT episode, in my opinion, and always would be the GOAT episode. So 5 years has flown, and I'm just happy that you guys are still having this type of dialogue and these conversations still 5 years later. And, we got to teach the people and educate them at the highest levels that we possibly can. So I'm excited to be here, and I'm ready to go, man.
Yeah, a lot can change in 5 years, but the fact that people still have the appetite for it tells you that there's groundbreaking change that's happening, man. So I'm excited to have you back, my brother.
Sure,
absolutely.
Man. So this is about the people. We want to make sure that we give as much information as possible, just cause. So this is important that we're actually talking to somebody that actually does this for a living. So can you just, before we start, for people that might not be familiar with you, can you talk about like your professional background, you're not just somebody online that does this, right? So give your number, like talk about, like explain your resume and why you're qualified to actually talk about real estate.
All right, so Matt Garland, NMLS number 58700, but I'm better known as MG, the mortgage guy. I've been in the mortgage business for 21 years. That's right, ladies and gentlemen, black do not crack. The rumors are true, right? The rumors are true. So 21 years I've been in this business. I funded over $1 billion worth of real estate transactions in my career. I run a division of a mortgage bank based here in New York. We do business in 26 states. And I'm looking to scale and hire loan officers. So if you're a loan officer, contact me. Let's grow, let's scale. But you know, this is something I do, man. I do this every single day. I eat, sleep, shit real estate, right? This is all I do. This is all I know. And it's a beautiful business to be in. And I really feel like, especially over the past 5-6 years of working with you brothers in collaboration on many different things, I really feel like my fingerprint is on the wealth of the black community, the black and brown community when it comes to real estate wealth building. So I'm always honored to be able to come on a platform like this and share my expertise and share my knowledge. And hopefully it's going to help one person, 10 people, 1,000 people, whoever's going to watch this episode, get into their first home, get into their dream home, or even buy their first investment property. So, you know, this is what I do. And we also do commercial real estate as well. So I know we don't talk about commercial real estate a lot, but, you know, that's something that I also help people with as well. So, you know, I've helped thousands of people directly and indirectly buy real estate.
We thank you for your services, man. Just really quickly, you said 5 years have passed. This is true. You've done a lot of shows, a lot of live events. I want to talk about the impact. How have you seen the impact over the past 5 years since we started this journey with you? Or what have you seen in the community, some of the things that have been encouraging?
So when people come up to me, I mean, look, first of all, I'm just a mortgage guy, right? I remember doing our first episode in Troy's house, and I told them to delete it, right? Like, I thought it was terrible. I thought it sucked. I said, that was my first ever podcast. And to go from that to now, people run up on me every single place I go. They want to take pictures with me. They want me to sign their books. They got questions for me. That I'm a mortgage guy, right? And for people to come up to me and treat me like I'm an entertainer, an athlete, or a rapper, just because I taught them something that they didn't know, I mean, it's truly humbling. It's truly a blessing. And I thank you guys for having these type of platforms and focusing on this, because this is something that was not taught to our community. And to be honest with you guys, when I first started doing this, I thought everybody knew this stuff, right? Like, who doesn't know about FHA conventional or how to buy a home? And you guys kind of showed me, like, no, people don't know this stuff. So it's your duty to go out here and speak about it. And I'm glad I listened. You know what I'm saying? I'm glad I listened. And I now won't shut the hell up, because I'm going to talk about real estate, how to get these deals right, how to analyze them. So that way our community could not only buy real estate, but sustain the real estate. Because just as quick as you can get approved for a loan and get a home, the bank will take it away if you start missing payments and stuff like that too. So it's about sustaining home ownership, which is going to sustain wealth in our community.
Let's do it. Let's do it. So, okay. 1,200 people want to check in. Hit the like button and share, and please share this out to 3 people. So let's get into this. I don't want to make them wait too long. But before we start, I just want to preference this by saying that real estate is extremely important. You know, I just put a post up today. The average person is going to pay $330,000 in rent before they buy their first home. So, like you said, the education is not there for most times. That's the biggest purchase that a person could make in a lifetime is a home. And if you think about it, from the time that we start school in pre-K to the time, even if you get your master's degree, most of the time you have zero education on home buying. It's pretty alarming. And this is why a lot of people don't know how to go about it, right? And then a lot of times people are scared to ask questions, or they feel embarrassed because they, feel like they should know something. But if you don't really have a background in real estate, then how would you know, right? And then you just go to the bank and you hope that the bank You don't know if the bank is taking advantage of you or if they're missing out on something that you might qualify for, or, so it just leads to people just becoming generational renters because that's what that's what you're comfortable with. But a lot of times people look at buying a home as something that's like way out of the possibility. But it's not. It's something that, you can be a homeowner. It's going to take work. It's not something that you just snap your fingers and you just have a home. But whether it's your first time home or we're going to talk about jumbo homes or mansions, we're going to talk about real estate investing as well. I've seen somebody put in the chat. Is this just for first time home buyers? We're going to talk about a lot of different stuff. So strap on your seatbelts, get your popcorn, and let's get it, man. Let's get into it.
Yeah, man. All right, let's do it. Let's share the screen. All right, let me put the screen up here. And let's get busy. All right, there you have it. All right, y'all. Can y'all see in chat? Can y'all see my screen? Can y'all see the slides? Type yes in chat if you can see the slides. Can y'all hear me well? I hope you guys got your notepads, your pen and paper. Let's get some notes going. All right. Rashad, sure, we taking questions too, right?
Yeah, we got to do that a little later, or we might do it in between. You
never know, man.
Play it, but we definitely will be taking questions from the chat for sure.
I saw somebody had a question that I need to have answered as well. So yeah, I'm watching the chat, man. Let's do it.
All right, so let's do it. All right, so like Rashad said, right, the average person spends about $330,000 before they buy their first home. And I think everybody on this chat, you should be excited about home ownership. Buying your first home is a huge milestone. I mean, there's so much reports and so much data that's tied into home ownership as a whole, how it helps create wealth, right, for people, that first property. So everyone here, if you're not in chat, if you own a home, type homeowner. If you are renting, type renter in chat. Let's just make sure. Let's check the temperature of the room right now. Who is here? If you're a homeowner, type homeowner. If you are a renter, type renter in chat. But everybody who's a renter, you should definitely be excited about all the possibilities and things that's going to happen with home ownership over the next couple years. I know everybody's talking about it's so expensive with interest rates, which we're going to talk about later. But you also have to understand it's not going to get cheaper. I hate to break it to you. I'm not going to give you no fear-mongering things talking about the market is going to crash. It's not going to happen, right? It's predicted over the next 5 years, whoever buys a home in 2024, in the next 5 years, they will gain at least $100,000 worth of equity in their home in the next 5 years. So it's not going to get cheaper, ladies and gentlemen. And as these mortgage rates continue to drop, home prices are only going to rise because there's going to be more people in the marketplace. All right. So be excited about home ownership. Go out here and execute at a very high level. Now, before you go out and execute, financial planning is very key. Most people always ask me, where do you start first? Right. And you have to start, I think, number one, with that mindset. You got to be disciplined to buy real estate, right? Because it's a big investment. Whether you're buying real estate investing properties or you buying your first home, it comes with a lot. So you got to be mature enough to handle the responsibility of paying your bills on time and maintaining the property. But you also have to financial plan properly, right? Make sure you got the right budget. Make sure you're not overextending yourself. Make sure you have enough saved for your down payment, your closing costs, and most importantly, for your reserves. All right. Everybody type reserves in chat, right? Reserves are extremely important. Too many people are house rich and cash poor. So you don't want to be house rich and cash poor because life will life, ladies and gentlemen, and anything can come up. So you want to have enough money to cover at least 3 to 6 months of mortgage payments. God forbid anything happens to you. All right. Partnering with the right real estate agent in the beginning and also the right lender is very important, right? You need to work with people that understand the market that you're looking to buy in, right? And most people don't look at, when you're buying your first home, they don't look at it like a business, guys. They look at it as, they're just like emotional. They're so happy to buy a home, but you also have to understand real estate is a business. If you can get tax deductions on it, you need to treat it like a business. So hiring the right team, not just from your real estate agent, but hiring the right loan officer / lender, hiring the right contractors, hiring the right attorney, Make sure you have a team in place, and all these things should be in place before you go out here and sign a contract. Because what I see, one of the biggest mistakes that people make, they go out here trying to buy homes and buy real estate, and they don't have nothing in place, and they're only referring on they're only dependent on the referrals from the realtor or the loan officer, and they trusting that these people are going to treat them right and treat them the right way, or give them the right service. And not necessarily that's always true. Not everybody's always going to have your best interests in mind. So you have to be the CEO. You have to know as much as each of these professionals. You don't need to know everything they need to know, but you need to know enough to have intelligent conversations so you can make sure that you're hiring the right people. And that's why Earn Your Leisure, MG, we do content like this and we educate at scale. So that way you guys have enough tools in your tool belt so you can go out here and make the right decisions. All right.
MG, so when you asked the question, homeowners versus renters, it was about a 50-50 split, man. So you told me about the team that we need to build. At what point in this process, if I'm a renter and I'm looking to buy, do I get pre-qualified or pre-approved for the house or the property that I'm looking at? And if there's a difference between the two, please let us know.
All right. So let's go to steps to getting pre-approved. So you want to get pre-approved first. Once you have your budget, your finances, and you know everything, and you're comfortable, you have your real estate agent, you have all these people picked out that's going to be in your team, then you want to go to your lender and then get yourself pre-approved, right? Now, here's the thing that you guys need to know. There's three types of quote unquote pre-approvals out there, right? You have a pre-qualification letter, you have a pre-approval, and you have a fully underwritten pre-approval, right? A pre-qualification is garbage. It's not worth the paper it's printed on. 9 times out of 10, they're not running your credit. They're not looking at your financials. You're telling the lender exactly what your numbers are. Hey, I looked at Credit Karma. It says I have a 750 credit score. I make $300,000 a year, and my budget is this, right? And they'll give you a pre-qualification number based on that. Throw that shit in the garbage, please. It's not worth the paper it's printed on. A pre-approval is when you give your documents, right? The documents that you need, if you are W-2, you need your last 2 years W-2s, last 2 months of bank statements, 30 days of pay stubs. And if you're getting a gift, you need to get a gift letter, et cetera, but you need to submit that information into your lender. They're going to review your credit and do a hard pull on your credit. And then from there, they're going to run your loan application through desktop underwriting, right? And then that desktop underwriting system is going to come back with approved eligible, and then that means you are pre-approved. You get your letter, you go out shopping. Now, if you're working with a great loan officer, they're going to pre-underwrite your documentation, so that pre-approval letter could be solid and get you to the closing table. But the one that I love the most, y'all, is that fully underwritten pre-approval. That's when the loan officer is taking it one step further, and they're taking all that documentation and they're submitting it to underwriting before you even get into contract. Now, when they submit that into underwriting, the underwriter now is going to review your file, review your loan, and they're going to either make an approval or a decline, right? And if they approve, then you are what's called conditionally approved. So you'll get a commitment letter and they'll tell you exactly what you need to close, right? So if the underwriter doesn't like that you got these large deposits, you'll know that ahead of time. If they don't like your pay stubs, you'll know that on time. But one of the three main things on that commitment letter will be they need a title report, an appraisal, and most importantly, a contract to sell. So you as the buyer now have a commitment from the bank. Now, I need everybody to understand how powerful this is. Remember, a loan officer does not make an approval decision on behalf of a bank. I'm going to repeat that. A loan officer does not make an approval decision on behalf of a bank, only the underwriter. So when you have this conditionally approved, underwritten pre-approval letter, that's pretty much gold. That's pretty much cash. The bank is going to lend you the money if you can meet the conditions that they have on that letter. So now when you're going out there shopping for a home, it's going to make it more competitive for you when you're putting in your offers. So even if you have like an FHA or conventional loan or VA loan, if you're putting down minimum down payments, you can still now compete with the buyer who might be putting down 10%, because maybe they only have a pre-qual or pre-approval letter. But if you can show the listing agent and the seller that you've been through underwriting and you can close pretty quickly because all your documents have been vetted and the only thing you really need is the appraisal, contract, and title, that might win you an offer. So, ladies and gentlemen, I'm here to tell you, if you can work with a lender that offers their services, take full advantage, especially in this upcoming season that we're about to enter with interest rates about to drop again. Make sense, y'all?
I got you.
Facts. Somebody had asked about the NACA program. We have a video on our YouTube channel about NACA in detail. So if you're interested in that, just type in NACA. Shout out to Dre. We did a whole episode about NACA. But
shout out to Dre.
Yeah, shout out to Fatima in the chat. She said this program is happening just in time for me. She's about to get some real estate property. But Charlie said, when does the title insurance come into play during this process?
So good question, Charlie. So you get so once you go through, and we kind of skipping ahead through the process, right? So you don't order your title report until you got a contract, right? Once you get that contract and you get that title, then you get that title insurance. The title company will provide that once they send over the actual title report to the bank attorney, the closing attorney, and to the lender, right? So that's when the title insurance will come in play. Now, the title insurance, for those of you who don't know, title insurance protects you and the lender from previous owners, let's just call it their foolishness, right? So if they got bad debts, lawsuits, any of the above, right? That doesn't transfer over to you. So anything that happened prior to the bank investing their money and giving it to you so you can buy this house, the title insurance will kick in and protect you and the lender. So title insurance is extremely important.
Yeah.
Good question.
I'm glad that it's a great question. I'm glad that you said that. We went a little bit out of order because yes, once we get pre-qualified, pre-approved, now we need to figure out what type of loans we should be looking for, right? So let's get into that, because there's different programs for different people who need different types of assistance. But let's get into that a little bit.
Yeah, man. So there's tons of loans out there, right? So you have the traditional loans, FHA, conventional, VA loans, you have NACA. I know someone mentioned out there, but let's do a brief overview, right? FHA, minimum 580 credit score. You can buy 1 to 4 family properties. All properties must be owner occupied for at least 1 year, okay? Again, 1 to 4 family owner occupied properties. You can even buy with an FHA a mixed use property, right? So now a mixed use property is basically a commercial building. Now we have a lot of these mixed use properties here in New York where you might have a bodega on the bottom and 3 apartments on the top, right? That's a mixed use property. So FHA will allow a home buyer to buy this mixed use property as long as the residential square footage is at least 51% and the likeness of the building is more residential in stature. FHA will allow you to buy a commercial property. So that's perfect. Let's just say we have any business owners here in the chat right now watching this live or going to watch this on a replay. If you have a business that needs a brick and mortar, right, you can go with FHA loan, buy this mixed use, live upstairs, have your business downstairs, and put as little as 3.5% down for a mixed use property. That is a home run. FHA also allows you to get rehab money with the 203K program, where you can get 100% of your rehab costs as well, right? So FHA is a terrific program. You can go up to, like I said, 4 families. We're putting down 3.5%. Now, some of the cons about FHA is obviously the PMI, right? The PMI is if you put down less than 10%, it's for the life of the loan. And if you put down 10% or more, the PMI automatically goes away year 11. Right. So that I would say that would probably be one of the biggest cons with FHA. But despite what everybody would believe, FHA loans do close really quickly. Right. A lot of people out there think, oh, if you get an FHA loan, it's going to take forever and you got bad credit, you don't really qualify. No, that's not the case. FHA is a great program. It gives you a higher approval amount sometimes than conventional mortgages because the debt to income ratio requirement is higher than conventional. Now, with conventional,
let's do this though. Let's before you go on, let's really take our time. Let's take our time because I want to make sure everybody understands. So, even terms like PMI, somebody might not understand what that is, right? Primary mortgage insurance, and even like the FHA loan. Somebody asks like, is this first time home buyers? Like you can use that for your first time home, right? And it allows you to put 3.5% down, as opposed to a traditional 20% down. But you have to pay the PMI until you reach 20%, right?
No. So to answer the question about the first time home buyer, FHA is not just for first time home buyers, right?
No, I know it's not just for first time home buyers, but you can use it if you're buying your first time home, right?
Correct. You can use it if you buy your first home, but most people think if I own a home, I can't do FHA, which is not the case. You can do FHA as long as it's going to be your primary residence. Now, the PMI, the private mortgage insurance, or an FHA is called mortgage insurance premium. That only goes away if you put down 10% or more. And it goes away year 11. With a conventional mortgage, if you obviously put down 20% up front, then you have no PMI. But if you put down less than 20% on a conventional mortgage, then that PMI will go away once you can request for it to go away once you get about 20% equity in the home, right? So it's a little bit different than FHA. You don't have to wait that long of a time frame to get the PMI removed. The conventional loan, you can get that PMI removed much faster. And there was something else you said in there, Rashad. What else did you say? I just had a brain freeze.
No, I think that was it. Just wanted to just make sure that they was just understanding and everything. But yeah, I think that was it. But somebody asked the question too, though, from the chat. Somebody in the chat, Trenton Stewart. He said, "What if he's 1099 and not W-2?"
Good question. Great question. So if you are 1099, you are considered self-employed, Trent. So it's very important. Remember, 2-year work history with all of these traditional loans, right? So if you are 1099, you need to be 1099 for 2 years. But the most important thing, Trent, and anyone else who is self-employed or 1099, your tax returns need to line up appropriately. So let's just say you get $100,000 on your 1099. If you write off $90,000 and tell Uncle Sam that I only made $10,000, you paying income taxes on $10,000, that $10,000 is the money that we're going to use to qualify you. And let's just be real, $10,000 ain't enough to buy no home, right? So if you know you are self-employed and you write off a lot, this is why it's extremely important in the beginning to have a great lender and start mortgage planning, right? Everybody type in chat mortgage planning, especially my self-employed people. You have to plan for your mortgage. You just can't walk out and say, hey, I'm going to buy a house today, and you don't know what your finances is looking like. So having a great lender and also having a great accountant or CPA who understands real estate to guide you, to let you know, okay, if you pay less taxes this year, if you write off less, you're going to pay X, Y, and Z amount of income taxes. Is it worth it for you to buy a house and use this income? Or is it better for you just to put 20% down and go with a non-traditional loan where we don't need tax returns, right? So you have to look at both sides of the fence to see what's most beneficial to you as that entrepreneur and trying to get into real estate.
Somebody else asked, can you have more than one FHA at a time?
If you meet the 100-mile rule, right? So if you buy a FHA, just say a duplex in Brooklyn, right? And then you're moving to Atlanta and you want to use FHA again to buy another duplex in Atlanta, and you can prove that you are moving down there as work related, then yes, because it's old Brooklyn and Atlanta is well over 100 miles away. So that is really one of the only circumstances that I've seen get approved when you are looking to have multiple FHA loans. But if you're looking to house hack, right, prior to conventional loans changing the guidelines about a year ago, the strategy was buy the 4-family, use FHA, refinance into a conventional, then go into a 3-family, and then use FHA again. But now that conventional allows 5% down payment on multifamilies for your primary residence, now you don't really need to use FHA more than one time. You can now go the first property, FHA, then the second property, which could be the 3-unit, now you can use conventional and put 5% down because it's now your primary residence, right? So the strategy for the 4-3-2-1 changed a little bit with that guideline, which is a home run for everybody looking to house hack. But no, you don't need to have 2 FHA loans at the same time to continue to grow your real estate portfolio using the house hacking strategy.
MG, you brought up the FHA loan. We talked about conventional, but when we were at InvestFest, one of the biggest seminars that people were lined up for was the VA loans. So can you touch on that and tell people about the benefits of that, and salute to everybody that's a veteran?
Yes, shout out to everybody who's a veteran. I got my Pops flag right here, so I want to show this, man. Rest in peace, Pops, man. So shout out to all the veterans. Yeah, Mike, I appreciate that. Shout out to Pops right there. So all the vets, all my military folks, you got a special place in my heart, for sure. So salute to all of y'all. But yeah, with the VA loan, you could do 100% financing on your primary residence. Some lenders will go down as low as 580 credit scores as well, but typically, usually 600 to 620 is ideal. And you can buy 1 to 4 family owner-occupied properties. One of the great things about VA loans, you're going to have great interest rates. Even in today's market, they're a little bit lower than FHA, and it has no PMI on the loan, which is a home run, right? And you can use a VA loan twice, as long as you have enough eligibility, right, to do so. So VA is a terrific program. I encourage all my military folks out there who's watching this live to please use that VA loan. Use it to the highest and best use. If you can get a multifamily with it with your first one, go ahead, get that multifamily first. And then you can go ahead and probably get a single family with it later on down the road. So VA is an amazing product, and I hope more people use it.
So, okay. So let's get back to the steps. But before we get back to the steps, the last detour, you talked about the 4-3-2-1. Can you just explain that for people that don't know what that is?
Okay, so the 4-3-2-1 strategy is only for the folks out there who want to be a landlord. If you want to be a landlord, type landlord in chat, please. I want to see.
This is for the real estate investors.
This is for the real estate investors, but you're using low down payment loans and you're house hacking, meaning you are going to live in this property for the requirements that the guidelines are saying. You're not saying that, hey, I'm going to live here and I don't live there, right? Here at Earn Your Leisure and MG the Mortgage Guy, we do not participate in mortgage fraud. Let me be very clear, okay? We do not participate in that. Okay, this is the disclaimer here, okay? You must live in a property for at least 12 months. That's what the guidelines state. And the guidelines are in your favor to house hack. So do it the right way, so that way you don't have the compliance police knocking on your door. Now, the goal of this is to build your real estate portfolio. 4-unit first, if you live in an area that has 4 units. Live in it for a year, maybe 2 years. Now you don't have to refinance out of that FHA loan. So let's people, since we started off, we just left VA loans. Think about this. You're a veteran. You start off with your VA loan first, 100% financing, 4-family. Then you go FHA for the next one, the 3-family, 3.5% down. Then the next one, you can go conventional with a duplex, 5% down. And then that last property, single family, you can go back to VA if you have enough eligibility and get 100% financing on that one with no PMI as well. So now the cash flow that's coming from all of these units, that 4, that 3, and that 2, which what's that, 7, 9 units right there, can now pay for your dream home. So the purpose of the strategy is most people, when they buy their first home, they're overextending themselves. Everybody trying to keep up with the Joneses. Everybody, I don't know what the hell is going on these days. Nobody believes in starter homes. Everybody wants the McMansion right now. I just don't understand it. So instead of you people who don't want the starter home, getting a nice little townhouse or something like that, start off with the multifamily. Build that portfolio. So that way, by the time you get to that one family in 4 years, 5 years, now you got cash flow coming in and you can potentially live for free. So that's the basis of the 4-3-2-1 strategy.
So for the people that need a little bit more further explanation on this, right? Most of the time, the American dream is to buy a home, a single family home, right? White picket fence, the whole nine. And people think like that's your dream home. They want to buy their dream home. And there's some debate on this, but a home is not technically an asset if it's not producing cash flow. It can actually be a liability. It can. So the idea is to say, okay, instead of trying to buy a one family dream home right away, buy a 4-family home in a not great neighborhood, but an upper coming neighborhood, because the 4-family home is going to be expensive, but usually they don't even have 4-family homes in great neighborhoods anyway. So you buy a 4-family home in a relatively slightly dangerous neighborhood and you live there and you're a landlord and you rent those other 3 units out, right? Now you establish yourself as a landlord and you're getting rental income from 3 tenants. After you live there for a year or 2 years, right? Then you can leave, rent the other one out. Now you have 4 units that you're actually getting rental income from. Now you can move to a slightly better neighborhood. The houses will probably cost a little bit more, but you'll have an asset that's actually producing income that you can add to your W-2 or 1099 income also. And you repeat the process, and now you have 2 other incomes coming, and then you're living there. Then when you move out after a year or 2 years, now you have 7 units from 4-family building, a 3-family building. You do the same in a good neighborhood in a 2-family home, right? And so by the time you've done this, it might take 8 years, but by the time you've done this process, you have nine units that's producing income. And now you're able to actually have enough income that's coming in that you probably don't even have to work a real job anymore because you have 9 units that's producing income. And now you're able to move into the dream house and you have the income from the units that's paying for the house, as opposed to what most people do. They move into their dream house. They don't really have enough money to pay for it. Then they're just working every single month to just maintain the mortgage, and they don't have enough money to invest. They don't have enough money to buy any additional real estate. They get stuck in a 30-year mortgage. That's not a recipe for building wealth. That's a recipe for being in debt until you're 70 years old. So yeah, that's kind of the ABC version of it. But I think that that's kind of important to like fully lay out, because everybody might not get it at first, like which, you've been doing this for 20 years. So some people are just getting into real estate today, right? So they got to kind of be even how you think about buying a home kind of has to be rewired in your brain so you can just kind of have a different perspective.
It definitely will change your perspective on how you look at it. And I remember 5 years ago hearing you say it, and obviously we tweaked it a little bit, but it was mind blowing as I was sitting in my home doing that interview. But Matt, there's another great question. And I know the 4-3-2-1 was a great strategy, but there's another strategy that I know you like talking about. And Terry M asked the question. They said, I'm about to get married. I own a townhouse. Can we still use my fiance's FHA loan before we get married? And so we're talking about 2 single people, 2 different loans before they get married. I know this is one of those topics you love talking about. Yeah, go for it, man.
Yeah, I mean, divide and conquer, right? I definitely love that strategy, and congratulations to you guys. But I would say before you tie the knot, if you each can qualify for your own property and it be your own occupied, you live in one, he lives in one until you get married, then I think it's a great way to start your life together, right? Now you buy a multifamily, he buys a multifamily, you each use FHA if you both can qualify independently of each other, and build your portfolio that way. So now if you can start with a 3 or 4, or even a duplex, right? Say you live in an area that doesn't have 3 or 4s, you start with a duplex, you get a duplex, he gets a duplex. Now you have 4 units. Now you have cash flow coming in that could potentially pay for now your dream home as well. Now, one of the great things about buying a multifamily, especially with FHA loans, guys, the rental income, the market rental income can be used to help you qualify. Lenders will use 75% of that rental income. So for example, if the gross rental income is $1,000, a lender will use $750 as income to help you qualify for it. Now, I saw in the comments a little while ago, someone was asking about Airbnb income and does lenders like Airbnb income with these multifamilies? The question is no. The lending landscape has not caught up to the times that we are in now to allow Airbnb. Is very unstable. So what lenders are always going to use right now, guys, is market rent, right? Not rent that you're going to get from Airbnb, or if you got to making your house a content space or anything like that. The guidelines have not caught up to that. But divide and conquer is a great strategy for all you couples out here who want to be landlords and grow your real estate portfolio.
Now, last thing before we go back to the presentation, if they do this, are they putting that in their personal names, or are they creating LLCs to put these properties in?
Good question, Troy. I'm glad you brought this up, right? No, this is going to in your personal name. This is not going in your LLCs. Guys, when we talk LLCs, we're talking real estate investing, right? We're not talking house hacking, owner-occupied properties. The lender will not finance your LLC. We're looking at you, your personal credit, income, your debt to income ratio to get qualified for these properties. So your LLC is not involved at all. And also, I want you guys to stop when you own these homes and they're your primary residence, especially when you're using programs like FHA. Stop doing quick claim deeds and putting the homes into your LLCs after the fact. What you guys can do is trigger what's called a due on sales clause. Type in chat, due on sales clause. This basically means if you change ownership of the property without the lender's written permission, they can call your loan due and make it a balloon payment. And if you don't pay that within set amount of time, typically within 30 to 60 days, they can foreclose on you because you changed the ownership of the property. So do not, I repeat, do not do a quick claim deed and put your home into an LLC if you have an FHA conventional VA loan without the bank's permission. And 9 times out of 10, if it's FHA or VA, they're going to tell you no. So don't do it. And I know a lot of people like to talk about doing stuff like that here on this internet, but don't always listen to the internet, guys. It's not your friend. I'm here to tell you. Please don't do it. I see a lot of that going around. Please don't do it.
Right. So that's why it's good to have professionals here, and conversations like this. This is actually the most important conversation. That it's a lot of talk right now. A lot of people are getting indicted. A lot of people have different YouTube lives like on that leaked on their IG live thing, and it's a lot of entertainment. But in the grand scheme of life, none of that is important. These conversations are the most important conversations, and the reality is that this is the only thing that could really save you in this new wave of artificial intelligence and this new wave of mass layoffs, right? Like, if you don't know how to invest, if you don't own anything, how can you really expect to survive? So I say that to say the price of this admission is free, but we do need support. So we have 2,400 people. That's encouraging. Should be 24,000 people, to be honest with you. So hit the like button. 600 people liked it. It doesn't cost anything to like the video. Hit the like button, share, because ultimately, this actually is life-changing information. If you could buy a home, right, and you've only known renting your whole entire life, your whole entire family's life, you know, what does that do to the trajectory of your family? So, you know, I just think that we talk about the problems a lot, but bigger than talking about problems, you have to champion the solution. And if you don't champion the solution, then you're actually part of the problem. So Matt, we are going to continue with the program because I know, like I said, we kind of got a little derailed, but I think it was a lot of good questions that people had in the chat, and just wanted to kind of make sure everybody understood. But we still want to walk them through the actual process of buying a home. I don't think we're fully there yet.
Yeah, nah, I don't think we're fully there. I think we covered a lot of ground for sure. We definitely covered a lot of ground. We spoke about getting pre-approved, the right type of pre-approvals that's out there. Let's talk about, since we're talking about loans, right? Let's talk about down payment assistance. I want everybody, as I'm saying this, type this in chat, right? I'm gonna give y'all 7 down payment assistant loans right now that you guys can go on Google, research, and see if it can help you obtain some money, right? Everybody wants some free money?
Write this down. Write this down. Write this down, please.
That was your moment to go get your writing device.
Please.
Or your notes.
Let's get your notes. All right, so I'm gonna give y'all 7. All right. So you got the National Home Buyers Fund, NHF. You got the Chenoa Fund, CHENOA Fund. You got First Home down payment assistant loan. You got the Good Neighbor Next Door. That's a HUD program. Bank of America has a community home ownership program. All right, so I want to make sure you're following. All right, you got for my New Yorkers, you got the Sony May program. All right, so y'all write that down. Y'all take those and y'all run with it. Okay, so you got the National Home Buyers Fund. You got the Chenoa Fund. You got the Good Neighbor Next Door. You got the Bank of America Community Home Ownership Program. And for my New Yorkers, you got the Sony May Mortgage. Google your life away, ladies and gentlemen. Google your life away.
Google your life away. And these are programs that help people with down payments for their home.
Yes. Down payments, closing cost assistance, et cetera, et cetera. So Google your life away. And then obviously there's tons of things out there. Again, we spoke about VA loans. We talked about NACA, VA 100% financing, NACA 100% financing. You have low down payment programs like Fannie Mae Home Ready. You can do 3% down. And a lot of these programs, you can stack grants on top of it as well. But all you guys got to do, in all honesty, to find grant money is you can just go online and just Google your county that you live in, right? So, you know, if you're in Westchester County, so type in Westchester County home buying grants, closing cost assistance grants, right? And a list of things will come up there. So no matter if you're in Atlanta, Georgia, right? Every city, state has this information. I just gave you a couple just so you can have a good starting place. But since we were talking about loans and programs and things like that, and I know, look, we're in times where not everybody's going to have money for down payment and closing costs. That's why the barrier to entry for real estate is much harder. And this is why people gravitate more towards stocks and investing, which is a great thing, right? But let's not forget, real estate is a brick and mortar, is never going to go nowhere, right? This is also an asset class that our people need to own. So there are so many programs out there that are being underutilized just because people just don't know the information. So I just wanted to give y'all that gift right there, and hopefully it will help somebody get some money so they can achieve their goals of home ownership.
That's good stuff. Let's talk about, how can first-time home buyers boost their credit score to manage debt-to-income ratios for better mortgage approval? And talk about debt-to-income ratio, because people hear about that, but what does the bank look at? What does that really mean? How can they avoid having bad debt-to-income ratio?
So DTI is extremely important when we're talking conventional FHA, VA loans, right? And this is why I kept on saying, if you qualify, right? So how do you manage your debt to income ratio is keep your utilization low on your credit cards, right? And that will also keep your credit scores high. So if you keep your balances below 10%, that will have, and I know the rule of thumb is typically 30, but you want to be 10% or lower. That will increase your credit scores to extremely high levels and also have those minimum payments low. If you start paying your credit card payments on the statement close date versus the due date, that also will increase your credit scores. Because remember, when your statement closes, that's what the creditor is reporting to the credit bureaus when it closes, right? So if you have a balance, let's just say your credit card limit is 25,000, let's just say 10,000 for easy numbers, right? But you closing at, your availability is 3,000, right? Your balance is 3,000. So when it closes, they're going to report to the credit report $3,000. So that's a 30%, mark that your utilization is 30%. But if you pay down to 1,000 on that close date, it's going to look better for you. So now they're going to report that $1,000 as your balance, and now you're 10% or less, and that's going to boost your credit score. So that's an easy tip for everybody out there who might have credit card debt to keep your utilization low. It'll keep your credit score high and also keep your minimum payment low. Now, also another tip I want to give you guys is if you have car loans in your personal name, this is extremely important. If you have an LLC or you have a business, see if you can go to the bank and refinance that car out of your personal name into your business name. If you can refinance that car into your business name, that will also decrease your debt to income ratio as well. That will keep your DTI low, because now that payment is not on you. It's on the business. So now you have to make sure that the LLC is making a payment from that LLC's bank account for at least 12 months. And then you also want to make sure when you file your taxes, you're filing your taxes with that car being shown as an expense to the business. So that way, underwriter will go ahead and omit that from your liabilities. Now, we all know cars are extremely high right now. A Honda Accord might cost you $800 a month these days. You know what I'm saying? Sure. So if you can do it strategically, y'all, and have your business now, because everybody in here probably got an LLC who's watching this right now. So, and most of you are not doing nothing with these LLCs. This is one thing you can do with your LLCs, right? Create that business for the LLC. Hell, put your car on Turo when you know you're going on vacation, something like that. So now it's a business. Be smart about that. So that's just two little quick hacks that I would give you, or tips, I should say, that I would give you to try to lower your debt to income ratio. But remember, if you don't, make sure the business is making money to pay for it, right? Because I know a lot of people talk about stuff like this, but if your business ain't making no money, then you shouldn't really be having a hard condo anyway. So I want to just put that disclaimer out there. Make sure you got money coming into this business as well. Figure it out. Everything is figure outable. So that's kind of the two things I would say to increase your credit scores, but also decrease your debt to income ratio so you have more buying power to buy a home.
Your credit score is vitally important. Almost equally as important is your interest rate. And that has been the talk over the past 2 months, definitely in the stock market, but obviously in the real estate world. So let's talk about navigating interest rates, the timing of it, when to lock them in, float down options, the whole world of interest rates, because we hear it a lot, right? We saw during the pandemic, we were at historic lows, right? 2%, 2.8%. We got up to 7.5%. We're coming down. Fed rate cut last week. November, there seems to be some more. Talk about the impact and how we navigate this to make sure that we lock in at a good time and a good rate.
Boys and girls, I am happier than a pig in shit. The revolution is about to begin again, and I cannot wait, right? Interest rates are getting lower, and I've been screaming at the top of my lungs for the past 2 years and telling everybody sit here and buy real estate while these rates are higher, because you can always refinance when they become lower, right? Right now, what's about to happen, ladies and gentlemen, there's about to be millions of buyers that's going to re-enter this market. As soon as these rates start hitting the fives, which we're not too far off of right now, the market closed today on a national average around 6.25% on a 30-year conventional mortgage for a primary residence. FHA loans, you can get right now in the mid fives, 5.5%, right? But when that conventional rate goes below 6%, oh man, it's going to get crazy out here. So what I would tell people, if you are in the market or in contract or putting in offers and you're being aggressive, make sure the lender that you're working with offers a float down option. Okay? Everybody type in chat, float down option, because this is extremely important and a lot of people don't even know this even exists. So a float down is basically when you lock into an interest rate with your lender and you have this float down option. If the market drops while you're in contract, and at least 2 weeks before closing, most lenders will say, maybe a week before closing, some other lenders, right? Every lender has different guidelines, but typically within a week or two before closing, if the interest rate drops for your scenario, at least 1/4 to 1/2 point. Again, every lender has different guidelines, but I'm gonna just say 1/2 point, right? If your rate goes from 6.25 today, and a week from now drops to 5.75, you can exercise that float down option and take advantage of the low rate in the market and basically renegotiate your rate. Now, this will be a cost to you up front. It could be 1/2 point, 1/2 percentage of the loan amount, which if it's a $100,000 loan, it could be $500, right? Or it could be 1 point. Right. So it just really depends on the lender and their guidelines, but it can cost you anywhere between 1/2 point to 1 point upfront as a part of your closing costs. But the float down option is a terrific option for home buyers who want to get into contract right now, but may have some reservations about locking in. I will highly recommend locking in with this option so that way if it does adjust for your benefit before closing, you can take advantage of that low rate. Because I will tell you this, when the rates do drop, they drop fast and then they go back up faster, right? So that timing, you have to be working with someone who's studying the market constantly, and that timing has to be there, right? If that timing is not there because it's here today, it can be gone tomorrow. So lock in with the float down. It's a terrific option for everybody out here who's looking to buy real estate.
So what was DSCR loan?
That's investment properties. Y'all want to go to investment properties now? Y'all want to keep it here first?
All right, let's keep it here first, and we'll go back to that later.
All right, we're gonna come back to that. I see it in the chat.
Yeah, I've seen that a couple of times. You gotta settle down.
We see you, bro. We see you. We gonna get to
it. But yeah, that's navigating interest rates in this time frame That's what you want to look at. Now, if you're someone who's not in the market right now, you got to really pay attention. Like if you're not in the market to buy, if you say you want to buy in 3 months, you want to buy in 4 months, that's when you really have to now start paying attention to the economic news, the economic indicators, and looking at, everybody's like, oh, the Fed's funds rate, right? Mm-hmm. But the Fed funds rate does not directly control if mortgage rates are going to get lowered, right? The Fed funds rate controls the overnight lending that banks do to another, and that really directly impacts short-term lending, credit cards, auto loans, home equity line of credits. Mortgage rates, when it does get lowered, sometimes go down, but even when they lowered last week, the mortgage rates ticked up by like 10, 15 basis points, slightly higher, right? And it still really hasn't recovered. Like last week, it got as low as 6.1 on a national average. Today it's around 6.25, right? So just because the Feds lowered the Fed funds rate, it doesn't necessarily translate to the mortgage market. What I pay attention to is the 10-year Treasury and the mortgage-backed securities. That's what's really going to directly impact the mortgage rates. And this is why you need to be working with an elite loan officer who really understands treasuries, MBSs, so that way they can give you expert elite advice, because not all loan officers are built alike.
MJ, are there situations where we can actually lower our rate by buying down the interest rate, or potentially opening up at a financial institution where that is an incentive? If I open my account at such, let's take JP, and that's my borrower, they might give me a quarter off my loan. Talk about that, like as another way or strategy to get that interest rate down.
Absolutely. So if you're going with big retail banks, like you said, the JP Morgans of the world and stuff like that, sometimes they offer specials if you're opening up if you're starting another relationship with them, right? If you're bringing money over from another bank, if you're opening up checking accounts, I know like banks like M&T, if you open up a checking account and you have direct deposit, they'll give you probably 1/8% off. Don't quote me on that. But these things come into the market just depending on the lender that you're dealing with, right? And that's mostly like the bigger banks would do that. If you're bringing in more relationship to that bank, because those lenders, those retail lenders, they love having multiple accounts, multiple relationships with one person, right? Whether it's business banking, checking, savings, retirement, mortgages, auto. So the more you have with them, the better the deal they'll probably give you on your mortgage rate. Now, when it comes to buying down your rate and buying down points, this is a great strategy you can use as well. Is calling like a 2-1 buy down strategy, where you're using a seller's concession to give you like a teaser rate for the first 2 years, which is much lower than market, right? So for example, if today's rate, if you're doing a 2-1 buy down and the rate is 6.25% today, right? You use the seller concession to buy down the rate. In year 1, your interest rate will be 4.25. Year 2, the rate will be 5.25, and then year 3, and for the remainder of the loan, it will be 6.25. So it gives you that option to have a lower payment over the first 2 years, but hopefully within that time frame, the mortgage rates will drop, so you'll be able to refinance that and get into a permanent lower interest rate environment. But 2-1 buy down is definitely a great option for those of you who can get a seller's concession to buy down that rate and get that teaser rate. And if you can't get a full concession, because there's a lot of math behind this that I'm not really going into, it's a lot more details than what I'm saying. We'll be here all night trying to explain that, and we don't have that type of time. But if you can't get a full concession to do that, because sometimes you can't get a 6% concession or 5% concession to do that, maybe the seller will only give you 1 or 2%. Then you can still use that 1 or 2% to just do a traditional buy down on your rate, right? So every point that you pay in discount points, a discount point, for those of you who don't know, is 1% of the loan amount. So if you're paying 1 point, let's just say, again, let's just do a $300,000 loan, each point will be the equivalent of $3,000. So if you're buying down 1 point or $3,000, then if the rate today is 6.25, the rate will go to 6%, right? So 1 point will bring your rate down 0.25%, right? So that will give you a little bit of savings, not too much. And this is why you got to really look at the numbers to see if it's even worth me or you putting that $3,000 towards buying down your rate to save $50-$60, or is it best to use that $3,000 to pay closing costs, the other fees, so that way you have more money in your pocket. So, and this is why you got to do a comparison of what makes both sense and sense.
That's a fact. SNC. So, all right. And I understand that this is a lot of information. So you're going to have to watch this video at least 3 times. But the thing is also is that it's not that you have to become an expert in every single thing. Out of this whole hour and a half that we might do this for, maybe 2 things really apply to your situation, though. That's what you use, or at the very least, you just become familiar and you can ask questions. So this is the thing about asking questions. You have to have a certain level of intelligence to even ask a question, right? So it's like most of the time, people don't ask questions because they don't have enough information to even ask a question. So you don't need to know the answer, but you just have to be able to ask a question. But you can't ask a question if you're not informed enough to ask a question. So even if you have 10% of the information, well, that's better than 0, because the 10% will actually lend you to more information down the line. So now when you talk to a mortgage broker, when you go to the bank, when you're talking to your real estate agent, you can ask them a question. Now they can inform you, and they're like, "Oh, you know about this? Oh, yeah. What am I supposed to do with this? Oh, okay, yeah." So that's the whole point of it. Like, it's not to just become a master in one day. That's not going to happen. But over the course of time, you build information, and it's like anything else. The more you do it, the more comfortable you become. And after a while, you feel very fluent in the situation. So before we go to investments, 'cause I know people want to talk about investing. Jumbo mortgages. What's that?
I love it. So jumbo mortgages, right? So typically when we're looking at jumbo mortgages, these are loan amounts above what Fannie Mae, Freddie Mac will purchase from a lender, right? So, and loan limits are about to go up anyway. There's a couple lenders that's already, increased their loan limits for 2025. So, a single family in 2025, Fannie Mae will go up to $802,000. It's not official yet, but several lenders have already put it out there because we anticipate that they will in November raise the loan limits again. So any loan amount that exceeds the threshold that Fannie Mae and Freddie Mac will buy, right? And so these loans are typically portfolio loans because the government is not backing them. So the lender is lending pretty much their own money on this one. So the requirements to get qualified for this jumbo mortgage is going to be a lot tougher, especially if you're going full documentation. Full documentation, ladies and gentlemen, is when you're providing your W-2s, pay stubs, bank statements, tax returns. That's a full documentation loan. So your debt to income ratio will have to be, 43% or below. And some jumbo lenders want to see 40% or below. And you can get loan amounts up to 3 million, 4 million, 5 million, just depending on that lender. So, this is when you're trying to buy that mega mansion, that big old dream house of yours, you're going to use a jumbo mortgage. Now, if you are self-employed and you're looking to buy your mega mansion or your dream home that maybe costs you $2 million, $2.5 million, and you don't file your taxes properly and you write off everything, no worry. There are loans out there that can help you without providing all this information, like bank statement loans, where we're using the deposits that you're receiving in your business bank statements over a 12-month period, and the lender will average that out and determine how much income that you're bringing in based off of those deposits, and we can use that to qualify you. This loan is extremely popular amongst entrepreneurs who take full advantage of the tax code. This is going to come at a much higher interest rate than what a paper full documentation jumbo loan is going to get, but it's well worth it to pay that 2% margin higher, 2.5% margin higher in rate than paying probably a couple $100,000 in taxes, right? So again, that's when you need to mortgage plan if you are self-employed and you're looking to buy this luxury home. You need to have a mortgage plan in place so you know you can weigh out all the pros and cons ahead of time. But there are definitely options out there for all buyers in this jumbo market, whether you're full documentation, whether you're going non-traditional and you want to get that luxurious dream home of yours.
So just really quick on the jumbo loan, it's usually a higher interest rate. Prime example, if the interest rates are at 7, you could typically see it at 9 to 10%.
So if you're doing a full documentation loan, and let's just say you're going to like a retail bank, like we just mentioned, honestly, the retail banks are going to give you the best deal. Like a mortgage company, a mortgage broker cannot compete with a retail bank like a JP Morgan because they know you got money. So if you go over there and you bring over $250,000, $300,000 deposit that, they're going to give you a great deal, right? So their rates right now might be in the 5s for a $2 million loan on a 30-year fix right now because they're making their own rules, so to speak, right? It's their portfolio money. Now, if you are a non-traditional buyer, then that rate today might be somewhere around 7.5 to 8% on this, type of paper. If you're doing non-traditional financing like bank statement loans, light doc loans, P&L loans, things of that nature where you're not showing traditional documentation, you're going to pay a premium for it, right? But you're going to get into the house. And that's most important for these self-employed borrowers because they can afford that payment if they're buying at that level. They're not really too concerned about that payment shock because they'd rather have a payment that's $500 or $1,000 higher so that way they don't have to pay $100,000, $200,000 in taxes. So it balances itself out. So the interest rate is important, but it's not as equally as important in looking at the full spectrum from a holistic point of view of where you stand.
Appreciate it.
So, all right. So let's get into this investing before we leave. So now let's talk about the other. What was it?
It was the DSCR loan.
Yeah. So the DSCR loan. So the DSCR loan stands for Debt Service Coverage Ratio. So commercial loans. So, all right, let me start off like this. So in residential, we have DTI. Right? Your debt to income ratio. When you're dealing with commercial lending, we have DSCR, debt service coverage ratio. That is the DTI of the property, right? Now, lenders have now started allowing over the past couple of years, investors who want to buy residential real estate use the same formula and calculation to how we underwrite investment commercial properties. We can now use it in the residential investment space as well, right? So when you're looking to do a true investment property, now this is when you use your LLC, okay? We're not looking at your W-2s, your tax returns, your pay stubs. We don't want to know where your large deposits came from. All of that stuff is irrelevant. The only thing the lender is really going to do from your personal side is run your credit to make sure your credit is above a 620 credit score, right? And as long as you're above a 620 credit score, depending on how big the deal is, in most cases, you should be okay. Now, we're looking at the property itself and we're looking at DSCRs. So the bottom line is the property cash flowing? If the property is cash flowing, then the lender will lend on this property. So when you're looking at an investment property, you need to know how to analyze that property and underwrite it, not just as an investor, but also from a funding perspective, because we need to know what your operating costs are. What are the expenses of the property, right? We already know property taxes and insurance, but what other expenses are there? Do you have to pay for, your utilities? Do you have to pay the light bill, the gas, the water, the sewage, right? What is all these expenses? And then also, we're going to look at property management, right? How much is that percentage? Then you have to save for your CapEx expenses, which is your capital expenditures if anything breaks, right? We're going to put all of this into a calculator to see exactly what those expenses come up, and then also what's the gross income. So at the bottom line is we're looking at, to make a long story short and to put this all in layman's terms, because I want to go over nobody's head, we want to make sure that the property is paying for itself and the owners of that LLC are making at least a 20% profit after all the expenses. That is a 1.2 debt DSCR ratio that the lender is looking for. And if it does meet this requirement, then the lender will lend on that property, right? So lenders, and I'm gonna be very clear right now. It is much easier to get approved and get funding for investment properties than it is for your first home. Much easier. There's not as much paperwork. There's not a lot of hassle with it. As long as you know how to present the numbers to the lender properly and not over exaggerating them to try to make the deal work, because we're going to do our own due diligence. And if that deal cash flows and a cash flows property, it is going to close. Now, typically when you're doing a DSCR loan, this is going to require at a very minimum, a minimum down payment of 20% if it meets the DSCR requirement of 1.20%. If it doesn't meet that requirement, then the lender will require you to put more money down. So this type of loan is strictly for live men, not for freshmen. If you ain't got the money, say hell no.
Because they're going to want their money, rain, sleep.
Hell, snow.
That's a fact.
No, rest in peace.
All these rules, man.
It's a biggie. Okay. Refinancing? Want to talk about that?
Yeah, I mean, we could talk about that, or we can. You want to take some questions about this? Cause I saw 1,001 questions.
Yeah. I mean, you saw some. If you want, yeah, go ahead, man.
All right.
Questions, please.
So I already answered. So somebody asked. Rashida says the minimum down payment of 20%. Yes, it's 20%, and I want to be clear again on that. Only if it meets the 1.2 DSCR requirement. So just because the minimum down payment is there, it doesn't mean that property will cash flow out of it, right? So you might have to put 25%, you might have to put 30%, whatever it takes to get that property to DSCR and the cash flow, then you have to do it. Now, another thing I want to talk about DSCR, because I saw this question come up earlier, is about the LLC. The LLC does not have to be established for 2 years. The LLC does not need business credit. The LLC could be a brand new LLC. You could open up the LLC on Monday and get into a contract on Friday with that brand new LLC, okay? Let's be very clear. It could be a brand new LLC because lenders know investors will use multiple different LLCs for each investment property they buy. So you have to understand that you do not need established business credit. It doesn't need to be something that's been in a long standing. Because I get that question all the time. So I just want to throw that out there real quick. What else? You said something about refinancing, right, Shadi? I think I saw
real quick before we go to refinance. Somebody was asking, is there a difference between this and a hard money loan? Because it sounds like the similarities. Can we draw a similar difference there? Yeah, go ahead.
It's a big difference. It's nothing. It's separate and apart from hard money, right? Hard money is one thing. DSCR is one thing, right? DSCR loans doesn't have rehab money attached to it. The DSCR loan is for stable rental properties. It's not for rehabbing. When you want to buy a rehab and you do your BRRRR strategy, right? Buy, renovate, refinance, rent, repeat, right? The DSCR loan is used to refinance out of your hard money loan. The hard money loan is, and again, that's different formulas and calculations. Some You need to be at 65, 70% max ARV. ARV is your after renovated value. But, you know, I would recommend if you can get 55, 60% ARV on your hard money deal, it's going to make it easier for you to exit out of that hard money and go into your refinance. Because when you're doing a refinance on a DSCR loan, your loan to value, your LTV drops to 70%. In some cases, maybe 75% LTV, but most of the time I tell my people, my mentees use 70% ARV because you need to be able to, 70% as your max period, because if you at 75, you only have a 5% cushion to get out of that hard money to refinance. So if you start off at 55, 60% ARV on your rehab project, now you have a 10 to 15% margin buffer that you can now refinance, maybe pull a little capital out of it too, and now go into your permanent financing with the DSCR loan. So your hard money loan is going to be used to buy the property and fix it up. But remember, hard money, the terms are going to be typically 12 months. You can get past 12 months, but then it's going to get more expensive, what you're going to have to pay to keep extending that hard money loan, right? But again, this is strictly for live men, not for freshmen. Flips flop every day, B. Every single day. So it's very important that you know your numbers. You know exactly what the hell you're doing, because these construction costs can add up quickly, fast, in a hurry. Okay?
Flips flop every day.
Yeah, you've been on
every day, B.
You said one earlier. You said like it's definitely look upable.
Everything is figure outable.
Figure outable. That's what it was.
Everything is figure outable, bro.
Okay. We're just gonna go with that.
Yeah. It's a fact.
Okay. I think okay. I don't want to give too much information because there is a thing called information overload, where your brain just kind of shuts down after a while, right?
Right.
And we've been going hard at this for about over an hour and 20 minutes. We are going to be doing, let's just have a sidebar conversation. So this is a new series that we're going to be doing for EYL, as opposed to just the regular traditional interviews. This is actually the first. And we're going to every week for about maybe 10 weeks. We'll see how it goes. But we're going to be doing different topics, like how we're doing this right now. We're going to be doing different topics, getting real-time feedback. So you guys in the chat, what would you like to see? Like, what other topics would you like to see in the vein of this, where it's just straight information? It's not necessarily an interview. It's more so just straight teaching for over an hour. So what other topics, it could be anything, would you be interested in learning about? And I think it's going to be this time, Thursday, 9:00. We're taking over a new time, new day. So yeah, this was the first one.
Yeah.
So let's see what else. Somebody said book selling, options trading, tax liens, credit.
Yeah.
Stocks, anything real estate.
It's crazy. I, as you were talking, man, I'm like, there's so much more we can do. And even the three of us, like even the stuff that we're learning now, I saw somebody put property management. Well, we've all kind of been property managing over the past year and a half. They talked about 203K loans, right? We could talk about construction loans. These things, we're actually going through these processes and learning them as well. So I can't wait to share some of the information that I'm learning right now, right? Because people just think, yes, investment stocks, like, yeah, but like we live like lives too, and like a lot of things happen in our lives. So there's so much more we can share. I'm happy that everybody here enjoyed it.
All right. Well, before we leave, Matt. So okay, you actually, you get people mortgages and things of that nature, right? So you still work with clients?
Absolutely.
So what is that? How's that work?
So we still work with clients. We are as Kiana would say, we are accepting clients every day.
Yeah, don't say.
Shout out to Kiana. We are accepting clients. Yeah, so if anybody wants to work with me and my team, I'm gonna put in the chat the email. Just email us, garlandgroup@unmb.com, garlandgroup@unmb.com. We would love to help you. Or you can go to my Instagram page, and you can click the link in my bio. You have all the resources there, but I just put it in the chat as well. Email us and just put in the subject that you saw me on EYL live Thursday night. You know what I'm saying? And me and my team could definitely service you. But I want to speak to something, and I'm glad that you guys asked me that question. So I definitely appreciate that, right? I know we're talking about home buying and we're talking about real estate investing, but I want to talk about something that I never really spoke about, and people in this industry really don't speak about, is representation, right? We don't have enough Black and brown loan officers in America that are helping people that look like us, that walk like us, that talk like us. And it's mind-blowing to me that this is one of the most overlooked industries in real estate that people don't think about getting into, right? So when most people think about getting into real estate, they want to be an investor, or they say, you know what, I want to wholesale, or I want to be a real estate agent. But I'm going to tell you all, do not discount being a loan officer. This is one of the most, this career has changed my life. Right, I'm a college dropout. I have Queens, New York, Andrew Jackson High School education, barely, and I've been able to provide a lifestyle for my family and live a life, all because of being in the mortgage industry. So you got to really look at, right, Black home ownership and the mortgage industry, the discrimination laws. Like Black people 60, 70, 80 years ago, we couldn't even get loans. Right? We talk about FHA tonight. Decades ago, we couldn't even get FHA mortgages. They were not, it was law. We could not get FHA loans, right? We need more representation of people on this side of the fence, right? Statistically, there's probably a little bit over 300,000 loan officers, licensed loan officers in America right now, right? The crazy stat is 70 to 75% of that is white. 7 to 8% of that is African American, with another 12 to 13% Hispanic. So that means there's a huge opportunity. When I say huge, there's a huge opportunity for everyone who is watching this right now to get into this business and have a great career. It does not cost you a lot of money to get your license. Couple $100, 25 hours course. You pass the state exam, you get your background check, you get sponsored by a lender, and you can get into this business. Now, is it easy? No. Is it going to be tough? Yes. But if you are a hustler, if you are someone who's looking to grind and get into real estate, you can come into this business and get licensed in multiple states and do business from your laptop and get that Wi-Fi money, right? So one of the things that I'm passionate about right now is not just for myself, but I feel like, and you asked me something earlier about in the past 5 years, how things have changed. What you guys, what Earn Your Leisure has helped me really figure out is that, I'm needed, I'm necessary. The information that I have, I didn't know that I was needed. And it's only because I've been in this business so long, it just became second nature. So what I want to do is now usher in the new blood that's coming in. I want to grow my mortgage team to unprecedented levels, so that way we can close that wealth gap in real estate and help people that look like us. So if you're a loan officer right now watching this, not only if you want to do loans with me, that's fine, but if you're a loan officer watching this and you want to come work with me and my team, shoot me a DM. Tell me where your license at, and let's set up a call and let's work together. And if you're somebody who's thinking about getting into this business and wants to learn more about it, Monday I'm going to hold a webinar, free webinar. Everybody come. Learn about the loan officer business. Learn what it takes to really be a loan officer, what you need to do. I'm going to give you the schools that I recommend. and I'll answer all your questions on this webinar because I want to make sure that we have representation. You know what I'm saying? We need representation. We need more Black appraisers. We need more Black inspectors. We need more Black financial advisors. We need more Black everything, right? And we definitely need more Black. 7 to 8% is only Black. That's crazy. So we need more of us, man. And I'm thankful that you guys gave me the floor right now to just even say that, because it's something that I don't speak about. And I know I speak about home buying and hacks and all this other good stuff to buy property and run it up. But now I want to start speaking to how can you turn yourself and get yourself a career that you can make 6-7 figures in. Yes, you can make 7 figures doing this, and you can do it from behind your computer with Wi-Fi on the phone, right? And with hustle and ambition and good leadership. So come join me and come to the dark side, baby.
There you have it.
MG.
Come to the dark side.
Outstanding.
For sure. And it's,
come to the dark side, baby. Welcome to my world.
MG the Mortgage Guy on Instagram. I see people ask what's his Instagram. MG the Mortgage Guy. And like I said, man, this was dope. Maybe we can do a part 2 if you guys are interested, because a lot of stuff that we didn't even really get a chance to talk about. So maybe we can have a part 2 sometime down the line. But like I said, this is going to be a new series that we're going to be doing as far as the webinar series on YouTube on Thursday nights. And it's going to be just straight information on a variety of different topics. So
which is dope.
Yeah, if you enjoyed this, put some fire in chat.
Yeah.
Make sure you send this out too, man. This is somebody's Christmas gift, man. Not only should you watch it for yourself, but send it out to your coworker, send it to your cousin, send it to, whoever you have love for, and encourage them to watch it as well, because like I said, it's just information. So at the very least, I think even if they're not in a position to buy a home right now, having the information will better equip them when they are in that situation down the line, as opposed to just going in blind and making a lot of mistakes, for sure.
Yeah, I think what makes it super dope is that for nearly 6 years, people have watched us ask questions and said, oh, I was going to ask that question. But now they get to watch us ask questions, and we get to see the questions that they want to hear, and we can incorporate both, which just is the evolution, man. So I think it's incredible. MG, we appreciate you, my brother. As always, super knowledgeable, man. I'm sure plenty of people's lives were blessed with the information, and people are going to execute on it, man, which is the most important part. Seeing people execute on the information is the full-fledged moment of like fulfillment, right? Like we can give it, but if nobody's using it, what's the point? So shout out to everybody that's executing.
And this will be saved. This will be saved on YouTube. It's under the live section. It will also be on all the audio podcast outlets. So it'll be on Apple. It'll be on Spotify, just like a regular episode would be. So make sure that, if you want to listen to it on the audio side, you can listen to it then. And man, so much great information. As I said, we'll be back Sunday with Mike Vick.
Yes.
EYL University, make sure you subscribe. That's a platform that we have that provides so much great information when it comes to credit, real estate, stocks, choice stock, option, class. Want to talk about your options thing that you did with MU?
Yeah, man. Shout out to everybody that was in the chat. I see some FG. You got that Micron call, man. We've been talking about it for the past 2 months. Actually, our last class, we talked about data centers specifically and some of the things that are going to be needed to make sure those things run efficiently. One of them being security, one of them being storage. And as we saw yesterday, and Micron reported and blew the quarter away, we were up 18%. And so plenty of people made 97% on their money. Think about that. You made 97% on your money within 24 hours, which is incredible. But it talks again to execution. Yes, I can provide the information, show you how to do the research, but until you execute, it doesn't feel real. And a lot of people did. So shout out to everybody that did.
All right.
Yeah, and if you join EYL University, you got the Home Buyers Blueprint in there too, man. So take advantage of the Home Buyers Blueprint Volume 1 and Volume 2. Shout out to all the earners. So when you join EYL University, there's a lot of real estate content in there, plus real estate courses. So you can't go wrong by being a part of EYL University, man. Join today.
I appreciate that. So, all right, man, any last words before we leave?
Thank you. This was dope. I love this new platform. I definitely think you guys should continue to expand on this. And I'm forever grateful for always the opportunities that you guys, give me to come on the platform. I don't take it lightly. So thank you all of you guys. I appreciate the love, but and again, thank you to the people, man. We got 2,400 people. This was basically a super large seminar. You know what I'm saying? Like, when you really think about 2,400 people, that's not no small crowd. That's a big crowd. So we can't take that lightly. So shout out to all the 2,400 people that came here on a Thursday night, 9 p.m. to get this education, to tap in with me, to tap in with my bros. And, hopefully you guys got value from it. If you did, drop some gems and some fires in the chat. And thank you guys for always supporting me. And I love y'all. And I just want to see everybody grow. And, we all deserve to be rich, Pre-order today.
You deserve to be rich. That's a fact.
Pre-order today. You
deserve it.
You deserve to be rich, man. So you're going to get rich tapping into this channel, man. By hook or by crook, man. You're going to get it. So make sure you're tapping into all the resources. And make sure you guys follow me at MG the Mortgage Guy on Instagram and YouTube. And, for those of you who want to attend the webinar to learn about Loan Officer, again, it's a free webinar, 7 p.m. It's going to go for an hour because we got Market Mondays, 8 p.m. So it's going to be 1 hour, and I'm going to answer your questions, and I'm going to show you where to go to get licensed, and, answer as many questions as I can in the hour. And hopefully I see you guys on the dark side, baby. Let's go.
All right, guys.
Love, y'all.
Take care. Spread the word. Thank you.
Peace.
Yes, sir.
Yeah.
Back at it.
We back. That's a fact.
Special Halloween edition.
Yeah, we are here. Shout out to everybody that is here with us. That is love.
For sure. So this is something that is a big topic. When you're talking about, said today we posted that there's actually going to be more people, over 50% of the people that work 9-to-5 jobs are considering quitting their jobs and becoming entrepreneurs, even more than the great resignation. I think that's what they called it a few years ago. Mm-hmm. A lot of people resigned from their jobs.
Exodus of the jobs.
This is one of the ones, man. And as far as these holidays, they're designed to actually get you to spend money. So if you want to partake in that, that's fine. But the work never stops. So, this is more important than dressing up as your favorite celebrity and going to a Halloween party, I think.
There's been some creative costumes, but yeah, we grew up in an environment where there was that number that we all wanted to get to. And it was like, all right, if we can make 6 figures, we can make 6 figures. And then it was like, yeah, we can make it, but finding a career that would actually pay you, nobody tells you that. And so most people, even now, I watch some of the young people that we educated graduate and are trying to figure out how do they get to the 100,000 mark. They're taking jobs that don't really equate to it. It's an interesting time that we're in, but we got an interesting night ahead of us.
Well, just be clear. So the title of this is how to go from a 9-to-5 employee to a 6-figure entrepreneur. Mm-hmm. Now, before we bring our guest on, just to fully explain that, you have to earn 6 figures before you are a millionaire. But there's a wide range from 6 figures.
That's true.
100,000 is the minimum level. 6 figures goes up to 999,000. So just the term 6 figures is not enough. But we do want to paint realistic expectations on stepping stones. So keep that in mind. It's not just to say, okay, how do you just make $100,000 and that's it?
Yeah.
It's how do you actually become a successful entrepreneur where you actually can provide for yourself, right? That's at the 6-figure level. How do you scale that to high 6-figure level, right? And then from there, you just keep going. But that's the hardest part because the average entrepreneur makes less than $50,000 a year. So when you look at that standpoint, most entrepreneurs are actually making less than 9-to-5 workers.
That's the story that they don't tell.
Yeah,
that's the story that it doesn't. And like I said, it's an interesting time because number one, our guest tonight has done it, and I'm sitting in the seat where yes, I was a 9-to-5 employee, became a full-time entrepreneur, and has done it as well. So there's great insight from two ends of the spectrum here.
Yeah, for sure. So, we're going to bring our guest up, but before we do that, do remember, this is last opportunity for EYL University. Troy's options class. We actually have an event in Houston. So Houston, Texas, we will be in your area Saturday.
Yes.
Saturday, we will be in Houston, Texas. Can't wait to, tap in with all the earners. Shout out to everybody in the greater Houston area. But just wanted to remind you guys, if you're in Houston on Saturday, myself, Troy, Ian's going to pop out. Mike will be in the building. It's going to be really dope networking. It's not necessarily like an event where we're actually going to be talking like on a panel. We're just going to be amongst everybody. So you're going to be opportunity to talk to us, network with us, but more importantly, network with each other. Refreshments, drinks, food, the whole vibe. So Houston, Texas, this Saturday. That's very important, and that's just for EYL University. If you're interested in EYL University, one day left to that sale. Go to EYLUniversity.com, enter code Market Mondays for that discount. But Houston, it's been a while since the last time we came, so can't wait to see you guys. Shout out to H-Town. I heard the weather is good. So, okay, without further ado, let's bring the man of the hour up, David Shands. Dave, what's going on, my brother?
Man, everything is good, man. How are you?
We are good, my brother. How you feeling?
Good.
I am blessed, man. Excited about this conversation. Man, shouts out to all the people that are actually sitting here and learning. You could be doing anything in the world right now. And people are tuned in, man. So I just want to take my hat off to you, gentlemen, for leading the way of the financial literacy revolution. There wasn't this many people talking about stocks and REITs and trusts and all this kind of stuff before you guys came on the scene and really educated our people. So I don't think you all get enough credit. So thank you. I appreciate y'all, man.
Appreciate you, man.
So this is live, ladies and gentlemen. So we're going to be going through strategies. We'll probably do some question and answers at some point. So the chat, this is actually happening in real time. So hit the like button and share too, because you can get an opportunity to get your question answered. So Dave, for people that may not be familiar with your story, I think you're the perfect person to kind of have this conversation because you embody the working man. You were actually working at Cheesecake Factory, and then you were working in a kiosk in a store, and then you became, a millionaire. But in that journey, people know you from the podcast media side, but you did a variety of different things, from selling merch to, you did a lot of different stuff, right? And through that journey, you've learned a lot of different things and kind of perfected this idea of turning a 9-to-5 employee into a self-sufficient entrepreneur that is making six figures. So yeah, first and foremost, thank you for joining us. This is going to be a much needed conversation for sure.
Absolutely, man. There's a lot of multi-million-dollar talk, but what you said was you got to make six figures before you make $1 million, but you got to learn how to be an entrepreneur before you make six figures. And I don't think people give themselves enough grace. I mean, I've been trying to be an entrepreneur my whole life. I was able to finally quit my job in 2012. And then it took another like 5 years to make $1 million collectively. But from the time I left my job in 2012, it took another 8 years or 9 years to make a few million. It was like incremental growth for a long time. But then once you figure it out, you figured it out. But people don't have that type of, I didn't know how long it was supposed to take to make six figures or to make $1 million because there wasn't Instagram and there wasn't screenshots of Shopify accounts back then. I am on my own journey, so I didn't know how long it was supposed to take. I started my YouTube channel in like 2009, maybe 2008. I didn't get the first dollar from YouTube. No, I started in 2010. I didn't get the first dollar from YouTube till like 2019. So it took 9 years. But I didn't know that was behind the A ball. I didn't know that was behind the curve. I was on my own journey. So
did you use that to your benefit though, right? Because if you're not looking at screenshots, you're really not comparing yourself to anything. Or what do you look at it now as a detriment, or like, wait, had I seen that, I could have been motivated and pushed a little bit harder? Because those in between years are the years that people really don't talk about, right? Like you're saying it took you 7 years. Like those experiences that you learn from being in a 9-to-5 have helped you catapult. So was it a detriment not seeing it, or did it actually help?
No, it was a blessing, bro. Yeah, you're a kid in the hood. You don't know nothing but what you know. When you get a couple dollars, you like, yo, you get a job making $15 an hour. When I was back then, yo, you're wealthy. And you're like, you're happy and you're excited. And then you get around people making 6 figures and you feel inferior. Bro, every day of that journey of trying to be an entrepreneur, a full-time entrepreneur was bliss, bro. Like I'm excited, I'm happy because I'm not comparing myself to anybody. I wouldn't have it no other way, bro.
That's it. All right, so let's get into this. So let's start. Okay, where you want to start? You want to start with just actually going through the defining 6 figures? Because I spoke about that, but I know, like, 6 figures is a number that is very wide ranging, right? So on the pathway from 100,000 to 999,000, that's a big difference.
That's huge. I mean, I think the first question is like, how much money do you want to make? It's funny when people say they want to make 6 figures because they heard it somewhere, because 6 figures isn't a number. Is you want to make $100,000? You want to make $250,000? You want to make $750,000? You want to make $900,000? Then I think most importantly is why do you want to make that type of money? And I'll ask y'all this. Maybe we can have this dialogue. Let's say, for instance, you're a father of a new child, and or you got some small children. The question is, how hard do you go? Do you go hard right now to make as much money as possible so that when they get older, you can provide for them? Or do you enjoy those years that you're not going to get back? So the question is, how hard should I go? Or how much do I need to make? I used to say stuff like, y'all want to be a billionaire. But then I actually realized that I don't think I want to do what it takes to be a billionaire. I want to go home early. I don't want to be stressed out by like $1 billion deal. I don't think I want to right now, because I'm understanding who I am. So my question to y'all is, what is your philosophy on that? Especially if you got small children, how much money should you make?
Yeah, everybody's different, but I mean, for me, it's you got to make as much money as possible in this world because there's no certainty, and everything is going up, inflation. So I think that it's encouraged to be able to provide at the highest level possible, because anything can happen. So that's my thesis on it as far as that. Yeah, but also there's a thing of how much you make and how much you keep. So talk about that, because that's important as far as just entry level, setting this conversation for business owners to understand.
Man, listen, I think it was 2014. I made $250,000, $250,000. Now y'all can have that little 6 figures, little 100,000. I'm at $250,000. That's a bunch of money for somebody who was making $30,000 a year. And at the time, I'm single, so it's cool to brag about at parties and stuff. Like, come on, I'm an entrepreneur. I make about $250,000 a year. And I actually walked home with about $30,000. So I had a bunch of overhead. I was paying a lot of people, money slipping through the cracks. And I'm like, yo, I made $30,000 at Cheesecake Factory. And now I'm making $30,000 as an entrepreneur coming home, but I'm managing a bunch and I still got to pay taxes on it. When at the Cheesecake Factory, at your job, they take the taxes out. So we really got to focus on not necessarily what we make or what we gross or what's cool for the gram, but how much we actually bring home. So I think that's an even more important conversation.
Yeah, so at the time, right, because obviously you're working at Cheesecake, what are the skills that you're trying to learn as an entrepreneur, right? Because sometimes we think like, I'll just create a business of something I like, and there really is no service, there really is no product. So at the time that you're doing it, what are the skills that are transferable from being in the 9-to-5 to say, all right, I can use that skill set to help me in this entrepreneurial journey. I'm going to learn here. I'm going to execute here. I'm going to implement here.
Oh, bruh, how to make a sale. So I figured out quickly that at the Cheesecake Factory, the more they buy, the more I make, because it's off a percentage system. So I needed to figure out how to get them to spend more money. And I realized if I go to the table and I say, My name is David. Welcome to the Cheesecake Factory. Fish of the day is salmon and mahi-mahi. Comes with broccoli and mashed potatoes. What can I get you to drink? If I ask the question of what can I get you to drink, if that first person orders water, the other 4 people at this party is going to order water. And it'll be variations of the water. I'll take mine with lemon. Can I get some lime? Can I have ice? No ice. But I realized that if I just suggested this strawberry lemonade, which is $5, and like $5 per drink, and you get refills, if that first person gets strawberry lemonade, the other 4 are going to get it too, meaning the check is at $25. And if I'm working off a 20% tip, I just made $5. So the question that I asked in the very beginning helped me make more money. These are the skill sets. And I think, man, this is an important conversation because people want to get off their job so bad, but they haven't figured out what they need to get from the job so that they can get off the job. There's so many skill sets, bro. Like to make a sale, or how do I manage my emotions when my manager is getting on my last nerves? Even though that person controls the sections that I get, how many hours I get, and I haven't learned how to manage my emotions. So I feel like it's okay to not like you because you're not going to fire me. And we have this distant relationship. But then I realized, I got to control that. Even if she doesn't like me, my manager, shouts out to April, she was cool, just not at the time, I didn't like her. But we had a mutual disrespect for each other. But it controlled my check. So I came in and said, I'm going to put this down. I'm just going to start being nice to this person who doesn't like me and I don't like her. And my sections got better. Anytime I needed off, I was able to get off. So I had to manage relationships. But I learned that at the Cheesecake Factory. So I don't know. Somebody throw it in the chat, man. We need some engagement in the chat. If you can go through this exercise with me, 3 things you could learn from your job that once you master them, you could become a successful entrepreneur. Because I knew if I couldn't sell a $7 cheesecake or a $5 lemonade, how am I going to sell a $25 t-shirt? So there were so many skills, bro. So many.
Yeah, it's one of these things. I say this all the time. Your 9 to 5 is your investor, right? Like I always look at the school district as my investor. What I chose to do from 5 to 12 would determine how long I'd have the 9 to 5. And so you gotta kind of have this plan in place. A lot of times we get discouraged, right? Because we don't see people being successful around us. As you're at the Cheesecake, are you managing relationships as the people are coming in to figure out, hey, I can pick your brain, get ideas to help you outside of this?
100%, bro. Y'all think I started interviewing like on a Social Proof podcast? I was interviewing my guests. If they came in, first off, if I met a Black person with an American Express card, I got questions. I never experienced that growing up because I was told that Black people have bad credit and we don't get that kind of stuff. So I'm shocked when a Black person comes in and they have an American Express card. I'm like, hey, so what do you do? And I found out through those questions, like I've made some really, really good relationships with people that were barbers and they had their own barbershop. And I met this guy at this really big company called, it's a big moving company in Georgia. And I just got a chance to talk to them. I'm trying to understand their story. Like, how do you become successful? How do you make millions of dollars? So the interviewing started there. And I realized the earlier I start the interviews, the more money I make at the end because I got to build a relationship. I mean, I'm not just taking your order. Like, we need to have an experience. But this is directly tied to my check. So I met so many people, man. I met so many people. And the people that I thought weren't going to tip me, they actually tipped me. People I thought that had all this money and, oh my God, they're super fancy. They not tipping me either. So I had to manage the emotions and know that I'm not going to be here for long anyway. So if I get the skills, I'm out soon. But yeah, that's where my interviewing started, actually.
So let's get into it. We got 1,000 on the YouTube. Let's hit the like button and share. Let's get this bad boy up to 2,000. Oh. But all right, let's get into the 3 Ps. Fitting. Young Thug is home. Welcome home, Thugger. Push P. So there's 3 Ps in your philosophy, right?
Yeah. Before I get there, Shah, I want to kind of talk about the math behind making this money. So when I was working at the Cheesecake Factory, I knew I wanted to make $100,000. I had to do the math. And I found out that if you make $8,333.33 every single month, then you can make $100,000. And then I realized I didn't even need to make the $100,000. So
Unlock a new world of efficiency with Asana. Automate workflows so your team can have less follow-up and more follow-through. Try for free today at asana.com.
let's say we have 100K. Every month, you have to make $8,333.34, right? That's for the month. But I only have to make $1,923 every week. I don't even have to make $8,000. I could just make $1,900 every single week. And then this was the game changer for me, that if I made $274 a day, I can make $100,000. So 100,000 is a really big number for the year. A smaller number is $8,333. But if I've ever had a week that I made $1,900 in my business, I can make $100,000. If I've ever, listen, y'all, if you've ever made $274 in a day, all you have to do is do that 365 times. Or if you counting like work days, it's like $383 a day if you're going to take the weekends off. But we got to define the number, 100,000. All right, well, what if we want to make 250,000? Well, to make a $250,000 a year, we got to make $20,834 every single month. Well, it's a lot smaller number than 250,000. Or every single week, we got to make $4,807 every single week. I think making $4,800 is more doable than $250,000. Or for the day, if I just make $685 a day, I can make $250,000. Or if I'm going to make $750,000, I'm just going to make $2,000 and some change every single day. If I'm going to make $750,000, so we just got to, like, whatever your goal is. After we set the goal, let's just identify what the number is for us. So put it in the chat for 2025. What are we going to make in 2025? We can't just shoot out stuff like 6 figures and 7 figures and I'm going to be a millionaire and I'm going to be financially free, because that doesn't mean anything. Heck does financially free mean?
Well, then also, and I don't want to cut into what you're going to do. So if I am, then just let me know. But so this is something that's very important for people that's in business, because it all comes down to sales. I know you're going to talk about sales, right? No matter what you're doing as an entrepreneur, you're selling something. If you're in a restaurant, you're selling food. If you are in clothing, you're selling clothes items, right? If you are a hairstylist, you're selling your services, which is you're doing people's hair, right? Everything is sales. Everything is sales in business. That's a key component. Now, I do think this is something that I learned, because I come from a sales background. When I was in insurance and financial services, I was commission based. So I made a living by selling products, and I got a commission from that product. And so if you're in sales, you know that that's a difficult thing to do, because your income fluctuates, right? You have a good month, you have a terrible month, but if you don't sell something, you're not going to get paid. But it's important because it teaches you things that entrepreneurs need to learn. So I used to say my goal was to make $100,000 in a year, right? And I used to get frustrated because I wasn't hitting that goal. 24, 25 years old, I was not hitting that goal, right? And there's a book called The 12-Week Year, which I recommend everybody read, right? And when I really started to think about it differently, I changed the way I looked at the perspective. And you spoke about this before, where people, I think, go about it the wrong way by saying that how much money they want to make, right? So they have a goal of making $100,000 a year, right? And then you just broke it down. That's like $8,000 a month, $8,900 a month, something like that, right? And then, so let's say that's like $2,200 a week, right? Something like that. So the goal is like, okay, I want to make $2,200 a week. the first mistake that they make is that they're saying that their goal is too big. Now, you just explained why you should break that goal down because it's more attainable. $2,200 a week is more attainable than $100,000 a year. But I think that that's still where people go wrong because they're chasing a number. What I realize is that you can't chase a number. You could chase the activity. Activity leads to the number. So in my case, right, when I was selling life insurance, right, you get a commission from the life insurance that you sell. So I can't control how much money I make just going off of numbers because I might get a big policy and I make a lot of money, or I might get a small policy and I make a little bit of money, right? But what I realized is that I did the average of what my average case size was. So let's say my average case size was $1,000 commission, right? Then I realized, what am I doing to actually get a client? So there's a few ways how you can get clients. You can cold call, you can canvas. Canvas is like go to different businesses and just pop up, here's my business card, talk. I wasn't good at cold calling and I wasn't good at canvassing, but I was good at getting referrals. That was my pipeline to get business. I was good at getting referrals. Then I realized that in my system, for every 3 people that I contacted, 1 person I would close. Right. So I realized that the numbers worked in my favor based on activity, not just a number. So what I'm saying is that I realized that in order for me to hit the financial goal, it was based on activity. I needed to get, let's say, 10 referrals every week. Every week I needed to get, let's say, 15 referrals. I needed to get 15 referrals every single week because I knew if I got 15 referrals, then I would close 5 people. If I close 5 people, that's $5,000. Yeah. But that's still not good enough because it's like, well, how are you going to get 15 referrals? So then I have to have a system in place. How am I actually even meeting people? I had a few ways to meet people. I would go to like events and I would try to meet people from there. I would call existing clients, right? I would have my circle of influence. So you put together a project 100 of people that you know, you take them out to lunch. So now I'm breaking it down. I'm saying, okay, I need to get, my goal in this situation is to get 15 referrals. But in order for me to get 15 referrals, I have to reach out to 100 people, right? Mm-hmm. So now the 100 people, I have to get in contact with 100 people every single week for me to hit my goal. Now I break that down. Let's say I'm working 5 days, Monday through Friday. I have to get in front of 20 people, right? I don't physically have to get in front of 20 people, but I got to talk to 20 people. So now I have Tuesday through Wednesday, I'm just calling. That's my call days. So in that day, I'm gonna talk to 40 people on the calls. You could talk to 40 people in 3 days. That's very realistic, right? Thursday is carved out for in-person. I'm gonna go to like 2 different networking events if I can. In New York, I'm gonna go anywhere, Chamber of Commerce, because I gotta meet people on that. And then Friday was my coffee day, where I'm getting in front of old clients, new clients, people that I just went to college with. So what I'm saying is that idea of just making the money wasn't working out for me. But when I realized that the money was a byproduct of the action and the activity, see, I can control the activity. I can't control the outcome, right? I can't control if I'm going to sell you what you're going to buy, but I know if I do enough activity, the odds are in my favor to reach that goal. Now it's like, how much money do I want to make? Because now if I double my activity, I'm going to double my income. It's just a mathematical game at that point. Right now, with doubling the activity comes with me working twice as many hours. So now you have to say, okay, well, is it worth me? Or you can say, how can I do this more efficiently? Can I work with another partner, right? Where he can canvas and then we split 50-50. But your volume of activity dictates your volume of income. That's something that I think is vitally important. You have to track this too. So the 12-week year, the reason why the book is called 12-week year is because they break the year down into 12 weeks, right? So it's much easier to look at it from that standpoint as opposed to just canvassing the whole thing. And then we had systems in place. So every Sunday I track my activity. So you can't just leave it up to hope. You have to take hope and guess the word out of it. Right. So it's an activity that I'm tracking. So I'm tracking by hand at that time. I got one referral. I closed one app. I did this. So I got a whole list. And every Sunday I'm looking at it. If I fell short on one of these 3 things, I'm like, okay, this week I got to make up for it. Or why did I fall short this week? You can't let more than a week go by with you having bad habits and not being disciplined to actually meeting that quota. You got to meet that quota, and you have to be diligent and answer to yourself. If you don't have an accountability partner, which is good, but if you don't have an accountability partner, you got to be your own accountability partner. So that book is a very good read because it teaches you how to be extremely disciplined. And like I said, I'm using the example of the life insurance, but you can use that example for anything, right? Any form of business is sales, but never worry about the money, worry about the activity, and the activity will be.
Meet the new context-sensitive properties panel in Premiere Pro. The go-to tools you need when and where you need them. Easily modify and apply settings across one or multiple tracks, all in one intuitive panel. Try it now.
Get you to the actual money.
Yeah.
Sorry to kind of thing right there, but
that's good.
Yeah.
That's strong. And I 100% agree with you. It's just different people have different motivations. So it's like some people, the activity, like if you're going to be a content creator, when you do enough activity, something happens. But some people need a target. So some people are all right, I want to make 10 sales today. And no, you can't. You can't control someone taking money out of their pocket and giving it to you. But without the goal of the 10, when you're at 8, if you did the activity, you're like, all right, well, I did my activity for the day, which is going to yield some fruit. But some people need that. Yo, I'm gonna work a little bit extra because there's a specific goal that I have to hit. But like you said, everybody has their different driving motivation. Like for me, I need a target. And obviously, the more you do your activity, the activity starts to a ratio shows up. So if I make 10 calls, I'll close 3 of them. If I continue to do that, I'll make 5,000. Well, if my goal is to make 20,000, I know I just gotta 4x my activity. So you're 100% on point. I hope everybody's taking notes because you can't even start this conversation until you get active and you start to see what your ratio looks like and how you can improve it. But you will get to a point where if you have enough activity, you can start to predict your income. Like in this webinar space, you talk to somebody that's like really dialed into the webinar, they know exactly how much money they need to spend. They know exactly how many people need to show up to this webinar, and they know by the 90-minute mark how many people need to be on, and they can predict within a % of how many people are going to buy. They got that joint dialed in. But we have to start somewhere, like Rashad is saying. Y'all have to start somewhere. Get a product, and I think that leads into the next point, right?
Yeah, for sure. Yep. Okay, so now we're going to go into the 3 Ps. The first, and this is for any business, these are essential, like the core elements of being successful as an entrepreneur. So the first thing is a product. You got to sell something, right? So talk about product.
Yo, listen, I need y'all to share this out. Y'all got 3 people on here that's giving y'all game. I need y'all to share this out with 3 people in your phone right now that are going to hit major goals in 2025. Share this out with 3 people. This is probably the most important conversation most of you are going to have for the rest of the year. So in comment done after it's done, share it out with 3 people that you love. So the product, we have to find something to sell. And the best place to start is a product or service. And let me talk to my content creators out here that are thinking you're going to be an entrepreneur and you're just going to create content. You're going to create content until something works out. And I'm not mad at that. But as you're creating content, I'm asking you, begging you, pleading with you to get some sort of product in your hand. So if you're going to run a podcast of financial literacy, have a financial literacy book or a planner or a motivational hat line or have some sort of product or a service that you can sell. So a product is something that allows the transfer of ownership either temporarily or permanently for a fee. and I came up with that definition myself, so you're not going to find it on Google. A product is something that allows the transfer of ownership either temporarily or permanently for a fee. What can you give to someone that they be willing to pay you for? And I think it's important to start out selling something that's easy to produce, easy to deliver, and easy for people to pay you. Come up with some sort of product or service. Let me ask y'all too, Rashad and Troy. Let's say, for instance, you were still working at the high school or you were at some sort of job, and you were going to come up with a product today, in the current climate that we're in right now. Are y'all going to do product or service? What you think, and what would it be?
So this isn't hypothetical for me. I come from a service background. That's what I come from. So I was an entrepreneur on the service side. I wasn't an entrepreneur on the product side, but I looked at my service as the product though. So I was an entrepreneur on the service side, and I feel like you can be a service-based provider, but launch products off of that, which I'll talk about after. I want to hear you finish what you got to say, but I come from the service side. I don't come from the product side. I come from the service. So I had to learn product. I had to learn that aspect. I didn't have to learn the sales, closing, service. That's my wheelhouse. The product thing came later online from learning from different people. But that's my personal thing. Answer to that question.
Yeah, I would go service too. I would say service, just based on my skill set, being in front of people, working with people, having to educate. There's a service that I'm providing every single day in school. Most teachers don't look at themselves, or educators don't look at themselves like, but you're providing a service. Probably the most important service if you think about what the actual task is. And so it would definitely be in service. And again, the service would actually be the product.
But what would give me some real examples of a service? Would you start a tutoring service? Would you start what would the service be?
Yeah, so I actually was doing this. I was actually a tutor, right? And so I was trying to create multiple streams, right? I'm figuring out like, yeah, six figures, that's what we hear growing up. And I'm like, well, we get to the six figures as an educator. I'm like, well, now we got to figure out how to make more. So it was being a tutor. It was creating athletic programs. And so I was a coach. I had a fitness club. And then on the weekends, I would do things as well to just around education, right? So I'm trying to figure out how many skills can I provide based on what I'm doing now. And so if education was a thing, here are the things that I can do to make money from it and provide a service.
Love it. Sean, what would your service be? If you had to start today, it's before EYL, or in this current climate right now, what would the service be? Well, or give me some ideas.
I mean, like I said, I don't like to do too much hypothetical. I like to actually say like what we did, right? So my service was financial services, because there's always going to be a need for people. Financial services is always a need for that, right? And then we realized that we're in a day and age now with social media that media has taken a different fold. So switched from financial services to media. That's really what happened in real life. Mm-hmm. So I could only say what we did because that's what I would do again, right? Because it worked. So I would do the same pathway as far as Earn Your Leisure, media side, subscription-based service with EYL University, which leads to events, which leads to money that you can make from YouTube, podcasts, and stuff like that. But I don't want to tell somebody to do that because that's not something that everybody's passionate about. Everybody's not going to be successful, but that's a realistic blueprint that we followed that has worked.
Yeah, it never stops. Yeah, that's why I said both of them are the core of it is educated in providing a service to people. And so we're in the people service business.
For sure. If I had to start over again in this particular climate, I don't know if I would do this. I started with T-shirts, right? A T-shirt company, and it wasn't as accessible. There wasn't like drop shipping at that time. Everyone didn't have their own T-shirt brand. So it's still kind of impressive that, oh, you got your own clothing brand? Oh, they got the neck label? Wow. Like, people are impressed, right? So if I had to start with some sort of product for me today, and I just want to shoot out some stuff because some people are having a brain block of like what I could do, I would probably go into something with helping students with a book or some sort of way to teach kids in an engaging way. Because after COVID, when people went home, getting kids back to lock in and pay attention, that really had an effect on our educational system and our kids. So if I was going to do a service, I would pick up a camera and I would be a videographer or a content creator, a photographer, something like that. The moral of the story is, whatever your product or service is going to be, it shouldn't be a cool product or service. You should look at it as solving a problem, not just a good idea. So the question is not what should I sell or what should I offer as a product or service? It's what problem can I solve and what's the most effective way to solve it? So I don't know if I'd have started out interviewing entrepreneurs today as my main way of growing, because y'all know back when we started, who else was doing that? Nobody. Like, I don't want to say nobody, but I don't know of anybody that was interviewing people that weren't celebrities or, high profile people that was just your neighborhood heroes. I just don't know anybody. So you need to, one, find a problem to solve, and two, find an area that that you can be excited about. So a product is something, again, I'm gonna throw this out there, and neither one of them is bad, but I want you to pick your poison. A product is something that allows you to transfer ownership, either temporarily or permanently, for a fee. A service is more non-tangible value. Non-tangible. A service might be a trainer. I can't package up a train. I can't package up muscles. But my service is non-tangible, but I can get you that result. But I'm only getting you the result because that's a problem that you have. So come up with a product or service that solves a problem, that's not just a good idea, that's something that you're already passionate about, that you love, that you're interested in. And you have to look at it and say, this is something that I would buy if I was the person dealing with this issue.
Dave, I got something for you. And shout out to Phil, you boy. He said he's planning on quitting his job next summer, trusting the process. Yeah, like I know you're big on targets. And so I remember, obviously, the first time we met was at Cheesecake Factory. You took us out to lunch, but then you went up to the kiosk. What was the target that you were looking at to say, all right, if I do this, right, if I hit this number, I'm going to go into a full-time media mogul that you are now, and I'm going to leave the kiosk behind? Because I know even that transition, I get asked that a lot. How did you know it was time for you to leave the school district? Or when did you know? Was it an amount of money? Was there a target that you had? We never really had this conversation, but I'm interested now that, as you said, the target thing. I'm like, well, what was the target for you?
Yeah, so I set a quit number. I didn't quit off of emotion. I didn't quit because I didn't like my job. I didn't quit because I'm better than this or I'm worth more than that or somebody was talking crazy to me. I didn't do none of that off emotion. I set a quit number. I said, if I make this amount of money every month for 3 or 4 months in a row, I will quit my job. So let's say the number is $5,000. And I say, well, if I make $5,000 4 months in a row, I will quit my job. Now, I've been doing it for a while, but I'm 2,000 here, 1,000. I've been doing it for 2 years at this point. But I said, you know what? It's about that time I start betting on myself. But if I make $5,000 a month consistently in my business, not total, in my business, I will quit my job. But here's the caveat. You can't skip what you say you're going to do. It's not 4,000. If I made $5,000 in January and $6,000 in February and $3,000 in March, that means I have to start all over again. Can I hit this number consistently for 4 months? Because now I know I got a formula. Now it's not like I just had a good season. So I set a quit number. Once I hit that number that I predetermined that I was going to hit, that's when I quit my job, because that says I can do it. And I promise you, y'all, if you set a target and you can't hit your target while you have your job, And you think once you quit your job, you're just going to have all the time in the world and it's just going to get better. You got to take you with you. Your habits are your habits. If you can't, and this isn't every scenario, but for me, I knew I could do it with my job. But if I say I'm going to do it with my job and I don't, quitting my job isn't going to help me because I'm not the type of person that can do what I say I'm going to do and stick to the path. So that's how I quit my job. That's my story.
But then also I think that, all right, so for people, because this is vitally important, like even for they have to have a realistic idea of what, like a roadmap to map out, right? So for me, if I was giving advice on this, when you start a business, you start with the MVP, right? And that's something that you can get up and running today. So I always use the restaurant because that's a business that people can relate to. Right? A lot of people are passionate about cooking. They're good cooks, at least in their minds. And that's something that people want to start, right? It's a very difficult business to be successful. It's very difficult to be a restaurateur to be successful for a variety of different reasons. But one of the main reasons why it's difficult to be a restaurant owner is that restaurant business really is like a good microcosm of why businesses fail. Because it's high capital that you have to put out, right? Like when you open a restaurant, you got to get a retail space, right? You got to pay first and last month rent. You got to pay rent every single month. You got to bring industrial machines in to actually, cook. You got to make sure that you have it sanitized, clean properly. You got to have chefs that come in and cook it. Or if you're going to be the chef, then you got to cook and run the business. You got to have somebody that is knowledgeable as far as how to buy the food, get the food, source it, a waiter, waitress. You got to have electricity. You got to put TVs in the restaurant. You got to paint. There's a lot of money that you spend as a restaurant owner. The problem is that the amount of money that comes in usually is up and down. It fluctuates, right? Because nobody goes to that same restaurant every single day. Right? I might love that restaurant and I might go there 6 times a year. My favorite restaurant I might go to 6 times a year. That's not a sustainable business model if you don't live in a place that has high foot traffic, right? So what ends up happening is and this is a good microcosm for all businesses because this is why a lot of businesses fail. Your expenses stay the same or they go up, but your income fluctuates. So now if your expenses are $10,000 a month, but 1 month you're making 15, then for 2 months you're making 7, and then you make 2,000. Then that's not sustainable, right? Before you know it, you've run out of your savings, and you got to close the doors because you don't have enough money to actually run the business, right? So if I was getting into the restaurant business, I would start with the MVP, and I would start with something that's workable today, without a high cost. Even though this is a business that is a brick and mortar business, I would start with a ghost kitchen, right? So if people aren't familiar with ghost kitchens they became very popular during COVID, where you have cities like New York, Boston, high traffic cities, right? And people started to really order Uber Eats a lot. Now, the thing about Uber Eats is that unless you really know the restaurant that you're ordering from, there's 2 ways that you order Uber Eats. You order from a restaurant that you know and you patronize, or you're just hungry and you want Indian food and you just look to see what Indian food is available on Uber Eats, right? Happens all the time. You don't necessarily know where that Indian food is coming from. You just look, it looks good, it has a nice menu, whatever. Now, with the ghost kitchen, you can get you can rent industrial kitchen space, right? Mm-hmm. And you have a restaurant. They come, they expect it, they make sure that it's clean, but it's not an actual restaurant. It's just a kitchen that you're cooking out of. But that's not important because now the cost of you renting that is a lot cheaper than you actually renting a restaurant, right? And you're making the food yourself, but what you're doing is that now you're developing, I know you talk about promotion, you promote it on social media, you're developing a following at a low cost. We had a great episode years ago with Nacho Banger, shout out to him. But this is a way to kind of get up and running, building notoriety, building a name, and most importantly, making money in real time before you actually go and open a restaurant, right? Now, the next part about this is vitally important. So they always say you need 7 streams of income to become a millionaire, right? Now, this is frustrating for most people because they look at it like you need 7 jobs, or if you're a business owner, you need 7 different businesses. This is another reason why businesses fail, because they don't have multiple streams of income from their own one business. So most of the time, so let's say you made it past the ghost kitchen phase and you opened up a restaurant. Now, most people, and this, like I said, this can be applied to any business. It's just a restaurant is an easy business to give an explanation to. So most people think that when you think of a restaurant, you're thinking that you're going to make money from people coming into your restaurant and buying food. That's easy, right? But like I said, there's problems with that, because if there's COVID, if there's anything like that's not a sustainable business model, because you only have one stream of income, right? Now, you don't have to have 7 different crazy ideas. You have to have 7 streams of income off of that one business. So as a restaurant owner, you can sell food. That's the obvious way. But you can also do what I just said, Uber Eats, delivery, everybody does that, right? That's another stream of income for people that I order Uber Eats more than I actually go to the restaurant. So now you're actually working on 2 streams of income, right? But that's still pretty understandable. But we live in a society where a lot of people can't cook, right? Well, that's an opportunity. So maybe on a Saturday morning or an off day, whatever, now you have cooking classes, right? Now you offer an in-person experience. You can make it every week, or you can make it a group thing, but you actually are teaching people. Now you're actually a teacher, right? So that's another stream of income, because now people are actually coming in and they're paying to learn how to cook Thai food, or they're paying how to learn how to cook Jamaican. You can make it date night. You can, a variety of different things, right? But now you're already teaching people how to cook. So now you've become a teacher. So now you can reach an even larger audience on what we're currently on right now, which is called YouTube, right? So now you have a cooking podcast, because there's millions of people that will be interested in learning how to cook, but they might not live where you live, right? So now you actually are a content creator. You never look at yourself as a content creator, but now you're a content creator because you're offering a product. And if you get enough streams, then you can actually make money from YouTube, right? And then if you can do it from an audio perspective, then you can actually put that same content on audio and repurpose it. And now people can listen to it as a podcast. And now you're actually a podcaster, right? But when you're actually cooking in front of a camera, you have to wear something. So now you can actually wear aprons that you actually make, or chef's hat or whatever. And you put some, like we had Assets Over Liability. That's a slogan that we've done. We're in front of a camera. So we wear our merch and people buy it. You have your merch on and people buy it, right? So you come up with some cool idea, and now you're selling merch off of it as well, right? And the restaurant business is so difficult to be successful in. That's a good thing, because now if you are successful, then you become an authority in the space. So there's no school a lot of times to actually learn a lot of this stuff. It's culinary school, but it's not a school to learn how to become a restaurateur. You got to learn as you go. Most of the time, that's why second and third generation, a lot of restaurant owners that are successful are second and third generation, because they've been taught from their parents. So if you pay me, I'm going to save you the headaches, because you're going to fast track your learning experience. Everything that I went through, in order for me to survive it, I have to learn these things, right? So now you pay me, that's going to be a higher ticket item than somebody coming in and just learning from cooking classes, right? And then you can also sell items, like you can sell spice that you can actually put online, right? Like let's say you really make a jerk chicken. Now there's a thing called jerk chicken sauce that you put on jerk chicken, right? And then once you build a following, now you can actually label that jerk chicken sauce and put it on YouTube and sell it. And then if you really get up and running, then you can potentially have it in supermarkets. But I wanted to say that because that's 7 streams of income that I just named. None of those streams take you away from your business, right? That's still within your will. I didn't tell you to buy a truck. I didn't tell you to, do anything crazy, right? These are all things but most of the time as an entrepreneur, you're not thinking about that. It's going to be difficult to have one stream of income, because what happens is that one stream dries up. It happens all the time. If you only rely on YouTube and your YouTube channel gets shut down, then you're screwed, right? So you have to have different things to go about it. And even from a service standpoint, like that was my original goal. Even when I was a financial advisor, I'm like, all right, I'm doing the financial advising thing. And I just explained how I get paid from that. I got paid through commission. That's what most people, that's where it starts and that's where it finishes for most financial advisors. But it's like, okay, well, this is real. I'm not giving you a hypothetical. I'm giving you a real world. So when we started to teach, part of that story is that I actually put together a proposal. And at that time, President Obama put together a program called My Brother's Keeper, where they was actually giving money to school districts. So I looked at that as an opportunity where I'm like, okay, well, I can package this up and actually present it to the school and get paid to teach kids financial literacy, because what I realized is that schools have hundreds of millions of dollars of budgets, right? Mm-hmm. So I remember, I'll never forget, I put together that proposal, and it was, I think I went to the principal of the school, and I asked for $1,000 an hour. And he was like, I'll never forget, he said, teachers get paid $50 an hour. I said, what did I say?
You're asking?
I'm asking Dave, what do you think I said?
Oh, well, I mean, I solve a bigger problem, or I'm not a teacher.
I'm not a teacher.
Yeah.
Gave me $1,000 an hour. So, wow.
I like that.
No, but
not him, but the program did.
The program.
Yeah.
But this is a true story.
Yeah.
But then from there, I started to. I actually work. I taught a class in a group home as well. Taught a class in a group. So I was daylighting as a quasi teacher, like for about 18 months, right? But it was all because I'm teaching what I'm learning. I'm teaching what I already know in financial advising. So I never got to actually get paid to really be a speaker, but that was always my goal, was to like build a following. And then I wanted to speak about financial literacy, but that's another way that you can actually make money. Then of course, if you speak, and then you gotta write a book. I forgot the cooking book too, for the entrepreneurs, for the restaurant. You gotta write a cooking book if you're a restaurateur, but the book aspect of it, right? And then it's like, once again, consulting, because financial planning is a hard business. So if you become an expert in the field, now there's other financial advisors that actually need to be coached. They need to learn these things, right? And then the school aspect, the manual labor thing is actually teaching. What's more efficient is actually writing a curriculum. Mm-hmm. That doesn't require you actually being there, right? But so that's on the service side though. So one is on the product side, what I just mentioned before, as far as a restaurateur, you're selling a product. The other one is on the service side, but you see it's the same idea, it's the same principles, right? You have to strategically find multiple streams of income off of the tree. It's like a tree. You got to have different branches off that tree. If you don't, that's going to be difficult to be successful as an entrepreneur. If you do, it's going to be difficult not to be successful.
100%. I hope y'all are taking notes, man, because this is an absolute masterclass, man. And some things, like one of the ways to scale a business is raising the average order value. And sometimes not even about like, how do I do something different? It's like, how can I raise the average order value? So I'm working with a restaurant out here, Uncle Phil's, best cheesesteaks in the world. And they're just selling cheesesteaks. And I'm like, yo, we need to at least offer it as a dessert. If I buy a cheesesteak and it's $15, I'm typically going to get a cheesesteak and fries and a drink maybe. But if there's like the positioning of a dessert, I'm the type of person, if I see it, I'm like, oh, throw it in the bag. I don't know how many of y'all are to throw it in the bags. When you go to Walmart, you get whatever you need, but you got to get that little chapstick that's right in the front. You don't need the Reese's, but it's right there. They're raising the average order value. I was going to spend 15, but now I'm going to spend 21. So thinking as an entrepreneur, especially this for like my entrepreneurs that are already in business, like Rashad said, and maybe you don't have to pop off with 6 more right now, but what can we add right now that will at least give the person the option? They were going to pay a certain amount, but now they're just going to pay a little bit more. That's how you scale your business. That's it. Yeah, go ahead.
No, I was going to say that. I mean, that brings it to another key point. And I know that's one of the things you want to talk about is the actual pricing of it. A lot of times we feel like, hey, we're charging too much, or we shouldn't charge anything for the services that we provide. So as an entrepreneur that's just beginning, right? They just figure out what the product is. They find out what the MVP is, right? How do they get to a point where it's like, I know what the market says I should charge versus what I'm actually going to charge for my service or product?
Well, it kind of depends, but the price, and I want everybody to really, really pay attention. The price has to be way lower than the value. The price that you charge has to be way lower than the value. You cannot sell something.
Explain that, because that's what most people probably wouldn't expect you to say that.
I got you. You don't pay $20 for something that's just worth $20. Like if I pay, I don't know how much a haircut is, but the reason I'm paying $100 for a haircut or $50 for a haircut, depending on where you live, is because I believe that this haircut is worth way more than the $50 that I'm giving this person. And I'll prove it to you. Let's say, for instance, your normal haircut is $50. Well, you're saying, well, I'm not paying a dime over $50 because I'll go somewhere else and get a haircut for $50. But you pay the money not because it's worth $50, and here's why. If you are about to go on a date, or it's your wedding day, or some important day, and the barber that normally charges $50 to cut your hair says, yo, you didn't make an appointment and I would have to travel. I can't get to you right now. You're like, yo, please, I need this haircut. And your barber says, all right, cool. The haircut's going to be $250. You're like, whoa, I don't pay $250 for a haircut. It's not worth it. But my question is, if this is your wedding day, are you going to pay the $250? And the answer is absolutely. Because the haircut isn't worth, the haircut value is worth more than the money you're paying. So we don't pay, I'm just saying, whatever that transformation is, like if we're talking about EYL University, the value is way more than the amount of money. So, or like the perceived value, because although it can help you make $1 million, $100,000, if you price it at $50,000, there's going to be some hesitation. But what is it now? Is it $1,000 a year?
$1,000 for the day before it runs up. Well, yeah, $1,000 for the year. $1,000 for the year. To learn how to make a few $100,000. Now, which one's higher, the value or the price? But how do you shout out to Ian in the chat? This is something that a lot of entrepreneurs struggle with, as far as when they price their products, they don't feel confident that people will actually buy it. So they price themselves too low. Too low. Yeah. And then it's hard to go, it's easy to go down in price. It's hard to go up in price, right? So how do you, what's your thought process for that?
It's actually detrimental to go down in price. Because the people that pay more, like it's hard. Yo, it's hard to come down in price. And we're looking at it in the economy. When everything was inflated, when it cost more for the product to get from wherever it was to here, gas, like employees are costing more at that time because can't nobody get to work. The prices skyrocketed. But when things got back to normal, did the prices come down? You know what I mean? The barber's not saying like, barbers are never going back to $20 haircuts. It's over with. So my point is, in answering your question, the value has to be more than the price, and you get to determine the value. And sometimes the value is based on your belief of, like I said earlier, the problem that you're solving. We're thinking about the price because you don't believe that you're solving a real problem. If we're in the desert and you're the only person with water, you're not going to be nervous to charge $10 a bottle. You wouldn't be nervous. You know, ain't no other water nowhere. And I'm solving your problem. And I know you're going to pay for it. So it's a confidence issue, which goes back to what we talked about earlier. Some of the skill sets that you get from your job. I learned confidence in asking someone to buy a cheesecake. While I was working there, I said, I'm having a hard time selling, but I realized the more I sell, the more money I make. So I had to tell myself, you have to tell me no twice. This is like a confidence building thing, because I'm not going to push you on my own, but my rule says, would you like to buy cheesecake, a slice of cheesecake to go? They say no. I'm saying, hey, come on, man, come look at the menu. Just, would you like to get a slice of cheesecake? One, you wouldn't believe how many times people converted on that second ask. But two, it started to build my confidence. But once you understand that you have something that solves a real problem, you have no problem charging whatever you're going to charge for it. But here's how we raise value. One, you can start off by whatever price makes you comfortable. But the only reason you're doing that is to gather testimonials, because if you change 20 people's lives with this product, you'd be more confident charging a little more. Two, you need to learn how to be a better storyteller. Storytelling will raise the value of your product or service. This is what I mean. This young lady, we're doing this morning meetup, and I'm trying to teach this principle of your story creates the value. And she said, well, my company is, I do like house cleaning. I'm like a maid service. And I said, do you have any employees? She said, no, I just do it myself. And she said, well, I don't see how this is a need. This is a luxury, actually. And I said, we got to change the way you look at the thing that you offer, because it solves a real problem. And I asked her if she's married. She said, yes. And I said, have you ever had any issues in your household where the root of this argument was caused by dishes not being in the sink? Your husband comes home, puts his shoes in the living room, then goes upstairs and doesn't take the shoes with him. That kind of stuff causes an argument. And we find ourselves bickering back and forth with our spouse because someone didn't take the clothes out the dryer. If you are effectively cleaning someone's house, you are saving a marriage. I know for me, it's really hard for me to get in my mental zone when my office is a mess. And when I'm in my zone, I execute. I get to this money when I'm in my zone. But if I got to focus on where's my I can't find my stuff, it's not organized. The value of a house cleaner or an office cleaner or an organizer, if they can tell the story and show me how cleaning my office makes me more money, I'm more willing to buy. So we have to become more confident, and we got to be a better storyteller, because that's how we start to raise our own confidence and value.
Well, how about the reoccurring customer, right? Like, how are we building the model? We don't want to, obviously, and that was a great example when you're talking about you go to your favorite restaurant, you might visit that 4 times in a year, right? In your business, obviously, with doing the t-shirts and now in the media space, what is the best strategy, right? If I'm starting as an entrepreneur, is it not the one-offs, but is it the monthly subscription? Is it the yearly subscription? Is it even a weekly subscription? Like, what model should I be looking at based on my product?
Again, I think it's what you're most comfortable with. It's not like one particular way. That's why when we're teaching entrepreneurship, we give them all of them. It's not just services, not just products. We need to pick one. There's 3 ways to scale a company or scale a business. One, I talked about it earlier, is, one, I'll start with customer acquisition. We need to get more customers to scale a business. That's one way of scaling a business. The second way of scaling a business is raising the average order value, meaning the amount of money that someone pays me when they come to pay me. You can either pay me $15 for a cheesesteak, or you have the option of getting a piece of pie too and raise it to $21. You can scale a business that way. Or you can scale a business by getting the same customer to order more often. So I'm gonna go through just rabbit hole of stuff. Y'all can just stop me. Your product could be something that people use, or it could be something that you use up. Something that you use is a couch. There are people that make millions from selling couches. Something that you use is a car. You use a refrigerator. Is a refrigerator a bad model because most people are only going to buy one every 10 years? It's not a bad model. They just got to get into customer acquisition. But you also have things that you use up, like toothpaste or body gel, deodorant, oils. These are things that you use up. Well, there are different, like even now today, there are certain customers, there are certain companies that make millions of dollars a year in this one Halloween time. They're closed the rest of the year. But they put everything into this model. So I don't have a suggestion. I will get into like the pricing model because I'll go through that right now. But there's no one way to skin a cat. That's why I'm very careful with telling people what they should be doing, because there's a whole bunch of ways to do it. And the way I did it may not be the way you do it. You may want to sell houses. Well, let me get through some numbers. Let me get into some numbers if I can. Let's do that while we're on pricing. Here we go. Hey man, if y'all are with us, just say I'm with y'all. Just throw it in the chat. I need to know that we're not just talking to the wall. I need to know that y'all locked in and y'all not just out here like watching TV on Instagram and kind of listening to this, because this can really, really change your life. So coming up with a good product or a price. Let's just start with $100,000. Well, you could take one product, take the whole year to sell one product that nets you $100,000. Maybe you are you're a real estate agent and you're not trying to sell $20,000 houses. You're not trying to sell $100,000 houses where you make $3,000. You are trying to make you're trying to like sell multi-million-dollar houses, let's say. Well, you could spend the whole year selling one house, netting $100,000, and you'll make $100,000. Or you could spend a whole year selling 10 products at $10,000 a piece. And guess what? You still make $100,000. You could sell a little over one a month of a $10,000 product. Can we think of something that costs $10,000? I knew, now I think this is very extremely scammy, but I met this guy, this kid, actually. He was about 17 years old when I met him. He was working at Chick-fil-A and he'd just come around, just be around often. And then he got mixed up with these like digital entrepreneurs. And he told me like, yo, bro, I'm about to start doing consulting. I said, bro, you work at Chick-fil-A. Who are you consulting? Not knocking his dream, but he said, I do content creation. I'm really good at it. And I'm about to start teaching people how to scale their business through content creation. I said, bro, one, you don't know how to scale a business through content creation. You work at Chick-fil-A. True story. No lie. Yo, talk to Brandon Shot Me. He knows exactly what I'm talking about. But my man comes to the office one day and he says, yo, I'm about to sell this 10K program. And I said, bro, no disrespect, but you probably make $10,000 a year at your job. He said, but I'm about to change all that. This is not me hating on this brother. I just knew he didn't know what he was talking about. The moral of the story is he goes through this process and he comes to the studio a few weeks later and he says, yo, I closed my first 10K client. I told you I was going to close my first 10K client. And I said, congratulations, because I was wrong. Now, about 30 days later, they actually disputed the charge because they realized he didn't know what he was talking about. But my point is, he had a service for $10,000 while he worked at Chick-fil-A, and he closed somebody. He didn't do it in a less than integral way. He believed in his product, sold it, was $10,000. My point is, there are services or even products that you can make a 10K commission on. You sell 10 of them a year, you made $100,000. Or we can sell 100 products at $1,000 a piece and still make $100,000. Throw it in the chat. Can you think of a product that someone would pay $1,000 that's worth more than $1,000? Of course we can. We can come up with a $1,000 product. Nipsey Hussle had the audacity to sell a $100 mixtape, was it?
Yeah, 100.
Who does he think he is? Well, it is at the point where, at this time, you could either download mixtapes or every mixtape is $10. But my man believed in it. He said, I'll sell 100 mixtapes and I'll sell $100 mixtapes because I placed this value on it. But if you can come up with a $1,000 product, you sell 100 of them for the year, you're good. Or we find 1,000 customers to give us $100. Only make $100K. I'm going through this process for a reason, because you can find 10,000 people with a low ticket $10 product and still make $100,000. My question for the chat today is, which one of these is most comfortable for you? Which one of these is most comfortable for you? You might look at the one and say, yo, I would rather just find 100 people, $1,000 product, I'm gonna make my 100K that way. Or I feel most comfortable, man, I can get anybody give me $10 and we just run it up. $10, 10,000 customers throughout a year, I can do that, no problem. A little over 1,000 customers every single month, I'm cool, I can do that. My question is, which one of these is most comfortable for you? Let me give you another one. Something else to think about. We can also talk about recurring. Let's say we're going 100K. Let's say we'll do 250K and we'll do 750K. Well, we can have, and y'all, if it's too much and it's too confusing, because I know some people, when it comes to math, their head starts hurting, but I'm telling you, if you're gonna make some money, you better get comfortable with math. Success is just a math equation. I told y'all, if you do a certain amount of work, you'll start to get some sort of ratio. I talked to 10 people, I closed 2. If I wanna close 20, I gotta talk to 100. It's the math of it all, okay? If you have a $50 recurring, let me actually make it smaller. Let me just erase this. We can go into the recurring model that Troy talked about, and maybe to make 100K, we need 167 people paying $50 recurring every single month. Or I can have a $100 recurring product and I just have to sell 83 of them to make $100,000. Well, what if we're gonna make 250,000? The only reason I'm going through this exercise, y'all, and again, I know math hurts the head of a lot of people. I get it. But just pick which one stands out to you. Whatever seems easiest. Yo, all I gotta find is 160 people to give me $50 a month, where the value is much more and I can make 100,000, that's the one I'm doing.
But then also, Dave, I think it's important to note retention as well, right? Because
100%.
Even I learned this in insurance as well, where the premiums are cheaper. The cheapest premium is annual. The second cheapest premium is semi-annual, every 6 months. The third lowest premium is quarterly. The highest premium is monthly. The reason being is because they wanted to discourage people from doing monthly, because monthly is the highest turnover, right? So that's important for entrepreneurs to keep in mind, that recurring revenue is it can be a good business model, but you have to you might have to increase your price for that to count the amount of people that's actually going to fall off after 2 months, after 3 months. Or you might have to have a recurring revenue model on a yearly basis, which might be more beneficial than a monthly basis.
Yeah, absolutely. And I don't go like into the retention, because some people because they're trying to wrap their mind around the fact that I can make some money.
No, I get you. For sure. But I think it's just important for people to kind of know, because like I said, they don't know that. You don't know that until you know it, right? So it's like you put all your eggs into building a recurring revenue business, and then you realize that people falling off left and right, and it's like it's discouraging.
It's important to the point that you made earlier, Dave, especially if I'm making that target that I want to do something consecutively for 4 months. Well, let's say you do it for 3 months in that retention, and you have a monthly recurring, and in that 4th month, you lost half of your customers, right? Yeah. Like that could be a drastic change in business. So it's very important to know that.
Yeah, but it also depends on the value that you provide, because some people, like for $1,000 a year, believe it or not, and I'm sure y'all know that some people log in a couple of times, but they don't want to lose it because they understand the value. So in every business, you got these pros and you got these cons of there are some people that maybe they would have paid me for a month, right, for a service. But on that 31st day, the payment hit again, and they're like, oh, crap, I got to use the service again. So I know that the average customer is going to stay on a recurring program for about 3 months, average. So our program is $97 a month, but we made it $500 for the year. Well, why would I make it $500 a year if it's $97 a month? If the average person stays for 3 months, you're either going to give me $300, or in the moment where you're like, yo, I want to lock in, well, you might as well just pay 5 months up front. Let me just get a $500, and we'll recur. And it helps you predict, because typically, unless you're doing something where you're not adding extreme value, typically they all don't fall off at the same time. But you still have to keep it working. You got to keep it running. So,
well, the most important aspect, are you still going with because I want to talk about promotion. That's probably the most important thing.
Okay. Let me finish these numbers. I'll wrap up in just a second. Give me 30 seconds. How much time we got? Because we're
not on time. We're not on time constraints.
Okay. All right, cool. So if you have 417 people paying $50 a month, you can make $250,000. Or if it's $100 a month, some sort of recurring program, 209. And I'm gonna tell y'all, goodness gracious, I'm gonna tell y'all something that this one dude told me. He said, because I was actually telling about my program, and he said, you have to figure out a way to put the hooks in a customer. I said, well, what do you mean? I don't understand. He said, well, I have a software. Yeah, he said you have to have something that allows them to build on your platform, but there's some sort of negative for them leaving. Meaning, he has this like white label software, or he built out this software that gathers all of this data, and as long as somebody's on the program, they have access to their data. But if you ever try to leave one platform and go to the next, you ever notice sometimes the transition be so difficult? Well, that's by design, because we want you to be comfortable here, and we want to have some sort of tie to the recurring program. So LA Fitness does it best. You have to put up $100 or $200, whatever, registration fee. Well, it's only $30 a month. But I know if I get off this $30 a month, when I come back, I got to put the $100 back. That joint has had me on LA Fitness, a gym I don't go to ever for like the last 6 years, because I don't want to pay the extra $100. So you have to figure out, as you go through this process, you'll figure out your customer and start thinking about different ways to keep people retained. So,
well, all right. All right. So in the 3 Ps, to me, the most important part of any entrepreneurship business is promoting. If people don't know about your business, you can have the best business in the world. They got to know. McDonald's doesn't have the best burger, but they've created enough brand awareness where people come for their services, right? So promotion, what's the deal with the promotion aspect of it?
Man, ask somebody to buy your stuff. That solves a lot of problems to entrepreneurs, believe it or not. Most people just will not ask people to buy their product or service. Just ask a bunch of people. And I come from an era where you had to like go up to somebody and ask them to buy the t-shirt. Now we build a business with link in our bio. We just make a post, we create some content, but I had to ask someone. And I'm not just talking about promotion in terms of like, all right, we got this podcast, we put it out there. That's one way of doing it. But you have to think of every single way that you can push your product, and it's going to start with you believing that your product actually solves a real problem. So there's a couple ways we can do this promotion thing. We can hustle, which I'm a hustler. I just go out there and I'm gonna go make some money. I got this book, and I'm gonna be a vendor at InvestFest, and I'm gonna be a vendor at these events, and I'm gonna go to the schools, and I'm gonna create content of me selling the product. That's a part of the promotion. or we can leverage. There's a couple of different ways we can leverage, whether it's leveraging social media, whether it's leveraging other platforms, whether it's leveraging advertisement. So they have this thing where you can go joint live with somebody, and people have figured it out. Oh, you want to get on, sell my product to my audience while we're on live together? Well, I'm going to charge you to go live with me. And I'm telling you, that is somewhat of an effective strategy sometimes. If you have somebody that has a micro influence and you're looking at their lives and they're doing Instagram Live and there's 100 people on there, well, you might want to invest in somebody saying, will you take out some time of your day and let me do a joint live with you? I'd be happy to pay you for your time. Or we can leverage different platforms.
I think that's, for sure. And let's break this down a little bit because, all right, so let's start with social media, right? That's the most important aspect of it. Let's do this. Social media is very important, right? So there's two ways how you can promote on social media. Organically and paid, and you can do a hybrid approach, right? Mm-hmm. But organically is vitally important because that's something that's going to take longer, but that's more community feel. That's our pathway is the organic path, right? Creating content that's different from other people, important to be creative, engaging content, regularly scheduled content, being consistent, not selling a product first, selling it later, building a trust community ad, and then selling it on the back end. And then, of course, there's the paid ads, like you said, paid ads or paid collaborations, stuff like that, right? Do you want to touch on those aspects from the organic standpoint and the paid standpoint and maybe the hybrid, just for people that's trying to figure out social media?
Yeah, absolutely. So organic is that hustle. Like you are doing what you can to build your following and build that's why I think sales targets are important sometimes, because we have a target of getting this product or service in the hands of as many people as possible. It doesn't look as cool to go to your neighborhood and record yourself going through the neighborhood, knocking on doors, saying, can I clean your house? Can I cut your grass? Would you like to buy this product? But it does make for good content. Listen, I want some of you all to turn your entrepreneurial endeavors, your promotion, into content, meaning I'm going to go out, and I actually just dropped some merch, right? So I'm building out this whole little story on how I used to sell T-shirts out the back of my trunk, and I'm going back to it. But I'm not doing it because I need the sale of the sweatshirt or the T-shirt, but I'm turning into content. I'm hoping that I have a day where I go up to a bunch of people and I try to make a sale, and a lot of them say no. Well, why would I hope that I fail in that way? Well, I'm gonna have a camera there and I'm gonna be documenting the journey, because it makes for better content. For me, I'm not embarrassed by the no. I don't get anxiety about a no, but this is me going out, coming up with a creative way to sell my product. Sometimes calling somebody saying, I was on this Earn Your Leisure Live, and they said I got to call 5 people today, so and sell my product, because I haven't really been selling like that. Would you like to buy my product? I'm just doing it because Earn Your Leisure told me this is one of the strategies. It lowers that anxiety of the promotion, because most people are just afraid of a no. But now at this point, it doesn't matter what the answer is, because you are creating content, you're building a story. So that's actually how I started, y'all, like just out there hustling, grinding, creating content of the journey. Please, please, please do not be afraid to promote and get a no. This is a story, and people buy my book because I wrapped in all of my failures into this book, and I sell all my books for $30, meaning I sold all my failures for $30 a piece, and I continue to tell it. So keep going through the story, keep all that. Like, I know y'all still got them living room iPhone interviews up. It's the story.
Yeah, and shout out to Anthony Jackson. He said brand awareness, direct to consumer, is very important. But there's a part of it, and you can probably relate to this directly. Building the brand while building yourself as well, right? Because people need to know kind of who you are in order to trust you to affiliate you with the brand. I think Pinky's done a really good job of that, where you can see there's a brand and then there's the personality. For a while, your Instagram was Sleep for Suckers, Sleepers for Suckers, Sleepers for Suckers. Recently, you changed it to These Shins. Talk about that path of building both and wanting to separate the two, or maybe not separate, and when is the appropriate time?
Yeah, I think for me, it went so far away because, for one, when I started selling the T-shirt brand, it wasn't about me at all. It was about the T-shirts. So, like, my Instagram name, Sleepers for Suckers, my even if you looked at my social back then, it wasn't, my whole social, kind of like how Support Black Colleges does it, it's all about the product and all about the brand. And you could do it a couple ways. Because I was shy, I was a little nervous. But Sleepers for Suckers is the T-shirt brand that I wrapped my entire world around. My whole brand was about this. And I wanted people to not I don't ever want somebody to be mistaken and think that this isn't what I do and this isn't where my heart is. Some people tiptoe into entrepreneurship. I'm telling you, if y'all gonna build something, your whole brand needs a whole nother revamp. Your whole brand needs to be about it. Your whole world needs to be about it. But now it's been so far removed since I sold Sleepers for Suckers t-shirts, it just didn't make sense into where I'm going right now. You know what I mean? So that's why I decided to change my name, because the people that follow me now, I don't know what Sleepers for Suckers is, but it sounds like a cool name. But it was a t-shirt brand I built a while ago. So that's why I changed. However, I changed my name, but I never stopped changing I never changed the message.
Yeah, I feel like just for the new entrepreneur, maybe you can give them some advice here. They'll have a page and then it'll be the product, but you'll see pictures of their kids and have nothing to do with the product. Or they might have went to Aruba and that's on the page and right? That's separation of business and personal. Yeah. Thoughts on that?
Bruh, social media is not unless you're building a personal brand. If you're trying to sell a product, everything on your page needs to be about that product. Listen to this, and I want y'all to take notes. Social media is either a tool or a toy. It's either a tool or a toy. My whole life, social media has been a tool. I use the tool to build stuff. Sleepers for Suckers every day on my page. I don't care to share that me and my friends are out at the club. So what? That has nothing to do with my business. Everything needs to be strategic. So some people use it as a toy. You scroll and you play on social media and you're looking at IG models and you posting funny memes that does nothing for your brand. Now, once you really start to understand the brand that you're building, the persona, well, I will throw something of me and my wife on my page because I want people to know that this shows commitment. I don't get nothing from bragging on my wife or posting my wife. That doesn't do anything for me personally, but it does show my audience, this is a faithful, committed man. He's committed. He's willing to post his wife. That says something about my brand. Sometimes I'll post a picture of my kids because what that says is, oh, he's a family man. I'm not just trying to show y'all my kids. I don't care if you ever know what my kids look like. But everything I post on my social media is to shape the mind of the person watching that this is who this person is. So I'm asking y'all to take social media more seriously. Stop treating it like a toy. Stop playing with social media. If you want to share stuff with your family, do that on Facebook or in the group chat. If you want to share funny memes, text it to your friends. But keep it off social media, unless it's a part of the brand and the idea that you're shaping in the mind of people. That's how I approach social media.
And then also before we leave this topic, I also wanted to, the promotion comes in a few different ways, right? So you talked about of course, social media, and then like email, text, marketing. That's marketing, right? But the best way to actually market is through word of mouth. So you can create that organically just by creating good content or just creating a buzz and people just talk about it, or you can be a little bit more forceful. So for people in services, vitally important to always get referrals, right? And that's something that is a lifeline for entrepreneurs, especially in the service-based industry. But I think people kind of go about it the wrong way. They just ask like, do you know anybody that I can work with? And the human response is, let me think about it. And what that means is that they are never going to get back to you with anything, right? You got to have a system in place to actually kind of pin them down for referrals, right? Like, so it's like, okay, do you know anybody that fits this criteria, right? And then kind of put them on the spot. Like, do you mind giving me their information now, right? And they're like, well, what they're going to say is, I want to talk to them first. No, I would actually want you to talk to them, but I know that you're busy, so I don't want you to forget. So if you give me the information, then what I'll do in 2 days, I'll contact you to see if you spoke to them first, which is best practices anyway, because if not, then it's just like a cold call, right? So you got to kind of make it a little bit uncomfortable to get the referrals, but it's worth it. In any type of service or sales business that you're doing, that's a way of marketing too, because when they're contacting somebody, they're not just going to say, hey, I gave this person your number. They're going to say, hey, you know, I've been working with this lady. She did my hair. Let's say you're a hairstylist, right? Hey, she did my hair. You know, she's really dope. And, you know, she asked me for a few of my friends. So I gave her your number. And then they're going to say like, well, is she good? Yeah, no, she's good. They're endorsing you already, right? Yep. So by the time you call her, it's already soft. It's not like a cold call. It's a warm call, right? So understanding how to position referrals is vitally important to the success of a business. And that's a form of marketing that I think people don't look at it as marketing or promotion, but that's actually probably even more efficient than buying a billboard, right? Like if you get 10 people to really tell 3 people, now that's 30 people that you can actually have in your pipeline. You always want to have people in your pipeline. So the referrals, not talked about enough, but for entrepreneurs, vitally, vitally important.
Absolutely. And I think the prerequisite to that is actually service them well. You know what I mean? Like, make sure it's a referral where, like, when they call, like, yo, your man's called me about a bit. Yo, are they good? Make sure they're saying, yo, it was an amazing experience. But I mean, yeah, he's cool. He definitely, you know, it was cool. Make sure you're providing an amazing service. But I think at the end of the day, the goal is to spread your message to as many people as possible. And I think the missing piece to a lot of people is maybe we're always looking for people to give us the answer. But if you sat down for 10 minutes, undistracted with your phone on silent, you'd come up with a creative way to get in front of more people. I'm like, yo, go promote your business. And, you know, how many sales could you make? And this young lady said, well, I could probably make 3 sales by the end of the day. I said, well, what if I said I was going to give you 10,000 to make 5 sales by the end of the day? Could you do it? She said, yes, which means something's missing on this internal motivation that you don't want to get out there. You can't be like a secret agent about your business. You can't keep your business a secret. You have to make it obvious that this is what you do. You got to make it obvious. So believe in it, man. Push it. Promote it.
But you also got to keep your clients.
100%.
That's client retention is vitally important.
Facts.
Right? And getting, like, even that, what you just described, people, that's how they look at, like, they got to hustle. I got to always meet new people. Not necessarily. If you keep a pipeline of people that you have in your ecosystem and then get referrals from those people, you're not in that same hustle trying to get, like, if you have 100 customers that's coming in, right? Let's say whatever, and you satisfy those 100 customers. Periodically, you ask them for referrals. They give you 2-3 referrals at a time, right? Before you know it, you're going to have 300 customers off that ecosystem of the 100 customers versus off their referrals. Now, you're not necessarily, you don't even have to actually go out and hustle and market. But if you don't look at it from that standpoint and you look at it as a revolving door, that's not a sustainable business model either, because you're going to get burnt out doing that, right? Like if I just close you, the worst thing in sales, the worst thing to do is to get a close if you don't have a system in place, because you know that now you're broke again, right? No matter how much money I made off of you, I'm broke again because I'm only as good as the last thing that I kill. So, but if you got the ecosystem and you can keep this, and you got to make sure that you can, a client usually buy, if you get one customer, they got to buy multiple different products, right? Like if they like you, so it's like if they subscribe to your subscription-based model, right? Your job is to, okay, we got to sell them merch because they're part of the community. We're going through the event. They got to come to the event because they're part of, the tribe, right? They got to buy my book when the book comes out, because before you know it, you've sold one person 6 different things.
100%.
That's important too. A lot of people leave money on the table because they don't look at it like that. They just look at it as a revolving door. I'm selling one thing. I sold a ticket. All right, okay, keep it going. Nah, that client should be not only giving you other clients, but buying multiple things across the ecosystem.
That's the recurring item, right? So we talked about the recurring monthly, but the recurring item, right? So like now I have a new item. It's a new year. There's a new product, right? It might be, like you said, it could be an event. It could be a tour. It could be a book. It could be an entirely new product that we're offering that we've never done before. But you got to be innovative. Like that's one of those things too. But as I'm listening to y'all talk, I'm wondering, for that person who doesn't come from sales and that person who might be an extreme introvert, like what are the things that person does in this space? Is it find a partner with those strengths, or are there some strategies that they can use to actually try to, I don't know if it would be fair, but try to combat some of the things that they lack when it comes. Because if I'm a 9-to-5, I've never been in this entrepreneurial journey. This is all new. How do I get these skills? How do I accumulate them?
Yeah, I mean, I think it's going to come down to a decision, because somebody put it in, it was earlier in the conversation, they put it in the chat, but I'm bad at sales.
Yeah, I saw it.
Get better at it.
Right. Exactly.
I mean, if you want to walk around with that handicap for the rest of your life, that's up to you.
If you tell yourself you're bad at sales, you're going to be bad at sales.
100%. I mean, that first 100,000 you can make off sheer hustle and on your own. Now, making millions takes, a little more leadership and, building team and all that kind of stuff. But we got to start somewhere. If you're not an entrepreneur, but you want to be an entrepreneur, I'm telling you, go get a product that you think people are going to like and attempt to make a sale. Someone's going to buy from you. But I don't want you to get upset when your friends and family don't. So there are people that get upset because, my best friend didn't buy from me. I tried to start a business, but nobody supports me. Well, your business shouldn't be built off support anyway. Your business needs to be built off you solving a problem for people. Find more people to solve a problem for, and just try to make a sale. Whether you win or lose in this scenario doesn't matter. How much money you make doesn't matter. But you should be proud of yourself that you started, you went through the process, you got this idea out of your head and into the world, and now you've asked some people to buy. I don't care if you ask one person a week. Well, next week, go ask 2 people. I don't care how many people actually buy. You just need to get in the game. You cannot learn how to make $1 million on a webinar. You can't learn to make $1 million on this hour-and-a-half live. You can't learn how to swim by reading a book about it. You got to jump in the pool, almost drown, kick your feet frantically, get out one day, and then someone tells you what you did wrong. Do you jump back in and you get to tread a little bit? It's a lot going on. Do you get out and you take another lesson? Maybe you watch some more videos. You learn. If you have a handicap that you know is keeping you back, you get to decide if you keep that handicap or not.
And you have to work with somebody else. That's important too. If selling is something that can be learned, but it also is a skill. It's like anything, right? Like some people are more talented than others when it comes to actually being able to communicate, sell, play off of emotions. So if you just cannot put it together to do that, then you have to find somebody that can do that for you, because there's no good. You can't have a business if you're not selling something. So if I would say like Dave said, you got to try it yourself. You got to, but if all else fails and you completely just cannot do it, then you have to find somebody that's strong where you're weak at.
Mm-hmm. Or join somebody else's business. Yeah, ain't nothing wrong. First off, it's nothing wrong with having a job. And there are people who have jobs that make more than all of us on this line. They add value to a company. A CEO doesn't necessarily own the business, but there are CEOs that make $100 million because they solve a problem, they add value. Listen, the only way to get rich is not through entrepreneurship. And some of you don't need to force it. Maybe you've declared, making a sale is not for me. However, me putting an organization together or a system together for an existing company, that will be my bag. Well, maybe you come in, add some value, and you ask for equity for your skill set. You can still be an entrepreneur, but you're adding value for equity in a particular company. I do that. I've been doing that lately, where I have a skill set. I don't have the time and capacity to be out there hustling, but they hustling. I have insight. I have relationships. With the things that I have, I can be a part of this. So I don't want y'all to think that the only way to become successful is to even get good at sales. If you desire to build your own thing, it's some things you just got to do. But ain't nothing wrong with joining somebody else's movement. Ain't nothing wrong with being a part of somebody else's company.
There you have it. A lot of good information I think people can utilize in so many different aspects of starting their journey, or if they already are on their journey of entrepreneurship. So, Dave, always a pleasure. Any last words that you would like to say?
Yeah, man. The next 2 months are very, very critical to your success. So we got November, December coming up. Some of you may not need to focus on building something big this year, but maybe you have these next 2 months to lay a foundation for an explosive 2025. So what we'll do over the next 2 months is identify the things we need to get better at. Maybe we spend the next 2 months figuring out what product or service we're going to offer. We don't got to rush it for Black Friday. We are preparing ourselves. We are saving some money to put into this camera that we're going to get because we're going to start this new career of photography. The next 2 months are going to be very, very critical to your success because these next 2 months lay the foundation for the following 12. And if you will take the next 2 months, November and December 2024, seriously, coming up with an idea, improving your skill set, working on your networking, asking all the questions that need to be asked, I guarantee you 2025 will look so much different than every other year of your life. So we about to lock in next 2 months. Let's get to it.
Thank you, Dave. I appreciate it. And community is vitally important. That book that I said, 12-week year, we actually read that book in our book club. Mm-hmm. We have a book club at EYL University. So this at midnight, that offer, speaking of sales, that offer that we ran on Market Mondays, as far as this is the last sale that we're actually doing for the year for EYL University, is over. And the code is Market Mondays at EYLUniversity.com. And sometimes in life, Dave, you need to be part of a community with like-minded individuals that can help push you. You learn from, you can find business partners. You got to be part of a tribe. You can go fast alone, but you can go far together. So EYLUniversity.com, code Market Mondays, midnight, Cinderella, the slipper.
When the clock hits November 1.
Dave, always a pleasure, my brother.
Love is love, man. Appreciate you.
Thanks for having me, gentlemen.
All right, y'all be safe. All right, man. We got to say goodnight to the folks, man.
All right, guys. Thank you, guys. Play the replay. Subscribe to Earn Your Leisure on audio podcast outlets, Apple and Spotify, if you are listening on the audio side. And we will be back. We'll be in Houston on Saturday for the in-person event for UI University. And of course, we'll be back on Monday with a very special episode of Market Mondays, presidential debate. We're bringing some very high-profile people on the Republican side, on the Democratic side. That'll be the last opportunity before Election Tuesday.
Yeah.
So, very big moment.
And we still got the market. We got still the market. I mean, today was crazy. So we definitely got to talk about that. We just saw what happened with Super Semi. So yeah, a lot to talk about by Monday, man. And it's pre-election, which is crazy. I think early voting ends in New York on Sunday. Shout out to everybody that has taken that liberty. Should be an interesting week ahead.
There you have it, guys.
Love is love. We see y'all. Peace.
Okay.
Let's do it.
Happy Monday.
Blessings. Happy Monday indeed.
Sure, for sure. Top of the top, everybody. Man, it's been a crazy week. But first and foremost, thank you everybody that came out to the Art Basel activation.
Absolutely.
Earn Your Masters. Shout out to Ally, United Masters. Thank you. Thank you, guys. Shout out to everybody that took advantage of the Market Mondays deal. You will be getting information shortly. So I know, we got a lot of emails about or DMs about different information as far as the event and everything. So you'll be getting information shortly. Yeah, thank you to everybody that took advantage of that. I'm sure you're going to get 10x the amount of value that you paid for that. Absolutely. And then also wanted to give a big shout out to everybody that's been checking out Blackout. Last week's episode got a great response, and we've just been on a really good roll with Blackout. So thank you to everybody that checks out Blackout.
Amen.
That taps in, that champions it. We appreciate it. So this week we're back with Blackout Wednesday, 10 o'clock Eastern Standard Time, and then Thursday we're going to resume our live series of Earn Your Leisure. We haven't done the live in a few weeks, but we're going to do, this is very timely, how to get started in crypto. With a guest of ours who's going to be a familiar face over the next couple of weeks, Caleb Silver.
Yeah. So
this is not to debate if XRP is better than Solana or what the next, this is because I still feel like the average person the average person is not invested in crypto and still probably does not understand crypto. So this is going over what crypto means, going over what the Cold Wallet means, going over what Coinbase means, going over the difference between Robinhood and the Bitcoin ETF, different resources, different links to actually, learn more how to set up the situation. So this is going to be like Crypto 101. Crypto 101 onboarding for anybody that's interested in, even if we're going to talk to Kristen a little bit, but even if you only invest in Bitcoin, you should still be knowledgeable about cryptocurrency if you're going to be in the space. Yeah. So this is going to be like, we've done this before, like for real estate and stocks, and we've done this crypto a while ago, but this is going to be a refresh. Since it's been in the news so much, we're going to be talking everything you need to know about crypto on a very easy, understandable level. A lot of resources, breaking down terms, definitions, the difference between a coin and a token, the whole thing. So that's Thursday at 9 o'clock Eastern Standard Time. And today we got a special guest, Chris Johnson, somebody who's been making a lot of news recently as Bitcoin had passed over 100,000 last week. So We're gonna be talking to him. He's a Bitcoin enthusiast.
You want to talk about somebody that's just been consistent in their belief,
to say the least. So we got a lot going on these days. But okay, that's that on our side. Ian, anything that you would like to say?
Is Hawk Tua going to be on with you guys and Caleb Silver, or should still hiding? We'll talk about that later. If you want to get rich in the market from investing long term, go to ianinvest.com. Where to get in, where to get out. Our stock club call will be tonight at 9 p.m. Central. If I made you money, please put yes in chat. Prices will be out Friday. A happy birthday to my brother Pierre. Appreciate you, love you. Congrats to my guy Drew for opening this restaurant in Philly, Black Dragon. So if you're in Philly, support my guy in this restaurant. Love you dearly, brother. Let's have an amazing show. And yeah, that's it.
Yeah, let's run it up. Well, you know how this works, man. Do your own research. As always, man, our content is intended to be used and must be used for informational purposes only. It's very important that you do your own analysis before making any investment based on your own personal circumstances. You should take independent financial advice from a professional connection with, or independently research and verify any information that you find on our show and wish to rely upon, whether for the purpose of making an investment decision or otherwise. As always, this is a message brought to you by the good brothers that earn your leisure and the good brother Ian Dunlap, the master investor himself. Continue to do the research. And a lot of y'all doing really great research, and y'all seeing the returns on that research. So keep doing it. Keep spreading love. Keep spreading great information. Let's keep growing. Let's keep making money.
For sure. So let's start. I wanted to start a little off topic because I do think, I watch a lot of these documentaries, and I do think this is a valuable lesson as far as business. But we talk about patience a lot. But the story of Saudi Aramco is a very interesting case study. And we've talked about Saudi before as far as that's one of the most valuable companies in the world. A little known fact is that it was actually an American company out of Texas. And it was Aramco. That was the name of it.
Aramco. Yeah.
And they was able to purchase through very shrewd negotiations and patience. They was able to purchase 100% stake. So I think that that's an interesting conversation to have, because I feel like we're going to talk about cryptocurrency, and we could talk about like the full version on Blackout, but I think patience is something that is vitally important. And that's what they said, like, as far as the leadership in Saudi, they had a lot of patience. So I want to preference that, because I feel like whenever there's bull runs in stocks or crypto, everybody wants to get in, but then when it goes down and they start to lose money, and then all the principles goes away. So we could talk about fundamentals, we could talk about technical analysis, we could talk about, but if you don't have the discipline and the patience, then you're going to get washed out every single cycle. And that's real estate, that's crypto, that's stocks, that's business, no matter what. So I think it's just important to kind of start the conversation off with, you have to have patience long term. Mm-hmm. And like I said, that's a great example, because I mean, they waited out probably 40 years to purchase the company and outright. But now, Saudi Arabia is one of the most wealthy countries in the world, and that's mainly due to Saudi Aramco. And that's a company that they didn't even, it's a relatively short period of time too. It's like 100 years, right? Less than 100 years. And they had no knowledge of oil at all. They came in, they discovered it. The Texans and America ran the show, and they were just very patient, and their patience paid off to the tunes of trillions of dollars, right? So, Ian, talk about just, like I said, just patience. Like, why is it important to have patience when you are looking to be in business or looking to be an investor?
I think the greatest lesson that we all need to know is, like, all the upside is in holding for long periods of time. I love doing the show, love engaging with the fans, but the number one question I get is, well, when are you going to cover something different? The most important indicator is holding for a 10 to 40 year period, though. I don't know how to stress it, but once again, Jerry Jones has not sold his stake in the Cowboys. The Buss family has not sold their stake in the Lakers. No one in real business ever talks about a 1 to a 4 year flip. they're looking to hold for a long period of time. So, and also too, America used to have a longer viewpoint on business, and we became too short-sighted, which allowed a lot of companies and countries to overtake us. Even in India, while our middle class is dying, India's middle class looks like what ours did in the 1970s, 80s, and 90s. So whenever you have a competitor that's thinking too short-sighted, they're always going to get beat by a person that's thinking long-term. And whatever business you're in, the most important thing to do is to hold for a minimum of 10 years. And I can't stress that enough. That's why we show up here every week as an act of discipline to continue to do this show, continue to invest. All the gains, like you'll start to hit your first run around that 10-year period. If you look at NVIDIA, which is now the number one return company in this sector, everyone put in chat for the last 22 years, what has been the return of NVIDIA? But if you missed out these last 5 years, you would have missed out on probably 10 or 15,000% gains. You don't want to do that. Like, that's why I ask you guys every week, what media properties have you sold off? Better to keep them for a 10-year period because the valuation of them is going to be a lot higher. Like, imagine if Steinbrenner would have sold the Yankees 5 years in, 6 years in, how big of a mistake that would have been.
Yeah. Can we not talk about the Yankees right now? I'm going through something.
Please. I'm sorry. I apologize. Lo siento.
Yeah, I mean, patience is obviously one of those assets that you have to have and invest in. I think sometimes we get misconstrued when we start seeing things happen, I guess, relatively quick to the human eye, right? Like we see people gain wealth and it feels like it happens very quickly, or we see mergers and acquisitions and it's like, well, why didn't they hold on, right? I think of YouTube, I think of even an Instagram, or I think of an Activision Blizzard. We see these mergers and acquisitions and we're like, well, they didn't hold it long term. Yeah, but those are different and very unique situations. But to accumulate wealth, especially for us, I'm not saying us, our community, especially for us, we have to have a long-term vision for it, because it's the only way that we've seen that's been proven to have wealth. You look at, I know you talk about Aramco, but the sports analogy is a perfect analogy. If you look at the NFL, all those owners, how many of them are selling? Right, they hold on to these entities. We talked about the Giants during the Vic episode. They've owned it, the team since 1905. Right, there's a reason why they're starting to take private equities, because they can't. The money that they want to liquidate, it's tough because they won't sell. So you got to have that long-term mindset. We're starting to see it in our community, but we need to see more. We need to see more businesses that are being built that have sustainability, but also have scalability to be long-term. So that's another piece of it too. So. Yeah.
And I know we have the fear and greed index, but I find it fascinating. They never show us the fear and greed over a decade. It's good to know what the fear and greed cycle is over 1 year, but if you can find it, the real gem is to look over a decade span to know when to invest. So when we are at maximum fear, that's when you want to load up. And then when we're at maximum greed, that's when we want to start to sell off. But nothing in the short term really matters. It does not matter at all.
Yeah, for sure. So, okay. All right. So now let's talk about some pressing news. TikTok ban was upheld. We talked about this months ago.
I remember.
And the judge upheld the appellate court's decision to effectively the company has to be sold by January 19th to an American company, or
be banned.
So first, I've talked to people in the space. It's a few. I don't think this is going to happen.
I was going to start with the
same thing I've heard.
Yeah, both were very adamant that it wasn't going to happen.
Yeah, I don't think it's going to happen.
Go there. Let's start.
I think it's going to be a variety of different things that can happen. Trump is coming in with a new regime, and a lot of his friends are billionaires. So this is an opportunity to make money first and foremost, because TikTok has a lot of users and they make a lot of money. So I just don't see a world where TikTok just disappears in the thin air. They'll probably kick the can down the road, get a last minute
amendment of some sort.
To revisit the situation in 6 months while we sort out how they can, divest the company to an American led. Somebody's going to end up. It's gonna. I just don't see it being banned. I don't think that's going to happen. But it is good for Meta, because Meta's stock went up on Friday, Meta stock went up and almost reached like a 52-week high. Came down a little bit today, but I mean, if there's no TikTok, then that would be the next resort. So from a stock standpoint, that is beneficial for Meta, and Meta's been up over 400% in the last 2 years. So Meta stock's been going crazy even before this news.
Yeah, I think there's a few beneficiaries. It'd be interesting. I think the date of the ban going into effect is very key here, right? Like you think of January 19th, well, what happens 2 days after that? You have the presidential inauguration, right? So, I mean, that ban could really be lasting for 2 days if it even comes into place. And so, yeah, the presidential election definitely is going to have a lot to do with this. But somebody's going to make money. That's the key. Somebody's going to make money. And in the event, like we said, short term, we saw Meta go up. But I think there's a few other beneficiaries that we should keep an eye on. The first one being Google.
For sure, with YouTube.
With YouTube and YouTube Reels, when you think about ad dollars and the billions of people who are on TikTok, the ad money that goes into that, if that now is no longer an option, Meta one is a recipient, but right there in the waiting will be Google and YouTube for sure. I think that's going to be important. But a surprise one that we need to also keep, I think Amazon plays a role here from an AWS.
Okay.
From cloud, right? So let's say they have 2 billion users, right? That's a lot of data that needs to now be transferred to somewhere else. Right. And so now you need cloud service providers that are going to help in that service. And so I would look at the cloud service providers in the event of a ban that are now taking on new clients or new clientele to kind of alleviate this process, which is important. And I think Snapchat might be a sleeper too. I know people, I mean, I don't use it. My kids do use it. But those three, right? When you think about social media, you got TikTok, you got Instagram, and then you got Snapchat. So in that realm, if there is a ban, I'm keeping an eye on those for sure.
Two important things to note. One great business lesson is to make your platform or software so good that you really have no competitors. I think Meta can do a little bit better job of making it competitive towards TikTok. But also, Mark made his way down to Mar-a-Lago. And when I saw that this is definitely going to go in Meta's favor one way or another, I don't think everyone I talked to, same as you guys, was like, I don't see how TikTok can be banned. Like it may be short-lived if so. So TikTok, I think, will still be here. But I think in the next 4 or 5 years, I would love to see Meta take away some of their edge for sure. But Mark going down to meet with Trump definitely tells me the stock could be to the moon for the next 4 or 5 years.
I think from a congressional standpoint, it's like one of the things that they agree on. Like something needs to happen with the social media platform, the influence that it's had on our community, but the entire country. I mean, the age demographic, the attention span, all the negative facts that we keep hearing about. I think this is the one thing that they could kind of agree on, like something needs to happen. So we definitely will see.
Well, one thing about there's a few things to note. Trump just appointed, I forget the guys, he's about to appoint, I don't think he appointed yet, but the reason why he went down there is because they're very fearful that there's going to be very anti-social media sentiment within the administration. One guy in particular, I forget his name, but they like, what was the role? I forgot. I'll ask, but he's been very anti-social media as far as regulations, laws. So Zuck trying to cozy up to Trump, I think, is an effort to try to get ahead of that. Yeah, because they know that it's going to be some difficult times ahead. So it's better to have an ally than a foe. And if you know that you got somebody who's going to be adversary in the cabinet, it would be beneficial for you to at least be able to tell your side of the story and try to get in as much as possible. So that's an intelligent move from him.
It's a good lesson. Yes,
for sure. But I also think that, Facebook is one of these companies that just took off and they've been to the moon for 24 months. So you might see a substantial pullback in January, but their long-term projection, I just don't see how their long-term projection still has to be dominant, because TikTok, even if it survives, it's not going to, because the Chinese government, that's the one thing that Republicans and Democrats agree on, right? Like China has a terrible record on human rights. You know how I feel about China. So
we do.
If you're getting all this data, and they said that's what they really want to do is buy the algorithm. All these rich guys, because TikTok has the best tech. They have better tech than Meta as far as their algorithm and everything like that. So it's like, you know, the value in TikTok is really their algorithm. And that's just too valuable to just throw away. It's almost immeasurable how valuable that company is, not just from a user standpoint, but from an algorithm standpoint, and all of the data that they've already collected, facial recognition, everything. So it'll be interesting to play out. But Meta will definitely be a winner. I don't see how they're a loser, but they might be a short-term loser. But long term, they have to win in this.
I think even what you're saying now, like, and it goes back to the conversation we had last week when we were talking about the underwater installation of what they're trying to build around Africa, around India. Yeah, it sounds good for internet, but what really is the focus of it is the data centers, right? Like that is the thing. So like if they have storage, if they have algorithms are inside of these facilities, this is where they're being stored at. That's where the information is being disseminated. That's what's feeding you. The person that can control those or has the most efficient, the ones that are running at the highest efficiency, the ones don't overheat, the ones that can have the most data that can move, those are going to be the winners. And so the company that is competing with you is playing at a bigger scale, right? They're looking at it like, yes, we have a social media platform, but we want to control the energy that provides it as well. So, I mean, Meta's in its prime position. We talked about the companies that are there with them, but the other ones don't have the social media presence, right? Microsoft doesn't, Amazon doesn't, from a social media standpoint.
Nowhere near close.
They're not even close to it. They do, and now they control the information and the infrastructure. They're primed. They're primed to be
if you
on a run.
If you see $100 drop off in Meta stock in January, that's possible.
Oh yeah, well, but in 2 years, yes. Now the other side of it got
on the come up, but they might.
Yeah, I've been going to 887.44 in 24 months.
Long term, but short term, they might have some short term pain, but long term, they're still going to be
fine. If they made it through 2022, fine. Even going back to long term, I think if with the metaverse, if they wouldn't have spent it as aggressively in the beginning, they could have made it work. They just got in, I think, too high of a position, and I think they'll dance back into that metaverse in the next 2 or 3 years.
Yeah, we're going on probably year 4 since that was announced, and so like you think about the capex, then that comes off of it. Where's the money going now? We'll see. But I mean they're positioned in a prime place for the next decade, especially from the informational standpoint and what they're building. The infrastructure that they're building is I mean, it's second to none, man. Shout out to Zuck.
Okay. United Healthcare CEO's tragedy. First and foremost, rest in peace.
Rest in peace.
Very tragic situation that happened last week in Manhattan. And man, it's multi-layered conversation. But from a business standpoint, what is the impacts on not just United Healthcare, but, you know, I guess the industry as a whole?
I think companies overall have to go back to finding ways to do good business that is good for the consumer. When I saw this happen, and there's so many layers to this, but when I read that they have an AI agent that denies 90% of people's plans, it's not good. Of course, it made United Healthcare a ton of money, but ultimately it could be one of the reasons why he lost his life. This reminded me like John Q, for those of you who have seen that movie. But the year 2024 showed a lot, but I think with corruption, with the economy tightening, with there being a lot of uncertainty, the companies that do good are going to benefit incredibly well. And those that are not are going to have a price to pay. So you have to find a way to do right by your audience, customer base, client base, while maximizing profit. And this is why NVIDIA, Apple, Meta, they are hitting record highs because they found enough of a balance to do that. But for healthcare companies that are not doing well, I mean, it's sad, but the other executives have to have their profiles removed and worried about being targeted. But a bunch of these issues in healthcare have been rampant for 40 fucking years. Like in 2024, most of America felt how Black Americans felt almost on every issue at one time. We've been going through this. endless denials and premiums being too high. So when you have mass discrimination like this, it is going to have some blowback, but God rest his soul, prayers and blessings to his family. To even have that shown on social, I think was disgusting. But companies are going to have to make a change to do a lot better, or this is going to happen a lot more often.
Yeah, it definitely, I mean, rest in peace and condolences to his family, his loved ones. It's unfortunate. Definitely felt targeted, felt a little bit retaliatory in a sense, right? When you start seeing the details of the shells having messages on them. But I started thinking about the danger of being in the healthcare profession, right? Which is why the retaliation from the industry was like, let's remove our executive bios. Let's take our executive boards down. Let's stop telling exactly what they have to be, especially if they're going to have a board meeting, because he was going to speak in front of the investors, right? And so that's public information. The interesting part is like, you're the CEO of a company. You're walking by yourself. So, I mean, security detail, especially in that position, because you're right. When a company like NVIDIA might have a delay on Blackwell, it's like, all right, that's a tech issue, right? Or Apple has a delay on something that feels different. But you start playing with the healthcare of people, and you start denying premiums, and you start. There was one report that there was a anesthesia coverage that they weren't going to cover anymore for certain surgeries. These are now affecting not just one or two. You're talking about millions of people's lives, and they have nobody to talk to, right? Like you're talking to the bill collector. The doctor is going to tell you go to the insurance, and so now the people that are head of these companies almost become targets in a way, right? If you start looking at it that way. And so an event like what happened last week, unfortunately, has happened. And you don't want to see more of it, but you're right. Like there's certain business practices after a certain while, it's like, we got to get these things in line, right? So that the public feels safe. They feel like they're being taken care of, because what's the point of it, right? If the customer at the end of the day feels like, hey, this isn't beneficial for us anymore, things like this can happen.
Yeah, I mean, I put it in Stock Club, but he had over 10,000 instances of people being denied coverage. 10,000. Like, look how many lives. And even with that, with his murder, why did it take for him being murdered for another company to say, now we're going to cover your anesthesia? What? So let's look at the rest of the companies. If they're doing it at the highest level, one of the biggest publicly traded companies in the world, what about the lower tier players that are not publicly traded and discrimination is happening? But we've heard these stories in our community forever. It's just no one listened to us. Now it's becoming mainstream.
Yeah, for sure. Well, like I said, it's an unfortunate situation, but it is protocol for Fortune 500, Fortune 100 company CEO to have security. We've witnessed that firsthand. So that was a breach in security, and that's why you need security. Because if you're running any type of company, when we met Vlad Tenev, he had security. So any type of public profile
figure,
you're liable to have some issues, or to try to get kidnapped. Anything can happen. So that's definitely a lapse in security. I think that's something that they're going to have to answer for, the company. I'm sure that the family is going to have questions about why he didn't have security, right? Like walking down the street by himself, like, you should probably not, that should have never happened. But
how did they know he would be out there at that time for that? Maybe we'll talk about it on Blackout, but there's a lot of fishy. I'm going to stop there. Don't worry. God gave me this code for a reason.
So what's the top 5 stocks to hold in your portfolio?
I'm going to remind you, VO, VTI, Apple, Microsoft, NVIDIA. Going back to holding for a long, I know y'all want a new answer, but sometimes new will lead you to destruction. I know some of you want to talk, we'll talk about Sound AI and Hims has been on a tear, cool. But part of the reason why people get rug pulled, like in that Hawk Tuah meme, is that you're searching for the sensational thing versus the thing that is going to last you a lifetime. And I don't know, going into our 5th year, I don't know what to tell you. Like, if you want to fall for companies that are not doing incredibly well, Eli Lilly will be in that mix for sure. Should you always be on the hunt for the next new winner? Yes. But until one of those fall off, there's no reason to replace them. Now, I can't wait for the day where I can say, Apple's no longer good. I'm replacing Apple out of 2 Tech 2 Index so you can see that I stand on this business. But Apple, Microsoft, NVIDIA, VOO, VTI are the 5 to invest in. If you want another company, Eli Lilly, superstar, rock star company, great leadership, great products, great moat. And same in the crypto space. Like the ones that are best to invest in have been the best to invest in for the last 5 or 6 years. That won't change too often.
Okay. Ever since we had the conversation about Apple and its potential dip, it's just gotten all-time high.
Stronger and stronger.
It's just gotten stronger and stronger. And
they were old faithful, though. Y'all be looking for new things to swap out in your portfolio. This is how some of y'all end up in disaster in real life. I've been with my girl 2 years, but I got a new girl. Okay, now you end up with no girls and no money. Same in portfolio. Keep buying the same ones. Come on. But what do I know?
Stay there.
Yep. Stay right there.
Hyper focus. Well, what do you? Because we're gonna bring Chris up in a little bit, but before because his thing is he only buys Bitcoin.
Mm-hmm.
But there is something to be said about hyper focus because most people that make make money on one thing. So it's like Mark Zuckerberg became a billionaire because of his stock in Facebook, right? That's how he became a billionaire, right? And you can say the same thing with almost any of these company CEOs. And, that's how, NVIDIA went up and all of those people that became millionaires because they were employees from NVIDIA, that was because they had NVIDIA stock. Not because they diversified, because they had NVIDIA stock. And the same thing happened with Apple and the same thing happened with Microsoft.
Microsoft back in the day, yep.
Yeah, a lot of these companies, when they got filthy rich off of one thing. They didn't get rich by spreading it out across but that's also obviously there's more risk involved with that, right? But that some people think that that's better way to go, like just focus on one thing and really focus on that one particular thing. And Michael Saylor said something about this. He was like, it's like having a kid that's talented in basketball. If you have a kid that's talented in basketball and they're showing signs and they're promising, you don't get them swimming lessons and karate lessons and tennis. You double down on basketball and you get them personal training, and that there's no benefit in trying to say, okay, well, if you don't make it in basketball, then maybe you'll be a good tennis player, right?
Pickleball player. Yeah.
Exactly. Like, you focus on that one thing, right? So what's your thoughts on that?
You don't have to believe me, but remember when I said Warren Buffett said it in the Berkshire meeting, diversification is for people who don't know what they're doing. That's true. Put in chat, what did Rockefeller get rich from originally? Then Carnegie, if you go to the titans of business, they all have hyper concentrated. So I think a lot of times there's the truth that is told to the public to pacify, and then there's the real information that happens behind the scenes. Even for us, me doubling down on Red Panda, you guys doubling down on Earn Your Leisure, that has paid dividends. Zuckerberg investing in Meta has paid dividends. So I think once you find an asset class that works for you, you put all of your money, attention, and focus. And the thing that Cuban has said, you only have to get right one time.
Mm-hmm.
You don't need 16 ventures to work. Like, we've been fortunate to have a bunch of things work in our favor, but everything's centered around a core. So when people try and want 30, 40, 50 stocks, I'm like, it's because you don't know how the other ones are going to pan out. Like, I know what the multiple for Apple should be by 2040, and NVIDIA and Microsoft and Vanguard and BlackRock took over crypto. So that's expanded their portfolio. So I think too oftentimes people think when you hear multiple streams of revenue or income, you think it's to do different things, but you have to find to make revenue off of one item in a bunch of different ways. So it's always been the way to go. Diversification is a distraction to tell you from how to really build wealth, in my opinion.
So here's the one caveat, right? Maybe an asterisk. I would say the right diversification, right? Because if we're talking about like the guys you mentioned, Zuckerberg has stock, the employees has stock in NVIDIA, but he's diversified in companies, right? So like, yes, all his nest egg wasn't in Apple, but Apple's his largest shareholder, right? So American Express, Coca-Cola. He didn't try to find 40 different companies. He said, these are my cores, right? This is what I like.
But even in the beginning, going to the 60s, when he first built that fund and it took scale, he had 6. Peter Lynch.
So it's not a large majority of companies he's looking at. He's hyper-focused on 5 or 6. And it's like, all right, well, I can focus on these. These are the ones I can concentrate on because I can actually follow them. And we said this for the past 5 years. It's tough to follow 15, 20, 25 companies.
Impossible, bro. To actually do all the filings and all. Yeah.
So when people start trading 5, 10, 15, you start getting to 25, 30, there's people with 50 option calls. This is tough to track, right? That's when we're talking about you've over diversified. Now this is becoming something that is not even manageable. You got a core 4, a core 5 or 6. I'll say like 10 to 12 at the most. Yeah. Stick with those. All right. And you might just have to wait and just be patient. Like going back to the first thing, be patient with those companies, wait for the right time and execute when it's time.
And even with 2 Tech 2 indexes, people will say, well, if you don't believe in diversification, why use 2 Tech 2 index? What percentage of VOO is made up of tech and what percentage of VTI? If you go look, there's even hyper focus there. If you look, there's some diversification because the portfolio managers will switch certain things out, but there's always been a focus on a particular sector. For me, it's been tech. So, just double down on the assets that you know that are working, and don't deviate from them.
Important.
All right. So, but how many is how many is too many? Because some might say that the theory is like 4 is too many or 6 is too many.
Well,
I think once you get past 10, it's too much. Yeah. I think past 10, I think you can manage 4 to 6 with no stress. 8, you start to teeter. Even in trading futures, I told everyone at Red Panda, trade ES, ZB, bond, and the S&P 500. It makes it super easy. Then you got a NASDAQ and UB, which is, of course, the NASDAQ 100 and another bond. Like the simpler the structure is, the better it is to manage. Because most people can't find lightning in the bottle 10 times. If you can, great. But I think 4 is easy to manage. Once you get to 10, 12, 15, 20,
it's too much.
A lot of trouble.
Yeah, and that's the thing is right. Like, so I'll say 10. I'll have 10 to 12. And if there's a new company, like, and we'll hopefully we'll speak about it later on, then there's a company that's going to be leaving that's not performing, right? So like when I talked about DraftKings, when I talked about Disney, right? There's other companies that I was invested in. I'm like, all right, well, they're not performing. There's an opportunity over here. I'm not saying like let's sacrifice the plan. Let's add to here's number 15. No, it's 12. Something has to go. Something's not performing. Yeah. So you got to stick to your plan. But when you start getting over that, it's going to get hectic.
All right. Well, without further ado, let's bring our guest up. Can we?
My dog.
Yeah. What's up, my guy?
How y'all doing?
We good, man. How you feeling?
I'm good, man. Everything's good with me. How y'all?
I'm good, man. Happy to have you here.
I imagine this was going to happen with you sitting by the poolside saying, I told you so.
The pool right here, man. I should have been chilling by the pool.
No, it's all good.
No, it's all good. So Chris Johnson, first time actually on Market Mondays. You did InvestFest for us a few years ago. And the reason why I wanted to have this conversation is timely. Bitcoin pulled back a little bit, but last week it a historic moment when it crossed over $100,000. You've been a very strong advocate for Bitcoin and an investor, and you have an interesting story. I'll let you tell it, but I believe last year you sold a lot of everything that you had, and you put a lot of your portfolio into Bitcoin, right? And you kind of like documented how that's worked out for you. I believe you put $6 million in, and now it's like 17 million. Is that correct?
Yeah, well, it was less than that. So 6 million is where I started at the beginning of this year. So looking back to last year around this time, or even before that, it was like 2 million. You know, so I bought a lot of Bitcoin 2022, when it was down at like, it started at 20,000 and as it just fell down to 15,000.
A good level to buy.
Yeah. You said that too. That was the level. So that's when I started like unloading, and I'm getting out of trades. I'm getting out of my dividend portfolio. So to bring you guys back to like the full circle. So I've always, like most of us, have been on this like get money, right? So that was my journey, just get money. So I'm building brands, I'm, building online brands. And then 2018 comes and I'm turning to like, I need to store my money, So getting money is one race, storing your money is a whole different ball game with different rules, So I'm doing that. And then the pandemic hits and I'm like, all right, I'm just going to buy up these assets, they'll recover eventually. I know that the government's got to interject a lot of money and, save the market. So that's what happened. So I'm very public about it. I have a whiteboard and I'm just like, hey, I'm buying these stocks, and I'm going to sell them when they get back to 80% of whatever they fell from. So imagine you have a $100 stock, it falls to, $40. I'm going to sell it when it gets back to $80, So I'm just buying, loading up. And then in that, I would buy Bitcoin, but it was kind of like trading because I was thinking of Bitcoin like a stock. Right. I'm thinking of Bitcoin like a stock. So I would buy in, sell out, and which actually that started like 2018. I would just buy in, sell out, and I kind of understood the like what was going on in the whole Bitcoin community, but I didn't understand the severity of it until the pandemic. Right. Because during the pandemic, you see how fast, we can create the inflation by putting a bunch of money into the economy.
Absolutely.
So that was like, the thing. So as the market started to recover, 2021, everybody's balling, everybody got money, everything's good. And, I'm kind of like just sitting back, reaping the rewards of all this stuff. And I felt like on my journey, I could always feel like what was coming next. Right. So I always felt like, because I pay attention to what's going on in the world, I always feel like what's coming next. So in 2014, I built my watch company because I'm like, everyone's going to be their own version of Kim Kardashian, right? So Instagram is moving on from, let's say, posting your shoes and your food or whatever you're eating, to eventually people are going to do business together. So I'm like, all right, well, if I'm going to get on Instagram, I need something to sell. So I build the watch company. So then you look crazy at first, and then everybody starts, building their own little brands and stuff. People find me, they buy the watches, cool. Next thing that I was able to see was the market taking that big hit and then recovering. So now 2021 / like beginning of 2022, I'm like, man, I can't see what's coming next, and it just feels like I'm in a rat race. Even though I'm making a lot of money, I feels like I'm in the rat race. You waking up, you trading, all that stuff is cool. But I'm like, there's gotta be, something else, like to take me to the next level. Yep. Yeah. So when the FTX thing happened with Bitcoin and Bitcoin's like falling, I'm like, man, this is like beautiful, this is beautiful. This is the opportunity that people should want, like we just watched an asset fall from $60,000 to $20K, and I've watched it fall from 20 to 3,000, like I've seen this happen before. So I'm like, all right, I'm going all in, but before I go all in, I want to make sure that I'm doing the research. And I'm reading, I'm understanding like what's going on. And then I start realizing this is much bigger than just buy something and then it goes up, or this is much bigger than looking at Bitcoin like a stock, like this is an entire separate system that exists outside of the system that we know already, So like this guy, Parker Lewis, he has a saying that like Bitcoin isn't a hedge to inflation, it's a solution to inflation. Right. So as I'm learning about the network and I'm learning about, like the asset and the network, because they're two separate things, and I'm just dumping my money in, and I'm very public about it because I'm like, I trust the research that I've done. I trust myself. I trust my skill set, my knowledge, So I'm like very public. Here I bought 10 Bitcoin for 20,000. I bought, 7 more for 6,000. Any amount that you put in, your percentage returns will follow mine. And I'm like, I'm public about it because I'm like, this is what I'm doing. I don't want to be one of those people that wait till the market's at the top and then say, oh yeah, see, I should have bought in. I hate that type of stuff.
Yeah. Quick question for you. What do you say to the people who may think that Bitcoin has hit a top or 100,000 is a ceiling and it may be too late to get in?
So I think those type of people, where their like thinking traps are, is they look at where Bitcoin came from, not where Bitcoin is headed, right? So if you're looking at a $2 trillion market cap, $900 trillion worth of assets in the world, and you just like realize like, okay, Bitcoin is not even bigger than the arts and collectible asset group. You know, like you don't think like this thing could be bigger than arts and collectibles or collectible cars, you know, like that's, you know, a few $1 trillion higher than where we're at now, or it's going to like start replacing some of the bond market or some of the stock market. So if you look at the market cap of all these assets and then you see Bitcoin's a little blip and you're like $2 trillion compared to $900 trillion worth of wealth, you know? And, so I think that that's what you have to see, the bigger picture. You have to see where it's headed and not where it's come from, you know? And in that, Ian, where people go wrong is they compare themselves to where they either seen Bitcoin before or what other people got in at it, right? So yeah, you don't want to go, oh, I bought Bitcoin at 100, but this person bought it at 50. Well, the person who bought it at 50 sees the person who bought it at 25, who's looking at the person who bought it at 8, who's looking at the person who bought it at 800, who's looking at the person $80. Like that's like an ego thing where you're comparing yourself instead of looking towards the future.
Chris, I'm a big research guy. Obviously, I saw your post the other day. You said Ethereum distraction, Bitcoin Cash distraction, Solana distraction, S&P distraction, Bitcoin only. When somebody has that level of conviction, I'm always interested to see like what is the research, what was the data point or the information that you saw that gave you that level of conviction?
So what it was is you start pricing things in the dollar, right? You price things in a dollar and everything looks like it goes up. So this was the exact moment where it clicked that everything was a distraction. So 30 years ago, the Argentine peso was 1-to-1 with the US dollar, right? So now let's take the US dollar out of this. So you just see the Argentine peso. So Troy, let's say that you have a company worth 10,000 Argentine pesos, right? Now we're going to fast forward to today. $1 is 1,000 Argentine pesos, right? So if your company that was worth 10,000 pesos 30 years ago, now it's going to look like it's worth $10 million, right? So if Rashad's an investor in your company, then he's going to be like, look, my company is growing. And then there's going to be some dude that's like, hey, bro, it's not really growing. Like, it's just keeping up with the inflation, right? Like, it's not really growing. It's not until you put the dollar back into the perspective, back into, you know, the measurement, using the dollar as a measurement unit, that you'll see like, okay, your company was worth 10,000 30 years ago. Now it's worth 10 million, but it's still, you know, worth the same amount of money once you compare it to the dollar, right? So all it's showing you is that asset was falling in comparison to the dollar, right? Something outside of the dollar, the peso system is measuring it. So I start looking at, oh, money is a unit of measurement and it can measure how big or small an asset class is, right? So if we're just injecting more and more money into a system, then everything looks like it's growing, right? So Troy, your company that's now worth $10 million, well, then if you price it right back into the dollar, you'll see that it hasn't grown at all, right? So all the investors in your company, it looks like they're getting wealthier and wealthier and wealthier because they see the unit, the nominal value is going up, right? I bought it at 10,000. I bought into his company at 10,000 and now it's worth 10 million, right? When you put the dollar back in, then you go, oh, your company wasn't growing, bro, right? So that makes sense. Does that make sense to you guys?
Yes.
Okay, so now you do the same thing with Bitcoin, or even if it's not Bitcoin, you can do it with gold, right? Something that just can't be easily created. So gold, you gotta, you know, it takes man hours to mine gold, dig it out of the ground, right? So even if you were to go price these assets in gold, you'll start to see like, man, I'm not getting much more purchasing power out of investing into this or investing into that. So if you price the S&P 500 in gold, it's been trading sideways for 20 some years. If you price it in Bitcoin, it's falling, right? So I just changed my different unit of measurement.
Yeah.
And that's kind of what showed me like, man, these things may look like they're going up, but when I price it into what I deemed to be a good unit of measurement, Bitcoin, then everything is, it might go up in dollars, but it's not going up in actual value, you know? So that's how I started looking at it. And then I'm like, if you're not going to spend the time, energy, effort, you know, and do the research, and you're just buying things because other people are telling you to buy it, you're being distracted. You could just put your money in Bitcoin and go play basketball with your friends or something. So I just started looking at it like that.
So,
go ahead, Rashad, my bad.
Yeah. So the interesting. All right. So the counter argument to that would be to say you're correct in your assessment, other than the U.S. dollar is the measuring stick, right? So it's like if we're using Fahrenheit as degrees, right? Mm-hmm. Then until that gets replaced by another system, then we can't really use a comparison because that's still our standard measurement stick. But that's always been the case, that Bitcoin enthusiast has said that as soon at one point in time, Bitcoin will become the standard. Because at one point in time, gold was the standard. The US dollar is pretty much the standard for the world now. So measuring things off of the dollar is kind of the only way that we can really have a set understanding on how money works, right? But I guess you're saying that in the future, you're projecting that Bitcoin will become the standard, and you have a head start in replacing the measurement value because you're already using Bitcoin as a measurement of value as opposed to the dollar, even though the dollar is what we're currently using.
Yeah. So, okay. So what I'll say is I don't look at this like a future thing, right? I look at this as like a right now thing. And the reason I say that is because everyone who's living on a Bitcoin standard, their cost of living is getting cheaper right now, right? So I'm not saying that, hey, if you store your money in Bitcoin, that it's going to make your cost of living go lower in the future. It's happening right now. So one way to look at it is Bitcoin's going up. Another way to look at it is everything that I could buy with this Bitcoin is getting cheaper, right now. Like, so that's one thing. Another thing is, I think where people kind of like maybe let these two worlds collide is that they look at Bitcoin as replacing the dollar, right? So then they say, well, I can't buy anything with my Bitcoin or whatever, you know, but there's capital and there's currency, right? So if you look at Bitcoin like digital capital. So if it's digital capital, if I have a machine that makes lab created diamonds, that's capital, right? But if I have the dollar as currency, both of those are valuable. So I think people are looking at these two worlds as colliding when you're saying, hey, if you can go create the dollar however you want to, or you can go mine fiat currency however you want to, whether that's trading stocks or you playing the NBA or whatever the case is. But then if you're using Bitcoin as like a measure, like a way of storing your money, like a savings account, then you'll start to realize that what you're able to buy is just growing and growing and growing and growing. So I don't tell people like, hey, in the future everything will get cheaper against Bitcoin because it's happening now, right? So if you bought one Bitcoin at 10,000 and now it's 100,000, if you were to convert it back to dollars, you can buy 10 times more things. Maybe a little bit less than 10 times because the cost of things have went up too, but maybe you could buy 8 times more things. So another way to put it is that if you measure things in Bitcoin right now, you'll be able to see that things are getting cheaper. So imagine valuing your property in Bitcoin, right? So when I bought my house in Vegas, it was $530,000, but in Bitcoin was 10 grand at the time. So that would have cost me 53 Bitcoin, right? So as Bitcoin goes up in value, right, then the dollar is also making the value of my house grow. So now my house is worth $800,000. But if I'm looking at it in Bitcoin terms, this house used to cost 53 Bitcoin, and now it only costs 8 Bitcoin. So it got cheaper amongst Bitcoin. So if I have a stash of Bitcoin and I'm like, hey, now I want to go buy a house, that house has now just became cheaper because instead of reaching in my pocket or in my wallet and spending 53 Bitcoin on this house, I waited 4 years. Now I only need to spend 8. And if I reach out in the future, maybe it's only going to cost me 2 Bitcoin. Does that make any sense?
Yeah, it feels like that's the argument for the use case. So when people say, "Hey, what's the use case for it?" This feels like that's the argument right there, right? It's a stored value for future, acquisition.
Yep, exactly. So it's just growing your purchasing power. That's why I say I'm saving in Bitcoin. I'm not investing in Bitcoin. I'm saving in Bitcoin, because ultimately you want your purchasing power to go up. That's the name of this whole game, right? So your dollars going up doesn't matter if you can't buy more things, right? So I also say you don't want more money, you want more purchasing power. Two different concepts, right? So if you buy a house for $500,000 and then 10 years later it's worth $1 million, so you're like, okay, I have an extra $500,000. Let me cash out so I can put some of this money in my pocket, right? Now, when you go on the market to look for a similar house, every other house is also $1 million, right? So now you don't have any more purchasing power. So your dollar went up, or your money went up in the nominal value, and the actual number went from 500 to 1 million. But what you can buy is the same exact thing. Now, you would have more purchasing power if your specific house went to 1 million and every other house went to 750. Now there's this spread, so you have more purchasing power, right? So now you can buy that house and put some of the money in your property, or in your pocket. But what ends up happening is we put more money into the economy, the assets inflate the same way the cost of living inflates, assets inflate as well, right? So if they mark your house up from 500 to 1 million, now you got to pay more property taxes. Now your insurance company is going to say, hey, your house used to be worth 500,000, now it's worth $1 million. We're going to increase your premium on your insurance, because if a roof breaks, now the value of the house is more expensive. It's going to cost a little bit more to replace the roof. So now what you're looking at is somebody who's probably like on a salary that used to pay X, Y, and Z for their mortgage or for their property taxes. That is growing and growing and growing, and it's eating at your purchasing power. So on one hand, you say, hey, my house is going up in value, but actually you're getting poorer, if that makes sense.
Quick question for you. How influential was Michael Saylor on your strategy and making this adjustment? And what are like 2 or 3 books, because I've been seeing you post research, that had a profound impact on you that people can read tonight to like change the way that they view? Because this is really like the ultimate currency trade, if you will.
Yep.
What are 2 books that have been impactful for you?
All right. So Michael Saylor is pretty impactful. I would say Jeff Booth was probably the most impactful. So Jeff Booth wrote a book called The Price of Tomorrow. And he wrote this book before he became a Bitcoiner. And basically what this book is saying is that if the free market is done right, if capitalism is done right, then prices should be falling, right? So for example, if you guys make TVs, if Earn Your Leisure makes TVs and the Wealth Squad makes TVs, and we're getting the same manufacturer, somebody's going to have to cut their prices, right? Because if you say, hey, well, we make the same TVs, but mine's cheaper, then we're going to attract more people. And someone else, some third party is going to come and say, we make the TV even better and it's cheaper. So then the prices are just going to fall to compete for customers, right? So you're looking at it like, okay, in a free market, we should be companies or corporations should be competing for, this market. And one of the measurements of competition is, hey, I got better prices. I have a better product or better prices. So the cost should be falling. And one of the reasons why the cost isn't falling is because we keep putting more dollar units in the entire system. So it's called The Price of Tomorrow. That book is very, very, very good. Right. So that was a very good book. There's a book called Thank God for Bitcoin. For everybody watching this, that's probably like the best beginner book.
Beginner's book, yeah.
Yeah, and it says thank God for Bitcoin, but don't think it's anything like crazy. So what it is basically saying like you kind of have like a you kind of have like this biblical like duty to be a good steward of your money, right? And the system that we live in right now is hurting your ability to do that, right? So thank God for Bitcoin, The Price of Tomorrow, Gradually Then Subtly by Parker Lewis. That was good. And then, of course, The Bitcoin Standard. Those are kind of 4 books that are very good. The Bitcoiners that I like I said, Michael Saylor is great. I love Jeff Booth. I love Jeff Booth a lot. His whole concept about prices fall to the marginal cost of production, right? Everything should be getting cheaper in a free market if we're competing, but they can't because of the inflation thing. So those 2 guys, man, look those guys up.
So you believe in Bitcoin, obviously, on a very, core level, not just as a way to make money. You believe in it in a systematic way, like the same way like a Michael Saylor believes in it, or, all of these guys that really, really, believe in it. But why don't you believe in altcoins?
Okay, so I know every answer. I got to go on this long rant. My bad, y'all.
No, you good, rock out.
So
don't worry, man. We control the time.
So look, this is why. So what's happening right now is the Federal Reserve creates the dollar, right? And they have this crazy ability like a genie to just create a dollar out of nowhere, right? And then we're forced to use that dollar, right? So we're exchanging, but we can't create the dollar out of nowhere. We have to go work for it, right? So I have to go spend my time, energy, effort, and resources to try to get a dollar, right? So I go get the dollar and I'm storing my money in the dollar, and then they just print more of it. So that in turn makes me a little more poor, right? They're diluting the dollar. Okay, so the basic concept that somebody is creating something out of thin air and I'm trading my precious time for that thing, right? And we kind of understand that on a fundamental level. And we understand that that's why we get our money out of cash and we put it into assets. So we understand this, like you can't hold the dollar, you will become poor, right? Your purchasing power will erode if you're holding the dollar. Now, if I think that's unfair, if I believe that it's unfair that somebody can create this currency out of thin air and force me to use it, and then they get to print as much of it as possible, then imagine a cryptocurrency. So if me and my homies come together and we just create this token out of thin air, right? We create the token, we pay influencers, we pay YouTubers, we pay these people to go promote it, or we make all these promises and they say, hey, in the future, we're going to do X, Y, and Z. This coin has this utility, right? And then your viewers are like, yo, I believe in Chris's coin, yada, yada, yada. They're making that same exchange. They're taking their hard-earned money that they spend their precious time for in exchange for something I've created out of thin air. Now, if I'm holding some of that, supply myself, and then as everybody buys in, the supply I'm holding now goes up in value. So instead of in the traditional business world, you have to sell a product, a service, information, you have to do something in exchange for money. But in the case of altcoins, you just create the coin, promise a bunch of things, and then these people are believers in the coin, right? So then what happens is I just got wealthier by issuing this token, maybe paying for some promotion, maybe I actually do something, who knows? What I'm saying is I don't even want to make that gamble to be able to have to trust this person or trust that person, right? So I used to be a big Ethereum guy, and I started realizing, well, the Ethereum network owns 30% of the supply. So you issue something and then you keep it, and as we buy it, you get wealthier. And then that's how you're sponsoring corporate events. That's how you sponsor all these other things. So then going back to the traditional world in like stocks, why doesn't Apple have a token, right? They have to make their money by selling products, by selling services, right? So Apple has to go the long route and say, hey, it takes us money to buy these chips or to buy this material or to do this and do this. So there's this traditional flow of I'm buying things, I'm creating things, it's of use, it's of value. Now, if you want to swap your money for this thing, okay, cool, right? So what I've realized is in the cryptocurrency community or the space, people have basically found a way to fast track finding the liquidity. So if you guys have a startup idea and you guys come to like, let's say you come to me, for example, and you're like, hey, we need funding, blah, blah, blah. I might be an early seed, like I might catch, an early round. So then you have to go into the market and you have to, find your product market fit. You have to say, hey, this company, this product solves this solution. We're competing against these guys, blah, 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 right? And then that's working, you're growing, you're getting market share. And then you turn and say, we're going to go public. So when you go public, now that gives the early investors, me, an opportunity to get out, right? Because we need some liquidity from the stock market. That's a long process, right? So how long from when Uber was created until they went public? And that might be kind of on the quicker terms. Now, if I'm a cryptocurrency, I can go from the idea to the liquidity instantly. Immediately. I can create a coin and put it out into the world and keep some of the supply in an hour, right? So people who realize this and they're going to capitalize on our thirst to get rich quick. So we're going to buy it hoping that it goes up, not realizing, man, you're just exit liquidity for the developers and their friends. So that's why I don't want to have to trust anybody.
Yeah, so that's it's a perfect segue to where I was going to go next, in that there's a lot of people that have now becoming new to the cryptocurrency space. Obviously, as we saw it climb over the past 6 months, new investors and new people who are trying to create savings from it. It brings up the issue of security. And so we've been in the space for a few years, probably 6-7 years now. We've seen FTX collapse. I actually had Cryptotopia the day it was no longer existed. Yeah. So how do you feel about the security inside the crypto space now, specifically with Bitcoin? Do you feel like we've gotten to a point where we've gotten some of these fake exchanges out of here? It's becoming a safer space. And I mean, if you want to talk about that.
Okay, so it goes back to trust, the concept of trust, right? So when you're buying your crypto on, let's say, Coinbase, let's say you're buying your Bitcoin on Coinbase, right? You don't actually have the Bitcoin itself, right? So your Bitcoin isn't actually on Coinbase, or it actually isn't on something like a Trezor, for example, right? They just have, it's stored in the blockchain, and then you have a secret phrase that only you know to get access to it, right? So you're giving up that secret phrase because they're holding your Bitcoin, right? So what happens is it's like parking your car in somebody else's garage, right? So you have to trust. There becomes like a line of trust. I have to trust that these people I'm storing my car in their garage are paying their lease, right? So Coinbase itself, they have to be good actors, right? And I don't even want to have to pick who's a good actor and who's not, right? So I don't even want to have to trust Coinbase. I don't want to have to trust Kraken. I don't want to have to trust Robin. I don't want to have to trust anybody. So I bought, because you remember when you guys remember when the FTX thing was going on, they were painting Sam Bankman fraud to be the next Warren Buffett, and that's building our trust. Yeah. Like, yeah, this guy isn't going to do anything. Look at him. You know, they had that YouTube video, like, this guy's a billionaire and drives a Toyota Corolla. Like, you know, and it's kind of, they're just playing on people's trust. So in this case, we were all putting our money into FTX buying the Bitcoin in hopes that they would turn and actually buy the Bitcoin. And they weren't. So you give them money, and your screen, the number on your screen says that you own X amount of Bitcoin, but in reality, they went behind your back and they start trading the money, and it worked until it didn't. So this whole thing comes down to like being trustless. I don't want to have to trust anyone. All right. I don't want to have to trust Coinbase, Robinhood, Kraken. So I can use these exchanges to buy my Bitcoin, but then I'm going to take self-custody. I'm going to put it on a Trezor. I'm going to put it on a Ledger. I'm going to put it on a cold wallet. I'm going to put it into a multi-signature vault like Casa or like Unchained. And these are all open source, so people can verify like, hey, like we ran all our security things, right? Like, I don't want anybody to be able to say, hey, I'm taking your Bitcoin from you, or sorry, we got hacked, so you lost your Bitcoin, right? So the phrase is not your keys, not your coin. When you have something like a Trezor, for example, they generate your private key for you, right? They don't know your private key, they generate it for you. That's on you to keep it yourself. And that's kind of counterintuitive for how we're used to storing our assets and how we're used to storing our wealth. I just keep my stocks with JP Morgan, or I just keep my stocks with Bank of America, right? Or whatever, with E-Trade. So this is a different ball game. This is me saying, I'm going to be in charge of my wealth. I'm going to store my wealth because I don't trust anybody. I don't know Brian Armstrong. I don't know what this guy does. I don't know what he eats for breakfast. And I'm not putting my daughter's future in his hands. I'll take self-custody.
So really quick one, because you know you're my guy, but I saw the attacks this weekend come. When you say everything else is a distraction, can you kind of, even though you think Bitcoin is a better investment vehicle, can you explain your process of not wanting to put any capital going forward into stocks, and that you're not being erratic? Because the thing I didn't like, and I'm glad that you're here, the attacks became too aggressive, as if you never invested in stocks before it had the public about it. So I want you to clear it up.
Yeah, and I'll start off by saying this. Some of these attacks are because people believe that it's me versus them, right? So especially if you're a stock trader, right? Because you're if you're a stock trader and Chris says he doesn't like the stock market anymore, you start to feel like it's you versus Chris, right? Yeah. So then, especially if you were talking down on Bitcoin or you missed the bull run and now everybody's talking about it and you feel like you need to speak down upon Bitcoin, but in reality, you're taking shots at Chris. Chris is not the creator of Bitcoin, right? If my worst enemy in this world was advocating for Bitcoin, I'd be like, yo, I don't rock with bro, but he knows what he's talking about, right? So that's that thing. I don't take it personal, and I realize that they do. They think it's my strategy versus Chris's strategy. I didn't create Bitcoin, bro. I'm just leading the people that I'm leading to the lake. Feel me? So that's one thing. The other thing is, the reason why I say everything is a distraction is because you just need to price it in Bitcoin and realize that it's not growing. It's that simple, right? So if I think that Bitcoin is the benchmark for my money, for my wealth, right? I'm saying I've calculated what the volatility is and what the risk is and me putting my money here. I know about what the returns would be, right? If something cannot beat the returns, when you calculate the risk that it took to generate the returns as well, right? Because you can't, some people would just throw their money in a random coin and then it goes up 3,000%. And you go, why would I put my money in the S&P 500 when this just generated 3,000%? Because you're not, it's financial maturity. You're not calculating the risk that thing could have went to zero, right? So that's kind of like the gambler's mentality. But the reason why I say like, okay, Bitcoin is my standard. If I do not believe something will outgrow Bitcoin without more risk, there's no point of me touching it, right? So the thing with like all these other coins and stuff, and I do believe some of these cryptos have like utility and things like that, right? So I do believe that I can go and verify that that these blockchains like Ethereum or Solana generate fees, right? Like I can go see the block fees or see the fees for what they're generating or whatever. So I do believe they have some utility. But what I'm saying is, if it's not growing against Bitcoin, to me, it's not growing. Right. So I might look at something that I believe will outpace Bitcoin and say, maybe I'll consider putting my money there. Now, when I say that if it's not growing against Bitcoin, it's not growing, I don't mean that Bitcoin is up, let's say for this year or for the last 12 months, it's up 154%, right? I'm not saying go look at the last 12 months and something else did 3,000% and you say, oh, that's outpacing Bitcoin. No, go price that thing in Bitcoin to see where it's growing. Because what happens is you missed the bulk of the run over the last 2 years. And now that dormant money that was sitting flat in that other coin, now it spikes up. And you're just measuring like, hey, look, this spiked. And I'm saying your money would have already moved with Bitcoin with far less risk. So that's what that's about. Bitcoin is my benchmark, the same way that somebody else is like, Ian, for example, you might tell somebody like, hey, if it can't beat the S&P 500, why would you invest in it? Right? Yeah. That's the way that I view Bitcoin. If it's not gonna beat Bitcoin, why am I touching it? Right?
From your calculation, what's the average drawdown and average return that you're looking at to help them understand why you're so pro Bitcoin as well?
Okay, so a drawdown, the worst drawdowns that we'll have are like 80%, right? And what I want people to understand is that risk and volatility are two different things. Right? Risk and volatility are two different things. They can be correlated at some point, but they're not the same thing. So for example, if I take my kid to the amusement park and she wants to get on a roller coaster and the roller coaster goes up and down, up and down, up and down, that's volatility, right? So she says, hey, Dada, can I ride that ride? And I'm like, no, it's too risky. No, it's volatile. It's not risky. Risk would be people are dying on this thing. People are getting stuck on this thing. People are losing their personal belongings on this thing. That's the risk. Volatility is something different, right? So I've gotten to the point where I see my wealth like this. I'm measuring my wealth in Bitcoin. So if Bitcoin were to fall, so let's say I'm worth 10 Bitcoin and Bitcoin falls 50%, I have the opportunity to add to my stack for half the cost, right? So the volatility works in your favor. It works in your favor because you can add more cheaper. If it only went straight up, we wouldn't have any entries, right? We wouldn't have any entries at all. Yep. So you need the volatility. You need the volatility. And then another thing too, that I would like you guys as viewers to know is that the reason why it is so volatile is because it's not in a controlled system, right? So on Sunday night, somebody can sell their Bitcoin or they can buy Bitcoin, right? So if one country bombs another country and everyone thinks that we're going to war, you're going to sell the thing that gives you the liquidity the fastest, right? So that might be Bitcoin. I can just go sell some Bitcoin right now and get my money and say, hey, I'm preparing for World War III, right? Excuse me. But if it's Saturday night and you're panicking and you want to do that, you can't sell Disney stock Saturday night. So the stock market is in a system that kind of prevents a lot of the fluctuation, right? So it's not that other things aren't volatile or risky, or in Bitcoin is this its own thing. It's a free market. You can get the liquidity as quick as you want. So like I was saying, that plays in your favor because you'll be able to get entries. So I miss putting a lot of money into Bitcoin that first run up to 69,000. All the fraud, all the BS that happened in the market sent it right back down. I'm like, shoot, this is my opportunity. I wouldn't have the opportunity without the volatility.
So before we read, but you do invest in stocks, and one stock in particular, MicroStrategy. I saw that you were advocating for that, and I heard Michael Saylor talk about how it has even more volatility than Bitcoin, but it follows Bitcoin. So he was like, his standpoint, it's like kind of a no-brainer if you believe in Bitcoin, because it's like if you can get something that it kind of tracks Bitcoin in as a way of kind of like how iBit would, but different because the volatility is even more than Bitcoin, right? So especially for like even on an options trade where so that was his case, and the stock has done tremendously well. So you've been buying MicroStrategy, right? So what's the deal with MicroStrategy and your thesis on this?
Okay, so here's my whole get down with MicroStrategy. So what you're able to do with MicroStrategy, or what he's able to do, is he's able, and I say he, you guys, I'm talking about Michael Saylor, he's able to borrow money at a cheaper rate and for a longer period of time than I can, right? So if I needed quick access to money in order to leverage my Bitcoin bet, the risk that I'm going to take personally to get that money is a lot different than the risk that this company can take. It's a corporation, they have a good track record. So there's 3 different ways that he's using other people's money in order to get Bitcoin or to get leverage on the Bitcoin, right? If you can get leverage on the Bitcoin, when Bitcoin moves, then you'll have more volatility, you'll have a better return, right? So one, he can borrow against the corporation's operation, right? So they're a software company, sell software solution services, right? So if this company is making, or this part of their business is making $500 million a year, and they go get a loan that's going to require them to pay $50 million a year, they can service the debt pretty easily. Now they'll just take that money and go buy Bitcoin directly. So one, that's something that they can do that I can't do as efficiently. 2, they can issue shares. So they can dilute their shareholders in order to generate money to go buy more Bitcoin, right? So my company is not a publicly traded company, right? So when the price of MicroStrategy has grown too far in comparison to the assets they own, which is Bitcoin, then he's able to sell some of those shares into the market, capture that money that he just got by people buying the shares, and then instantly going to buy Bitcoin, right? And that's going to send the price of the stock right back up, because you're going to say, oh, well, they own more Bitcoin. This is a proxy for Bitcoin. So that's the second way they're able to do it. The third way they're able to do it is convertible bonds. So there's the equity market, and then there's the bond market. So the bond market, they can't just say, hey, I'm buying Apple shares, or I'm going to buy MicroStrategy, or I'm going to buy this or that. They got to buy bonds, right? So what he's able to do is issue bonds, and then take that money that he got from issuing the bonds and buy more Bitcoin. Now, it works out for the bondholder because there's a lot of volatility that can get them more money. So for example, let's say MicroStrategy hypothetically is selling for $300, and then it's a convertible bond, which means it can convert into equity. They can get the shares, right? So if the price of MicroStrategy goes from $300 to $600, now these bondholders can say, hey, we don't want to hold the bonds anymore, we'll take the shares. So it's kind of like a call option to the upside, right? So, hey, if this thing takes off, I'm going to take these shares. If this thing falls, I don't need to take them, right? So it's a lot of upside and they limited the downside.
Yeah, like a warrant.
Yeah, warrant. I was gonna say.
Yeah, like a warrant.
Yeah, exactly. Yep. So I don't need to take the downside. On top of that, I can also sell some shares short to protect my downside. So this guy has these 3 different vehicles that helps his company get more Bitcoin, right? And it just becomes like a self-fulfilling prophecy, if you will. Like I borrow money, buy Bitcoin. People see the value of my company based on how many Bitcoin I have. The stock price goes up. I'll sell that spread into the market, take the money and buy more Bitcoin. Now, this is, I am buying into this company, right? But this company is 2%, or it's like 1.3% actually, of my Bitcoin holdings, right? So if you were to compare how much I have in Bitcoin, how much I have in MicroStrategy, it's like 1.3%. I'll work my way to 5%. The reason is trust. It's all boils down to trust. When you invest into the stock market, you do not realize how much trust you're putting into the board of directors and putting into their operation system, into the market, into the government to regulate this company or prevent monopoly. We don't kind of realize these things, right? Nor do I, again, like I'm like paranoid at this point. I don't want to trust anyone with my family's wealth, right? So I'll give him some of the money because I believe that, you know, he has a good strategy. I completely understand this thing. But again, like one of my famous sayings is only the paranoid survive. So you only get a little stack of my wealth, right? Mm-hmm. And that's what I'm willing to lose. Everything else that I'm not willing to lose goes into the vault.
Interesting. When we talk about technicals, because I've been watching you for years, and just your technical analysis is supreme. MicroStrategy just bought 22,000 more Bitcoin at 98,000, which is, you know, one of those things we tell people don't invest at the highs. Mm-hmm. We've seen in 2017, you know, crypto winter. We saw in 22 a nice pullback. It feels like we're in the bull market now. Do you see bear territory or that quote unquote crypto winter coming in the near future? And if so, how do we navigate through that?
Yeah, eventually people are going to sell off. So that's kind of like the risk that you're taking whenever you put your money into a pool of things that other people have their money into, right? So you don't know when someone's going to take profits. You don't know when someone's going to sell to lock in their gains, like funds got to, you know, actually provide a return for their customers, things like that, right? So eventually there will be a sell-off. Now, when do I think this happens? Probably after next summer. I think that the rules of, like, I think there's 2 different paradigms going on, right? You have like the Bitcoin paradigm, and then you have like how we look at traditional assets. And I think at first they mirror themselves a lot. They mirror each other a lot. And I think eventually what's going to happen is we're going to break the correlation. And why I think we break the correlation, and when we break the correlation, I don't see any more 80% drawdowns or 60% drawdowns.
Yeah, that's done.
Yeah, exactly. I believe that totally, because I think that it's the nature of the buyer that's different. So if BlackRock is buying up all these Bitcoin on behalf of their customers, these aren't the people that are going to sell, right? Or if MicroStrategy is buying up all the Bitcoin and then they're using leverage to even speed up the process, these aren't sellers, right? So I think what happens is the people who are gaining more and more Bitcoin are the types of people that will hold. So then when the selling, you guys know, like selling creates more selling, buying creates more buying, right? So when there's not large sellers or the large selling slows down, then I think the pullbacks become less volatile. So this is why I used to look at charts and say, oh, I'm going to wait for a pullback. And I think late 2022 or even early 2023, I was waiting for Bitcoin to retest 20, and I had, you know, some money to deploy, and then it didn't test it and it just kept running. And then that's when I started to put 2 and 2 together. I'm like, because this is like a game theory and there's a race to get as much Bitcoin for the lowest price possible. If I buy right now and it goes down, who cares? I'll buy more, you know? So I kind of even stopped looking at the chart. So yes, I believe that there's going to be a crypto winter. I believe that Bitcoin will go into a bear market again, but I just think the bear market looks different, one. And then the second thing I want to say is, let's say people right now are like, yeah, Bitcoin's too high at 100,000. I think that I'm going to wait for the next pullback. Well, imagine Bitcoin runs to 220 and then the pullback's 160 and you could have been buying for 100. You know what I'm saying? So I started looking at it like that too. Like don't think that I wouldn't, bet that we go back down to 50 or wherever people are predicting. So I think buying the dip will change drastically as we move forward in Bitcoin.
And there's always a lot of talk about the crypto winter, but not enough consideration about the crypto summer.
Yeah.
And how far, with the hedge funds being involved in it, how far it's going to run up. Like you said, I don't think we're going to have 70% drawdowns, 65% drawdowns anymore, because the liquidity pool has been stacked amongst Vanguard, State Street, BlackRock. I don't think we'll have those dips anymore.
I agree. I also believe that people should visualize this. Like, you have unlimited amounts of dollars, right? You have unlimited amounts of dollars flowing into this asset that's finite, right? So it's like if you turn this water faucet back here on, that would be the dollar, right? So Bitcoin would be putting one balloon in there, and you say, hey, as long as that faucet stays on, this balloon will expand. So I think people kind of have a hard time seeing that because they still look at Bitcoin like a stock, right? So you're looking at Bitcoin like a stock, but a corporation can issue more shares and dilute you. You can't make any more units of Bitcoin, right? So you just got this water faucet flowing into this balloon, and the bigger the balloon gets, the safer it gets. So I think that's something, it's a paradigm shift.
Well, Chris, I want to thank you for coming on, my brother. Before we leave, the $10 million question. Where do you see Bitcoin going price wise? Michael Saylor I heard him say $13 million. Of course, we had Mike Novogratz. He said, 250 is the next target, and then eventually $1 million. $1 million. I feel like it's 100,000. We've talked about 100,000 years ago. Like 100,000 has been a benchmark, and then 500,000 has been a benchmark, and then $1 million. I've like these numbers of 13 million. I haven't heard those numbers before, but yeah. What's your thoughts?
Okay, so how soon do you want to know? Like, you want to know in the next
10, let's do 10 and 20.
10 years. Okay, that's even better.
10 and 20.
10 to 20 years, 10 million.
10 million in 20 years or 10 years?
I think we get there before 2034, that 10 years. Yeah. So you guys watching this, I want you to consider this. One thing that I would like to say is the halving cycles, right? So what the halving cycles do is every day there's X amount of Bitcoin that are mined, right? So you're bringing Bitcoin into circulation. These miners have to sell Bitcoin in order to fund their operation, right? So naturally you have a seller every single day in the market, So when the Bitcoin halves and the daily supply of Bitcoin falls in half, the selling pressure also falls in half. Right. So as more and more buyers are buying into Bitcoin, you get half of the sellers. Right. So more buyers than sellers, the price goes up. This is why after the halvings, we have these booms. 2 halvings ago, Bitcoin was at $600. So we go from $600 to a $69,000 Bitcoin in 2 halving cycles. Right. So we had a halving this year. Right now, what we're feeling is the run up from this halving. Right. So the halving, I think the price of Bitcoin is like around 40,000. So we still haven't felt the run up from this halving. So we'll say that we still have this halving. Then we have the next halving in 2028, right? The run up should be 2029. And then we have another halving in 2032, right? And then the run up should be 2033, right? So in 2 halving cycles, with everyday Joe Schmo people buying, we go from $600 to 69,000. Now you put the institutional investors in there, you put the corporations in there, you put governments in there that are now buying and plan to hold for the long run. 3 halving cycles from now, I see a $10 million Bitcoin.
So that's right in line. That's right in line with kind of what Saylor was saying. He had it at 13. He said by 2049, he saw it at almost 40 million, which is like, I mean, based on that theory, it doesn't sound like it's impossible.
So imagine this. Imagine that you guys are from New York, right? So imagine somebody telling you that the rent of an apartment is going to be $5,000. But imagine them saying this in the 70s. Say, hey, one day people are going to pay $5,000 for rent. And let's say the average rent back there for a nice spot is $700, $800. That's hard to imagine. But then consider all the money's going to keep flowing in. People want to live in pristine property. it's kind of hard to see the future because we just see the present moment moving forward. We don't see that.
I think it's also about how you look at it. Like if you're looking at it from a stock standpoint, then it's like, but if you look at it like that's how I've heard like because I've been studying crypto for a while, but gold has always been a comparison. So gold, I think I'm looking at your post, $17 trillion asset, and Bitcoin is $1.7 trillion asset. So if you look at it from that standpoint of if it ever really becomes the new gold in that standpoint, right? As far as then it's not as far fetched as it may seem, because it's like, all right, gold is not going to be 17,000 in 10 years. Gold is going to be 30. I mean, 17 trillion. Gold is going to be 30 trillion, let's say, right? Or 25 trillion. So if it's like, okay, so if it goes from 1 trillion and it catches gold, which would maybe at that time would be 30 trillion, then that's like a 30x where we are now. Right. So I think it's how you look at it as far as if you're looking at it from like an individual company standpoint, then that might sound like a crazy idea. But if you're looking at it from like a real commodity
currency standpoint,
you know, in the bond market compared, like bonds is $300 trillion.
Yep.
So I think it depends on how you look at it.
Not inconceivable.
I agree. I agree with you, Rashad. So we say 900 trillion, Bitcoin's 2 trillion out of 900 trillion. But if you project our growth forward, we're not looking at $900 trillion assets anymore. We're looking at 4 quadrillion of assets. So then Bitcoin just grows to 40 trillion, 50 trillion, 100 trillion out of that. And you're like, yeah, we can't make any more units. And then it's worth 100 trillion. Half these people won't sell. We're going so much higher.
Yeah, my final question. I want to let you go on this, and then you guys, final one. As you saw it last week, as you saw it approach 1,000, and it finally, 100,000, and it finally hit 100,000. I know I saw the memes, I saw the posts, but was there a sense of gratification, or was like, I knew this was happening, we're about to go on another run? What was that feeling like? Because, you know, there's been doubt around Bitcoin. You've been adamant about it. Like I said, your conviction has been strong. What was that moment like for you?
The most rewarding